downside, you had the luxury stocks. We'll see how that dynamic shifts today. Basic resources under a bit of pressure. Energy is going to be strong, potentially on the back of high oil prices once again. European futures, though, pointing low by more than 1%. FTSE 100 futures looking to drop 92 points. Political risk as well in focus, but more of an impact on gilts, of course. DAX futures pointing to losses of potentially 287 points. That is the setup, according to these futures. What are you looking at, Anna?
Yeah, so a negative picture for European stocks then lies ahead, Tom. Let's have a look at some of the individual names and indeed broader market themes. So UK stocks, as you say, Tom, certainly will be in focus. Yesterday we saw a bit of weakness in real estate stocks as a result of higher yields. We're certainly watching the gilt markets, and anything that might move around on those gilt yields will be in focus for us this morning. Siemens Energy, a really interesting story. If you need a reminder of why the AI theme has got everybody so excited, Siemens Energy saying they expect the AI boom to bolster their sales for years to come. The company is sold out in major parts of its business until 2030, so that's a kind of positive news line this morning. Bayer posted better than expected profits in its first quarter. Robust performance in its crop science unit seems to be one of the themes there. Guy?
Okay, here we go. Let's take a look at the session that we are about to get. Remember, the pound is down, so mechanically that does help out the FTSE 100. Let's see exactly how it trades first thing this morning as we watch carefully what happens across Europe. We are expecting that negative performance kind of pretty much across the board. The FTSE may get away with it a little bit, but not by much, so it's already softening up a little bit. I expect that number to get worse over the next kind of minute or so. In terms of other markets around Europe, 7, 8, 9 tenths of 1%, maybe even 1% down in some of these markets, I suspect, this morning. Stock 600 is down by 0.6 tenths of 1%. FTSE 100 is weakening. It'll be interesting to see the division this morning between kind of domestic stocks and more internationally focused stocks and how they perform. The CAC is down by 1%. The IBEX is down by 1.2%. So certainly seeing some significant weakness there. There's some interesting stocks actually out of the German market this morning. Anna was raising Siemens Energy this morning. We'll see how it trades this morning. The AI story is still there and ever present when it comes to even Europe, and we'll see how that trades once we get the DAX open. But the FTSE is now pretty much in line with everything else, down by circa 1%, slightly worse maybe than what futures were pointing us to a little earlier on, Tom.
Across the sectors, you're currently seeing the biggest losses coming through for basic resources. You've seen softness in the silver price and in copper, and you're seeing losses in that sector, 1.8%. So the biggest losses coming through right now, at least, for the basic resources space. The banks as well under pressure, and that's reflected in the FTSE 100 as well, with the likes of Barclays down around 3%. So banks currently down 1.9%. Every single sector in negative territory right now. Chemicals is showing the most resilience, but even that is down 0.3%. Also energy as well, despite higher oil prices, energy is currently down 0.3% as a sector, even as you see Brent around 105 right now.
Yes, absolutely. So that's the picture on stocks. Tom, let's dive into the gilt market story then. We have a bit of a slump in gilts underway, as we could anticipate earlier on this morning from some of the news lines around the fate of the UK Prime Minister. So we've seen selling of gilts, and across the curve, we're now up by another 7 basis points. And of course, you pile this on top of the 9 basis points higher that we were almost across the curve yesterday. There's a lot of flashing lights on this gilt screen this morning, a lot of volatility, perhaps a lot of people rethinking how much attention they pay to the UK political story. Let's get a perspective from outside the UK, which I think for global markets is important. Bloomberg cross-asset strategist Ven Ram joins us with thoughts on where the gilt trade goes from here. Ven, we're up in terms of yield by 7-8 basis points across the curve. I suppose, what are the things you're looking for from the UK narrative this morning? How are you expecting things to develop?
Morning, Anna. I think that, the most crucial thing from the bond market perspective is going to be whether Starmer goes, and if he goes, what happens to the Chancellor's position. Now, Rachel Reeves has been fiscally very disciplined as a Chancellor, so I think that even with her the helm, the 30-year yield, which is the barometer of sentiment towards UK assets at the moment, that has surged 100 basis points since the time she took office. That is twice as much as treasuries have risen. So clearly the gilt markets have been underperforming. And just as your board showed, the 30-year yield is now at 5.75. That's the highest since Tony Blair was in office. So I think that, that will rhyme with the Labour taking office and investors punishing gilts. But it's not a political question. It's a question of financial fiscal rectitude. And that is the question that investors will be asking today more than ever before.
Ben, can investors assume that the sell-off in gilts can also constrain the aspirations of any potential contenders for the Prime Minister's role?
Absolutely. I think that, there have been suggestions among candidates that, look, the bond market, we are not going to be in a hawk to the bond market, but I don't think those are valid dismissals. I mean, once they come to office, they will know the lay of the land and they will know the reality of that Downing Street, of ruling from Downing Street. I mean, when the bond market sends you a message of distress, it's not a signal to be overlooked, and anyone who overlooks that has a heavy political price to pay.
Ven, is this a global story or is this a UK story?
It is very much a UK story at the moment, Tom, because if you look at, if you look at just yesterday, if you look at bonds, they were fine. If you look at treasuries, they were doing fine. I mean, treasuries have got other challenges, but not this one, this particular bout. So I think that it is going to be very much a political risk premium that is being embedded into UK assets. At the moment, we are not seeing it in the pound, but I think that the markets are underpricing that risk.
Ven, thank you very much. Ven Ram, Bloomberg cross-asset strategist, helping us get focused on the gilt market trade this morning. Let's widen our lens and bring in some analysis from Sarah Malik, who is Chief Investment Officer over at Nuveen. And I'm pleased to say, joins us here on set in London. Really good to see you.
Good to see you.
Thanks for being with us. So we've started our programme this morning really with a focus on gilts because we see another jump in gilt yields. Reading your notes ahead of our conversation, I think fixed income in terms of bond markets is not exactly where you're focused. But what context do you add around this gilt story for us today?
Well, this political turmoil could cause two issues. Number one is higher fiscal spending, which would be a UK issue, but second could be higher inflation, which is a global issue. And that could put pressure continuously on UK equities, which would be a disconnect from the rest of the world because the rest of the world is benefiting from strong earnings growth. We're seeing that in the US and also a generally resilient economy in the face of higher oil prices. And that would be what makes this a UK story rather than a global story.
Yes, we're watching this develop, this UK narrative, at a time when bond markets do seem to be worried about inflation, and the rest of Europe, we see bond yields a little higher this morning. In Japan, we saw bond yields a little higher this morning. That's inflation, also interest rate expectations. Are you positioning for a higher for longer, higher inflation from here outlook for the global economy?
Well, in the U.S., we've also seen that, where the bond markets are a little bit more concerned than the equity markets about what's going on in the Middle East and the impact on inflation. But basically, if you're bullish on the markets, what you're bullish on is AI. Because in the United States, we've seen first quarter earnings growth, which has been very strong, 12+% consensus. We're blowing right past that. But that's driven by over 20% growth in these AI and technology stocks. And that's impacting the entire world. So if AI sneezes, the rest of the world will catch a cold. But that has been why people often ask, why has the market been so bullish throughout this Middle Eastern conflict? It's because we've not seen it flow through to a great degree to inflation, and earnings growth has remained very strong, and that's why the rest of the world is continuing to generally rally. But it's 6 weeks now of a market rally, and I do have to wonder if we're going to hit a bit of a pause in an air pocket, especially as this ceasefire is becoming quite fragile.
Good morning, Sarah. What is the biggest risk to hitting that air pocket then? It seems like there's a level of discomfort right now that you're articulating around how far and how quickly this market has run up, despite that potential impact in terms of physical supply that's coming through from the Strait of Hormuz. What is the potential air pocket that you could be looking at?
Well, markets tend to price in a known outcome, even if they don't know the timing of it. And that's what we've seen with this Middle Eastern conflict, where markets are assuming it will come to an end at some point. However, we've been assuming that for 6 weeks now. The ceasefire is fragile. We're getting some key inflation data in the U.S. this week. We'll start to see if this is really starting to flow through these higher oil prices to the inflation data. I think if Strait of Hormuz stays closed for an elongated period of time from here, it becomes more sticky in terms of inflation data. That could negatively impact the strong economic growth that we're seeing, and that'll be where the markets take a breather, which it could start at any time.
What would you have to see from today's inflation print to derail your view that the Fed will cut once this year?
We need to see basically inflation rise to more where we feel it's just a bump to inflation. And the Fed gives some kind of message that says that, you know what, we're not going to look through this inflation bump. We look at it as more structural. I think that one cut this year could still be in place as we get the new Fed chair and he focuses more on productivity, and the economy could slow because of what we're seeing in the Middle East. But whether that one cut is later this year or early next year is, just a calendar effect.
It sounds like you're telling me to sell now. Is that the case when it comes to tech?
Well, I think market timing is tough. We are actually big AI bulls, so I don't think we should be betting against technology because that is the driver of the markets. It is challenging, though, to step in and buy after the market's rallied for 6 weeks, especially with tech earnings behind us, which were arguably very strong. Our question is, what's the next catalyst? First quarter earnings are basically behind us. Now we're waiting for the Middle East ceasefire to either continue or to break down. That makes it a little challenging for us to say what's the next catalyst to take the markets higher.
But if there was a dip, you'd buy it.
That's what we've been seeing. We've been seeing this since the COVID pandemic. A lot of FOMO with the markets, people holding trillions of dollars of cash on the sidelines. And what you tend to see is a lot of intraday buying whenever the markets dip. So if there was a slight dip in this market, we'd step in and buy.
Okay.
So do you think that the AI boom is going to be negative for jobs? I'm listening to what you're saying about the Fed, and you do expect to see one cut. And part of that, I think, you attribute to negative developments in the jobs market, which you anticipate from here. So is that going to be AI driven? I also saw you're flagging that tech capex is contributing 38% to US growth, which is a staggering number. I mean, that's capex, and some of that will create jobs, some of it might not.
We haven't seen AI impact the payroll markets yet. We just got another strong data point out of the U.S., which is now 2 months in a row of very strong jobs data. I think the impact on the job market from AI is actually overblown. AI is an enabler, but humans are going to be the differentiators when it comes to AI. So it's about making sure that you're reskilling, staying relevant in terms of what your skill set is, using AI to your advantage to help make you more productive. I'm not as concerned that there's going to be these massive 30, 50% cuts to jobs that some of what we hear in the media. I think that's overdone.
So just to pick up on Anna's point about sort of capex and your point about liking tech, big tech has gone from being asset light to being asset heavy and increasingly debt fueled. That's a different beast than what it was. Is that a worry? History tells you that capex heavy businesses, that investment tends not to deliver the kinds of rates of return that you would normally expect from an asset light business.
The degree of return on investment of the hundreds of billions of dollars that's been spent on AI capex is the main question in terms of, what does it mean for AI for the future?
Yes.
And we're seeing it's not only, if there is a bubble, it's not just an AI-specific Mag 7 bubble. This is now going across utilities and data centers and other areas. However, we're not seeing that as a bubble yet. We're watching the ROI closely. Supply and demand will not always match. There'll be a lot of impactful spending up front, and demand may take time, and there may be air pockets in demand to meet that supply. But over the long run, I think AI is here to stay. Sure. It's going to have a massive impact on the economy. So you'll close your eyes 5-10 years from now. If you own these stocks, you're in a great spot. There's going to be periods, 6 to 9 months, even a year, where the stocks may be a little bit more volatile because the amount that's been spent may not exactly hit the ROI that the markets expect.
Okay.
No. I was watching Guy Johnson's eyebrows through that response.
Were they telling a story?
Is a key monitor. Well, Guy's been consistently sceptical on the capex.
Well, no. A lot of people are questioning whether or not the ROI, to the ROI point that Sarah's making, is do you get the ROI you need to justify current spending? AI is definitely going to be a hugely kind of important piece of technology, transformative.
Yeah.
Can you make money from it? Who's going to make money from it is the question.
And the Koreans are looking at how much money is being accumulated right now and the potential risk of disruption. You're not seeing that yet in the US labour market. But I guess the question of focus for us today has been what's happening in the Kospi and this conversation about whether or not there needs to be some kind of dividend, at least redistribution on some level of the AI profits. Is that something longer term that investors need to start thinking about? Is that a conversation that you think will start to percolate through the halls of power more broadly?
You mean redistribution of AI, like in terms of dividends?
Well, the Koreans have been looking. One Korean official, an aide to the president, had been looking and talking this morning about potentially a dividend for citizens on the back of the enormous gains that have come through and profits from the key AI names, and whether or not that's something that investors will have to be thinking about, if not today, then longer term, as we look at massive accumulation of wealth in some quarters and also massive disruption.
In hyper-growth sectors like this, usually returning cash to shareholders is not really where we would be in this stage of the cycle. We're in the heavy investment stage now, where we're going to continue to see this heavy investment within AI. The companies are in a race to be in the forefront of their investments in AI. They have to be, because in order to be the market leader in this space, you have to make the investments up front. And that's what I'm saying in terms of the demand in the shorter term may not always match the level of those investments. I doubt we would see a return to sort of shareholders or citizens at this point from that kind of of investment because companies are just going to keep plowing money into this in order to meet what I think over time will be multiple years and decades of future demand.
Well, one other thing we've talked quite a lot about in the wake of everything that's going on in the Persian Gulf, or what's not happening in the Persian Gulf, which is energy not getting out of it right now. Sarah, one thing we've talked about is sort of diversification of energy sources, renewables, for example, and leaning into that as a theme. Sitting where you sit at Nuveen, does that look like a global theme that you lean into, or is that much more for the Europeans?
It's been a global theme since before the Middle Eastern War. The continued shift to renewable energy is very important, and energy independence is very important. This war brings that even more to the forefront. I think that trend will continue over time to areas like wind and solar and other sources of energy. Because countries want to have, we've learned this from the pandemic too, energy independence, supply chain independence. We've learned that over time, when there are issues either due to the pandemic and shipping or due to the Middle East war, it can really cause a negative impact on your economy. We haven't seen that yet from the Middle East war, but it could happen over time. So I think that's a global issue for countries to say, how can I become more energy independent?
Great to see you. Thank you for coming to see us. The time zone probably isn't lining up for you this morning, so great to see you so early here in London. Nuveen CIO Sarah Malik joining us on these global markets. Let's look at the call 6 this morning, what is happening out there. Not a particularly great morning for European stocks. You can see that writ large across the board that you've got in front of you here. It's interesting that actually ASML is in some ways outperforming a market elsewhere that we are seeing weakness, as to a certain extent is the luxury space. What else are we watching? Chloe's here with the details.
Good morning, guys. Siemens Energy is actually a little bit weaker this morning. It accelerated its buyback thanks to really strong orders from data center customers, and that is just a few weeks after raising its outlook. But some analysts noted that there were actually weaker margins in the gas business, and perhaps because the expectations were so high, we're getting a little bit of weakness given the lack of detail from the previous update in today's update. And so we're down about 1.7% for Siemens Energy. UK banks are also weak this morning after JP Morgan note saying that if there is a leadership change in the UK, those banks could face higher taxes. And so we can see some of that caution feeding through into Lloyds, Barclays and NatWest this morning as the political instability in the UK worsens more and more. It's also, staying in the UK, also not so good for Vodafone, which has actually had pretty solid results with good cash flow, but actually some deterioration in the German business. And that is important given that the company has had a strategic pivot to really focus on the UK and Germany as key markets. And so a little bit of weakness in one of those main markets is not been taken very, very well. Moving on to Bayer, which is actually in the green this morning after stronger than expected profit, as that was driven by its crop science unit. And we're up about 4%. This is actually a bit of a needed win for Bayer, given that it's still dealing with all of those litigation issues around its Roundup weed killer. And so we're up quite strongly there. And finally, KBC, the Belgian bank, is down after taking higher than expected provisions. We're down about 3.4% this morning. It is joining the likes of BBVA, Deutsche Bank, all of those other banks that throughout this earnings season have been booking higher impairments because of the financial impact and the potential financial impact of the Iran war. So we're a little bit weak there this morning as well.
Chloe, thank you very much indeed. Let's get back to the gilt markets right now and check in what's happening, underperforming their European counterparts with yields up across the curve by around 8 basis points. The 30-year at 5.76 right now, yields up 9 basis points there. The 10-year closing in, of course, to 2008 levels in terms of the sell-off. 5.08 right now on the 10-year, yields up again, close to 9 basis points. There's a pretty pronounced sell-off on the political risk here in the UK.
Yeah, you wonder where this goes in the short term and the longer term, don't you? What's the short-term trajectory? We've got the King's speech due tomorrow. That would be pretty complicated if the government was falling apart at the time that the King was in the Houses of Parliament delivering what would be the government's agenda for the next year. And so does that stall things in the very short term? Does the gilt move stall things? Does it add a moment of pause and reflection for people who are calling for change here? We'll see.
I don't think the House is sitting today, which is interesting, so therefore that firmly puts the focus on this door here. Number 10 Downing Street is where the attention is firmly focused this morning. We have a cabinet meeting, which starts in about an hour's time. So I just think we're going to see arrivals, what do you think, like sort of the next half an hour or so?
Unless they sneak in the back door.
Sneaking in the back, it's opening. Here we go. People turning up for work.
That's a newsworthy event, I'm sure.
I think it probably is.
But we'll certainly keep an eye out for the Health Secretary Wes Streeting, who's been thought of as planning a leadership challenge for some time. Also, Shabana Mahmood, according to our reporting, calling on the Prime Minister to set out some kind of timetable. Both of them will be around that cabinet table this morning with the Prime Minister, which could get awkward. 8:18 here in London. Coming up then, a dramatic $300 billion fall for the Kospi at one point of the trading day, at least today, after a policymaker talks of a tax-funded AI dividend for citizens. Details next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. This is the opening trade, 8:22 here on a Tuesday morning, and we have European equity markets under pressure. Oil prices on the rise once again, 106.22, but we don't have that adding much positivity to the energy sector this morning. We do see energy stocks as the only sector in positive territory, but really not by much, not providing much of an offset. It did yesterday, not so much today, and so European stocks are in the negative. We focus on things to do with the UK because gilt yields are on the rise, but gilts actually across Europe on the rise this morning.
Yeah, we'll continue to focus, of course, on what's happening in terms of UK politics, but let's get a little touch on what's been happening across the tech space, and a lot of tension on Korea today because it's been a roller coaster session for South Korea's Kospi. Tech stocks dragging the index more than 5% lower at one point after the country's presidential policy chief called for a dividend for citizens using taxes on AI profits. But we've seen those losses pare back after the policymaker said he was not proposing a new windfall tax. So a bit of nuance there. The Kospi is currently down 2.6%. Let's get more with Bloomberg senior strategist Neil Campling. Neil, just talk us through what exactly happened in the Korean session.
part of the issue that's come out is because there has been talk about the unions within Samsung looking for to get a part of the profits coming out from the semiconductor fabs, etc. So it's it was seen, I think, as a political motive. So let's talk about potential, a dividend being paid, and then realizing actually, problem is when the market then fell 5%. Sudden remembrance that the Kospi index is massively retail geared in terms of a lot of retail investors. So actually it may have been a bit of a faux pas to come out with such an idea in the first place. So I think that they've rolled this back. The other thing, of course, is that within the complex of how these companies operate, AI-related spending is only part of the profits that these companies sort of produce. So it's very difficult to say, let's produce an AI-related profit, when actually many companies aren't yet seeing returns on the AI profits because we've still got this massive overhang as to when will we see these massive returns that the hopes and dreams of the AI trade will pan out. But that hasn't yet come through in most economic models.
Do you not feel, though, that the genie's out of the bottle? That once policymakers start talking about this kind of stuff, that it is something that gets replicated elsewhere? Yes, it may have been a faux pas, but may have been a deliberate faux pas. Let's see what happens. Let's see what the reaction is. Let's take the temperature. And other politicians are going to look at this and go, this is something that maybe we need to consider as well. You've only got to listen to the debate in the press talking about this. It's out there. It's going to become something that governments are going to want to debate.
I think, personally, I think policy is the greatest handbrake on innovation, and actually innovation always wins out. If you can imagine in California there being that kind of policy, then again it's forgetting the fact that many tech companies have these super high margins because actually they're paying employees fairly low wage rates because it's all geared in terms of stock options and how many NVIDIA millionaires are there out there. So I think it may seem like a policy noise that's being made, but I think actually for other governments to sort of follow suit and these kind of things, I think it's misplaced personally.
Okay, and I wonder whether, thinking about the way that this tech narrative around AI rubs up against fiscal policy and governments and regulation, I mean, we're heading towards the midterms in the States, aren't we? And will that change the narrative out of the US around regulation of big tech? I mean, that must be something that some investors are starting to think about.
It's an interesting question because actually the whole idea of tech being kind of becoming a political item in the agenda has gone away somewhat in recent months, for sure. So it is something that may come back to the fore again. But on the other hand, in many times of those White House meetings, you've seen often the big CEOs of big tech companies sort of looking to be seen as being on side. And actually, without big tech, pivot. I think so, yeah. And without big tech, US is geared around big tech, and without the AI move, then the US Inc. looks very different.
The US government has quite a lot of debt and a fairly big fiscal hole that it has to fill at some point. How it does that remains to be seen. Neil, nice to see you. Neil Campling, Bloomberg Senior Strategist. Coming up, we're going to go live to Paris. JP Morgan is holding its Global Markets Conference. We'll be hearing from EMEA co-CEO of the bank, Matthew Wills, is going to be joining front scenes shortly. This is Bloomberg.
The frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
This is the opening trade. Happy Tuesday. We're 30 minutes into today's session. So risk off across equities, and you're seeing bonds selling off as well. Across the benchmark, losses of 0.9%. President Trump saying the ceasefire with Iran is, quote, on life support. So we continue to watch the geopolitics and the closure of the Straits of Hormuz and the impact there. The DAX is currently down 0.8%. The CAC current is also lower by 44 points. And here in the UK, political risk is also a factor. Certainly you're seeing that across the banking space. Across the index, losses of 0.8%. Energy is providing modest support. The last time I checked, that sector was up about 0.2. Guy has the breakdown, though, for you in terms of the details and a bit more depth. Guy.
Volume's actually quite high this morning, which is interesting, which tells you a lot about what we're seeing in terms of the sell-off you've just outlined, Tom. In terms of the ratios, it's basically 4-to-1 in terms of what you're seeing on the downside to the upside. So certainly Europe is under a little bit of pressure this morning. It's reasonably broad pressure as well, and it's being backed by that volume narrative. Let's talk a little bit about where we're seeing some of the gainers this morning. Buyers out with numbers. Those numbers are being received well. Bayer out of Germany, up by 5.23%. Crop Science, interesting there. EQT raising the offer for Intertech. That stock is up quite nicely. Oil stocks are also high. You can see that certainly at the top of the board, up by 1.43 when it comes to BP this morning. In terms of the downside, let's talk about what we are seeing here. Siemens Energy, despite the numbers, is under pressure, as is Lloyd. So let's start there. This is the read across, you could argue, from what we're seeing in the gilts trade into the UK banking sector. Lloyd's down by nearly 4%. Siemens Energy is down by 1.61. Prosus is down by 6.5. But that UK gilt connection into the banking sector, I think, quite interesting this morning, Anna.
Yes, certainly one we'll keep on watching. Let's get an update then, Guy, on some of the other stories we're covering this morning. President Trump said the ceasefire between the US and Iran was on, quote, massive life support after he rejected Tehran's latest peace offer. Iran responded to the US peace proposal by demanding a lifting of Washington's naval blockade and sanctions relief while maintaining control over traffic through the Strait of Hormuz. President Trump has not indicated whether the US would resume military attacks on Iran, as he previously has threatened if the Islamic Republic's leadership didn't agree to his terms. The German Chancellor Friedrich Merz is seeking to reverse his government's fortunes by getting an ambitious reform agenda back on track. Merz's Christian Democrat-led Conservatives and the Social Democrats will meet later today to try to find consensus on a plan to overhaul the country's tax and pension system. The coalition's future remains in focus after a previous crisis meeting ended in acrimony, and a recent bonus package was blocked by Germany's upper house of parliament. And the yen strengthened sharply earlier on in trading versus the US dollar before falling back during a visit by US Treasury Secretary Scott Bessent to Japan. Japan's finance minister has confirmed that her team is coordinating closely with Scott Bessent on currency policy, signaling tacit US approval of Japan's recent suspected market intervention. Tom.
Yeah, more lines and more detail on those meetings between the US Treasury Secretary and his counterpart and the Prime Minister as well, to your point. in Japan. So Scott Bessent has been speaking to the press after his meeting with Takaichi, and he says the relationship with Japan is working very well. Here's some of the key lines. He said that the strength of the Japanese economy will be reflected in the FX rate. This at a time, of course, around speculation that the Japanese have been intervening to support their currency. Scott Bessent also saying that global high yields are as markets price in inflation. We both believe excess volatility is undesirable. Scott Bessent saying both sides believe excess volatility is undesirable and has great confidence in Ueda, the governor of the Bank of Japan, of course, to guide the BOJ to success. And we know a summary of views from the BOJ signalling that a rate hike is potentially on the cards at the next decision.
Seems to be moving in that direction quite quickly, doesn't it? OK, let's get some analysis on what is happening here. I want to take you back to Paris. JP Morgan executives gathering this week there. Hundreds of clients also with them. It is the firm's annual Global Markets Conference. Francine Lacroix is there. Francine, over to you.
Good morning, guys. It's always good to be in Paris. It's always good to be at a JP Morgan conference. So guess what? We have 2 in 1, and I'm delighted to be speaking for an exclusive conversation with Mathieu Vils, JP Morgan EMEA Co-Chief Executive Officer. Mathieu, as always, thank you so much for giving us a little bit of your busy schedule. There's a lot going on. There's a lot going on in geopolitics. There's a lot of uncertainty. Now, you said at the start of the year that actually the M&A and IPO market was doing okay. Is it still the case?
Yeah, no, it's still the case, and as you've seen during the results of the first quarter, I think it's been a good activity for most of the banks. We have a lot of M&A, a lot of ECM activity, a lot of DCM and leverage finance as well. So it's been a booming quarter. The pipeline is still very solid, so there is uncertainty, and we are assessing the situation every day. But when we talk to clients, the appetite for business is still very strong. When we talk to investors as well, they have a lot of cash to deploy. So I mean, fundamentals are there for a decent performance, I would say, for the coming months.
Has anything changed because of the war in the Middle East?
Not really, and you see the performance of the stock markets has been, I mean, clearly resilient. We've done several IPOs as well. The demand has been very solid. We know that there are big IPOs as well coming in the market, especially in the US. That's not the new news, but so. I mean, it's interesting to see that for, I think, the first time we have such a big conflict with limited impact on the market, and the business confidence remains pretty strong. Now, it's true that we have impact on the commodity markets, and we see that in prices, and so we'll see for how long we'll have that conflict and what will be the impact on the long term. But for the time being, I would say this is quite reassuring.
I mean, do you think that there's a danger that it's because the market, if not complacent, they think it ends, more quickly than it actually will?
I mean, that's the question we hear as well, and I think, it's hard for clients to position themselves in that current environment. It's like, do you take a lot of risk or do you stay like in a cautious mode? I think we have to be ready for every scenario, so that's what we do as well. And we looked at the conflict, but we look also at inflation. We look at the level of government bond debts. I think that's also one big factor. We look at what will be the impact on growth. So there are a multitude of factors that we are assessing every day. And we try to position the bank relatively cautiously. And when we talk to clients as well, that's what we say. So trying to be diversified, trying to measure the risk. And I think that's a big topic on private credit, for example, that we talked in the past. But those are all different factors that we look at carefully. We assess. We like the underlying risk. There is no change there. But it is clear that we see sometimes a bit of volatility and a bit of questions.
So, Mathieu, talk to me a little bit about, JP Morgan has this resilience fund. So this is the idea because geopolitics is much more pronounced. We don't really know what happens. Countries just need to be a lot more resilient. So what does that mean in terms of investment deployed in Europe?
So, that's a key topic that you mentioned. And I think that we decided back in October last year to launch that SRI initiative, so that's Security and Resiliency. And we'll deploy $1.5 trillion of financing over the next 10 years. At the beginning, we thought that we would do that mainly in the US, but we received so much interest in Europe and also in Asia and in the Middle East and Africa that we decided to do that globally. And I think for my part in EMEA, so Europe, Middle East and Africa, we'll focus at the beginning on UK, France, Germany, Italy, and Poland. And we'll work with the major European firms and the governments as well to help them to understand what are their needs in terms of defense, can be minerals, can be healthcare and key infrastructure as well, and try to see how we can help them to finance their needs. And we know that this is a long-term project, but Europe needs to be more independent. That needs to be stronger as well, because we live in a world where, there is competition with the US, with China, with India, with Russia. And I think Europe needs to get together and be a strong continent on its own. And it's good to hear that now. I think the political landscape is changing as well. We see more and more political people, talking and trying to move into that direction, having a stronger Europe and more independent. So that's the objective of SRI and what we want to achieve with that.
Mathieu, we had a story last week actually saying that JP Morgan traders that had moved to Paris because of Brexit, some of them are coming back to London. What does this mean? So,
as you know, we moved a lot of people to Europe after Brexit. We are fully committed to Europe. Now we are, clearly assessing the business as we do, regularly. There is no change. So I think the objective as well for us is we have a big hub in Europe, we have a big hub in London, we have a big hub in New York and in Asia. People can move all around, and we do that when we discuss as well with regulators. But we are fully committed to Europe. We continue to hiring significantly in Europe. There is no change there, to be clear.
There's a lot of political news in the UK. We're kind of all on tenterhooks to see what happens if the Prime Minister stays. Could it change your plans for JP Morgan in the UK?
I don't think there is any idea of change at the moment, and I think it's clear that the situation, is evolving. We are, assessing that, which is exactly the same in many countries in Europe as well. So I don't think we can say that in any country in the world today there is kind of no volatility or on that side. So I think as we do, we try to assess the positive and the negative. I think for us, we are in Europe for more than 200 years, and we'll stay there on the long term. So our objective is to stay close to any party that will be in power, try to have a dialogue, try to, let's say, explain why they need a strong financial system, why they need strong banks as well. And that's true for JP Morgan, but also having strong European banks. That's something key for the future of Europe, and one of the first pillars of having a strong Europe. So that's also something that we spend time to explain and try to, for those individuals to understand the rationale of having such a strong sector in finance.
Mathieu, how much should we worry about private credit?
So, we look at private credit. Private credit is a business that we've been doing for 150 years. So it's not new for JP Morgan. We like the underlying, we like the credit business. Now, we've seen a lot of liquidity coming in. As you know, and Jamie mentioned the issue we had with Tricolor and the cockroaches, but that was designed to JP Morgan, and we've done a full review of that. We are comfortable with the position we have. Now, as I discussed before, what is important is to have diversification in your business. Like in any business, that's true for private credit, but could be true for also other businesses. If you are too concentrated on one underlying or one industry, there is a big risk. And what we see today in private credit, the issues are coming from those problems, either fraud or risk concentration under very specific underlying. So at JP Morgan, we try to be diversified, but clearly we like the credit business, we like private credit. We think that on the long term, it's a good business, but we have to be diversified and have a bit of cautiousness in those markets.
Mathieu, thank you so much for joining us today. That was Mathieu Wild, EMEA Co-Chief Executive of JP Morgan. With that, I'm going to send it back to you in London, Guy, and we'll have plenty more throughout the day here in Paris.
I shall look forward to all of that. Enjoy Paris, Francine. Thank you very much indeed. And we are basically drumbeating towards the big interview a little bit later on. Jamie Dimon's going to be joining Francine at the Banks Conference. Looking forward to that conversation. 2:45 p.m. London time, 3:45 Paris time.
Okay, before that, we're going to discuss the ongoing disruption to global shipping from the Iran war, of course, with the CEO of logistics company Wallenius Wilhelmsen next. That's coming up. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back. This is the opening trade, 8:45 here in London, Tuesday the 12th of May, and the UK Prime Minister finds himself under pressure, and that is being expressed in these markets. You can see the pound against the US dollar at 135.21, down now by nearly 0.7%. That is not all dollar effect. That is very much the domestic story here in the UK. We've also got the 30-year yield in there for you at 5.77. We're seeing that up by 10 basis points. The yield is higher by 10 basis points, and we see across the UK curve some movement in gilt markets with those yields higher, on nervousness about who, if anybody, might follow Keir Starmer if he were to leave office, and what they might do fiscally in the UK, and the FTSE under pressure with the banks a little on the back foot, Guy.
Absolutely. Oil stocks are, though, up this morning. Names like BP are on the front foot. Oil has been pushing higher, this after President Trump cast doubts on the ceasefire with Iran. Now, the near closure of the Strait of Hormuz continues to disrupt global shipping and has led to concerns about an inflation crisis. The Norwegian-Swedish shipping company, Valorous Wilhelmsen, has one vessel remaining in the Strait. The company's CEO, Lasse Kristoffersen, is with us now. Good morning.
Good morning.
Nice to see you. So you got one ship there?
Yeah, we have one stuck inside the Gulf, still sitting there since the war broke out. And then we have a ground staff of around 50 people running logistics operations for the region. Yes.
Have you attempted to get it out?
We have, yeah, of course we have attempted, and we have had several processes looking at it. But the situation is that the vessel is relatively safe where it sits. Our first priority is the safety of the crew, and they are feeling safe where they are, and that means that a transit has to be less risky than staying where we are. And for now, we have not considered that being the case.
Is there what are the costs that you accumulate as a result of that, having it sitting there? I mean, it's only one vessel, but I'm sure there are extra insurance costs. One vessel out of 130 is not many, maybe. But what's the sort of limiting factor for you?
So, no, I mean, to be honest, for us, this is not really directly affecting us that much. Our main concern is with the crew and their safety and well-being. And the costs are not that big for us. So the issue is the opportunity cost. Of course, we'd like to use that vessel. We need to replace it. On the other hand, the Middle East represents, in our segment, around 10% of the global demand. So obviously, and there are no vessels going in, so the total demand should have been lower for vessel, which is not because of the Chinese enormous export booms of cars and equipment, and that's really driving demand, and we're still sold out.
And that's what you carry a lot of, cars, equipment, and the like. Right. We heard from President Trump yesterday that he is thinking about resuming Project Freedom, which was to escort vessels out of the Gulf. what would go through your mind? What would you be thinking? What decisions would you have to make if that were an opportunity that the company could take?
Number 1 to 10, that's safety and the safety of the crew. And as I said, the situation is now that the vessel is relatively safe where it sits. So it has to be a less risky option. And normally in these decisions, what I do is I picture, would I put my son on that ship? And if I would, then we can sail. If not, I wouldn't. So in a way, you need to personalize it. We don't think that a military escort system would ever be able to compensate for that risk. So most likely, for the majority of the vessels to get out, and certainly to start coming in, we need a ceasefire that's lasting, and also safe trading lanes. Nobody really knows where it's safe to trade through the strait right now.
What are your assumptions about how fast it would take to open? If a deal was struck today, how quickly it would take to reopen the strait?
I mean, commercially and operationally, very quickly. So the issue is around the safety assessment and whether there are safety threats. I think that could go relatively quickly as long as there is a defined safe route. So the second we have a defined safe route for vessels, they are lined up and they could exit quite fast. The big issue, though, is, of course, when do we have the scale of that trading path to bring vessels back in and start normal trading, and that would probably take some time, but it's relatively quickly as long as it's considered safe. So that's kind of a 0-1 situation.
Just by the very nature of what you do and those trade links between east to west and carrying those kind of cargoes, digging equipment and cars and other heavy goods, you have a finger on the pulse of the global economy. What is that looking like? What is the trade impulse looking like right now?
The amazing thing is that global trade is growing. I mean, despite what we hear around the trade wars and others, global trade is growing twice as fast as the global economy. And we see that in many different aspects. We are very much into the heavy equipment going into construction, mining, but 2/3 of what we do are cars. And what we are witnessing now is this enormous innovation, technology, and manufacturing push out of China. And in, let's say, a handful of years, they've gone from exporting 1 million cars to this year probably approaching 8 million cars, a growth that's never been seen before in history of mankind, really. So and it's not only this, call it the Chinese Revolution, is not longer driven only by their ability to produce with low cost. It's really driven by their ability to innovate and with new technology. And if you look at the rating of technology, how Gartner rates OEMs for technology, top 5, 4 of them are Chinese these days. So this is really driven by innovation and technology, and it seems to just continue.
I was going to ask you about fuel, which I assume is a bit of an issue right now. But actually, you're talking about Chinese cars. Trump is going to China this week.
Yeah.
Have you heard anything about the possibility of a Chinese deal to maybe improve Chinese car makers' access into the US market?
We have not, and this is a very, of course, very political theme. Today, there are hardly any Chinese cars sold into the U.S. market. Every other, Korea, Japan, Europe has access, but China has not. If you watch this industry over time, in the end, technology wins. So if you have the better technology, you will get market access somehow at some point. Whether that will happen now, it's just speculation. We have no input of that, but it would probably be a slow start because they are very much focusing on protecting their automotive industry in the US.
It's great to see you. Thanks. Come back anytime. It's really useful to get this kind of input into what is going on. Lasse, thank you very much indeed. Lasse Kristoffersen, the CEO of Valdres Wilhelmsen, in the shipping story. Quick check on what's happening with the UK story right now. Gilt yields are certainly climbing. We've got 30 years at very elevated levels this morning. Let me show you a quick live shot of what is happening in Downing Street at the moment. We are anticipating the start of a cabinet meeting very shortly. Arrivals, therefore, probably underway. I haven't actually personally seen any of the cabinets arriving yet, but I'm sure they're either on their way or inside the building. Let's talk about how this is all going to play out. UK banks are certainly taking it on the chin this morning as a result of the turbulence we're seeing. M Live's Werner Conningham joining us around the table. Gilt's climbing.
We're seeing double-digit gains, particularly the 30-year gilt yield hitting the highest level since 1998, that benchmark that we sort of keep reaching. This is, times of acute political uncertainty. It's where we'd expected to see it expressed, but I think actually what's worrying as well is we're seeing the pound falling, currently at session lows, biggest sort of drop in, over a week.
Yep.
The two falling together really is quite a negative signal. And that's as inflation concerns are rising as well because of geopolitical pressures. So there's a lot going on there, and none of it is good.
We're watching all of these news lines drop in. I mean, it is worth noting that this news falls into a market where yields are on the rise more globally as well. Certainly the European context, you've got Italian BTP yields up by 8 basis points, and the UK typically does move more than others. We've seen that many times, but the market is already worried about inflation. We've got oil prices up at 106, up by more than 2%, as if to sort of bring together the two things we're dealing with: UK political uncertainty and inflation concerns emanating out of what's happening in the Middle East.
Well, exactly, and we're seeing the Bank of England, or bets on what the Bank of England are going to do, creeping up again today, moving sort of towards 3 rate hikes. That's also happening for the European Central Bank, as those inflation worries are expected to impact monetary policy decision. But as you say, it is particularly an acute concern for the UK. We are a net energy importer, therefore more exposed to prolonged energy price shocks. So that's probably playing a lot of the part of the lower end of the bond yields curve rising. But then we've got this political risk at the end, at the longer dated end, which is also really weighing. And I think it just seems to be a fairly indiscriminate sell-off, because we're actually seeing similar moves in all bond durations, which is quite an unusual thing to see. But of course, that is what is happening in Europe as well, to a lesser degree today.
Well, when the banks are being hit hard this morning. So Barclays is the biggest loser across the FTSE 100, down almost 4%, 3.9%. NatWest is down 3.8%. On the other side of the ledger, you've got BP and Shell. That's not a big surprise on the oil story, but the banks are under pressure. Is this a UK equity market that is only belatedly waking up to the political risk? How sustained do you think this is?
That's a good question. I think what we've seen is a lot of the sort of higher interest rate concerns perhaps have sometimes been better for banks, that they're lenders. But overall, domestic uncertainty starts to change the sort of investment case for the UK. We've heard some of that coming out today. Of course, if the debt is seen to be changed in some way. So I think what we're seeing is the sort of riskier assets in the UK are selling off, and it doesn't seem like we're going to see any massive turnaround there. We've kind of got through earnings season, so I don't know what the catalyst is for improvement until some of this situation is resolved.
We are still watching number 10 then, Morwenna. Thank you very much. Bloomberg Market Live's Morwenna Coniam. Watching number 10, watching the door as we see cabinet ministers arrive. David Lammy has arrived, not seen many more yet, but we will continue, of course, in the hour to come through the Pulse. Continue to watch this door. The Deputy Prime Minister then in attendance, but waiting to see if others are arriving soon. The other big item on our agenda, JP Morgan Chase CEO Jamie Dimon will be joining the Bloomberg team at 2:45 London time. The Pulse is up next. The opening trade then, finishing out with European stocks on the back foot.
And gilts up. That seems to be the narrative. We're going to keep a very firm eye on what is happening here. The UK story front and centre. Jamie Dimon joining us later. Have a great day, everybody. This
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live at JP Morgan Global Markets Conference here in Paris, and these are your top stories. A crucial cabinet meeting. The pressure grows on Keir Starmer as dozens of MPs call for the UK Prime Minister to get ready to step down. President Trump says a ceasefire with Iran is on, quote, massive life support, but says a diplomatic solution is still possible. Plus, close coordination. Japan suggests that the U.S. has given tacit approval to recent suspected intervention to support the yen. Now, there is a lot going on, not only on the geopolitical front, then a reminder, it is tomorrow that President Xi also meets President Trump. This is what the markets are looking at right now. A retreat in high-flying technology stocks seem to be dragging lower equities as traders wait for that U.S. inflation data. So I'm looking at stocks Europe 600, down some 0.8%, a similar move for the NASDAQ 100 futures. Look, a couple of other things we're watching out for. Brent crude, always a good idea to look at the oil markets, 106.5. Again, Brent rising for a third straight day with the ceasefire in the Middle East appearing increasingly fragile. And then we'll look at sterling always. We could also look at gilts, given all of the political turmoil that we see in the UK. Sterling 135.19. So welcome back to The Pulse, live from JP Morgan's annual Global Markets Conference here in Paris. Investors reflecting on the year gone by, also asking where the different asset classes go from here. So on the program today, I'll be joined by JP Morgan's Global Head of Market Strategy and the Global Head of Credit Trading. But first, of course, well, we go to Downing Street. And then later in the day, we'll also be speaking to Jamie Dimon, the Chief Executive of JP Morgan. Catch that conversation at 2:45 p.m. London time. But first, ministers are arriving in Westminster for a pretty crucial cabinet meeting due to start in 30 minutes. The UK Prime Minister is under pressure after dozens of lawmakers called for him to lay out a plan to resign. Well, Bloomberg's Lizzie Burden joins us from Downing Street. Lizzie, just bring us up to speed on what's happening there.
Well, Francine, it seems that the Prime Minister is losing his fight to stay. You've got Cabinet Ministers arriving. Darren Jones, the Chief Secretary to the Prime Minister, just stepping into number 10 now. As you say, that meeting due to start in just under half an hour. But what's worrying for Keir Starmer is that not only have at least 70 of his 403 Labour MPs now called for his departure, it seems that those calls are coming from within his cabinet too. Reportedly, the Home Secretary, Shabana Mahmood, privately urging him to set a timetable for his departure as well. Darren Jones earlier this morning on the airwaves telling Times Radio that the Prime Minister is considering his colleagues' concerns and he's going to make a decision on his future. So quite the change of tone from what we heard from the Prime Minister yesterday in that defiant speech that he was going to stay, and indeed over the weekend saying that he intended to be here for another 10 years. But you can see that there's a rift in this Labour Party between those who are calling for an orderly transition code, that the next leader will be Andy Burnham, the Mayor of Greater Manchester, who of course doesn't have a seat in Parliament yet, and those calling for a swift timetable to replace Starmer. Code, Health Secretary Wes Streeting, his aide quitting, potentially suggesting that he is preparing a leadership challenge. Look, even talk about who could replace Starmer is weakening for the Prime Minister. We learned it with the Conservatives before him, that the herd mentality just gets faster and faster. It builds the momentum in Westminster. But when we look at the market moves this morning, not a pretty picture in the UK. Gilt yields rising, the 30-year up 10 basis points this morning, the highest since 1998. The pound falling as well. So huge questions for these ministers going into number 10. We'll wait to see what the answer is after this cabinet meeting.
Lizzie, thanks so much. Lizzie Burton there outside number 10. Of course, global markets have faced mounting uncertainty over the past few days. Today brings no shortage of catalysts. So we look at the UK. We also have the U.S. Treasury Secretary Scott Bessent in Japan, where the finance minister has signaled tacit support for a suspected intervention on the yen. Then a closely watched U.S. CPI print looms later today, and President Trump, of course, is due to head to Beijing for a high-stakes summit with China's President Xi. So with us now, Dubravko, head of global market strategy at JP Morgan. Dubravko, thank you for joining us. You're a busy man. There's just a lot going on. There's a lot of risk out there, a lot of geopolitics. If you look at the UK, does that change the trajectory for UK assets if we have a new prime minister in charge?
Look, so first of all, yeah, we're dealing with a very complex backdrop, a lot of moving variables. I think as far as the UK, there's definitely some risk in that the gilt market could act up a bit, and you could see sort of rates sort of backing up a bit further. Still a bit too early to say, but we think that the sort of transmission mechanism into global rates will likely be more muted, and the bigger story for us is really how does the current energy shock and the oil shock tied to Iran and the Strait of Hormuz play out in the coming weeks.
So how does that play out? First of all, I mean, it plays out in bonds, it plays out in energy prices and inflation.
Look, we've had a pretty big supply disruption, and so far inventories have helped offset a decent amount of that shock. And so we're now basically, as we go into June, we're basically looking at a situation where inventories are getting depleted, and we're going to be getting closer and closer to what you could basically call operational stress levels. And so we think that one way or the other, that's going to start to force potential reopening of the strait, because otherwise the situation is just going to get uglier.
But what does that mean for markets? Because the markets have largely looked through this. I mean, we're seeing record highs on many indices despite the situation. And diplomatically, it's really difficult to see a way forward with a lasting ceasefire.
I mean, look, markets, especially if you look at risk assets, equities, even credit markets, things have generally moving in the right direction outside of that initial sort of fear. I mean, I would say a few things. One, we're entering this energy shock with relatively healthy inventory. So the runway is perhaps a bit longer than what we initially feared. Yeah. And at the same time, the fundamental story underpinning corporate earnings has just been blockbuster. Earnings delivery has been extremely strong. 1Q earnings season has come in much stronger than what people expected. And so I think the earnings, the AI narrative has just basically been overriding the whole geopolitical oil situation. Now, obviously, if you sort of fast forward another, call it 4, 5, 6 weeks, situation remains unresolved, you got complacency.
I mean, what does that look like? So it's a correction in the markets? Because again, we had a stellar earnings season, but actually, the next couple of quarters, I think, are a lot more uncertain.
So I am less worried about fundamentals because it's not about expectations. Earnings delivery is coming through. And so if anything, I would make a case that multiples and valuation has gotten a bit easier, even with the markets moving higher, just due to this massive earnings revision cycle upwards. Having said that, you got potential risk around excessive crowding that could cause, flash crashes. Momentum stocks are bid up quite aggressively. So again, short term, I definitely think there is risk and there could be some digestion periods, but unless the earnings picture changes, I think, people buy the dip.
I mean, when you look at inflation, so we have that CPI number, I mean, this will be decisive in deciding what central banks will do. And actually, if you speak to central banks, they're kind of on the fence, right? They're themselves worried that they're either too late to the game or get it wrong.
I mean, central banks have been removing that sort of, call it easing bias that we had late last year coming into this year. Some already talking about hiking, Fed so far on hold. Having said that, yes, a lot of focus is on inflation and the upcoming CPI print, but I think it's also something that's pretty well advertised. So the question is, to what extent does the market look through this as a more of a temporary versus more of a permanent sort of sticker shock?
I understand that the hyperscalers are funding a lot. I understand that CapEx, rightly so, is sustaining the economy. Do you have any concerns about AI?
I mean, yes, there will definitely be concerns about AI. I don't think it's in the next 6 months. I don't think it's in the next 12 months. I think the concerns are just basically whether, AI monetization and think about the AI downstream complex starts to gain enough momentum in the coming quarters to help offset the eventual deceleration that we will be seeing in terms of this sort of, AI upstream and sort of CapEx build out, which is going to come. Right now, we're still sort of thinking that we're effectively just entering now year 4 of what should be roughly a 7-year cycle, and you're dealing with a lot of shortages, a lot of bottlenecks that are basically pushing things out. So I'm not so much worried on the demand side there, not at this point.
But so what happens in 2-3 years? I mean, do you need to start preparing something now?
I think 2-3 years out, it's too far. There's so many things that we have to deal with before that. The Iran situation, midterms in the U.S., what happens with central banks. So I think it's a bit far. I think people are just kind of focused, sort of call the next 12 months. And the picture there looks pretty strong. I mean, I do think the bigger question is sort of further out. If you don't see enough monetization momentum building up, and if you can't sort of bridge that gap, you could then basically end up running into a little bit of a tech bubble, type issue, where you then basically get a bit of a burst.
Do you worry about China tech actually taking, what happened with DeepSeek, or do you worry even, we've had a couple of wobbles in the last couple of months where, you'd see, for example, some of the software companies being slammed. Are we going to see that periodically?
Look, I think it's an environment that continues to change very rapidly. So I think it's very hard to make any big, bold, high conviction calls in terms of how the AI story and how the LLM story is going to evolve. I think U.S. is definitely going to have a handful of top players that will stay very, very competitive. I do think China at the same time is making a ton of progress, right? So I think probably there is space for both of them. I wouldn't necessarily say that one sort of overtakes the other.
Do you see any market dislocations? Is there anything at the moment that you think is a good opportunity?
There is, I would say, a decent amount of market dislocation. You're basically looking at 2 major shortages happening globally. The physical oil shortage, which is sort of fueling a big momentum trade around it, basically people going long the exporters versus the importers, and then you're still looking at the shortage of compute, chips, memory, storage, and that's fueled a freaking massive momentum trade, basically going long AI upstream versus sort of downstream. So yes, things are pretty extreme, and I would say probably one of the more interesting parts for me these days is the low vol.
Yep. I'm here and ready. Okay, we are, of course, live at the JP Morgan Summit in Paris. Francine Lacroix is on the ground for us. We are, of course, building up to that key interview with Jamie Dimon later this afternoon, UK time, that Francine will be conducting. Coming up, as private credit firms report billions of dollars worth of dry powder, we're going to discuss where it might be deployed with the chief credit strategist at Goldman Sachs. That is next. This is Bloomberg.
multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Tom McKenzie, of course, stepping in, at least temporarily, for Francine Lacqua, who is at the JP Morgan Global Conference in Paris. We're trying to re-establish that line for you. But let's get an update now in terms of what's happening vis-a-vis the US and Iran, because President Trump has cast doubt over the ceasefire with Iran after rejecting Tehran's latest peace offer, prolonging the effective closure of the vital Strait of Hormuz.
Right now, it's on life support. They understand these are all medical people. Dr. Oz, life support is not a good thing. Do you agree?
Bad prognostic.
I would say the ceasefire is on massive life support, where the doctor walks in and says, sir, your loved one has approximately a 1% chance of living.
Well, for more, let's bring in Jemana Besedji, Bloomberg Horizons Middle East and Africa anchor, of course, who's been on the ground for us, covering this for us and live today out of Dubai. What is the situation right now, Jemana? What is the current assessment of the way the US is positioning after this apparent rejection of this Iranian offer?
Yes, well, it's interesting to see the various comments that Trump has used to describe the situation as it stands between the U.S. and Iran. And of course, a day ago, he had described the Iranian counterproposal as being, quote, totally unacceptable. Overnight, he also suggested that the ceasefire was, quote, on life support, and then went on to describe the Iranian proposal, and this is a quote, as a piece of garbage. I will say that based on our reporting throughout, the almost 3 months of this war, those types of comments, those jabs, don't tend to go down well with the Iranian leadership. So we'll see whether there is actually going to be a response to some of the social media rhetoric and some of the posturing that is coming out of the U.S. That being said, President Trump was asked whether this necessarily would mean a return to hostilities and military conflict, and he did say that a diplomatic solution was still possible. Now, you have to bear in mind, Tom, that there is that important high-levels meeting taking place between Trump and Xi later this week. The Iranian foreign minister met with his counterpart in China last week. Iran, obviously, on the agenda. China has been reiterating their call for de-escalation and an unconditional reopening of the strait. So you have to assume that it is going to come up in the various topics that are going to be discussed between these two leaders. And also, it is unlikely that the U.S. may want to resume full-fledged hostilities in the run-up to this meeting or even around the time that it's happening. So what we are in for, perhaps, is a couple of days of wait and see what happens. Ultimately, though, there's still an impasse between what the U.S. are pushing for, what the Iranian side are coming back with, and there's still a real possibility that President Trump may actually restart this so-called Project Freedom to forcefully reopen the strait again. So that's what we're on lookout for this week.
Okay, and of course, what happens in terms of the physical supply of commodities through that strait as well? Jumana, we've been getting updates from executives in the region. We had Saudi Aramco, of course, over the weekend with some pretty stark assessments in terms of when that market gets back into balance, potentially 2027. But we've also hearing from executives at major gas producers as well in the region. What is the update? What are you hearing from executives involved in the production of commodities out of that region that's facing those constraints?
Yeah, it's interesting. So we were reporting on Aramco earnings yesterday, and obviously they have seen an uplift to their earnings on back of higher oil prices and the fact that they were able to reroute a significant chunk of their oil supply through that east-west pipeline. But I think warnings coming through from the CEO of Aramco, Amin Nasser, really carried some clout in the market. And he was saying essentially that the longer the strait stays closed, the more you're going to see supply getting taken out of the market to the tune of about 100 million barrels a week. Already, we're looking at about 1 billion barrels that have been taken off the market. The longer this goes on for, the more you're going to start to see that physical supply contracting. And he says that it's going to start to show up once again in pricing as of June. So that's something to watch out for. He also said even if the strait recovers or reopens today, you're not going to get a full normalization possibly until 2027. So that's one warning coming through from an industry leader. Earlier today on our show, we also spoke to ADNOC Gas CFO. They released their earnings. They also said that they're estimating about a $400 to $600 million hit to their second quarter earnings on back of the disruptions around the Strait of Hormuz. I asked the CFO how long it would take them to get back to full capacity if the strait did reopen, and he said, we can't give you full visibility on the timeline, but of course they are sitting ready, can load the vessels and get them out. But he said, I can't give you a number, whether it's 2 to 3 weeks. And I think here what we can piece together, Tom, is once the strait does fully reopen, and of course that is a massive assumption, it's not necessarily going to be a button that you switch on that will return everything back to normal. It is going to take time. And many of these industry leaders are guiding to months, possibly even years in some cases, for some of those full energy sites that had been damaged to get back to where they were before the war. So, the normalization that people in energy markets are looking for is not going to happen imminently, per industry leaders that we've spoken to from the Gulf.
Okay, Jumana, thank you very much indeed with that update out of the region. Bloomberg's Jumana Basecci, of course. Let's get to how the geopolitics and how what is happening across that space, the volatility, the uncertainty, and how that potentially ties into the credit markets as well. It's interesting, Moody's putting out a note earlier this morning suggesting that they are now, base case is their scenario that the strait will remain closed for longer, and that potentially has credit ramifications, particularly in Asia. Meanwhile, after tapping the US debt markets for more than $400 billion to finance their AI spending, since mid-2025, hyperscalers are aggressively pivoting to European capital markets to fund the next phase of the global infrastructure race. Joining me now, I'm very pleased to say, is Amanda Lynham, Chief Credit Strategist at Goldman Sachs. Amanda, good morning. Thanks for joining us around the set. So let's start with that story and with that change in emphasis. Tapping the European markets, what is the rationale and how does that story evolve from here?
Good morning. Thank you for having me. I think this is a really exciting time in the corporate credit markets for a few reasons, but one is kind of the massive scale and scope of this AI-related spending plan is going to require a range of markets to participate. So you had mentioned that corporates are diversifying their funding outside of the US IG market. This is really driven by market saturation and issuer concentration constraints in the US IG market. It's obviously a very deep, liquid, broad market, but corporates need to be thoughtful about how much debt they can issue into any one market. So we are seeing corporates tap euro, Swiss, sterling, even Canadian dollar and Japanese yen. I would say of those markets, the European IG market is the largest and the deepest of those other regional corporate bond universes. But this is a trend that we think will continue. We're in the early innings. One crazy statistic that we've monitored is that if you actually take the European AA corporate market, 53% of that index is driven by US-based companies, and actually 2 of the hyperscalers are among the top 5 issuers already. Okay. So this is really accelerating. On top of that, we also see roles for other structures to participate and even other markets like private infrastructure and real estate. And so it's hard to kind of understate the paradigm shift that is happening in corporate credit markets as a result of coalescing around this funding need.
Yeah, it's really interesting. And to your point, we've seen the likes of Alphabet tapping the markets, the Euro markets, and today yesterday. Amazon in Swissies as well, Swiss price debt as well. Amazon looking to access the markets there. But for you, this is a healthy dynamic. Does it suggest that the US markets, there's a bit of indigestion in terms of the amount of debt that's being absorbed there?
It's not indigestion. It's actually, it's very predictable, actually. If you take the US banks, which are a great case study, the US banks are the largest sector in the US IG market, but none of those banks have more than $175 billion of debt or represent more than 2.3% of the index. That's really just asset managers won't want to overweight their portfolios in any one given name. So it's a normal kind of progression. I would say two things. There's a lot of runway for this sector to issue because keep in mind they're starting from a point of very low leverage. Many of these hyperscalers are cash rich, so their balance sheet leverage allows them to add debt capacity. I think as we progress, however, and this is the second point, through 2027, 2028, investors will just need to plan more thoughtfully where they want to take this exposure. Do they want it in high yield? Do they want it in IG? Do they want it in the private infrastructure market? If they're thinking about IG corporate debt, do they want it in US or in Euro or in other markets? And so I think there is a bit more thoughtfulness that investors are navigating this decision tree. And I think for now, there's for sure a lot more scope, but that will probably become more pertinent in 2027 and 2028.
Okay, I like the time frame is important and really interesting because free cash flow, even amongst the hyperscalers, is starting to shrink. And so that brought me on to the question of how long this trend continues. And you know, the bid to cover ratios and how those adjust along those kind of timeframes.
I don't think it's an issue of access to funding. I think it's just an issue of picking your spots and maybe a more nuanced conversation around pricing. Our equity analysts, for example, are expecting $4.5 trillion of capex spending from the 4 largest hyperscalers from 2025 to 2030. So it's a magnitude that is really unlike anything the corporate credit market has ever seen. So your point is well taken that it will require a range of financings. Our U.S. equity portfolio strategy team has already flagged that hyperscalers have cut back on share buybacks. So there will be a range of participations, but I don't think it's an issue of access. I think it's just an issue of picking your spots.
On private credit, are your clients preparing, are they adjusting their portfolios potentially for more pain in that space?
No, actually, our view on private credit, if I had to sum it up, is one of dispersion, but not widespread market disruption. There's a lot of focus on retail redemptions in the private credit space. That's 15% of the market. The bulk of the AUM in the private credit space is actually institutional, where those redemption limits don't exist, and the redemption possibility doesn't exist in the same way. It's really locked up capital drawdown funds. If anything, I think if there is a disruption in, say, credit generally, private credit would deploy on the back of that because there's a significant amount of dry powder. So our conversations with investors really looking for opportunities to deploy distressed, opportunistic, special situations. Again, doesn't mean that we won't see disruption in terms of certain sectors or vintages, but it's really a point on dispersion, not a widespread market disruption of the asset class.
So there could be more withdrawals, but also some opportunities. Do you see more withdrawals potentially from private credit this year?
Our equity strategists that cover those alternative managers have said that basically the next redemption window in June, you could see more. But I would say that's very well known at this point. I would say that's a known risk. I think more generally, the key signpost to watch in our view is the growth backdrop, because outside of a sharp downturn in growth, history tells us that it's very difficult to get a sharp increase in defaults and realized losses in both private credit and liquid credit. And so that's really the signpost that we're watching is how does the economy hold up? Our economists' expectation is for below trend growth, but nowhere near recessionary levels. And that's a pretty fine backdrop for credit. So again, it's dispersion, but not widespread market disruption. There could be some kind of mini cycles within certain pockets of certain sectors, but that's nothing that the credit market hasn't seen before, whether it was the energy downturn, the retail downturn, et cetera.
Okay, really, really valuable context. Yeah. Amanda, thank you very much indeed. Amanda Lynham, Chief Credit Strategist at Goldman Sachs. Coming up, how are investors navigating the geopolitical uncertainty? We'll get more insights, and we're going to discuss that with the Chief Executive of MSCI. That is next. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. A crucial cabinet meeting. Pressure growing on Keir Starmer as dozens of MPs call for the UK Prime Minister to get ready to step down. President Trump says the ceasefire with Iran is on, quote, massive life support, but says a diplomatic solution is still possible. Plus, close coordination. Japan suggests the US has given tacit approval to recent suspected intervention to support the yen. Let's go to the UK politics right now, though, because ministers are arriving in Westminster for a crucial cabinet meeting due to start in the next few minutes. More than 70 Labour Party members of Parliament, MPs, are said to have called on Keir Starmer to set out a timetable to step down as UK Prime Minister following last week's local election losses. Bloomberg's Lizzie Burden joins me now from Downing Street. What is the mood right now on the ground where you are? What is the mood likely to be behind that black door of number 10, Lizzie?
Well, Tom, the ministers have been filing in for this cabinet meeting. It is set to be an awkward one, perhaps a dramatic one. And I have to say, there is an echo of the days that Keir Starmer promised to end, the leadership melodrama with the Conservatives. The question of how it could come to this so soon after a landslide general election victory. And of course, the picture in markets, gilt yields up and the pound down. Now, inside this meeting today, the Chief Secretary to the Prime Minister, Darren Jones, has insisted it's going to be business as usual. They'll be discussing the Iran war, the King's speech, but it's hard to believe that they won't also be discussing Keir Starmer's future. Already we've seen at least 70 of the 403 Labour MPs calling on the Prime Minister to go. And this morning we've already also had a junior minister quitting over Starmer's future. That is Mayata Fanbule. We've heard privately that the Home Secretary Shabana Mahmood has been urging the Prime Minister to set a timeline for his departure as well. So this is moving closer and closer within the concentric circles towards the Prime Minister. He really is on the ropes today.
Talk us through, Lizzie, then, the market implications of this. We're seeing a pretty pronounced sell-off in UK bonds. We're seeing the pound under pressure. How much of this will factor into the discussions, do you think, amongst the Cabinet and amongst others around the Prime Minister's team?
Yeah, 30-year gilt yields at the highest since 1998. We've seen the pound against the euro at a 2-year low. Because for the market, Starmer is the best option. They do not, traders, want anyone more fiscally lax than Keir Starmer. interesting question around whether his Chancellor, Rachel Reeves, would stay if there were a different Premier. Her allies reportedly telling the FT that she should stay for the sake of market stability, even if there is change at the very top. There's a question for inside there. But as we say, it is an ugly picture in this market because, frankly, it is difficult for the likes of Andy Burnham, the Mayor of Greater Manchester, currently a potential rival to Starmer, to shake off his comments that we shouldn't be in hock to the bond market. Yes, he's walked them back, but it seems to be something that bond vigilantes cannot forget. They seem to would prefer to have this fiscally prudent Prime Minister and his Chancellor staying behind that black door.
Bloomberg's Lizzie Burden on the ground for us in Westminster on potentially another pivotal day for the UK leadership. Let's hand it back right now, though, to Francine Lacroix, who's on the ground in Paris. Francine.
Yeah, thank you so much, Tom. We're here in Paris at the JP Morgan Global Conference. Now, Korean stocks fell more than 5% after a top policymaker called for citizens to be paid a dividend from AI profits. Now, this, as Michael Burry, the investor made famous in The Big Short, warns that the Nasdaq is set to crash. Well, let's bring in Henry Fernandez, Chief Executive of MSCI. Henry, it's always so good to speak to you. I'm so sorry I can't be in London with you, but talk to me a little bit about the concentration of some of these big tech stocks. Is this a concern of yours for certain indices?
There is definitely a great deal of concentration. If you look at the Magnificent Seven stocks in ACWI, which is the Old Country World Index, is about 18% of the total index. But also in the emerging market, there is concentration by the tech stocks as well. But we have seen periods like this in the past. In the 60s, there was a lot of concentration in oil companies in the index, reaching up to about 70% of ACWI, the U.S. market reaching 70% of ACWI. And then in the bubble, in the internet bubble in the late 90s, the same thing. And now this period of time. So obviously the market indices reflect is a mirror of the market. So there's nothing we can do about it except, watch it and monitor it.
Henry, is there any way that actually you can address this? I don't know whether there is more of a demand of, for example, capping or in indices where this is less of an issue.
Yeah, there's always investors that would like to cap a particular market. For many years, back in the 80s, people would like to cap the Japan market. There is some effort by some people to cap the U.S. market in their exposure. Our market cap indices in general are basically uncapped, unconstrained, because they are a true reflection of what's going on in the world equity market. So those are unconstrained, but there are some investors that would like to have an index that has less exposure to either a particular stock or a particular country.
So if you look at levered assets, how are flows into that going? And in general, how are investors looking at some of that risky exposure?
Yeah, so if you look at the world today, definitely, there is a confluence of risks, a confluence of changes, very rapid changes from the Iran war, the Ukraine war, the energy supply, problems, the price of oil, AI, and the like. And therefore, all of that has created incredible uncertainty and volatility in financial markets. On the other hand, it is amazing how investors in the world have become so desensitized to a lot of this, and they continue to behave in a normal way. Obviously, they're trying to deal with the volatility in their portfolios. But for example, in our own business at MSCI, we have not seen any effect of any of this in the demand for what we do, which is something that we would have expected, some problems, but we have not seen any effect whatsoever around the world.
So, away from AI and flows into AI-related stocks or indices, where do you see the biggest demand going into?
There continues to be a large demand for U.S. assets. It is amazing. I know you were at a conference in Paris, a JP Morgan conference in Paris. There was another conference here in New York yesterday that a colleague of mine attended, and people were largely bearish in Europe. And there was a colleague of mine from the UK who attended the Milken conference, and was commenting how bullish people are in America. So you can see that it's probably a good time to buy Europe, and it's probably a good time to soften your exposure to America. But that's why you see flows. You see continuous flows into the technology stocks, the AI stocks, maybe not the SaaS software stocks, but for sure the AI stocks. And there's also a good amount of flows going into emerging markets and into some private assets, because of the perceived lack of volatility, even though, obviously it's because the assets don't trade every day, but there's perceived lack of volatility, and therefore there's flow goes into the private markets as well.
Yeah, emerging markets actually have been performing quite well, this in part because of the structural reforms that they put in place over the last couple of years. But are they some of the big winners in the last year?
Yes, in 25, the MSCI Emerging Market Index was flying and did very well. Obviously, after a long period of time of muted performance, and you could see some of the markets like Korea. You mentioned Korea earlier today. There was some volatility overnight because of these taxes on dividends of AI stocks. But the market is being setting records. Taiwan as well, because of Taiwan Semiconductor. The company, and you've seen that, but emerging markets are a catch-all category, obviously a type of country, and therefore you have to be discriminating as to which is the markets you want to go into, because there are some that are in relatively good shape. They have a good amount of energy, they have AI, they have semiconductors, they have a lot of technology, and other ones we are in the opposite position, and therefore will suffer during this period.
Henry, give me a sense of how much demand you see for ETF products and how much you're expected to see that grow worldwide.
Oh, the demand is very large and insatiable in ETFs. Equity ETF, fixed income ETFs, cryptocurrency ETF, and the like. And what we have seen lately, Francine, is a significant acceleration of demand in ETF listed in Europe. Obviously, a lot of the large part of the ETF market is listed in the US, but we're now seeing continental Europe really emerging as a large center for listed ETFs. And of course, we in our company have benefited significantly from that, because this is typically developed market ex-US exposure that is largely listed in the European markets.
I mean, of course, we talk a lot about fragmentation, mainly because of all of the geopolitics and uncertainty out there. Do you believe in deglobalization, and what does that mean, again, for investing in certain markets?
It's a great question. A lot of people are talking about deglobalization. It cannot be further from the facts. What there is a re-globalization taking place, not deglobalization. If you look at the trends on trade, global trade went up 5% in 25. With a global economy that grew a little less than 3%. The sort of global trade is now 35 trillion in the world. And you see trade, happening. You look at China. China, obviously, trade with America went down 30%. Exports of Chinese goods into America down 30%. But trade went up dramatically by Chinese exports into Africa, into Southeast Asia, into Latin America, and even into Europe. So yes, you can focus between U.S. and China as an example. You may focus between U.S. and Europe. And some of the issues associated with tariffs and the like, but the trade, global trade continues to grow, and this concept of deglobalization is not verified by the facts that I just gave you. What there is a re-globalization. The trade is being directed in different flows, different countries, and different regions of the world.
Henry Fernandez, thank you so much for joining us. That was, of course, the Chief Executive Officer of MSCI. Now, we'll have plenty more, of course, from JP Morgan here in Paris. Also, a reminder, Bloomberg LP, the parent company of Bloomberg News, competes with MSCI and others by compiling indices and providing analytics for stocks, bonds, and commodities. Now to some other world news, and Japanese Finance Minister Satsuki Katamaya says her team is working closely with the U.S. Treasury Secretary Scott Bessent on currency policy. The move signals a tacit U.S. approval of Japan's recent suspected market intervention. Now, for more, let's talk to Molly Smith, our editor in Tokyo. So, Molly, what can we take away from Katayama's remarks? Is it a confirmation of intervention?
Well, it's not an explicit one, but we also didn't really need her to confirm that there had been intervention. We already can tell from the accounts at the central bank, at the Bank of Japan, that intervention did take place at the end of April. And there are a couple of now suspected interventions that we're going to have to wait to get confirmation of the accounts. Some activity that took place early in May in the Golden Week holiday here. We won't see that until activity that comes out later this month. But it was significant to hear from Katayama that Bessent did basically, that they are having productive talks and that they're in agreement on these things, and that essentially the U.S. is going along with what Japan is doing in markets right now, even if they aren't explicitly saying that they are intervening in the market.
Secretary Bessent also met with the Prime Minister of Japan, Sanae Takahashi. What more do we know?
Right. So that was later in the day here in Tokyo on Tuesday that Bessent met with Takaichi, and it was kind of similar, just reiterating a bit of what he had discussed with Katayama and saying that the relationship with the finance ministry is working really well, and that he spoke as well about the Japanese economy and said that its fundamentals are strong and robust, and that that's something he expects to be reflected in the exchange rate. Granted, we have to keep in mind that Bessent's previous comments have hinted that he would rather see the yen strengthen by the Bank of Japan raising interest rates rather than through the currency intervention. So he did say that he has full confidence in Bank of Japan Governor Kazuo Ueda, but kind of, looking forward to seeing then if that's kind of giving a little bit of a nudge to if there's going to be a rate hike at the Bank of Japan's next meeting.
All right, Molly, thanks so much. Molly Smith there from Bloomberg. Now, we'll have plenty more throughout the day here in Paris. Coming up, can resilience in the credit market last? We'll discuss all of that with JP Morgan's head of global credit trading, who will be joining me here in Paris. That's next, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevryan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The conversations that matter, the insights that you need. This is The Pulse, and I'm Francine Lacqua here in Paris at the JP Morgan Global Markets Conference. Now, there is some breaking news out of Keir Starmer. Look, we've been talking to you about it all day. He's definitely facing pressure to step down as a Prime Minister of the UK after dozens of members of Parliament called for him to set out a timetable for his departure. We understand that there's a cabinet meeting. Lizzie Burden's outside number 10 Downing Street. That cabinet meeting started about 10-15 minutes ago. The Prime Minister, Starmer, telling his cabinet that he will stay on as Prime Minister. Again, it does seem that the rebellion is growing. Cabinet allies, including the Home Secretary, which is not insignificant, but also the Energy Secretary, are privately, we understand, urging the Prime Minister to consider plans for handing control to a successor. So we'll keep on top of that story to see what happens next. On to credits, private credit. A recent wave of investor redemption requests across a $1.8 trillion market for private credit prompted Blackstone to enlist senior executives in putting up capital to bolster its flagship fund. Well, in the latest episode of my podcast, At Leaders with Francine Lacqua, the company's president, John Gray, told me there's nothing more powerful than putting some money in and being aligned with investors.
The key is you're in the investing business, it's a trust business. And when there's a lot of noise and people are saying this is that, there's nothing more powerful than sort of putting some money in and say, hey, look, I'm aligned with you. Yeah. This is my money. I believe in what I'm saying. And in the fullness of time again, investors will look back and say, hey, they did a good job. And I think again and again for us, focusing on that North Star, which is performance and building trust with our clients, that's what really matters.
So that's the podcast. I urge everyone to go and listen to it. We're here in Paris, and I'm delighted to speak private credit with Sanjay Jamna, head of global credit trading at JP Morgan, who joins us now. Sanjay, thank you so much. So good to talk. Look, when you look at risk out there, right, from a private credit perspective, has it changed for investors, the appetite for private credit in the last couple of months?
So private credit has been in the headlines, as you've just said, and we have to separate between two distinct issues that are affecting. The first one is asset underlying quality, and the second one is investor liquidity. Investor liquidity has grabbed the headline, but really it relates to retail funds, and it's only 15% of the market. So the big question is asset quality.
What are you seeing, though, in general, in terms of inflows and outflows in this space?
So the inflows in the credit asset class are unquestionably strong. We are seeing a rare mix of elevated yields, strong corporate fundamentals, and very strong earnings, and in public markets, very high credit quality.
So, given where we are now in May 2026, where do you think credit spreads are heading?
So the starting point is that credit spreads are consistent with very high earnings and very strong fundamentals. So that's the first thing. There's a lot of question marks as to where spreads are going, but the thing that we've learned in the past 6 years is that companies adjust to shocks. They adapt. And so we've had pandemic, we've had oil shocks, we've had labor shortages and so on. And every single time, the consistent takeaway has been that the companies have been remarkably resilient. So I think that's what's feeding spreads here.
But do you think, Sanjay, that actually investors are adequately compensated for the risks they're taking in this space?
So what's interesting is that a lot more investors now that we talk to are comparing corporate bond yields in fixed income to government bond yields. And the argument that we didn't hear echo even a few months ago, that government debt is elevated and corporates are in good condition, which is really what defines spreads, is coming back to the fore.
But so for the moment, we've seen resilience.
Yes.
Does this last?
Resilience?
Yeah.
There's no reason to doubt that it's going to last. The thing that is often overlooked is that the breadth of the strength has been immense. You just have to look at the Russell 2000 to see that it goes well beyond AI and AI adjacent. It goes to small and middle-sized companies as well.
So, you know, if you look at market dynamics, are you going to see more decompression between, for example, companies and rating bands and some of the sectors?
So credit cycles create alpha, and that's undoubtedly the case. There is, at the moment, a revival of, or a rise, should I say, of defaults and stress from very low levels, right? And nowhere is it more present than in the software sector.
Right. So is that the biggest risk? Is that where you could see something underlying?
So I wouldn't qualify it as a risk. In software, we are past the shock.
Okay.
Right. You just have to look at last week's model releases, and you notice that it did not bring the sort of negative market reaction that came earlier. Right? So we are past the shock, and investors are much more now discriminating and opportunistic and looking for opportunities, and we really have two-way interests.
So where do you see hidden risks in the markets? Where do you see hidden risks in the markets?
I don't think that there are hidden risks. I think the market in general is right. Like, the market is a price level and an equilibrium, that reflects both the risks and opportunities. So, of course, there is always things on the horizon that could develop over time. But as we sit here and right now, we're seeing AI CapEx that is feeding a really strong cycle and robust credit spreads.
But Sanjay, I mean, I guess two questions. The first is, how much of this is driven by rates rather than fundamentals, right?
The short answer is very little. The short answer is very little. The AI CapEx that is coming for a very simple reason. It is that the hyperscalers are seeing demand that is accelerating faster than they can supply it. And so that is unquestionably a positive.
But does the hyperscaler demand, I guess, impact at some point the secondary markets?
At some point it will. At some point it will. But what you notice now is that hyperscalers are accessing a wide variety of markets. They're diversifying away in terms of currencies and structures, and they're really maximizing. The bottom line is record credit issuance in the sector is being absorbed by the market really well. So that's basically showing us that investors are buying into the narrative.
Okay, so interesting. Sanjay, thank you so much for joining us. That was Sanjay Jamna there, the head of global credit trading at JP Morgan. Now, we'll have plenty more, of course, from Paris throughout the day. Don't forget our exclusive conversation with Jamie Dimon, the JP Morgan chief executive. That's coming up at 2:45 p.m. London time. Now, a couple of things I'm watching out for, of course, is Keir Starmer facing growing pressure to step down as a prime minister after dozens of members of Parliament called for him to set out a timetable for his departure. The cabinet meeting is still ongoing, we understand, behind, of course, closed doors at number 10. But Bloomberg has been reporting that the prime minister has told his cabinet that he will stay on. Again, we're hearing more and more, almost on an hourly basis, cabinet allies, also the Home Secretary, the Energy Secretary, we understand, are privately urging the Prime Minister Starmer to consider plans for handing control to successor. Again, the prospects of selecting a new leader has exposed a pretty deep factional divide in the governing party. It's also having an impact, of course, on markets. I'm looking at sterling, I'm looking at gilts, and you're looking at live pictures of probably the most famous black door in the world, the door at number 10 Downing Street. We'll have plenty more throughout the day. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
As an exchange, what can you do to make it more attractive to be a
publicly traded company?
Talk to our customers. We spent a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
In New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock in stalemate. Oil extending gains as President Trump says the US-Iran ceasefire is on massive life support. Staying on, UK Prime Minister Keir Starmer tells his cabinet he will stay at his post amid mounting political pressure. And all of that ahead of a fresh inflation print in the US later this morning. It's already been a big night across Asia. Let's get over now to Winnie Su for the latest. Winnie.
Good morning, Bonnie. Indeed, it has been a very interesting day for Asian stocks, especially as we see that the MSCI Asia here under a bit of a pressure with losses led by the South Korea's Kospi index. We're looking at that benchmark down more than 2% today, with the won also weakening by more than 1%, and that is all coming after a top policymaker said that the country should pay its citizens a dividend from its tax from the AI revenues. Now you flip the board and see how that has driven this roller coaster in the Kospi index, losing as much as $300 billion in value in just 97 minutes. And it did pair some of the losses earlier today when we heard that this is actually not a windfall tax. But still, you can see that the markets have become quite jittery after having risen more than 80% so far this year.
Winnie, thank you very much. Winnie Su there in Hong Kong, and a big morning in Britain in particular as well. Louise Moon is in London with a check on Europe. Louise.
Indeed, Bonnie, we're focusing on London and the UK this morning. Obviously, the focus is on this political risk for Starmer. Will he survive the day? Calls for him to resign. And as you mentioned, he has just told Cabinet that he will stay, but eyes are still firmly on that. So you've got the 10-year yields and the 30-year yields being hit, as well as the pound. And, you know, options traders seeing more movement for the pound, which could happen through the day. In terms of the equity markets and how they're being impacted, we're looking mostly at banks and banking stocks being hit across the board, the likes of NatWest, Lloyds, all of them really being hit on potential for a change in leadership, weaker growth, potential higher taxation there.
Louise, thank you so much. Louise Moon in London. And here in the US, this is the story that is setting the agenda for today. We have Brent crude very close to $107 a barrel again, and WTI well above $100 a barrel. Also, the 30-year yield above 5%. This is the picture, the AI narrative slightly in the rearview mirror at this point, and we're now back onto geopolitics. Of course, the president traveling to China, but that doesn't stop him commenting on Iran's proposal or rejection of the US proposal and talking about it being on massive life support. And you can just see that the pressure is building. We have the VIX very close to 19 once again, the dollar index up 0.3%. And as you can see, after several days of records, so, you know, no sympathy here, we do have futures pointed lower for this session at least. Let's get to some individual market movers now and over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Himson is down quite significantly this morning after guidance missed estimates. Analysts are saying that the results are quite messy because the company is facing higher costs as it transitions into branded products. And so that means some near-term pressure on profitability. And it also means that this noise in financials might take a little while to clear out. So we're down about 15% for that company. We are also in the red for GitLab after the software company announced some job cuts and operational changes. And in response to that, Raymond James downgraded the stock, saying that those internal changes could actually push away top talent and result in a weaker and less capable workforce for GitLab, and therefore the shares are being hit quite a lot this morning. And finally, AST Space Mobile is also down this morning after the satellite internet company reported first quarter revenue that missed analyst expectations. Analysts are saying that that launch problems remain the biggest risk to the target of 45 satellites by the end of the year. And there's a little bit of weakness on the back of those results this morning. Actually, quite a lot of weakness, down more than 11% for that company.
Chloe Melly, thank you so much. Much appreciated. Also coming this hour, we're going to speak with Apollo's head of credit, and that's from the JP Morgan Capital Markets Conference. We'll be drumbeating to the CPI report as well with Callum Pickering of Peel Hunt. And Roche Diagnostics CEO Matt Souse is going to join this as the firm wins clearance in the EU to sell a blood test diagnosing Alzheimer's. Let's start with the UK, though. Deterioration in those markets in the last few minutes. Prime Minister Keir Starmer telling his cabinet he will not be stepping down amid growing pressure to do so. Bloomberg's Lizzie Burton is live from Downing Street in London with the latest. Lizzie, what's been happening behind closed doors?
Well, the Prime Minister, as you say, defiant that he is going to stay at number 10, even if it does seem that he's losing his fight to stay. Just over the past half hour, he's been meeting with his top team behind that black door there, and he's released a statement saying that he takes responsibility for the election result last week. This is what he's been telling his cabinet ministers. So the Labour Party leadership process has not been triggered yet because the country expects us to govern, he says, and that is what we'll do. In other words, he says he's going nowhere. Now, this is a Prime Minister, Vonnie, who isn't known for his ability to read the room. Just over the weekend, he was insisting that he intends to stay for the next 10 years. The reality is now at least 80 of his 403 Labour MPs have called for his departure. We've already seen the resignation of a junior minister, Miata Van Boele, over his leadership. And therefore, it is an ugly picture, as you've all been painting for UK markets this morning. The 30-year gilt yield only climbing. We're up about 12 basis points now. It's the highest since 1998. The pound's hit a 2-year low against the euro, really all because traders are worried about anyone who would be more fiscally lax than this Prime Minister. Now, an interesting question is whether you could see a different Chancellor, the same Chancellor with a different Prime Minister. Allies of the Chancellor, Rachel Reeves, suggesting that she should stay on, even if there is change at the top. That, according to the Financial Times. But she's going to be speaking, or is planned to be speaking, at 11:30 a.m. London time, so we'll wait to see what she has to say. But in terms of who takes over from here, there is a rift in this Labour Party. On the one hand, there are those calling for an orderly transition, in other words, so that the Mayor of Greater Manchester, Andy Burnham, who's leading the betting odds to replace Starmer by the end of the year, has time to get a seat in Parliament. And those calling for a swift timetable, the likes of an aide to Wes Streeting, the Health Secretary who resigned. Streeting, of course, also a runner and rider to take over from Starmer. So for markets, it seems to be a question of when, not if, Keir Starmer leaves as Prime Minister.
Lizzie Burton in London, thank you so much. Turning now to the Middle East, the ceasefire between the US and Iran at a standstill.
It's unbelievably weak, I would say. I would call it the weakest right now. After reading that piece of garbage they sent us, I didn't even finish reading it. I said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support.
Joining us now from Dubai is Jumana Bersechi. Some very dismissive comments from the president there, Jumana, but Iran has not really changed its position, right? It still wants what it wants and it's not budging.
Yeah, well, certainly that's President Trump's characterization of the ceasefire. He described it as being one that is very weak and on life support. But I will just say and remind everybody that the ceasefire is still holding up. And even though it's been described as fragile, we're still very much in a state of ceasefire. But of course, the question is where we go from here. And President Trump in that same press conference was asked whether this would necessarily mean a return to military action, to kinetic action. And he said a diplomatic solution is still very possible, but in the same breath, also describing Iran's proposal as a, quote, piece of garbage. And so that type of language doesn't necessarily go down well with Iran's leadership, as we've spoken about many times in the past. And the messaging coming from them this morning, the parliamentary speaker, Mr. Ghalibaf, he's put up a post overnight suggesting that they don't plan on compromising on any of the conditions that they've set forward with the U.S. So we're still very much in a situation of stalemate. That being said, we're heading up to a crucial week of diplomacy. We know that the President Trump is going to be meeting with his counterpart, President Xi, in Beijing in the coming days. We know that Iran is also going to be one of the items on the agenda. China clearly pushing for de-escalation and a full reopening of the Straits, given the economic benefits that it passes on to China. They're a massive buyer of Iranian oil, obviously. And so we'll see whether anything will come out of those conversations and whether China can actually exert more pressure on the Iranian side even to water down some of their positions. At the same time, many of Trump's more hawkish advisors, some of the more hawkish senators, including the likes of Lindsey Graham, are also proposing restarting Project Freedom. Remember, that was that short-lived project that was launched about a week ago to help guide vessels forcefully through the Strait of Hormuz to reopen it up. They aborted it after a couple of days because it was seen to be too provocative. But perhaps one suggestion that they are moving back towards a more confrontation mode would be if they did restart that Project Freedom. So we're watching out for that in the coming days, in addition to anything that may come through on the diplomatic front as a consequence of that Trump-Xi meeting.
Exactly. May complicate the picture this week, at least. Jumana, thank you so much. Jumana Bersechi in Dubai. And Japan, U.S. Treasury Secretary Scott Bessent meeting with the Japanese Finance Minister and Prime Minister Sanae Takaichi. The discussions ranging from monetary policy to President Trump's upcoming visit to China. Bloomberg's Molly Smith joins us now from Tokyo. So what were the main takeaways? What did Bessent and Takaichi speak about, and what did the Finance Minister tell us that the markets should be paying attention to, Molly?
Right. So Scott Bessent started his day in Tokyo today meeting with the finance minister, Katayama, and Katayama spoke after the two's meeting. She basically confirmed that the U.S. and Japan have been coordinating closely on currency discussions lately, which is something we pretty much understood was already happening, and it's not real. It isn't confirming that there had been currency intervention by Japan, but we also didn't really need to hear that explicitly from Katayama because we've already been able to infer that from looking at Bank of Japan accounts and to see that it looks like there was some intervention that did take place at the end of April. Granted, there still is suspected intervention that happened early in May, and the Golden Week holiday will have to wait to get updated account data at the end of May to confirm that that intervention did indeed take place. And Bessent spoke about that meeting later today after he met up with Prime Minister Takaichi, and he was speaking about his meeting mostly with Katayama earlier in the day, basically confirming the comments that she had made and saying that the two are working together well and that the relationship between the U.S. and the finance ministry is effective and that they are coordinating well on currency moves. So a bit more of the same from him. He also did acknowledge the strength of Japanese economy and that he expects that that will be reflected in the FX rate. We haven't really seen that today, though. There was a bit of a sell-off in the yen following Katayama's remarks, and then a bit of market twitchiness. We saw that the yen really strengthened sharply in the middle of the day, but now has been trading a bit weaker, more around the 157.60 mark in the yen per dollar area.
Okay, we were well off that this morning at least. Molly, thank you so much. Bloomberg's Molly Smith in Tokyo. Now to other top stories trending on the terminal this morning. JP Morgan's prime brokerage business had its revenue soar to a record as clients seized on volatility in recent weeks. According to JP Morgan, clients are actively trading and adding risk. JP Morgan reported an $11.6 billion trading haul for the first quarter, an all-time high and up 20% from a year earlier. Amazon has begun the sale of its first Swiss franc bonds. It's part of a record 6-part deal in the currency. It's selling debt due in 3, 6, 9, 12, 18 and 25 years to raise money for AI infrastructure. The Bezos family gave $100 million to the Robin Hood Foundation at last night's gala, pushing it close to its $1 billion goal for a permanent endowment. The endowment will help sustain Robin Hood's goal of supporting New Yorkers living below the poverty line. Coming up, we go live to Paris for a conversation with Apollo's head of corporate credit. That's next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. JP Morgan's Global Markets Conference is in full swing. Bloomberg's Francine Lacroix is on the ground in Paris. Francine.
Vonnie, thank you so much. Well, I'm delighted to be joined by John Cortese of Apollo. John, thank you for joining us. I mean, there's just a lot to talk about in your space. It's credit, it's trading, it's everything in between. First of all, I mean, you're trying to make the market a little bit more transparent. How transparent do you think this market will become?
In private credit?
In private credit.
Well, thanks for having me, first of all. Really nice to be here. And it's an amazing conference that JP Morgan puts on every year, so happy to do it with you. On private credit, I think the market for a long time was thinking about liquidity in private credit or transparency as a vice, not a virtue. A lot of times we were being told that we're creating a solution for a problem that doesn't exist. But I think most markets, I come from a public markets background, public credit background, generally our view is the more transparency you give, the more potentially liquidity you give as well, the better off for the asset class. It tends to grow a lot better. You have a lot more, I think, of the myths maybe of some of this asset class dispelled because people see it in front of them. So generally, we're obviously making a big push towards it. You heard Mark in our call over over the last week, and really excited to see what that brings to the growth of the business.
I mean, does it change valuations? Like, if you have a more, transparent market, where do you see the different levels of entry points or valuations?
We're very deliberate in which asset classes we're picking to have the transparency. I think we benefit from most of our assets are investment grade. And so if you look at the underlying volatility of them versus the underlying volatility of equity, for instance, much, much lower. Even the broadly syndicated loan market, if you look at that this year, the biggest drawdown we have with all the noise we had on software was about 1.5% for the index. In 2022, the biggest drawdown was 4.5% for a broadly based levered loan index. So our view is that if we're doing really high quality origination, which we pride ourselves on, in investment grade primarily, and even when we're doing sub-investment grade and hard asset, first lien, safe, we're happy to show what we do. We think it's the best in class. And yes, maybe it brings a little bit more volatility, but not as much as the fear of the volatility is in a way. So we're happy to lead the market that way.
John, when you look at AI in general and tech, where do you see, or hyperscalers, where do you see the biggest opportunities right now in credit?
It's probably the most exciting time that I've seen in my career in credit, so about 25 years. And if I think about like just big picture, the takeaway of U.S. corporate issuance in investment grade this year being higher than net treasury issuance. It hasn't happened in 10 years. Certainly hasn't happened since we brought our balance sheet to where it is. It's just an amazing concept of that issuance financing all this potential growth. But all that CapEx coming into our business, coming into the markets, turning asset-light businesses into asset-heavy businesses, bringing a huge amount of origination opportunity for us. A huge amount of supply also means yields going higher. And you have, for the first time I've seen, rate traders calling corporate traders saying, where are interest rates going? Because ultimately the corporate issuer is the determinant of quasi-sovereign or really high-quality risk yield issuance. And it's all happening out the curve, long duration, which is great for us. So I think the biggest opportunity is all of that issuance is going to mean a huge IG, public and private opportunity. It also means that anything diversified from that, which Europe fits squarely into, is also of high value because it's less correlated with the huge amount of issuance that's coming to us.
What are the main risks in this? And actually, I mean, the opportunities in Europe must be different to what you're seeing in the U.S.
Yeah, I mean, the main risks are that this issuance is happening in a lot of different formats. It's happening in data center financing. It's happening in power financing to the data centers. It's happening in chip financing. It's happening in corporate financing, private and public. And so if you just blindly buy everything that's in the market today and it's being driven by one huge growth factor in the U.S., your portfolio is going to find itself very correlated at the end of this year, beginning of next year, which is a dangerous thing for credit. So for us, we spend a lot of time thinking about where are we making our bets? How do we understand that correlation and factor risk? And again, Europe not having that same kind of factor is a great opportunity for us because it gives us hard asset, but it doesn't necessarily also have a lot of the correlation risk that I think ultimately will be something the market has to worry about over the next year.
Which is why, I mean, just, to broaden out what we were talking about at the beginning is you're trying to bring trading to private markets, right? This is kind of like the underlying, what are the consequences of that if, certain other firms don't follow suit?
I mean, we're really spending time on what we're doing. I think that it'll be right or it'll be wrong. Our view is that the investor base wants more transparency, not less transparency, and it's good for them. The marketplace wants to see us doing things above the table, not below the table. So we're the most transparent firm in our industry. We show almost all of our assets out there for everyone to see. And others will follow if they think that's a good idea, or if their investors are asking them to do it, or they might not. Again, we're pretty unique in what we do. So I think everyone's going to have their own take on it, but for us and what we underwrite, very happy to show what we're doing real time to investors.
And John, going back to Europe, where do you, I mean, the appetite must be different. Does that bring more opportunities?
Huge, and it's different too in that you've got you've got this industrial renaissance, we call it, right? But it's energy transition and power build and so much industry that's been kind of lacking in CapEx spending for many years now coming to the front. 500 billion euros being announced by Germany. And look at the deals that we're doing, Ørsted, RWE. These are hard asset financings, building power, building energy, building in, defense spending. And they're not because AI is driving that, because the countries need to kind of get to where the rest of the world is. So it's a great fit for us on hard asset, but also doesn't necessarily need to have, we're not making a bet on GDP. This isn't a GDP trade in Europe. It's us stepping in for a pocket of capital that is missing in this area that needs to come in to bring many of these sovereigns and companies to the 21st century.
John, thank you so much for joining us. That was, of course, John Cortese of Apollo. With that, Vanya, I'm going to send it back to you in New York. And coming up, we have Jamie Dimon.
Yeah, fantastic conference. Thank you so much, Francine, for that great interview. Later today, tune in to Bloomberg TV and radio for Fran's conversation with JP Morgan CEO Jamie Dimon. That's at 9:45 a.m. New York time, 2:45 p.m. in London. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
as an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock in stalemate, oil extending gains as President Trump says the U.S.-Iran ceasefire is on massive life support. And Treasury Secretary Bessent and Japanese Finance Minister Katayama meeting earlier today, saying they're coordinating closely on currency policy. And all of that ahead of fresh inflation data in the U.S. later this morning. This is what you need to see when it comes to your day's trading. Brent crude above $107 a barrel now as market jitters get ever so much more tense. New York crude above $101.50 a barrel and your 30-year yield above 5%. We also have futures pointed lower after albeit several days of gains. That said, the tone of this market is obviously shifting from AI exuberance back to the geopolitical reality that is the closed Strait of Hormuz and no movement whatsoever on any proposal related to any kind of permanent ceasefire. The dollar index then strengthening as well. Let's get to some individual movers now to London and Chloe Melly. Chloe.
Good morning, Bonnie. Hims & Hers is down about 14 to 15% this morning after guidance missed estimates. And so the telehealth company is facing those much higher costs as it transitions into branded products. And that creates some pressure on profitability and creates some short-term noise in the financials that analysts are saying are creating some quite messy results and might take a little bit of time to clear out. Moving on to Zoom Info, which is a company not of Zoom call fame, but another different company that does marketing and lead generation. And it's down significantly this morning, about 33%, after announcing a major restructuring program that will get rid of about 600 jobs and also cutting its guidance. It's been already a very tough start to the year for that company, and this guidance cut is piling on even more pressure for Zoom Info. And finally, the sneaker brand On is on the move this morning after lifting its outlook after what has been a very strong start to the year. This is a company that has been grabbing more and more market share from established players like Adidas, Puma and Nike, and it seems that it is very much on a roll, and so we're up almost 6% for On this morning.
Chloe, thank you so much. In the UK, Prime Minister Keir Starmer pushing back on calls to resign. We need to take a look at UK assets right now because we're seeing yields rise substantially, way more than the United States, for example. It's more than just the Iran story here. It is the Keir Starmer story. If you look at the 10-year yield and the 30-year yield, we're up 12 and 11 basis points respectively. That 30-year yield at its highest since 1998. And you saw the pound depreciate pretty substantially earlier during the cabinet meeting. Apparently, Keir Starmer told everybody that he was staying on. Joining us now is Callum Pickering, chief economist for Peel Hunt. Earlier this morning, Callum, Eurasia put the odds of the Prime Minister being gone by September at about two-thirds, 66% or so. Is that an optimistic scenario at this point? Will he be gone earlier?
Well, markets are already considering who may replace Keir Starmer. I think what's more important is just to sit back and understand what the two problems are for the UK. So the first is, for all the focus on fiscal dynamics, the UK is not a fiscal outlier. If you compare to the rest of the G7, the deficit doesn't look abnormally high, nor does the debt. But what the UK has done more than any other country has pursued anti-growth and inflationary policies for nearly a decade, in a succession of very public policy mistakes. And that additional inflation is what markets are priced in. And so now when we look forward and we contemplate the options for if Starmer is out, who may replace him, this is the framework that markets are applying. And the danger here, this is a tail risk, is that Starmer could be replaced by someone who is further to the left, that attempts to raise taxes, raise borrowing, add more regulation onto the economy, and then worsen both the inflation and the fiscal outlook. That's what's being priced in today. Any sign that it's going to be either another centrist or even someone that's, say, a little to the right of Starmer, I think that comes as relief. So I wonder if markets are close to topping out, short of some disruption, but it depends on how things unfold.
What happens if he does end up staying on, Callum? Will that not, inject some instability into the market too, though?
The uncertainty, of course, is an issue, but I don't think we need to be as vague as to say that the outlook is uncertain. There's a very specific risk that the market is concerned about, which is, will the UK layer on more employment regulation? Will it push up minimum wages and taxes even further? And will it just add to the problems which have already weakened growth potential and already added to inflation? There's no uncertainty. If we could take that risk off the table, it's an and/or question here, not a what happens next question. I think the market starts to look better. The problem that Keir Starmer has, and I say this just as a Brit observing the politics, his majority is actually much too big. Labour Party is a very broad church. You have people right on the left, you even have people on the centre-right. Reconciling these two views is difficult. That's why he's having a hard time passing any legislation. It's why he does odd things, which is pursues anti-growth policies, but then at the same time will say that he's pro-growth. Anyone who replaces him faces this problem, and the danger you have is if someone replaces him further to the left, then you get factionalism appearing on the right of the party. If it's to the right, the market may be happy initially, but realize then the left are going to dig in. So with or without Keir Starmer, the central problem remains that Labour just cannot enact policy because of this fundamental setup.
Moving on to the US, we're going to get CPI data a little bit later on. Callum, this market is already a little jittery today, and we're expecting a hotter print to come in. Can you give us some context around that?
Well, the market, I think, looking at Bloomberg consensus this morning, is expecting about 3.7 on the headline. Let's pay close attention to core. There'll be a bit of an oddity because of the shutdowns last year and the way that housing is accounted for. If there's an upside surprise on core, I think the market will reason that the US is looking a bit more inflationary. There are a few things here which I think pose serious uncertainties near term. First is, what will the Fed do under Walsh? The market, of course, expects him to be a bit of a dove, but I think hawkish tendencies may prevail if it looks like the US is on course for substantial inflation. Economic growth data have been pretty good, but then when I speak to market participants, basically everyone's assuming that the Strait of Hormuz is going to be open soon. And so if you work on the basis that you get a big upside surprise or a downside surprise, which would normally move markets, to what extent will markets just say, well, let's account for this as noise if we don't change our fundamental assumptions? And so I'd scarcely imagine the market changes its baseline view, which is the Fed, which is the thing that matters here, stays on hold through summer.
Callum, if other central banks need to tighten, and at the moment the market's pricing in 3 in the BOE scenario, then will the Fed be a little stymied? Will it need to look at what other central banks are doing as well?
Well, the Fed has two advantages. First, it's governing an economy that has the dollar. And so demand for dollar will remain structurally high as far as the eye can see. That depresses yields. It means that the Fed doesn't have to do the thing that the Bank of England, for instance, needs to do, which is maintain overall policy credibility. Right? Demand for the dollar gives the US and the Fed an exorbitant privilege. The second thing is the Fed is a dual mandate central bank. If it can, with a straight face, make the argument that, say, AI is going to depress employment, or the disruptions through the summer will weaken employment, it can tolerate more inflation in order to promote this second objective. That's very different from the central banks in Europe, especially the Bank of England, that needs to watch out for overall credibility, especially currency markets, and needs to consider that it's a single mandate central bank, cares squarely about inflation.
Can the economy withstand a 30-year yield at 5% and the 10-year very close to 443, creeping up to 450 again, Callum?
No, but I would just broaden this out again. I'm sorry for making these broader points rather than single economy points. I think all major advanced economies are suffering from a bad case of crowding out at the moment, where bond markets are pushing rates up beyond levels that the private sector can tolerate. This is because, without exception, economies are going to see public debt rise as far as the eye can see, just at the time when the market, the big pension funds and the like have had enough of this stuff. They're starting to price in more inflation, and this is now having a serious impediment on private sector economic activity. It's why every time we seem to break that 5% threshold on the US 10, the US administration, Trump specifically, starts to dial down the rhetoric regarding Iran. We're starting to see thresholds being hit now, and unless we actually get on a better track, I think this is just going to be par for the course, where we have this bond market instability wagging the economy repeatedly.
Callum, thank you so much. That is Callum Pickering there of Peel Hunt. Now to other top stories trending on the terminal this morning. Kevin Warsh clearing the first round of Senate votes on his Federal Reserve nomination. The Senate voted 49-44 to advance Warsh through a procedural obstacle, setting him up to be confirmed later today to the Fed board. A separate Senate vote to confirm him as Jerome Powell's successor as Fed chair is expected later this week. The Trump administration is delaying a plan to suspend tariffs on imported beef. According to the Wall Street Journal, the administration wants to finalize details after pushback from cattle ranchers and congressional Republicans. Pop Mart reported slower sales growth for the first quarter, the slowdown underscoring mounting pressure on the company to reignite momentum, especially in markets including the US, as the Labubu craze cools. Coming up, Roche gets a green light to sell a blood test that will diagnose Alzheimer's disease. That's in the European Union. An exclusive interview with the CEO of Roche Diagnostics, Matt Souse, is next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And
I'm Christina Ruffini.
We're
tracking breaking news today from Wall Street to Washington.
let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
It's unbelievably weak, I would say. I would call it the weakest right now. After reading a piece of garbage they sent us, I didn't even finish reading it. They said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support.
The Trump administration taking measures to tame the high oil and gas prices as a peace deal impasse between the U.S. and Iran drags on. The U.S. releasing another batch of emergency oil to companies like Trafigura, Marathon and ExxonMobil, as well as weighing a possible temporary gas tax halt. Bloomberg's Kasia Klimaszinska joins us from Washington. So what's the next step for the administration here, Kasia?
Hello, Vanya. Unfortunately, the U.S. and Iran remain far apart. There doesn't seem to be any area where they could continue the talks. And as we saw, President Trump yesterday in the Oval Office told reporters that the ceasefire between the two countries is on a massive life support. The good news, I guess, is that Trump didn't threaten any military action. He did muse a little bit about perhaps resuming this operation where the U.S. would guide some ships out of the Strait of Hormuz. So it's clear that Hormuz remains the area of focus here. Everybody around the world wants to see the energy flowing again out of this region, not to mention China that Trump will speak to later. But one other area that Trump really needs Iran to talk about is their nuclear program. And this is where it looks like Iran is not willing and interested to engage.
Just want to ask you about the SPR release. Where does it leave stocks now of oil after that second release?
So I think, the markets here basically believe that no news is good news here, as long as there is no resumption of fighting. Oil is a little bit up, but not much. We know that for President Trump, the cost of oil, but more importantly, the cost of gasoline, perhaps jet fuel, is a focus for him. So he will make sure that those prices are not too high. You mentioned the strategic petroleum release. There is also this talk about perhaps imposing some sort of a holiday on federal gasoline tax. So Trump is looking for a relief, particularly as we have the midterm elections here in the U.S. in November, and he will not want Americans to suffer too much with this concern that if they do, they will, vote Republicans out of House and Senate, and the Republicans will lose the majority that they have right now.
Kasia, thank you so much for joining us this morning. That's Kasia Klimaszinska. Let's take a look at these markets because we have the VIX very close to 19 now as jitters creep ever higher. Brent crude above 107, WTI above 101, and that 30-year yield just off the 5% mark that we hit a few minutes ago. Turning to pharma now, Roche getting an EU clearance to sell an Alzheimer's blood test. Joining us is Matt Souse, CEO of Roche Diagnostics. Congratulations, Matt. I know this was a bit of a journey. What are the potential peak sales for this diagnostic, which might actually help diagnostics come back to sort of your pre-pandemic and pandemic years?
Vonnie, thanks for having me. So Roche Diagnostics, we're the world's largest provider of diagnostics tests. That's everything from the blood-based test that you would get with your GP to measure your cholesterol onto things like genetic tests to determine your probability of responding to a cancer treatment. And as you just mentioned, today we received clearance from Europe to be able to make accessible our blood-based diagnostic for Alzheimer's disease, which is a blood-based rule in and rule out. What I would say to answer your question is there's by 2030 going to be 50 million people living around the world with Alzheimer's disease, and the majority of people with Alzheimer's disease are never diagnosed. And this will be a blood-based test that will be able to be offered in primary care, and it will be the first of its kind to have that primary care indication. So we're really excited about the potential for our business and also for what it's going to mean for patients.
Do you have any kind of an estimate or any kind of hope for its peak sales potential?
So we don't disclose the peak sale of our diagnostics products, but what we are really excited about is the potential in neurology for us to be able to continue to make an innovative impact on patients around the world. We also, in the first quarter, received authorization for a test for neuroinflammation for patients with multiple sclerosis for a test called neurofilament light chain, which can help physicians optimize treatment for people with multiple sclerosis as well now as with Alzheimer's disease. And what you're going to see is more of these kind of tests from us as we continue to make inroads in neuroscience, because we feel there's a very large unmet medical need.
What are you thinking about the fact that we don't have a treatment for Alzheimer's yet, and will that slow sales to a certain extent? Because until there's a treatment, perhaps people won't really be looking to get diagnosed early.
Well, if you look at Alzheimer's disease, the earlier that people are diagnosed and put into appropriate supportive care programs, such as memory care, you do see improvement in overall quality of life and outcomes. And then there's also, of course, the pain of not knowing whether or not somebody has these diseases. And this is a test that can immediately address those concerns. And we have had quite significant interest from customers around the world on this particular biomarker. So we feel that there will be good adoption and a strong willingness from the medical community to look into this test.
And are you going to be engaging with the FDA on this particular blood test, Matt?
Absolutely. So we've received the clearance for Europe, for the countries accepting the CE mark. And the next step, we'll continue to engage with regulators around the world, including the FDA.
Speaking of which, you're investing a lot in U.S. diagnostics manufacturing. Is that primarily an impact of the tariffs and the political situation?
So investing in the U.S. for diagnostics has been something we've been doing for a long time. We have over 10,000 employees in the U.S. We have 6 manufacturing sites. We are a net exporter of diagnostics from the U.S., and it's a core innovation hub for us, and we expect that to continue in the years to come. So I would say it's all part of our long-term strategy, and the U.S. is a key part of that. It's our largest, and I would say on the commercial side, it's our largest market where we see continued strong growth.
Matt, you're actually building a machine that can sequence a full genome in hours. When it's ready, what will that unlock for us?
Thank you for asking that question. It's a really exciting program, which is our Axelios sequencing solution. As many people may know, the first human genome took over 13 years to be sequenced. This is a technology that will be able to sequence an entire human genome in under 4 hours. And so there's a lot of potential applications here, particularly in the future, in the events, for example, a baby in the NICU has an unidentifiable disease. You would be able to sequence the child and both parents and be able to get all 3 of those results within a single day. That's the potential that this technology has, which is really addressing some of the medical needs out there that there is no current solution. So we're really excited about the potential with our Axelios technology, and we're here in London today for our annual Diagnostics Investor Day to talk more about it.
What is holding back the glucose monitoring in the United States? It seems to have not yet got approval, and I'm curious as to why it would be continuous glucose monitoring if it ever did get approval.
So we've launched our continuous glucose monitor, our AccuCheck SmartGuide CGM, in over 45 countries. And what we're doing is continuing to scale up our manufacturing and our commercial presence. You mentioned our U.S. investment. One of our investments is to build a manufacturing plant in the U.S. for our continuous glucose monitor. So we're scaling this product up as planned, and the U.S. is certainly going to be part of that. So we're looking forward in the near to midterm to be able to launch that in the U.S.
There's been China pressure. It's been obvious. Diagnostics, obviously, one of 2 prongs for Roche overall. Can U.S. growth offset the problems that you're seeing in China?
So, that's something that we've shown last year and this year, where despite the challenges we had in China, and I would call it in China, the decline we had was something that all companies in the in vitro diagnostic space were affected by, which was healthcare pricing reform. In spite of that, we continued to grow last year, and we grew again here in the first quarter. And what we have seen is the strong growth in the U.S. as well as in Europe, Latin America, and the rest of the world has offset the challenges we've had in China. But I would say that we've seen improvement this year with China, and this is something we expect to see stabilize next year.
All right, Matt, congratulations on your EU clearance for that blood test for Alzheimer's, and we look forward to talking to you again. That is Roche Diagnostics CEO Matt Saus. Coming up, CPI data in just a few hours will get you set up for your trading day. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Now a look at what's ahead today. First up, we get ADP employment change. That's at 8:15 Eastern Time, followed by the main event, CPI data at 8:30. Then $42 billion of 10-year Treasury notes are going on auction at 1 p.m. Eastern. We'll be able to gauge demand and appetite. And we get Fed speak today from Williams and Goolsbee throughout the day. Let's take a look at some of your pre-market movers. That Hims and Hers extending their post-earnings declines that we saw yesterday, reporting a first quarter loss in sales that missed estimates there for Hims and Hers. It's been a very volatile year. AST Space Mobile, satellite internet company's first quarter revenue missed expectations, and it's taking a big hit there. And then a better story for On Holding, the footwear company backed, of course, by tennis star Roger Federer and Zendaya, raising its profit outlook for the year. This is your macro picture for a day that is bound to be a little bit jittery with the VIX at 19. That's it for Bloomberg Brief.
Day 7 at the Italian Open. Jannik Sinner remains on course to claim his first title at his home tournament. The world number 1 coasted into the round of 16, dropping just 2 games against Alexei Popyrin. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We've seen perpetual market strength.
The eyes continue to be on earnings.
It's an earnings momentum-driven market.
It will continue to be an equity story as we go forward.
Things are about as good as they've been in a really long time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday, holding on. President Trump claiming the Iranian ceasefire is on life support as investors are gearing up for a headline inflation number closer to 4%. Republicans are beginning a push to suspend the federal gas tax, an effort to counter rising prices at the pump.
Consumer prices are starting to become a problem for both politicians and, frankly, on the margins for bond markets. That will be highlighted by today's CPI report heading into tomorrow's PPI report. And, of course, we do have a bond auction, $42 billion of 10-year notes at the same time. From the political point of view, you have a question of how you can ameliorate some of the costs, whether it's the gas tax holiday, whether it's taking down the SPR. In the bond market space, a real question about how sticky this inflation will be because of proposals coming from the other side, the fiscal side.
Welcome to Washington, Kevin Walsh. Step right up. We talked about this a few times already this week. Unemployment closer to 4, headline inflation getting closer to 4. You've got core CPI closer to 3 than 2, and a Fed maintaining an easing bias. That's a tough meeting in June to walk into.
It's one where he potentially has a pass to stay on hold, but how do you reconcile some of the calls from President Trump to lower interest rates with the idea that inflation expectations are creeping higher? And there's a warning shot coming from the United Kingdom, given the fact that we're seeing right now spreads, or at least yields on 30-year gilts going to almost 6%. We're talking about 5.8% for the first time going back to 1998. This is a warning shot for the United States. If you have a situation where the fiscal outlook looks somewhat like it's not mathing, then the bond market will respond. And that is going to be a concern for any Fed chair that steps into this particular
Right now might feel like a stretch to compare this situation to the UK. Do you want to talk about the UK right now?
The UK is fascinating.
Your GDP close to 1%, nowhere near the kind of growth we've got in America. A Bank of England that may have to hike interest rates soon. And as you indicate, a 30-year yield at the highest level we've seen going back to 1998. We have seen Prime Minister after Prime Minister, and this Prime Minister is struggling to hold on.
This isn't a Liz Truss moment. This is a political and financial reality right now for the United Kingdom. I do think it's fair to keep asking how much is this a warning shot for other developed market economies that are facing off with fiscal deficits that are pretty big, and a question of how long they can sustain growth, given the fact that on the margins they're kind of tapping the fiscal pumps a little bit too much. At the same time, it is a situation unto itself, and ultimately, whether Keir Starmer stays or whether he goes, bond traders seem to be suggesting that there has been no plan that's been put out there that has been fiscally sustainable, and they are pushing back.
There's a fear about what comes next. Here's the pushback, up 10 basis points this morning. The 10-year through 5% on 10s in the UK, 30s to Bramo's point, approaching 6. If you want some fun and games, let's talk about the Kospi in South Korea. Overnight at one point, down as much as 5% before trimming those losses. Comments on Facebook by a presidential policy chief suggesting the nation should pay citizens a dividend using taxes on AI profits. He walked that back a little bit and clarified those comments, but that was a bit of a shock overnight, and I wonder if that's a taste of things to come, not next year or the year after that, but further down the line.
I'm so glad you went there. At a certain point, increasingly, people are concerned if you're going to lose your job from AI, you're going to want some sort of benefit in the form of some sort of tax refund or some sort of dividend, or citizen dividend, as this particular politician called it. Is it going to come from specific taxes on AI names? Is it going to come from the broad-based taxes that they're expecting to be bigger because of a productivity boom, which is how he walked it back? Well, it remains to be seen. Nonetheless, if you start seeing unemployment creep higher, is this a lever that some countries are willing to pull?
Off the back of that story, NASDAQ futures a little bit softer as well, down this morning by more than 0.5%. Coming up this hour, we'll catch up with Russ Kostrick of BlackRock as tech lifts stocks to new heights. Catherine Thompson of the Cato Institute with the US-Iran ceasefire on life support. And Greg Dacko of EY as Wall Street awaits key inflation data. We begin this hour with stocks hovering near all-time highs. Russ Kostrick of BlackRock writing markets have staged a remarkable recovery led by tech. Earnings can continue to carry the day for US equities. Russ joins us now for more. Russ, welcome to the program, buddy. It's good to see you. What kind of a rally do we have right now? The kind of rally that sucks people in, or the kind of rally that begins to spit people out?
More, Jonathan. I think it's one that's been sucking people in. You had a market that was pretty pessimistic back in March, and what you've seen is, in addition to the fact that the economy has been resilient, the labor market has been resilient, first and foremost, earnings have been remarkable. You've seen a significant rise in earnings expectations really since the beginning of hostilities back at the end of February. And that has, of course, been led by tech. And the numbers are just off the charts. So what you have right now, I think, is an earnings-driven market, not driven necessarily by multiple expansion, but by investors looking at earnings, particularly for industries like semiconductors, and thinking, you know what, I don't want to miss this. I don't want to be underweight, given the strength of the U.S. corporate sector.
How much pushback are we beginning to get from the bond market, Russ? How much of a threat is beginning to brew in fixed income? The repricing in rates, 2s this morning, close to 4, 10s through 440, 30s at 5. How much of a challenge is that?
I don't think it's an enormous challenge right now. I mean, you've had a backup in yields. Real 10-year yields are up by about 25 basis points since the start of the war. But the reality is the bond yields are still relatively contained in the United States. I know the story is different elsewhere. You're talking about the UK a few moments ago. And bond market volatility is actually fairly muted. So there are parts of the market that are definitely struggling with higher yields. Housing-related stocks are probably the best example. But for the broader market, and particularly for a lot of the large cap segment where debt levels are relatively modest, this is not yet a headwind that's going to derail the rally.
Russ, just to stick on this for one more minute, how much are you starting to see some of the net issuance for the hyperscalers, for some of the semi players, supersede or crowd out some of the government debt sales that have to come due as well?
Well, clearly we've seen a pretty significant increase in the net issuance by the hyperscalers. But again, the reality is this is still a market with a lot of cash on the sideline. This is a market where people are still looking to build yield in their portfolio. So the notion that that issuance by itself is going to derail the bond market, I think right now that's not as much of a threat. But again, I go back to what's leading the market. Despite the increase in debt levels among some of the tech companies, the reality is we're still seeing earnings growth that is over 30%. And that's something that, as long as the debt levels remain manageable, I don't think is going to prevent investors from being the space, particularly when they're driving the earnings. And here's the telling statistic. Q1, tech is responsible for 55% of all earnings growth for the quarter. That's an astounding number. And it's telling you why people are rotating back into this space after the so-called broadening out trade that dominated in the end of 25 and early 2026.
One of the key points that seems to be underpinning the rally is the idea that this economy is at greater risk of a melt-up of inflation than it is some sort of downturn. How much do you see that as a rationale for why to continue piling into some of these big tech stocks even after the massive rally? Because ultimately, yes, the earnings are there, but also they're a hedge against disintermediation of old business models. They're a hedge against inflation, and on the margins, in the near term, they're somewhat of a hedge against the consumer cycle.
I think that's exactly right. I think this is one of the things that's happened in addition to, investors looking at the earnings numbers and being understandably impressed, is that the narrative's changed. And you think about what the narrative was back in late 25, early 26, it was one of above trend GDP. And that theory supported, again, this broadening out trade. And that included European stocks, included cyclicals, included small caps, included value, all businesses and all companies or indices with a lot of companies that would benefit from a strong economy and operating leverage. Now, the good news is we still think the U.S. economy is doing well, but what's changed is maybe an environment where rather than growing at above trend, given some of the headwinds from higher oil prices, higher gasoline, higher rates, we might be looking at an economy where the growth rate is closer to trend. If that is the narrative that investors are adopting, then going back to secular growth, where you can have these types of earnings even without particularly strong economic growth, I think that's one of the dynamics that have supported this rotation back into growth and back into tech.
Russ, it begs the question how relevant some of the economic data points actually are to the rally and the performance of equities. At 8:30 Eastern time, we get a CPI print. How important is that to you?
I think it is important because what you do have is an environment where investors know inflation is going to be above trend. The Fed knows that headline inflation is going to be higher because of the impact of oil, but there is still going to be a scrutiny, first of all, of how much is that leaking into the rest of the inflation numbers, particularly core inflation, no matter how you measure it. How is that affecting core services? And again, if you have a narrative where maybe the Fed is on hold, but they're not hiking, clearly you want to see that core inflation is remaining somewhat contained.
Russ, it's good to see you, sir. As always,
Thank you.
Russ Kostrick there of BlackRock. Thank you. How close are we to a hike? We've gone through some of the numbers, some of the estimates a few times already. BNP, a risk of a hike this year. PIMCO, you mentioned Dan Iverson yesterday, Lisa, risk of a hike this year. Morgan Stanley have come on the program. Fed is done for the year. Goldman Sachs, to your point yesterday, pushing back their call, I believe, now to December of this year for that first cut. Things are getting very finely balanced as to what the Fed's going to do next.
Politically, it seems implausible that Kevin Warsh will actually hike rates, and that's one reason why a lot of people are not penciling in a rate hike, but you are seeing it in the Fed funds rates. You do see some pushback in terms of just how much this Fed may have to do. You put it really well yesterday. How much is a hold essentially the most hawkish thing that this Fed can do? And ultimately, do they need to signal some sort of rate hike as a possibility in order to jog on the market into submission?
Redefining dovishness over at the Federal Reserve. 30s this morning, essentially at 5%, 10s at 443, near the highs of the year, and 2s closing in on 4% as we count you down to that data later this morning. Let's get you an update on stories elsewhere with your Bloomberg brief. Yahara standing by with more. Hey, Yahara.
Good morning, John. President Trump saying the ceasefire with Iran is on massive life support. Trump rejecting Tehran's response to the latest peace offer, which demanded lifting the U.S. naval blockade, sanctions relief, and control over the Strait of Hormuz. South Korea's Kospi Index losing more than $300 billion in value in just 97 minutes today. That sharp sell-off coming after a South Korean policymaker proposed taxing AI profits to fund a citizen's dividend. And UK Prime Minister Keir Starmer telling his cabinet he's staying on as Prime Minister despite increasing pressure to step down. Dozens of members of Parliament calling for Starmer to set out a timetable for his departure. That's your Bloomberg Brief, John.
Yahara, thank you. More from Yahara later this hour. Up next on the program, a ceasefire on life support.
The ceasefire is on massive life support, where the doctor walks in and says, "Sir, your loved one has approximately a 1% chance of living."
Crude back at triple digits. Catherine Thompson of the Cato Institute joins us next, live from New York City this morning. Good morning.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
This is how the day ahead is shaping up. The main event at 8:30 Eastern Time. It's a read on inflation in America, CPI at 8:30, and CPI in the months to come is going to take on more and more importance as this inflation rate, particularly at the headline level, continues to creep higher.
Yeah, we're looking right now at a year-over-year comp for CPI at 3.7% versus 3.3% in the prior reading. This is moving in the wrong direction. We're closer to 4 than we are to 3 at a time where the target is 2. And some people say, well, CPI is not what the Fed looks like. But actually, the measure that they look at, core PCE, is rising faster than CPI. So any way you slice it, this is not a scenario the Fed wants to see.
Heading into this, back-to-back all-time highs on the S&P 500. Futures pulling back by just 0.3%. In the bond market, the scores look like this. These numbers getting close to the highs for the year. 443 on 10s. Let's round it up. 5% on 30s. And once again, testing 4% on the 2-year. Yields up about a basis point across the curve.
This is the market starting to pressure a rate hike scenario for the Federal Reserve, even if they aren't coming out and even removing their easing bias. At a certain point, if you have inflation expectations, and you can see this in break-even rates starting to creep higher, you have bond yields creeping higher, you have a sense that not only is this economy sturdy, but it can withstand the increased prices from gasoline, from agricultural, from other aspects. People are starting to have to realize maybe we are in a new inflationary regime. You can hear that from Wall Street analysts in terms of what they're trying to hedge.
The move in crude is not helping, up by 3%. WTI back into triple digits, 101 this morning. Brent crude at around 107, also higher by some 3 percentage points. Under surveillance this morning, a ceasefire on life support.
The ceasefire is on massive life support, where the doctor walks in and says, "Sir, your loved one has approximately a 1% chance of living." I have the best plan ever. I mean, Iran has been defeated militarily, totally. They have a little left. They probably built up during this period of time. We'll knock that out in about a day.
So here's the latest this morning. President Donald Trump calling Iran's response to the U.S. proposal a, quote, piece of garbage, while saying a diplomatic solution is still possible. Bloomberg's Mike Shepard joins us now from Washington for more. Mike, you're charged with trying to translate all of that. So the proposal is garbage. The ceasefire is on life support. What do we know about the next steps this administration is willing to take?
Well, some of those next steps, John, may actually have to wait until after the president returns from his trip to China, where Iran will be on the table front and center as an issue between the president and his Chinese counterpart, Xi Jinping. But in the meantime, they are really hoping, with that strong language from President Donald Trump, that officials in Tehran will heed what the U.S. is saying about its posture toward these negotiations. They had sent Tehran a 14-point proposal for trying to get back to the bargaining table to try to negotiate an end to this now 10-week-long conflict. And that proposal would include things like ending Iran's, at least temporarily, Iran's enrichment of nuclear materials, allowing the U.S. to take possession of some of the enriched uranium that it has, all of this in exchange for sanctions relief. Critically, John, it would also call for reopening the Strait of Hormuz. And that has emerged as a larger and larger sticking point as this drags on. We're seeing that this key choke point in the global energy supply chain really emerging as such a major factor in the conflict. We're seeing, and we'll see today with the CPI numbers, the increasing effect of what the rising oil and natural gas prices are having across the global economy. So two sides are trying to exert some leverage over the Strait of Hormuz, and it's unclear who will actually prevail and what might emerge actually from these talks in China between President Donald Trump and Xi Jinping on this regard.
Well, Shep, let's stay on those talks. Just how narrow, how focused will those talks be? How much space is there to talk about the Middle East?
Well, there will have to be space because China is dependent on the Gulf for a lot of its energy needs, and it is putting pressure on Xi Jinping to try to find alternatives to make sure that domestic needs for energy are met. And Iran has also forged this relationship with China over the years and has occasionally looked to China to try to act as an interlocutor. And more broadly, other Asian economies that also do business with China have also been feeling the pinch of energy prices rising, and that is in turn going to affect their ability to do business with their neighbor, China, the world's second largest economy. The U.S. has also been looking to pressure China over its support for Iran in terms of possible military sales of military equipment to Tehran, and as well over sanctions violations. The U.S. recently imposed sanctions on a bunch of Chinese companies, John, for buying oil from Iran against the measures that had been imposed to restrict Tehran's ability to capture global hard currency from its oil riches.
Hey, Shep, it's good to see you. We'll catch up with you again in the next hour. Shep, thank you. Just on the conversations around the meeting between President Trump and Xi Jinping, look at the lineup of CEOs that will be attending that meeting with the president, or at least attending the visit alongside him. Look who's missing. Spot the guy who's not on the screen. Jensen of NVIDIA.
Yeah, this comes after Jensen Huang said that he would be honored to accompany President Trump on this trip. And it comes with chips very much at the forefront of discussions with China. Is this a signal that maybe the president is trying to distance himself from Jensen Huang? How does this sort of leave some of the chip negotiations that have been incredibly fraught between these two nations?
You know what, from my perspective, for whatever that's worth this morning, probably not much, but I think it probably does NVIDIA a favor. Some of those chips getting into the country through the back door, people questioning the relationship between him and the administration right now. I think it probably does him a favor that there's a bit of separation on this visit to China.
Perhaps it also could be hinged on the idea that China has created some chips that are starting to work for the DeepSeek model. How much is that going to be at the forefront also of these negotiations?
Let's build on some of this conversation. Catherine Thompson of the Cato Institute writing the volleying of rejections and counter-proposals between Iran and the US demonstrates just how far the administration is from winding down this war. Catherine joins us now for more. Catherine, welcome to the program. The president's been very clear on his objectives. Are you clear on the strategy to achieve them?
No, absolutely not, right? Especially because, right, if you look at the president's own national security and national defense strategy, this isn't, you know, starting a war with Iran and sort of Iran's nuclear ambitions are not core planks of the strategy. They are not core elements of America First priorities. And so, you know, I think unfortunately we've deviated quite a bit from the strategy, from the plan. And I think we're now so far down the rungs of the escalation ladder that unfortunately there aren't too many options left to save the ceasefire, so to speak, keep it, you know, off of life support as the president illustrated, and prevent the resumption of fighting.
Catherine, there is an option to try to get China to exert leverage over Iran. How much do you expect this to be on the table, and what can the U.S. offer as an exchange?
You know, it's hard to predict exactly how much it's going to be on the table, but I think, you know, actually, you know, in terms of the military dynamic between, you know, the U.S. and China on Iran and then also on Taiwan, because I think, you know, these pieces kind of fit together. The recent Time magazine cover that included President Trump and President Xi with the headline, "Never interrupt your enemy when he's making a mistake," I think is illustrative of how this conversation could play out. I think, you know, for China, right, like this is the time to put big issues on the table like Taiwan, because they know that the U.S. is distracted and bogged down in the Middle East. And obviously, you know, of course, the oil dynamic and the energy dynamic affects the Chinese, and so it's in their interest to, you know, have that be part of the conversation, certainly. But if I was them, you know, right now, one of the things that I would be focused on is getting sort of my security agenda on the table. And it looks like, based on what the president was hinting about, you know, in terms of the Taiwan dynamic and arms sales to Taiwan, that it's certainly something they're not shying away from putting on the table. And I think they understand that the U.S. is significantly distracted In the Middle East, yet again, not prioritizing the Indo-Pacific as our defense strategy says, and unfortunately, that dynamic for us puts us, I think, in a bit of a disadvantage at the table across from the Chinese.
That said, there's a coterie of incredible CEOs who are heading over there. I'm just wondering what you think the deliverables are going to be on some sort of economic truce or economic negotiation between China and the U.S. and how much that could still be at the forefront of these negotiations.
I mean, it seems like that's the priority for the president, and certainly, his suite of guests that are attending would seem to indicate that as well. And right, I mean, and this is the concern, and this is why I'm watching the Taiwan piece of this so closely, because for the Chinese, the piece on arms sales to Taiwan and potential further conversations about the U.S. role in deterrence in the Taiwan Strait becomes a forefront of the conversation for the Chinese. For us, it's the economic piece of the equation and getting walking away with some sort of economic deal, and how those two pieces on the chessboard interact with each other. I think will be incredibly important and will be, one of the most pivotal dynamics to watch. And it's true, you can't separate, the military and the strategic dynamic from the economic.
Catherine, it's good to see you. Down in Washington, D.C., Catherine Thompson there at the Cato Institute. I've heard that a lot, that there's space here for China to think about doing something around Taiwan. I also wonder if it's an example, a warning to the Chinese of what can go wrong once you get involved in something like this.
Well, that's the reason why some people are expecting weapon sales to Taiwan to be on the table and China to ask the U.S. to sell fewer weapons to Taiwan. That is something that in the past, previous presidents have said they're not going to discuss. How much is that going to be on the table? Not necessarily a wholesale invasion of Taiwan. That's a step too far and currently is not priced in any way, shape, or form to markets, but just on the margins eroding some of the protections around Taiwan.
I think the chip sector would be in a very different place.
Well, exactly.
If that was on the table.
We're not talking a sort of Ukrainian-style invasion a la Russia 2022.
Let's hope we're not anytime soon. Anne-Marie on the ground in China. We'll catch up with AMH tomorrow morning. Looking forward to that. Coming up on the programme, Bloomberg's Lizzie Burden as Keir Starmer pushes back on calls for his resignation. Some big moves in UK markets today. Plus, we'll catch up with Yahara. She's got your morning movers. Semi-stock sliding following a rally in Monday's session. We're down across the board.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
This has been about Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Back-to-back record highs on the S&P 500, pulling back just a little bit this morning. We're down 1/3% on the S&P. On the Nasdaq, we're down by 0.7. What a rally we've seen on semis. You've heard all of the numbers before. A gain of 70%, almost 70% off the lows of the end of March. We have only had 4 down days over that period for the semi-index. It is now 18%, that industry group, 18% of the S&P 500. Isn't that crazy?
Well, it gives you a sense of how far they've come and how much this really is the picks and shovels of the entire AI story. We talk about the $800 billion of expected capex this year from the hyperscalers. That's almost all being funneled to supplies like the semiconductors. Jonathan Golub, while he was bullish yesterday, he did present this bear case that was really compelling, at least for the bond investors, which is that a lot of the hyperscalers are not booking the cost of these semis, but the semiconductors are booking the profits from the purchases that they're expecting. So there's a bit of a financial mismatch there that perhaps also is helping to shield some of the reality here.
And this story shielding this equity market from these moves in Brent, these moves in crude. WTI back into triple digits. This morning higher by 3%, 107 on Brent, WTI at 101. With that move, once again, you see this move in fixed income. Yields up across the curve, 2s, 10s, 30s. At what point does that screen become a challenge to the story in the equity market? We are basically at the highs of the year on 10s and 30s, not too far away. The 30-year yield essentially around 5. 2s still comfortably above the policy rate of the Federal Reserve, 3.96, up a basis point across the curve. When does that start to become a problem for risk appetite?
When we were talking to Mike Wilson, he said right now at about 4.5%, that's when you start to see a little bit of a hesitant look over at the bond market from some of the equity bulls. It depends why you're seeing yields rise. If it is just sort of a one-time price impulse from gas or oil prices, maybe not going to have the same effect as a longer-lasting inflationary shock from, say, semiconductor component costs, or just the idea that the economy is robust enough to allow cost inflation to be passed on. Those are sort of, that's the conundrum. That you could see inflation get passed along because of the strength in the economy, which really leaves the Fed in a rocky spot.
That screen is almost comfortable compared to the next one. Switch up the board and check out the UK gilt market this morning. 2s out to 30s. Yields up by 10 basis points on 10s. We are through 5%. We are approaching 6 on 30s this morning. Now, you talked about why yields are up, and it matters what the driver is here. Compare it to the currency. Sterling's weaker. When you see the currency weaker in DM, and I'm not sure if this is really classified as DM right now, it's right on the edge of something else, and that something else is not good. A weaker currency, high yields, not a great picture for UK assets.
I haven't seen so many heads of lettuce since 2022 on Twitter, X, or whatever social media you go to. There is an issue of Keir Starmer and potentially his exit. It's also the replacement, who that could potentially be. But right now, it's clear that the Liz Truss moment was not a moment. It was something that was portraying the financial conundrum facing the United Kingdom, which is just weaker revenues, weak growth, and a fiscal deficit that continues to balloon. And when you have that type of deficit and backdrop of growth, it is toxic, and the bond vigilantes are circling like vultures.
Lizzie Burden standing by outside number 10 Downing Street. We'll catch up with Lizzie in just a moment as we count you down to the opening bell, 3 hours away. Some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. As you said, along with the broader market, the semiconductor stocks index also hitting a record high yesterday with that index now the most stretched above its 200-day moving average since the dot-com era. But today, that torrid rally is taking a breather. We are seeing names like Intel, Qualcomm, AMD, and NVIDIA all pulling back, but of course it pales in comparison with that rally. Turning to Hims and Hers, that stock is plunging nearly 15% in the pre-market after the company posted a sales miss and swung to a loss. This is a company in transition, moving away from selling those copycat GLP-1 drugs and now partnering with the likes of Novo Nordisk to sell those drugs, but that is turning out to be much more expensive than investors had thought. And we end on AST Space Mobile. That stock also plunging 11% after it missed on revenue and posted a wider than expected loss. There was a lot of excitement around this name heading into earnings yesterday. Shares surged 10% around this idea that it could provide cell service directly from space here to here on Earth. But now investors are questioning how fast it can reach that vision. John.
Yahara, thank you. More from Yahara later this hour. On our radar this morning, President Donald Trump saying the ceasefire with Iran is on massive life support after rejecting Tehran's latest peace offer. Trump calling Iran's response a piece of garbage, but saying a diplomatic solution is still, quote, very possible. Elsewhere, 16 of the nation's top executives are set to join the president on his trip to China. The CEOs of Apple, Tesla, and Citi. Among those traveling to Beijing, one notable absence, the NVIDIA CEO, Jensen Huang. And finally, South Korea's Kospi Index shedding more than $300 billion after a policymaker suggested paying citizens a dividend from taxes on AI profits. The official clarifying the funds would instead come from excess revenue rather than a new tax, sparking somewhat of a rebound, but a little bit of a taster of maybe what's to come further down the line.
Clearly, there is increasing concern politically and among populations about what AI means for their jobs, what it means for their profits. If the best argument you can make for human capital is that it's cheaper than AI for now, you have to imagine that's not exactly comforting for where AI could go in the future, considering it's a machine. It doesn't have to eat and doesn't have to sleep and can be endlessly productive. It also highlights how far the Kospi has gone. Samsung, I believe, is the second most profitable company in the world behind NVIDIA, and this comes with this incredible demand for its chips. How much could they be subject to pay for some of the concerns over in the South Korean economy that are coming from very real pressures, whether it's oil prices or whether it's just some of the cyclical slowdown that you're seeing around the world?
We don't know how this turns out, so we've got to assume a couple of things for this to happen, but let's assume a couple of things. If the number of winners is smaller, if the number of people unemployed goes higher, and if the outlays for governments increases, then the tax revenue's got to come from somewhere. Where's it going to come from? It's going to come from the small number of winners. Clearly, corporate taxes has got to go up on some of these major winners. That's if you assume that the number of winners gets smaller and the number of unemployed gets higher. That's still a big assumption at this point.
And right now, it does seem like governments are treating this as an existential risk. They want to win. They want their companies to be the best and strongest in the AI race so that they can win market share globally at a time when this is really the next big thing. So if that's the case, how much does this prolong when we start seeing taxes like this? Because you've seen that push in the White House, and then the pushback being like, well, we want to win, so you can't really crimp anything with these companies.
And maybe this is on the table for 28. I don't know. Maybe that's the biggest threat to this rally. Who knows? But it's certainly going to be part of the conversation around the politics for the next few years.
When you bring that up with different analysts, they're like, yeah, la, la, la. But look at the earnings, because they're amazing.
Yes.
So, you know, we're your little head off, but, you know, it's not coming to fruition yet. And that's sort of where people are right now.
What do they say? What did Chris say? The less you know?
Yeah, I mean,
the less you know.
The less you know. I think that has to be the theme when you just can't understand what the policy could potentially be.
Let's try and understand what's happening in the UK. Check out the bond market this morning. Gilt slumping, yields higher across the curve. 30s at levels we haven't seen since the late 1990s, 98 to be precise, 10s at 5%. Even with that move, the currency weaker. The brew right now, as Bramo would say, in the UK is very toxic for the Prime Minister Keir Starmer, just about holding on as the calls for his resignation continue to build. Bloomberg's Lizzie Burden joins us now from Downing Street for more. Lizzie, the last time we spoke, the Prime Minister had rolled up his sleeves, he dropped the tie, he made an aggressive push to hang on to power. How big has the pushback been in the last 24 hours?
Yeah, and he's still sounding defiant, John. He's insisting that he won't go down without a fight. He told a meeting of his top team behind that black door this morning that he takes full responsibility for those abysmal election results last week. The Labour Party's election selection process for a new leader hasn't been triggered because he says the country expects him to govern, and that's what he's going to do. Now, we also report, interestingly, that Labour officials say his strategy is to dare the Health Secretary, Wes Streeting, to announce the leadership challenge that he's been cooking up for months, because he knows that many in the party don't want a Prime Minister, Wes Streeting, so he wants to incentivise him to block a Streeting contest, or a contest that involves Streeting. But then, out of that meeting, we had a parade of 5 ministers coming to tell us that they are backing the Prime Minister. I'm interested in the ones who didn't want to talk to the cameras, about 15 of them walking past, the likes of Ed Miliband, the Energy Secretary, with a face of thunder, it has to be said. He did not want to talk to anyone, but privately we know that he's been urging Starmer to set a timetable to go. The likes of Streeting, silent on their way out. And behind the scenes, we know that dozens of MPs, at least 80 of the 403 Labour MPs, have called for Starmer's departure. One junior minister has resigned. And so for now, I'd say we came here earlier thinking maybe there could be a lectern, a podium in Downing Street with Starmer resigning. It isn't imminent. It doesn't seem like it's imminent yet today, but it still remains a question of when, not if, Starmer's going to go.
Lizzie, what's the main issue that Keir Starmer is being accused with in terms of sort of failing his duty, and who is lined up to take over?
Failing to connect with the public to be able to win elections. No Labour MP wants to get to the general election in 2029, if that's when it comes, and be wiped out by Reform UK, Nigel Farage's party. They don't want to lose their seat to the Greens either, and the threats coming from left, right and centre, literally, to Labour. But interestingly, when you look at the markets, you were talking about the gilt moves, the market's behind Starmer, seemingly, because the market doesn't want anybody who would be more fiscally lax than Starmer. Now, what would be interesting is if Starmer goes, but you keep the Chancellor, Rachel Reeves. She's known for her fiscal prudence, and allies of the Chancellor have been telling the Financial Times that she could stay, even if there's change at the top.
Lizzie, we often talk about guardrails. I just wonder if this is a home bias of ours. Of course, the first thing you and I do is go to the gilt market. Lisa's all over it. The moves we've seen, the highest numbers we've seen since 1998. How much do those moves matter to the left wing of the Labour Party?
I've been asking myself that question all day. I'm so glad that you said it out loud. We know the importance of the bond market. Rachel Reeves knows the importance of the bond market. I believe Keir Starmer knows it as well. But to your point, does the left wing of the party know the importance of the bond market? Can it have such a short memory? You were talking about 2022 and the Liz Truss moment. Are we going back to that already? That is the question that journalists who we've been shoulder to shoulder here in Downing Street today waiting for a lectern have been asking ourselves. How are we here already when Starmer was in with a landslide vote just a couple of years ago? And yet we've got this turmoil around the top of the leadership yet again. It smacks of what happens to the Conservatives not so long ago, but it is a short memory in politics when you've got the charisma of Nigel Farage on the right, Zach Polanski of the Greens on the left. It's difficult for a man like Keir Starmer to cut through when, again and again, it just seems like he cannot read the room. Just saying over the weekend he intends to be here for another 10 years. And as I say, that defiance on display today.
Lizzie, looking forward to your coverage over the next few weeks. I get a feeling this story is not going away. Lizzie Burden there, outside number 10 Downing Street. This market pushing back, yields higher across the curve.
You know, it seems like financial markets and sentiment are in two different worlds. The idea that bond markets are saying, where's your fiscal plan? And people are saying, well, you're not very likable. You know, I want to go out for a beer with you. And until you can bridge that divide, you know, potentially there will be this tension in financial markets.
He's got bigger problems than not just being likable. That's for sure.
Seems to be the suggestion coming from markets as well.
We'll return to that story, no doubt, over the next few days. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. Fed Chair nominee Kevin Warsh is one step closer to confirmation. The Senate's advancing Warsh through a procedural vote, setting up a vote to confirm him to the Federal Reserve Board later today. A separate vote is expected to pass later this week, officially confirming him as the new Fed chair. The U.S. Treasury Department blacklisting 12 firms and individuals, including some based in Hong Kong, over the sale of Iranian oil to China. They are accused of facilitating the sale on behalf of the Islamic Revolutionary Guard Corps. And the UAE reportedly carrying out previously unknown military strikes against Iran. The Wall Street Journal reporting the Emiratis launched attacks on an Iranian refinery in the Gulf last month. The Emirati government declining to comment on the report, but asserting its right to respond to threats. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for that update. Up next on the program, mounting inflation expectations.
This month, we're definitely going to have a bit of a spicier inflation report. Ultimately, it matters how all of these inflation numbers that we get this week come together to form a PCE inflation forecast.
Up next, we'll catch up with Greg Dacko of EY, live from New York City. You're watching Bloomberg TV. This is Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. It doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Bit of weakness out there. Semis down this morning, hence the move on the Nasdaq. We're down by 0.8%. On the S&P 500, negative by 0.4. The next stop for this market is CPI, later this morning at 8:30 Eastern Time. Just run through the estimates for you just briefly. Year over year, headline CPI, we're looking for a number close to 4% here. 3.7 is the median estimate in our survey. That's up from 3.3. Core, stripping out the volatile food and energy type stuff, 2.7. much lower, but above the previous read of 2.6. This all year over year.
On one hand, you could say energy costs you can look through because they tend to be temporary, fleeting, self-correcting in nature. This time, though, they come with other types of shocks as well. You're seeing the prices of food go up. You're seeing the prices of semiconductor components go up. You're seeing the prices of metals of all types go up. As a result, people are wondering, well, how many different price inflation shocks can you have before suddenly you have a problem? And that's why you're seeing it bleed into the bond market.
The price of energy going up as well this morning, higher by close to 4%, 101 on WTI. Brent crude approaching 108 and up by 3.4%. The president saying the Iranian proposal totally unacceptable. The ceasefire on life support, describing a hospital scene. Pretty dark stuff coming out of the Oval yesterday.
I felt really bad for the hospitalized ceasefire. I'm thinking to myself, as it called its relatives, what's it going to have for a meal? Look, it does highlight how the bar has gotten lower for some sort of military action. We're still not pricing that in, though. This move that we're seeing in crude, not even close to what it will be if there is actually a military escalation.
Things are fragile. They have been for a while. The blockade continues. All of this ahead of the president's trip to China. Under surveillance this morning, mounting inflation expectations.
This month, we're definitely going to have a bit of a spicier inflation report. Ultimately, it matters how all of these inflation numbers that we get this week come together to form a PCE inflation forecast. We do see inflation coming down, in some ways very much in line with how markets are pricing.
So here's the latest this morning. Investors are waiting fresh inflation data out in just under 2 hours' time. Greg Dacko of EY writing, while we still expect inflation to ease later in 26 as labor market conditions soften, the near-term inflation outlook has shifted enough that we no longer expect a rate cut in December. Greg joins us now for more. Greg, good morning. We'll get to the expectations for the Fed in just a moment. Let's just start with what you're expecting to see at 8:30. What are you looking for?
Well, we're looking for a 0.5% increase month-on-month when it comes to CPI and 0.4% month-on-month when it comes to core CPI. So there is some pass-through of these higher energy prices onto core inflation that will lift CPI inflation closer to 4% and lift core inflation closer to 3%. And I think over the next couple of months, we're going to see even further upward pressures because what's happening is that we're really testing the price of growth. We're testing the price of trade and commerce. We're testing the price of labor with the immigration constraints. We're testing the price of energy, and we're testing the price of technology. All of these supply shocks are leading to rising inflationary pressures that are gradually eroding growth momentum. So it's not just a story about this month, but it's really a story about the next few months and where we end up in this trade-off between growth and inflation.
Pretty uncomfortable position for the incoming Fed chair to be in, for Kevin Warsh, Greg. I just wonder how you think he's going to handle those situations, that situation we're going into.
Well, I think we've heard from most on the FOMC policy committee that essentially they're leaning towards more focus on the inflation side of the mandate. And that is the right approach right now, because if you look at the two mandates, you have the unemployment rate that is still low. I think it is hiding some underlying fragilities. We saw that the underemployment rate, which includes part-time workers that are looking for full-time work, rose a little bit in the month of April, but in general, there is a sense that the labor market is still in this balanced environment, whereas inflation is moving away from the 2% target, and that is getting a lot of attention. And I think when Kevin Warsh steps in as the FOMC chair, he will have to convince his colleagues that there is any form of need for easing. The current direction of travel when it comes to policy is actually, in my opinion, going to be reinstating a two-sided statement when it comes to the possibility of rate hikes over the next few months should inflation prove more persistent than currently is the case.
Greg, a lot of people think that this isn't feasible, given the fact that President Trump is the one who nominated Kevin Warsh and mandated him with cutting interest rates. Why do you disagree?
Well, I think generally speaking, he will first have to convince his fellow FOMC members that his intents are essentially geared towards fulfilling the dual mandate that the Fed has and not any type of political bias. So I think he will be restrained in that regard when it comes to any type of political desire to lower interest rates, because the rest of the committee is not convinced at all that there is any need for policy easing. If anything, as I was just saying, there is probably a desire to maintain a slightly restrictive monetary policy stance And we may see a few that become more vocal with the need to tighten monetary policy because, again, this is not just about this energy price shock. It's about the layered supply shocks that we've been seeing over the past year and a half or so, which are leading to higher inflationary pressures and eroding growth momentum.
Greg, how much, if you stripped out hyperscaler growth, would you start to see a truly stagflationary type of backdrop taking hold in the United States?
I mean, that's a great question, Lisa, and I think we've spoken about this in the past. When you look at all the supply shocks, from the trade supply shocks, the immigration supply shocks, the geopolitical supply shocks, and the AI-led tech revolution, we're very fortunate to have this AI-led tech revolution that's underway that is supporting supply-side dynamics, because absent that investment in AI that's been a key conductor of economic activity, we would be seeing much, much lower growth. So to answer your question, the AI boom that we're currently seeing, which is in the initial stages of greater infrastructure spending, greater investment in the semiconductor fields, greater investment in corporate adoption, that is a great support to economic activity. But I always come back to this notion that what we're seeing with the US economy right now is a narrow foundation to growth. Affluent consumers, AI investment, and asset price appreciation are currently leading growth. But that makes the economy more susceptible to potential headwinds that may come again and again over the next few months.
Elisa, it's such a fantastic question. Just imagine if we had a $1 trillion infrastructure spending program coming out of the US government and they said, yeah, we'll do it again and we'll increase it a year later. Basically got essentially that close to it from a handful of companies on the West Coast.
When you start talking about the scope of the spending and you start seeing that it's poised to exceed the defense spending budget next year, it gives you a sense of what we're looking at. If you take that out, the rest of the economy is at trend growth or even potentially below, and that's a real problem. How do you cater to that side of the economy while not stymieing what we're seeing over on the other side?
Hey, Greg, it's good to see you. As always, thank you, sir. Greg Dacko there of EY. To your point, it's an economy increasingly geared to the capex spend of a handful of companies. It's also the higher end of the K, the upper end of the K, increasingly geared to the good feelings you get from financial markets all-time highs. And both those stories are interconnected.
And they're fueling inflation. If you take a look at why core PCE is increasing at a faster pace than CPI, it's because of the inputs that are being juiced by some of these hyperscalers and the purchases that they're making. You start putting this together and you say, if the Fed were to cut rates to help the lower end of the K, it would just juice the profits that much more, and frankly, the returns in the financial markets, which would only widen the K. It's sort of just an incredibly difficult, fraught moment for a central bank that is faced with a dual mandate that on the margins is somewhat still in conflict.
30s at 5 this morning, just crossing that level, yields up by a basis point or two, 5%. If TK was around the table, he'd say overtaken by events. You want to draw down the balance sheet here, reduce it. Incoming Fed Chair Kevin Walsh, that's a big challenge with yields at these levels.
He's gotten a pass for the next couple of months. Let's see what he does after that.
Up next on the program, Ed Giardini of Giardini Research, Liz Economy of the Hoover Institution, David Tinsley of the Bank of America Institute, and George Saravelos of Deutsche Bank. The second hour of Bloomberg Surveillance just around the corner.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
This month, we're definitely going to have a bit of a spicier inflation report.
The inflation genie has been let out of the bottle.
We now think inflation could bubble up to 4%.
The last thing we need is additional monetary stimulus.
The Fed's going to stay on hold for a while.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Pulling back from all-time highs, down a third of 1% on the S&P, down by 0.7 on the NASDAQ. A ceasefire on life support, driving crude higher. WTI and Brent. WTI, triple digits, 101. Brent, 108, and pushing yields higher across the curve. 2s, 10s, and 30s. 30s, north of 5% briefly this morning. 4.99. Heading into this, 90 minutes away. Inflation data just around the corner. CPI before PPI comes tomorrow.
Yeah, and right before retail sales. And what the trifecta of economic data shows us this week is that people are growing more concerned about inflation than they are downside risk to growth. It was the opposite, say, around 2 months ago when people were gaming out how long this could go on. They thought if it reached this point, we would see some sort of fear of some sort of economic downturn. It hasn't happened. Maybe it's supported by spending on hyperscalers. Maybe it's supported by how much stimulus really has boosted the coffers of savings by U.S. consumers. Nonetheless, earnings have been incredible. People keep pointing to that, which has allowed inflation to remain higher than a lot of people had expected.
5 respected strategists on Wall Street upgrading their price targets since this war started. 5. And all 5 of them have pointed to the same thing: better earnings. Where's the threat to this rally going to come from? Let's bring up fixed income. Bring up the board. 2s, 10s, 30s. Are we getting closer to what Max Kettner of HSBC would call the so-called danger zone, with 10s at 440 and 30s essentially of 5%?
We're bleeding up to that level, although the pace of the increase has been relatively slow based on what we saw earlier in the conflict. We aren't seeing a massive increase in implied volatility in bond markets, which is a reason why it still is boiling the frog. We haven't hit that sort of panic button yet. Nonetheless, people have an eye on it, saying if the Fed really starts to talk about rate hikes, that could be the party killer, and that could be essentially when the cops come and say, go home.
From my perspective, interesting analogy.
Thank you.
From my perspective, better than the hospital one. The 2-year is the more eye-catching move this morning, getting closer to 4% again, because that is a direct challenge to an incoming Fed chair who most people are arguing wants to reduce interest rates, yet you've got a 2-year yield above the policy rate. We did that last month. We're doing it again this morning, getting closer and closer to 4%.
There are an increasing number of Fed officials who have come out and said that they would have been in favor of removing the easing bias from the Fed statement. And even though they were not voting members, I do think Jackson Hole is going to be fascinating this year when Kevin Warsh has to come out and give some guide of how inflation is a choice and what he's choosing inflation to be. Because ultimately, is this an inflation increase they're willing to tolerate and say is temporary, or are they going to have to address this, meet the market's expectations, and say, we have to tamp this down. We can't allow this to become normalcy, because right now, consumers are paying these prices. They actually are accepting them. That's why retail sales is going to be interesting. How much are consumers saying, man, that really stinks, but I'm still going to pay $20 for an egg sandwich?
CPI, 87 minutes away. Do you do that?
No,
I hope you don't, right? Good.
No, I
just
really
to
don't.
clear that up. Inflation data, 8:30 Eastern Time. Futures right now, negative 0.4%. Coming up this hour, Ed Yardeni of Yardeni Research with a street high outlook for equities. Elizabeth Economy of the Hoover Institution ahead of President Trump's trip to China. And David Tinsley of the Bank of America Institute on the state of the U.S. consumer. We begin this hour with stocks hovering near all-time highs. Ed Yardeni boosting his year-end price target on the S&P from 7,700 to 8,250, right in the following. We've never seen consensus earnings expectations rise so quickly as they have in recent months. The result has been an earnings-led melt-up in the stock market. Ed joins us now for more. Ed, welcome to the program. Been looking forward to this conversation with you. 8,250 year-end on the S&P 500. Ed, let's just talk about the earnings. Outside of recoveries, GFC, the pandemic, strip that out. Outside of recoveries, when was the last time earnings season and projections for earnings were this good?
I don't really recall anything like this. It's been extraordinary. The first quarter earnings expectations really weren't all that bad coming into the first quarter earnings season. Actually, they were holding up pretty well, and instead they turned out to be much better. And on top of that, the analysts are raising their second, third, and fourth quarter numbers. So now it looks as though we're going to have something like an 18% year-over-year increase in the first quarter. And for the year as a whole, they're expecting 24%. And that's definitely unprecedented. That's the kind of double-digit gains you see coming out of a recession. You don't see it in an economy that's been growing for a while.
Ed, looking across industry groups, the semis right now make up about 18% of the S&P 500. How much heavy lifting are the chip players doing?
Well, I think that's part of the story, but we're also seeing that the earnings expectations for the small caps and the mid caps have been going up to record highs. Those two areas of the market were actually sort of in a coma, flatlining since 2022 in terms of earnings expectations. And then over the past 6 months or so, we've suddenly seen them picking up and going to new record highs. So I think earnings breadth is actually improving. And if that's the case, that should lead to an improvement in the breadth of the market.
How sustainable is this, Ed, given the fact that we're hearing about consumers increasingly pushing back on price increases, increasingly being choosy as a result of some of the inflation that they're seeing across the market?
Well, you mentioned it before. There's a widespread belief that this is the K economy, where a lot of people are facing an affordability crisis and only a few people are doing well. I think that's, I'm not dismissing that, but I think a lot of that misses the impact of demography. I'm a baby boomer. I'm still working for a living, but I'm seeing a lot of my friends retiring, and the baby boomers collectively have a record $89 trillion of net worth, and they're starting to spend it. So all this anxiety about disposable income going flat, well, that's natural. I mean, baby boomers are at the peak of their careers and they're retiring, so that's going flat. Meanwhile, they're spending their retirement assets, and so they're continuing to spend. And I think a lot of baby boomers are helping their young adult children, maybe with mortgage payments, helping out with the grandchildren's after-school activities, some of the fees there. I see this from personal experience as well as from my friends. And so I think that's what's missing here, and that explains why the consumer has been so remarkably resilient, and I think that continues. So I don't really buy the idea that this economy is just being propped up by the capital spending on technology by a few companies. I think the consumers are definitely there. And the weakness of the consumer in the fourth quarter and the first quarter was weather-related. So we're about to test that. We'll see what retail sales looks like up ahead here and put it all together. And I think the economy remains resilient as it has been since the beginning of the, well, I call it the roaring 2020s, and so far so good.
If that's the case, Ed, then isn't it true that we would see a more sustainable inflation rate moving higher as a result of the increased consumer spending power, the increased amount of money, and frankly, supply shock after supply shock that's hit the economy.
Yeah, that's a good point, and I think it's we have a recent example of what can happen, and that was in 2022 when we saw a spike in energy prices, but that was on top of supply side disruptions and supply chain disruptions. And you can argue that the same thing is happening now, but the big difference is wage inflation is really moderating, and we have a labor market that's in equilibrium, supply equals demand, so we're not seeing a lot of upward pressure on wages, whereas we saw a tremendous amount of wage pressure in 21, 22, and there was a lot more demand than supply of labor, and that led to a wage price spiral. So I think what's missing on the inflation side this time is a wage price spiral. We certainly have an energy spike, and that'll certainly lead to higher inflation for the next few months. But I think both the bond and the stock market have basically looked through it. By the way, I kind of view bond yields of 4.25% to 4.75% as normal. I'm not getting freaked out by it. That suddenly we're going to see the bond vigilantes act up. Though I'm watching them right now. The bond vigilantes are acting up in Tokyo and in London. I don't see them here just yet.
So Ed, with that in mind, just build on that. When does it become a threat, this move in fixed income?
Well, it's interesting. A couple of years ago, I think it was in 2024, we saw the bond yield going up from 4% to 5% in 3 months. That was August, September, October. And it got up to 5% on November 1st. And Janet Yellen, who was Treasury Secretary back then, said, okay, the Treasury's not going to increase the supply of bonds. We're going to do our increased financing in the T-bill market. And so the bond vigilantes are not the only players here. And by the way, the bond yield came tumbling down. And so the Treasury and the Fed could still intervene in the market to keep it from going above 5%. And on top of all that, I think we still have the carry trade going on, where I think a lot of hedge funds are, in fact, sitting there in the Cayman Islands, or at least their books are sitting in the Cayman Islands, borrowing in Japan at 0.75% and buying bonds and getting a nice spread on it.
Do you think Kevin Walsh has got appetite to use the balance sheet of the Federal Reserve to intervene in the Treasury market?
Well, I think Bessent, Treasury Secretary Bessent, has the appetite to do what he was against doing when Janet Yellen did it, and that is issue more bills and fewer bonds if that's necessary. I don't think they're going to just kind of sit there and let the bond yield go from 5 to 6%, and I don't think it's going to go there. I think there's a lot of the U.S. bond is still viewed as a safe haven, and there's plenty of reasons to worry about things these days.
Ed, it's good to see you, as always. Just a final note, the next time you write a boomer stimulus check, you know where we are, okay? Ed Giardini of Giardini Research.
Absolutely.
Are you getting boomer stimulus checks?
I am not getting
I'm not on the receiving end of those either.
I imagine I'll be doling them out at some point, and I've already started to think about, where to draw the lines. But a really interesting take, because even some of the potential endpoints for a roaring 2020s don't seem to worry him, like higher yields. Doesn't seem to be on his base case of issues to work about. The man who coined bond vigilantes doesn't see bond vigilantes being brought back into service in the United States anytime soon.
There's two ways of looking at this move, right? There's many, but here are two. You can look at this as a challenge to risk assets, or just a reflection of a more resilient economy, an economy that can handle yields at this level. I'm not talking about gilts, by the way. I'm talking about treasuries.
That's the reason why it hasn't been necessarily a cold stop to the rally that we've seen in equities, because right now it really is a representative of the growth that we're seeing underlying the economy. That said, there are pockets that really are struggling as a result of interest rates, the housing market being one of them, which clearly is a focus of this administration.
These sell-offs in treasuries often become self-limiting, because it starts to bite and then you get a turnaround. I don't think we're there yet with 10s at 443, 30s around 5%. Let's get you an update on stories worldwide with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. The UAE's primary natural gas plant is set to return to full capacity next year. The plant has suffered damage from the Iran war after being targeted twice last month. The UAE estimating a financial hit of up to $600 million in the second quarter from the closure of the Strait of Hormuz. Amazon kicking off another round of financing in the debt market. The tech and retail giant is selling bonds across a record 6 maturities denominated in Swiss francs. It follows a $54 billion debt sale in March across U.S. and European debt markets. And the mayor of a California suburb resigned after agreeing to plead guilty to acting as an unregistered foreign agent for China. According to court documents, Eileen Wang admitted to posting pro-China propaganda at the direction of Chinese government officials. That's your Bloomberg Brief. John?
Yeah, Harry, thank you. Thank you very much. Up next on the program, a high-stakes meeting with President Xi.
I have a great relationship with President Xi. We're doing a lot of business, but it's smart business. I respect him a lot, and hopefully he respects me.
Up next, we'll catch up with Elizabeth Economy of the Hoover Institution, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
In 1 hour and 15 minutes' time, we'll get inflation data in America. And headline CPI year over year could come in close to 4%. The median estimate in our survey, 3.7. That sets the stage this morning for these moves. Equity futures declining near session lows on the S&P 500, negative 0.4. On the NASDAQ, we're down by 0.95. A weight to the take this morning with this move in crude. WTI and Brent, WTI reclaiming triple digits, 101, Brent crude 107, and yields higher across the curve, 10s through 440 and 30s. Briefly this morning, through 5%.
We're talking about both a domestic market in the United States with inflation hotter than people would like, and also an economy that's growing. But we're also talking about global bond vigilantes, whether it's in Japan or whether it's the United Kingdom. This is a global market with yields pushing higher. At what point does that create a slowdown to growth that maybe isn't being priced in?
The big global event over the next 24, 48 hours is this one. Under surveillance this morning, a high-stakes meeting with President Xi.
I have a great relationship with President Xi. We're doing a lot of business, but it's smart business. I think you can see that with the fact that in Hormuz, they get a big percentage, 40% of their oil from Hormuz. There's been no ships coming in, no nasty ships coming in that we end up in skirmishes with. He'd like to see it get done. I respect him a lot, and hopefully he respects me.
So here's the latest this morning. President Trump traveling to China today for a summit with his Chinese counterpart Xi Jinping. The meeting on Thursday said to be shaped by the ongoing war in Iran. Bloomberg's Mike Shepard joins us now for more. Shep, welcome back. This meeting was delayed because of this war. How different are things a month or so later?
Well, because the war is continuing, John, it really does frame and shape the discussions that are going to start Wednesday night, our time, about 10 p.m. That is when the two leaders are set to sit down. That would be about 10 a.m. local time in Beijing. And the Iran war really will be first and foremost for the two sides to discuss. China will be pressing the president of the United States to bring an end to this 10-month conflict, which has really sown trouble across the global economy, mostly in the form of squeezes on the supply chain, especially for energy, a pinch that not only consumers here in the U.S. and elsewhere in the world are feeling, but especially in Asia, and China is no exception. The U.S., for its part, will be pressing China on the question of Iran, and that includes Beijing's support for the regime in Tehran. And that could include concerns that the U.S. Has aired that there may be some exchanges of military support, including arms sales to the government in Iran, as well as purchases of Iranian oil by Chinese company. And the U.S. just sanctioned a bunch of Chinese entities for those purchases, and we could see that discussed as well. But the two sides will also have so much other business to get through, but Iran certainly, John, will be first and foremost of them.
Shep, thank you, sir. Good to see you. Down in the nation's capital, Mike Shepard there to build on this conversation. Elizabeth Economy of the Hoover Institution writing, the only channel of communication is economic. That is both where there is the greatest conflict, but also the most forward momentum. Elizabeth joins us now for more. Elizabeth, good to see you.
Thanks, great to be here.
What are you expecting to come out of this meeting later this week?
Look, I think there are basically three big buckets of issues that both sides want to address. The first, and I think most important, is that both sides really want to find some stabilization in the relationship. I think they're aligned around that. So developing a mechanism so that we're not doing a tit for tat on the tariffs and the export controls and investigations, I think is number one. And that's where I think you're going to get this board of trade and maybe further down the line a board of investment. I think that's really the most important. Second, of course, and crucial for President Trump, are some big wins that he can take home, right? Some purchases of soybeans and who knows, energy, airplanes, of course. And we see some of the CEOs that are accompanying President Trump that are in these spaces. I think for China, they'd like the U.S. to just treat China as a normal country, right? Not to have the highest level of export controls, not to have the most investment restrictions, not to have the highest level of tariffs, but to really find a way to do sort of normal trade. And then third, I think, is that bucket of broader security issues, Iran, Russia, fentanyl. I think these are other issues. And certainly I should say the Chinese will raise Taiwan. I think these are the other issues that are going to be on the deck for the two leaders.
Point two, aren't they a normal country?
I don't think economically they're a normal country, no. And I think the, sort of China's economic model is now presenting problems not only for the United States, but for the rest of the world. I think it's useful to note that 52 countries last year put in place trade defense measures against China. So the way that China does business really poses challenges for, not only advanced income, but now middle income and emerging economies.
There was a story, there have been a number of stories in a number of the biggest newspapers about how China has a lot more leverage than the United States and about how the economy is in a much better position to pose a real competitive threat to the United States. Do you agree with that framing?
Well, look, I think it's fair to say that China has an important chokehold on sort of goods that are essential to U.S. economic and national security, like rare earth elements and critical minerals, like active pharmaceutical ingredients. So certainly they've developed new leverage, new tools. But I think President Trump has the capacity to move past that in many respects, maybe to put on some virtual reality glasses and create his own world and negotiate from what he believes is a position of strength. The United States doesn't go into this without, any tools at its disposal. The tariffs have had some impact on China. It has export controls. It's been continuing to move forward on export controls around chip-making equipment just this past week. It had a letter of intent, basically an informed letter, which basically signals to some U.S. companies that they're going to have to put in some new export controls against Chinese companies. So I think there are tools that we have at our disposal, and the president will go in at least feeling stronger than many other people may recognize.
If that's the case, what's the signal that you take from Jensen Huang of NVIDIA not accompanying President Trump on this trip?
Well, look, Jensen's had a lot of attention, paid to NVIDIA, and the president, made a move basically on his behalf and on AMD's behalf last year when he allowed the sale of the H200s to go forward, which was something that he did against a lot of opposition, both within his own administration and Congress and within the national security community. Those sales haven't materialized. So I think maybe what would be the point at this point of him going? I think if you look at the companies that are accompanying the president in the tech space, many of them are a little bit of problem children. They have issues with the Chinese government right now. Either they're not getting licenses, they're under investigation, they're concerned about shrinking market share. So I think there will probably be an effort to get some of those very particular issues addressed in the summit.
Can we finish on Taiwan? And maybe a bit of a reality check to the narrative that we hear a lot in these kind of conversations. There is an opening here for them to make a move on Taiwan. The president's distracted. He's bogged down in the Middle East right now. What's your read on what's actually going to happen?
So I don't think the Chinese are going to make a move, a military move on Taiwan, because President Xi really wants to have a peaceful resolution. I think he's planning to wait until 2028 when there's an election in Taiwan where he believes that perhaps the opposition party, the KMT, may come to power, and the KMT is more favorably disposed toward Beijing. So I think there's a window here where I think we're not going to see any military action. That being said, we also don't want to see President Trump give any more space to Beijing on Taiwan. I think, the administration certainly recognizes that Taiwan, basically produces over 90% of the most advanced chips that we need, both for commercial and military purposes, and it is essential to our national security. It's part of the first island chain. So I think what we don't want is for Taiwan to be central in this meeting or to see any give on the U.S. position.
We hear repeatedly that under this president, the administration, the U.S. is willing to give up its global leadership role. Do you see it the same way?
I think the U.S. is redefining its global leadership role under President Trump. It's not giving up. I think there's a misperception that President Trump has retreated from the global stage. The sort of idea that we're going to have a sphere of influence policy, only be focused on the Western Hemisphere. I mean, we are deeply embedded in the Indo-Pacific. We're clearly still in the Middle East. So I don't see any evidence that we're pulling back from our global positioning in the security realm. I also think what we see is, yes, the president has withdrawn the United States from over 6 international institutions and arrangements, but at the same time, he's creating new ones. His administration is creating new arrangements like the Shield of Americas and Forge around issues where the administration feels they're critical to U.S. sort of security and economic interests. So around, critical minerals, around rare earth elements, doing bilateral deals, establishing a new multilateral trade arrangement. So it's not a complete withdrawal, but it's a refocusing around what this particular administration considers to be sort of the essential U.S. economic and security interests.
Liz, it's good to see you in person too. Thanks for being here. Thank you very much.
Thank you.
Elizabeth Economy there of the Hoover Institution. We've heard that argument a few times. It's hard to make that argument given the activity we've seen from this president through the years so far.
Honestly, it's been a completely global focus, more so sometimes than even domestic concerns, especially as he heads over to China for the first time in about a decade.
Coming up on the program, we'll catch up with David Tinsley of the Bank of America Institute on the state of the U.S. consumer. Plus, Danny, has your morning movers, hims and hers, plunging with higher than expected costs for weight loss drugs? That name down by 15%.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
All-time highs coming into Tuesday, pulling back this Tuesday morning. Negative by 0.4% on the S&P, on the Nasdaq 100 down by 0.9. You've seen the enthusiasm to buy this market whenever you get a pullback. Will this morning be any different? All the upgrades we've seen to price targets since this war started, all connected to the earnings story. Barclays, 76.50, bullish on the profit outlook. HSBC, 76.50, earnings strength. Ed Yardeni on the program just earlier, 82.50, an earnings-led melt-up.
And when we spoke with him, he said he hasn't seen anything like this, especially not in a time where the economy has otherwise been growing. The only time he sees moves like this is coming directly out of a recession, and that hasn't been the case, at least for the past few years. How sustainable is this? Well, he talks about how the boomers are filling the coffers of all sorts of younger people, paying their mortgages, paying their bills, and they're retiring and having a lot of time and money to spend. Look, it's coming out in the numbers, and we'll get that confirmation on Thursday when we get retail sales. Are consumers still spending and powering this growth?
You're going to strip out the boomer stimulus checks from the retail sales.
I think that's
Is that what you're going to do?
That's embedded. I think that's absolutely embedded. I mean, how many people who live in certain areas and have their phone bills paid by their parents are just clearly...
Yeah, certain areas of Manhattan.
Yeah, boomer, stimmy kids.
You know,
yeah.
Go in the working day.
Very much so, yeah.
Just finished yoga.
Yeah.
You're wondering if they've got a job or not.
People who lunch, they do.
Boomer stimulus checks, right?
100%.
Funding San Ambrose.
I mean...
Clearly.
Totally, yes. That
Without
is one particular one. Anyway, but, you know...
It's a very New York conversation, forgive us. Okay, let's move on. Want to get to South Korea and this move in the Kospi. The Kospi overnight, dropping as much as 5%, then pairing losses. This is actually really, really interesting. If you're just joining us this morning, welcome. So you had a policy advisor, let's call it, to the president of South Korea, come out with a social media post talking about tapping the profits of AI-related companies to offer a dividend to the people. Then he walked it back, diluted the comments, got some clarity, etc., etc. But the drop-off in the equity market was instructive. And so was the policy proposal initially, in the way that people viewed it, because is that a flavor of things to come if we do go in a certain direction?
Citizens' dividends from companies that are among the most profitable in the world and that have seen a moonshot in terms of their price performance in the stock market. How much are a lot of governments going to turn to those companies and say, all right, now it's your turn to give back, because the rest of the economy is not growing very quickly and people are unsatisfied with how much prices are going up. Regardless of whether it's coming from semi-investments, regardless of whether it's coming from the war in Iran, there is displeasure on the part of consumers about how much prices are going up. Will these be prime victims, number one? Yeah. And is this something that isn't necessarily prime victims, but just sort of an inevitability that just isn't being priced into their valuations?
That's a political story further down the road. Let's get to the market story in the here and now. This move in crude. The proposal from the Iranians, totally unacceptable. The ceasefire on life support. Crude about 107 this morning on Brent. Triple digits on WTI. You take that 3% move in crude, you plug it into fixed income yields higher across the curve throughout much of this morning. Two's approaching 4%. 10s through 4.40, 30s through 5% this morning.
It's the inflation week that nobody wants. We've got CPI today, we've got PPI tomorrow, and then retail sales to give us a sense of all of that and how it's being bled into the economy. This is a price that will surge that much more if you start to see a re-engagement of military action. That's what I'm looking for. How much are people looking for 120, 130? Should there be some sort of re-emergence of a hot war?
That's going to be a story for a little bit later in the programme.
I mean, that's what the bar is being lowered.
Potentially.
Yeah,
Without a doubt, I'm with you. I'm right there with you. No pushback at all. 2 hours away from the cash open with your morning movers. Danny Berger has more. Hey, Danny.
Hey, John, at the top of the hour, we got earnings from Under Armour, a really big miss for their EPS. Their guidance is between 8 and 12 cents. The expectation was for 23. So on the positive side of things, Under Armour says that the tariff refund checks that are going to be coming their way after the ruling against IEEPA is helping them. On the downside, they say, one, they've been making more investments, so that's been hurting them. 2, tariffs are already high for them. And they cite the war in Iran and the issue that is made for them in supply chains. They say they're taking a $35 million hit because of the war in Iran. So those shares getting pummeled this morning, down nearly 13%. Elsewhere, we got the official rejection from eBay to GameStop. The company there in a statement saying that the takeover offer from GameStop is neither credible nor attractive. It does set us up for a potential proxy fight. Still, there's a lot of questions as to whether GameStop can actually get this done, considering they're less than a fourth of the market cap of eBay. So GameStop shares, you see those falling 3.5%. Finally, we also got earnings from Hims and Hers. That's a big decline. 2 companies are really getting punished for missing, down 15.2%. It's because of higher costs tied to getting name brand weight loss drugs. Before they were doing copycat versions, they pivoted. They're using the drugs from Novo Nordisk, from Eli Lilly. A big restructuring cost tied to that, about $33.5 million. So shares sink off the back of it. John?
Hey, Danny, thank you. More from Danny Berger in the next hour. Slightly distracted here. New note from Max Kettner over at HSBC. I'll share some of the details with you. Still max overweight equities. We remain aggressively risk-on in our tactical asset allocation. Some reasons for that. Sentiment and positioning not stretched yet, according to Max. The data, bottom-up strength in the US, almost unprecedented, he says. And this on fixed income. This is the important piece. We remain most underweight in treasuries. The why, upside risk to US growth could be the next catalyst for fixed income. This was a conversation you and I were having. What is the ultimate driver of what's happening here in fixed income? Do you see it as a reflection of a better outlook for growth or a threat to this equity market?
Part of the reason why you might be seeing such a recovery in earnings that has been tremendous and unprecedented is because of unprecedented growth. This is the bull case. How many people are looking to hedge against a downside risk, which would be a treasuries bet? Very few. Increasingly, people are worried about missing to the upside, and they're seeing that in earnings. They're seeing that in the price action, which makes sense. So you talk about the limiting factor of treasury yields. At a certain point, they're an encouragement to go into risk assets because they're not a good hedge about whatever's going to come next.
The latest for treasuries near the highs of the year. We're looking across the yield curve this morning. On our radar this morning, a fresh look at the state of inflation coming at 8:30 Eastern Time. Economists expecting CPI to rise 3.7% in April as the war in Iran continues to pressure global fuel and food prices. Elsewhere, the UAE has reportedly carried out military strikes on Iran. According to the Wall Street Journal, the attacks included a hit on a key refinery in the Persian Gulf, the move signaling a more aggressive front by the Emirates to protect their economic power. And finally, the Trump administration adding another release of emergency oil reserves in a bid to ease higher energy prices. President Trump also floating a suspension of the federal gas tax.
A lot of people thought oil would go to $250, $300. It's not. I mean, today it's at less than 100. When this ends, you're going to see it drop like a rock.
How long are you going to suspend that tax for?
Until it's appropriate. It's a small percentage, but it's it's still money.
Average gas prices recently topping $4.50 a gallon for the first time since 2022.
Look, you're seeing an increasing number of governments look to fuel some sort of consumer subsidy as they see energy prices go up. I will just add, that would cost $3.5 billion to the United States every single month that you do remove that 18 cents of a tax from each gallon of gasoline. Increasingly, this is going to become a fiscal problem. I feel like I am beating a drum that nobody wants to listen to. This is also helping yields stay higher because of the fiscal response that you're seeing around the world.
How much of a difference would it make? It will make a difference, but how much? We've had a move of about $1.50 to a gallon of gas in this country on average. We're talking about maybe removing a little more than 18 cents from that 150 increase. And I saw a lot of feedback on social media yesterday that if you want to really do something about taxes, remove the war tax over the last 2 months and the increase we've seen, the 150 over the last 2 months because of this war.
Yeah, essentially, if you go buy an $80 product and you get a $2 discount, it's not going to make you feel better about paying $78. And that's essentially the type of valuations that people are paying to fill up their gas tank.
I was tracking the work from the team just yesterday as they were working through who's done what. Georgia, Indiana, Utah have temporarily waived taxes at a state level. Lawmakers in Alabama, New York, Pennsylvania, South Carolina are looking at following care. We've seen gasoline stockpiles in this country on a seasonal basis near 10-year lows. What are we doing? Delaying the demand destruction. For how much longer can you delay the demand destruction?
And are you making it worse by not delaying the demand destruction because you're increasing or at least keeping demand constant at a time of a supply challenge, a supply crunch? This is the economic challenge that no politician wants to listen to.
Crude at triple digits on WTI so far this morning. Investors, of course, are waiting fresh inflation data due out in just under 1 hour's time. The Bank of America Institute Consumer Checkpoint survey writing, with or without gasoline, spending was strong in April, posting the strongest growth in 3 years. But we see signs of pressure building on discretionary spending. Joining us now to discuss, David Tinsley of the Bank of America Institute. David, welcome to the program. That's notable. Before we get to the details, I just want to deal with the headline. Are you still seeing really decent growth, even away from just gasoline spending?
Yeah, even away from gasoline spending, our card data in April was up 4% year over year, and in March it had been up 3.6%. So, and even if you look at the month-on-month increase, it was up about 0.5% stripping out gas. So yes, now one caveat, and it's really early to tell, is that the final week of April, the data looked weaker. So, you know, if you want to be a glass half empty person, you might think that we're beginning to see some weakness creeping in, but that weekly data is so volatile, I wouldn't read too much into it just yet.
David, can you give us a sense before we get to the glass half empty? Because, of course, I want to go there in a bit, but I am curious how much you're seeing dispersion increasing between people who are in the upper income brackets and people who are in the lower income brackets. Is that continuing to be the story, or is that overblown at this point?
No, it's still a story. I mean, in terms of like the K-shape on spending, our higher income consumers in our data, their spending's up about 5%, give or take, year over year. Lower income's up about 2% year over year. That gap is large. It isn't totally widening further, but it's still very large. And when you look across to wages, in terms of the data we see, the payroll coming into accounts, amazingly, really, higher income consumers saw year-over-year pay growth of 6%, and the very top 5% saw over 10% year-over-year growth. Whereas right at the lower end, they're seeing wage growth of about 1.5%. So there's a big, big difference, and that obviously is driving some of this story about subsidies, etc. you were alluding to before we came on.
That's a tremendous statistic, the idea that the upper income, you're seeing up to 10% growth, in the lower income, 1.6% wage growth currently in the backdrop. How much are you seeing both sides of the equation start to reduce their spending in the past week? I understand that's volatile, but do you see it across the board?
Well, when you look at discretionary, which is really where we're, obviously focused on right now, the expectation that some people may be pulling back. I think where you see it is in items like clothing. There's a big discrepancy between clothing spend from lower income and higher income. I think in travel too, probably not so surprising. When people are thinking about booking their vacations, there's a distinction between higher income, which is pretty solid, same as always, really, with lower income. That looks quite soft. So I think, if you are this glass half empty person, you're looking at some discrepancies in those categories, and you're looking at the end of the month, and obviously that's feeding into your concern. But we have to, kind of go back to the fact that the overall data is solid. Jobs growth, not only in the BLS data, but in our own in-house estimate of payrolls growth, very solid. So, To some extent, maybe the show can stay on the road over the next sort of, 3 to 6 months if even if gasoline prices stay high. But there will continue, I think, to be these discrepancies.
So, David, just to build on that, and finally, some people might point to the tax refunds and say this is why you've still got a bit of a bounce, offsetting the pain at the pump and the issues with the energy story. But my question to you would be, what in your report can you point to that gives you confidence about the sustainability of this over the next several months? Your final point.
50% of the tax refunds paid have not been spent so far. They're actually banked. So that gives fuel in the tank, even for lower income consumers, for a number of months. And then at the higher end, you've got the wage growth situation. So I think, it's not all doom and gloom by any means.
We appreciate it, David. Thank you, sir. David Tinsley there of the Bank of America Institute. Someone around the table might be glass half empty. Maybe, possibly.
I think it's, a third empty, and I'm very concerned about it. Look, people are watching for signs that there's some sort of problem, but I think that what David Tinsley just said shows the issue itself, which is essentially wage growth increasing dramatically at the upper ends and not really growing enough to compensate for the increase in gasoline at the lower end. This is a political problem, even though it's not showing up in the averages.
That's the best point. It's a political problem. It's not a market problem yet. And that's the conversation we might be having in 46 minutes' time, that you're going to see the pressure building for consumers in America. But as we've heard from Strategas earlier in the last week or so, this is not a consumer-driven equity market rally. It's a tech-driven equity market rally.
And to the extent that it is consumer-driven, it's driven by the people who are profiting from some of the tech gains in stock investments and that are getting bigger wages. So this isn't necessarily hinged on those lower-income consumers continuing to spend.
It's a tech-driven sell-off this morning. We're down by 0.8 on the Nasdaq 100. Let's get you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. SoftBank is in talks for a major data center project in France, sources telling us here at Bloomberg. The company is considering a multi-billion-dollar investment as part of SoftBank's build-out of AI infrastructure. The Trump administration is delaying a plan to suspend tariffs on beef, according to the Wall Street Journal. The president was poised to sign executive orders on Monday to address supply issues, but pressure from American farmers put the measure on ice. And a U.S. citizen infected with hantavirus aboard a cruise ship is being treated in a biocontainment unit in Nebraska, while another symptomatic person is receiving care in Atlanta. 15 others exposed to the virus are in quarantine at the University of Nebraska. In total, 18 Americans have been repatriated from that ship. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you for the update. More from Yahara in the next hour. Up next on the program, headwinds building for the U.S. dollar.
There are two factors that drive currency values. One is related to macroeconomic fundamentals, and the second is fear. The dollar did strengthen when the Iran war started, fear, and now it's come back down, macro.
George Saravelos of Deutsche Bank joins us next, live from New York City. You're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslada Amin in Davos, Switzerland, and this is Bloomberg.
So in 41 minutes' time, we get inflation data in America, CPI. Later in the week, we'll get retail sales. Just how is consumer spending? Caught up with Bank of America just moments ago. They put out the Consumer Checkpoint piece of research that I always enjoy going through. Card spending, spending growth, strong in April. According to the internal data from BofA, total credit and debit card spending per household rising 4.8% year over year. That's up from 4.3% in March. Excluding gasoline, some of you want the number, I'm sure. Card spending was still a strong 4% year over year. That's a pretty decent read on activity in this economy.
People are still spending, even when you strip out inflationary aspects. And when you take a look at who's spending, you can see that the upper income individuals are continuing to have plenty of cash, are seeing up to 10% wage increases, and are able to spend that money. That has been the story that is powering this market.
Encouraged, no doubt, by equity markets at all-time highs. As for those records this morning, pulling back just a little bit. We're down by 1/3% on the S&P, on the Nasdaq down by 0.8. Under surveillance this morning, headwinds building for the US dollar.
We are in a world where there are two factors that drive currency values. One is related to macroeconomic fundamentals, and the second is fear. Countries around the world looking for a safe place to put their money. I mean, the dollar did strengthen when the Iran war started, fear, and now it's come back down, macro.
So here's the latest this morning. The dollar failing to hold on to war-driven gains as investors turn to riskier assets, including equities. George Saravelis, the global head of FX research at Deutsche Bank, joins us now for more. George, welcome to the program. Is it fair to say you've become incrementally more bearish on the US currency?
Oh, well, we've been bearish for the last 12 to 18 months in terms of our forecasts. But I think as the war, as the risks around the war look to be peaking, we have been increasing confidence on the dollar downtrend coming back. What's interesting now is it's a lot more concentrated in dollar China as opposed to euro dollar. So if you think about this time last year, all the big moves were happening in the euro, but now all the new lows in the dollar are being made in China, which I think is especially interesting given the geopolitical backdrop.
Well, George, why do you think that is the case? Why the switch? Why the turn?
So I think there's two elements. One is the Chinese authority side, which is now openly allowing the currency to strengthen a bit more, and you can see that via the behavior of the fixings and the onshore versus offshore basis. So there's a very clear signal coming out of China, also perhaps in anticipation of the Trump-Xi meeting that's coming in. But of course, these broader discussions around the role of the petrodollar, what's going on in Iran, the geopolitical shifts. I think these have opened up a broader question in terms of the geopolitical balance of power in the region. And at the margin, that is helping China.
The People's Bank of China put out a report yesterday that highlighted that global central banks' use of their swap lines reached a 2-year high in the first quarter, indicating that people were increasingly going to the Chinese renminbi as some sort of reserve currency. Do you take this as a signal, or is this the PBOC trying to fuel the narrative?
Well, I think what's very interesting is to look at the actual data, and we do have transactional data in terms of volumes and flows going on in the interbank payment market in China. And what you saw actually in March is some of these metrics made new highs. So there is increased usage of CNY going on in the background. It's very difficult to understand precisely what type of flow is driving that, but I would say in terms of the actual evidence we have from data, CNY usage has been rising since the start of the war in Iran.
George, how much is this getting skewed by payments that are being made to Iran for passageway, or Iran trying to get some liquidity through renminbi, given the fact that we're talking about the petro-yuan versus the dollar?
It's very hard to understand that type of flow at a micro level. As you alluded to, these are things that are going on in the background. But I think the takeaway I have is the fact now that the CNY is making new highs, even in broad trade weighted terms, is really telling me two things. One, the signal and the policy intention out of the Chinese is really to now allow a lot more CNY strength than we were seeing this time last year. And the second point is, despite really a very large negative terms of trade shock, which should be impacting China because it is a major energy and oil importer, you're not really seeing that being reflected in the currency, which is strengthening. And that's really sending you a signal about broader flow shifts taking place in the background, aside from the terms of trade shock and the higher energy prices.
George, it's interesting we're talking about potential US dollar weakness, but we're not talking about US policy. We're talking about international issues. When does US policy begin to set the tone for the next leg of this trade?
I think for sure US policy is relevant, and I'd break it down into monetary and fiscal, which is the broader macro variables we focus on. On this front, what's interesting is over the last 3 to 4 months, you've seen a pretty dramatic repricing of the ECB rate hiking cycle, the Bank of England, even currencies out of Asia. But in the US, in part perhaps because of the transition to a new Fed chair, you have not seen this move to pricing rate hikes. So I'd say the US policy has almost been relevant by its absence in terms of repricing a more hawkish Fed. I think it's the bar to start pricing Fed hikes, which would be one dynamic that would be a lot more positive for the dollar, is still high, especially with the incoming chair coming in over the next few months. So I don't really expect that to come back. And then the other aspect of US policy is, of course, foreign and geopolitical policy. And the big question mark is, how is the balance of power changed in the Middle East and globally over the next few months, both on the back of the Trump-Xi meeting and, of course, the Iranian war. And that does have the potential to influence exchange rates.
George, it's good to see you. Thanks for dropping by and bringing us an update on his views on the FX market. George Salaveros there of Deutsche Bank. In the next hour on Bloomberg Surveillance, we'll catch up with Emily Rowland of John Hancock Investment Management, Angelo Zeno of CFRA on this rip-roaring rally in tech stocks, plus Michael Gapin of Morgan Stanley on inflation data at 8:30 Eastern Time, and the Flexport CEO, Ryan Pedersen. The third hour of Bloomberg Surveillance. Up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras. The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
We've seen perpetual market strength.
The eyes continue to be on earnings. It's an earnings momentum-driven market. It will continue to be an equity story as we go forward.
Things are about as good as they've been in a really long time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equities, session lows down by 0.4%, pulling back from all-time highs, and an aggressive rip-roaring rally in tech turning into this, down by just 0.9% on the NASDAQ. On the Russell, down by 0.3. Turn to the commodity market. This is how things are shaping up this morning. Crude rallying. Brent up by 3%. WTI as well. Triple digits on crude. 101 on WTI. Brent crude just short of 108. And in the bond market, yields pushing higher. 2s out to 30s near the highs of the year. A 30-year at 5%. Heading into inflation data 29 minutes away. CPI up next.
And it may be closer to 4% than 3% at 3.7% year-over-year headline CPI expected in a median survey of economists. A real question about how the Fed deals with this and why we're seeing inflation. Is this the one-time impulse from higher energy prices and other commodity prices as a result of the Strait of Hormuz closure? Or is this a sign of the strength in the U.S. economy that can allow prices to sustainably remain higher? Those are the questions that could both support U.S. stocks while also causing a further sell-off in bonds.
Well, let's stay with consumption. We know what sentiment looks like right now. We're rock bottom. Let's focus on spending. What are people actually doing? The card spending data coming out of Bank of America indicating, stripping out gasoline, a move of 4% year over year. That's decent spending growth. in this economy?
It's been fueled by the wealth effect with stock price increases, also giving sense of complacency and a lot of assets to spend. It's also being driven by the K-shaped economy and the average, which is a U.S. economy that seems to be closer to boom time than it is to a recession. How many people have come on the show and said that they expect recession? How many people have said that they think that it's a greater likelihood of a downturn in economic growth than some sort of boom case that's going to cause the S&P to go to surpass 8,200? It really isn't that many, which is a reason why increasingly stocks can keep rallying despite the backdrop that we're hearing about inflation.
It's difficult to make the recession call when you've got deficits in this country of 5-6%. Right? It's difficult to make the recession call when you've got a handful of the richest companies on the planet with really strong balance sheets committed to spending hundreds and hundreds of billions of dollars. It's difficult to make that call.
It's even more difficult when you look at a population of wealthy individuals who have plenty of discretionary spending. What stood out to me was the idea at the upper income level, you're seeing 6% wage growth year over year as a result of a lot of the top tier jobs paying more on the heels of productivity. That wage growth is not being sustained at the lower end of the K, which is why the sentiment surveys could indicate a very different type of backdrop than the overall spending averages.
And certain parts of corporate America capturing that story. Shake Shack can't pass on the higher costs, stock hammered. But as Chris Ferrone said on this program, basically, if you're looking to build an investment thesis off the back of Shake Shack earnings, you're probably not getting the call right in the equity market right now, because what's driving the equity market is not Shake Shack and the restaurant business, it's the tech sector.
It also is a subject of conversation last night at dinner. The cost of a burger at Shake Shack.
It took 2 hours. What happened?
Casa Bramo, there was a situation where the kids said that they were not going to eat at Shake Shack for lunch because it was just too much. It cost $20 for a burger and fries.
It's expensive.
And they weren't interested, so they were going to other cheaper options next door. You see the demand destruction in real time as a result of the value proposition not meeting their
Fast food is no longer cheap food.
Exactly.
That's been the shift in this country now for a number of years.
I'm telling you, it actually is a really good barometer of inflation when the kids come to you. And they
Who's
say,
next door, by the way? Who's next door?
A really cheap Chinese place, which I
that's their preference. That's their preference.
I'm really concerned. Whatever,
Okay.
let's move on.
Okay, we can move on. I'm happy to move on. Just intrigued. Other people might be too. Equity futures on the S&P. Session lows were down by 0.4%. Coming up this hour, Emily Rowland of John Hancock with stocks on a record-breaking run. Angelo Zeno of CFRA on the risk of sentiment swinging negative. And Mike Gapin of Morgan Stanley reacting to the latest inflation print. We begin this hour with stocks inching lower as investors await the latest inflation data. Emily Rowland of John Hancock writing, we continue to see equities struggling with valuations for long-term returns, but earnings growth is still a very viable return driver. Emily joins us now for more. Emily, welcome to the program. This is a conversation we had with Ed Yardeni, who, by the way, is at 8250 year-end on the S&P. Outside of recoveries, post-GFC, post-pandemic, when was the last time earnings growth was this good?
Never. I listen to your show every day, and I'm trying to come up with like a new adjective to describe this quarter's earnings growth. It's like spectacular, stunning, shockingly good. Like, it's been awesome. 28% earnings growth versus an estimate of 13% coming into the quarter. And we have 10 out of 11 sectors showing earnings beats, and the magnitude is spectacular, coming from sectors in particular like industrials and communication services. So it's not just technology that's driving that earnings growth. Is 30% earnings growth quarter after quarter after quarter sustainable? Probably not. But we're doing our best to enjoy the sort of nirvana that markets are benefiting from a fundamental standpoint today.
Many people, as you know, Emily, aren't enjoying it. They complain about it, and that's been the story ever since we exited GFC all the way up and to the right. This bull market has been hated. They will point to concentration and concentration risk. Do you believe that's a problem still building?
Yeah, it absolutely is a problem, and we're back to having the top 10 stocks in the S&P 500 represent about 40% of the index. That's not a healthy environment, but I would point to international markets abroad as having even more of a concentration risk. If you think of what's driving these global markets right now, it's a semiconductor super cycle for the history books. And we're seeing emerging markets really lead the charge there. You look at spectacular earnings growth, it's coming from emerging markets. But the challenge is it's just a handful of stocks, John. It's just about 3 stocks that are driving that growth. So I look, for example, at emerging markets earnings season. It's been great, but the beats are actually really modest. We're looking at about a 34% beat rate in emerging market equities because of that concentration. Another notable thing is that semiconductors are actually in value indices. So there's been a lot of confusion for investors that are sort of focusing on styles right now. And because the PE ratios are so flattered by that forward-looking earnings growth, we're actually seeing semis really benefit value indices overseas, which I think is a notable dynamic for those of us that are doing attribution analysis on a daily basis.
Emily, coming into this year, you were a little bit cautious about the U.S. economy and potential growth in earnings among a lot of these companies. How much have you changed your outlook?
Well, one thing that's shifted for us, Lisa, is this fiscal sugar rush that we're going through right now. If you know, we've been thinking a lot about sort of car analogies and this earnings engine being important. So think about what's sort of fueling the gas tank right now. Fiscal stimulus was really sort of pumping on the brakes last year. We had government layoffs. We had a lack of fiscal support. More broadly speaking, we had tariffs. Now this year, the fiscal impulse is on. You've got tariff refunds. You've got lower corporate tax rates in the wake of the one big beautiful bill. Consumer tax refunds are elevated. You've got elevated defense spending right now. So this fiscal thrust right now that's really resulting in an improvement in the U.S. economy, while the Fed is actually looking at sort of tapping on the brakes here to prevent inflation from running away.
Emily, it's always good to hear from you. Emily Ronan there of John Hancock. This Fed is hesitant to tap the brakes. This Fed is still somewhat committed to the next move being an interest rate reduction, which is why you've seen some pushback. And I would say more than some pushback, beyond just the three that officially dissented to the language in the statement initially at the last Fed meeting. We've seen a lot more than that in the last few weeks.
Part of that is because there have been sectors of the economy that have been left behind. You have seen sectors, entire sectors that have been left behind, housing in particular, and people point to that as a key component in this virtuous cycle of an economic recovery. You need those jobs. Home Depot, Lowe's, you hear that in some of their earnings. People aren't buying as many supplies or furniture, say, at Restoration Hardware, another member who came out and had some colorful choice words a number of months ago. A question here, though, about how targeted they can be at a time where inflation is running as hot as it is.
If in the home builder industry right now, tough. Restaurant business, tough. Parts of discretionary, tough. If those kind of sectors, industry groups had bigger weightings on the S&P 500, the S&P would be down. But that's not the reality of this situation. You have to take what you've got. We've got 18% of the S&P coming from chips. And chips and the profit growth, these are the ultimate profit centers right now. These guys have minting money, and that's what's driving this earnings growth.
So as the Federal Reserve, how do you cater to the economy while not creating a bubble in stocks that are somewhat more economically independent based on the broader economy? It becomes a conundrum because you have the risk of inflating a bubble on one side of the equation, even as you try to cater to another that isn't feeling so great. And you're seeing that in sentiment. You're seeing that in the K-shape. You're seeing that in a whole other bunch of metrics that are not factored in to the S&P 500.
There's always a risk of making it too complicated. If you're a policymaker, you have to focus on the averages. And I mean central banker when I say policymaker. If you want to focus on disparity, that's the job of fiscal and that's the job of politicians. And I think central bankers get themselves into trouble when they start focusing on the nuances and the disparity.
Over to you, Kevin Warsh. Let's see how he ties that knot.
He's in a tough spot.
He's in a tough spot, and he's been given a little bit of leeway by Scott Bessent, Treasury Secretary, who said it's understandable why the Fed would remain on hold for a longer period of time. Nonetheless, down the pike, it could become more complicated, especially if inflation rates stay at these levels.
Futures right now negative by 0.4% on the S&P. Near session lows, the data some 20 minutes away. With an update on news worldwide with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. Several CEOs have been invited to join President Donald Trump on his trip to China, including Apple's Tim Cook, Tesla's Elon Musk, and Citi's Jane Fraser. One notable absence, NVIDIA CEO Jensen Huang, who was not invited, according to a White House official. eBay rejecting an unsolicited proposal from GameStop. The company saying the offer is neither credible nor attractive. Earlier this month, GameStop offered to buy the online marketplace for around $56 billion. And in sports, the Oklahoma City Thunder have swept back-to-back series in their push to become repeat NBA champions. The Thunder winning 8 straight over the Suns and Lakers. Meanwhile, in the East, the Cleveland Cavaliers have tied their series against the Detroit Pistons 2-2. The winner of that series will take on the New York Knicks. That's your Bloomberg Brief. John?
Yahara, thank you. We want that to drag out, right?
Yeah.
Everyone's exhausted. Injuries mount. Not that we want anyone injured.
No,
a
but
bit of
it's
fatigue
true.
sets in.
Yes, well, I would agree. Although the Knicks have done so well that, I'm just very happy. I'm actually
You're
playing
bullish
that.
Knicks. You're on the same team for once.
For once we are. I mean, honestly,
Okay.
how could you not be when you went past the cheering crowds, the excitement?
Very cool. Anne-Marie, back on the program tomorrow. She'll join us from China on the president's visit to Beijing and that meetup, of course, with Xi Jinping. Up next on the program, The Morning Kills Plus. We'll catch up with Angelo Zeno of CFRA as the tech rally pulls back just a little bit this morning. Equity futures down across the board. The weight on the tape in tech and the chip sector. The NASDAQ this morning, fairly negative, down by almost 1%. From New York City this morning, good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I don't really recall anything like this. It's been extraordinary. Now it looks as though we're going to have something like an 18% year-over-year increase in the first quarter. And for the year as a whole, they're expecting 24%. And that's definitely unprecedented. I think earnings breadth is actually improving. And if that's the case, that should lead to an improvement in the breadth of the market.
Ed Giardini of Giardini Research, street high price tag on the S&P 500 now of 8250, 4-year end, the most bullish on the street. Ask the simple question, outside of recoveries, which is when typically you see this aggressive improvement in profits, so take out GFC, take out post-pandemic, have you ever seen earnings growth like this? His words, I don't really recall anything like this. It's been extraordinary.
Leaning into the roaring 2020s with earnings growth that has exceeded by double what people were expecting. It was expected to be 13% growth, instead it was 26% growth. And it's coming from, yes, narrow stocks. You are seeing about half of that coming from the big tech names. At the same time, it is broader than that, and that's the reason why a lot of people are getting optimistic.
What can stop this rally? Is it the data? The data drops later. In about 14 minutes' time, at 8:30, we get CPI in America. Look at these numbers. The estimate for headline CPI, closer to 4 at 3.7%. For core, 2.7%, just getting further and further away from 2. Now, of course, this is not the preferred gauge of the Federal Reserve, but the PCE read ain't a whole lot better.
When I see this, actually, it's probably worse in terms of how quickly it's moving in the wrong direction. When you take a look at break-even rates, you see it's creeping higher to about 2.3%. Again, we're not talking another 8-9% inflation growth. Nonetheless, people are looking at this and saying, how can the Fed do anything other than be hawkish? given that inflation is moving in the wrong direction, and it's with myriad influences. It's not just energy costs.
Crude contributing to it, though. Look at energy this morning, up by more than 3%, 107, call it 108 on Brent at the moment. WTI triple digits at 101. You've heard all the headlines coming from the Middle East and from the president, including the Oval Office remarks just yesterday. The proposal from Iran, totally unacceptable. The ceasefire on life support. The blockade continues. That's the constant here. The blockade continues. The energy market is in a deficit. Crude prices remain elevated. And when you have moves like this, numbers like that, you'll see things like this in fixed income. 2s, 10s, 30s. Yields up by 3 basis points at the front end, now at 398. Get the wrong kind of data in just a moment. We're looking at 4% on 2s.
And if the economy is strong, why would it go down because of demand destruction? You add to it influence that the government has to try to get people to keep spending at the same levels, whether it's a gas tax removal holiday or whether it's other forms of subsidization, then all of a sudden you start to see how inflation can be sustained.
10s north of 440, 5% on 30s. That means equities near to session lows. Bit shaky on the tech trade this morning. We'll spend some time on that in a moment. We're down by 0.4% on the S&P. On the NASDAQ, we're lower by 0.9. That's the price action. Let's get you some morning calls. First up, Citi upgrading lows to a buy, citing optimism in the home improvement industry. That's rare. We're up by 2% in the pre-market. Your second call from Deutsche Bank, raising its price target on Intel, citing reports of customer traction in its foundry business. That stock has been flying. It's down this morning. Negative across the board really for some of the big chip players. Intel down by close to 5%. And finally, Wells Fargo raising its price target on Nvidia, noting a favorable growth outlook. That's another one, slightly softer this morning by 0.7. Nasdaq futures are pulling back after a record run for chip stocks. Angelo Zeno of CFRA writing sentiment could easily swing negative. Near-term risks are supply chain bottlenecks that could get so severe that it hurts the rest of the AI ecosystem. Angelo joins us now for more. Angelo, welcome to the program. We've seen chip players absolutely fly, but the companies doing the spending, ex-Alphabet, Meta, Oracle, Microsoft, negative for the year. Down on the year, with chip stocks up by some 70% just in the last few months. Angelo, at what point do we test the patience of some of the investors of the companies doing all that spending?
Yeah, I mean, John, I think, we're kind of testing the patience right now to some extent. I mean, clearly we've seen this rotation in terms of where investors are flocking to, and they're flocking to where the wealth transfer has gone to, right? It's gone from really the hyperscalers, which had, just unbelievable free cash flow, and then they've kind of shifted that towards doing buybacks in recent years and hiking, dividends in certain cases, and they're now focusing more on, investing on the CapEx side of things. Clearly, the expectation, the hope is that as we kind of, look ahead over the next, 12, 18 months and even, further down the road, it'll be more than made up for through the higher earnings potential, as well as, eventually kind of trickle to on the free cash flow side. But right now, sitting here today, clearly all the excitement is where the chip makers are, and rightfully so. And we've kind of seen all these bottlenecks really emerge here over the last couple of months. And again, rightfully so, because that's where the earnings power is going to be over the next 6 to 8 quarters. But as far as these cloud companies are concerned, I mean, the business models are still great. The backlogs are growing much faster than I think most had anticipated, especially Alphabet. I mean, that's why that has been the big winner. I mean, they've seen their backlog essentially over the last 9 months quadruple. So they've really been the key winner here, and it really is a testament to how important that stack is and controlling that stack.
Angelo, can you say the same thing about Microsoft, the same thing about Meta?
You can't. You definitely can't say the same thing about Meta. And I'd say as far as Microsoft is concerned, I mean, you haven't seen the type of backlog growth on Microsoft's side relative to Alphabet, or even, Amazon, a little bit less so relative to Amazon. Backlog growth over the last 9 months has been close to about 70% or so for Microsoft, but it's been highly concentrated at this point in time on OpenAI. You kind of look at where investors right now are really gravitating to. The excitement is on Anthropic's side. I mean, you've seen the ARR growth. Everybody knows this at this point in time, but you've gone to a run rate of about north of 30 billion going into Q2 versus about 9 billion exiting last year. So there's proven AI monetization from that company, and as a result, if you're more concentrated towards Anthropic's side, like an Amazon is like an Alphabet is. I mean, the belief is they signed a $200 billion order with them. You're going to be you're going to get that upswing, or just a better reward from that side of things. So Microsoft, is definitely in the penalty box at this point in time.
Angela, we were talking to Jonathan Golub of Seaport Research yesterday, who noted that right now the hyperscalers are not booking the cost of some of their purchases of semiconductors on their statements, while semiconductors are booking the profits from those same purchases at the same time. Do you think that's a potential liability, say, in a year, when some of the hyperscalers start having to put the cost on their books at the time that maybe some of the growth rates are slowing down?
It depends, right? I mean, it all depends on whether or not the demand trickles through. I think you kind of look at where we are today. Again, I mean, the last 6 months, we've really seen some notable bookings growth. You look at just the big three, you look at Alphabet, you look at Amazon, and you look at Microsoft, and you've essentially seen a doubling in the combined backlog growth of those three companies over the last 6 months. The expectation clearly is, one, they're going to continue to see growth. Right, because we're not going to stop this AI hype train going on, at least on the enterprise side. At least that's the hope. And that backlog is going to translate to revenue. The revenue number is much bigger than the cost number, right? So ultimately, if you're a believer of this kind of upswing that we're seeing in the kind of the AI momentum on the revenue side, even if we see growth rates start to slow, it's such a much bigger number than the cost side. That we should continue to see some decent earnings growth, profitability on that side of things. Now, do we see the free cash flow contribution? Probably not over the next kind of 18 to 24 months, because I really do believe that any type of upside that you see on the cash flow from operations will get directly reinvested into the CapEx spend, again, which is what's helping the the semi-trade at this moment.
How closely, Angelo, are you watching some of these bond auctions from the hyperscalers as they all turn and hope that debt investors will continue to have the appetite to finance their build-outs?
I mean, we're watching it. We're watching it closely. I mean, clearly, you want to see that appetite. You want to see the favorable rates. And again, we'll kind of see how this plays out here in the coming quarters and years. Not too concerned as far as the hyperscalers are concerned. I mean, they're going to get favorable terms, I think, almost regardless of the macro environment we're in. I think some of those maybe tier 2 players, some of those neoclouds that we're talking about, I think neoclouds are a really important play at this point in time, because you look at the CoreWeaves of the world, right? You look at the bookings growth that they've seen. They're almost kind of turning into some of these large hyperscalers. We just saw them nearly touch 100 billion in backlog this past quarter, but they are more reliant in terms of the debt markets at this point in time. So I think it'll be a little bit more interesting to kind of see what those tier 2 players, how the neoclouds look like here over the next couple of quarters, to see if we potentially see any cracks in the market. But at this point in time, things look pretty good.
Angelo, it's good to see you, as always. Angelo Zena there of CFRA. The chart of semi is just vertical since the end of March. But I think we have to remember that we ignored a lot of good news for quite a while for this sector. How many times did we sit on the program saying, why aren't the chips rallying? Why aren't the chip stocks rallying? Look at all this spending coming out of some of these big tech companies. It just took a while. Then we've exploded since the end of March.
Because the $800 billion of spending expected this year is probably going to go directly to those semiconductors. So why wouldn't that be a complete positive? Which is why these stocks have rocketed higher, even though some people have tried to poke holes. Everyone else says, we don't care. Take a look at the profits.
The Nasdaq futures down about 1%. There is a pullback today, driven by chip stocks. We'll see if that pullback gets bought later on in the session, when we get the cash open in about an hour from now. Before we get there, CPI in America, reaction with Michael Gapen of Morgan Stanley.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Inflation in America, that data crossing in just a moment. Seconds away, the scores into it look like this. Equity futures pulling back by 0.4% on the S&P, on the Nasdaq down by close to 1%, setting the tone for this inflation print. This move in crude, WTI and Brent pushing higher today. Brent just short of 108, WTI at 101, and in the bond market, yields close to the highs of the year, 5% on 30s, north of 440 on 10s. With the inflation data, let's cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. No surprises here. The headline CPI month-over-month increase, 0.6%, as forecast after a 0.9 move last month. The core CPI year on a month-over-month basis is up 0.4. That is stronger than was expected. So for the year, we have CPI up 3.8%. and the core up 2.8%. That's the highest CPI for year over year since 2022, I believe, and it is also more than anticipated. It's a jump of 0.5 percentage point. So let me check on what the latest breakdown of all the numbers is, and I'll get back to you.
Mike McKee, thank you. Just had a 3.99 print on the 2-year, just short of 4%. We come back down to about 3.98. It's an upside surprise on core. You'd expect yields to be marginally higher. They are up by 3 basis points on 2s, up by 2 on 10s, now through 5% a little bit earlier in the session. Comfortably just about through that number right now. Coming off the back of this in the equity market, equities just a little bit lower. We're down by 0.4%. We hold on to those session lows. Likewise on the Nasdaq 100, but it's that upside surprise on core that gets your attention, Lisa, supporting where the bond market was coming into this print.
Yeah, you're seeing it rise at the fastest pace going back to 2022, albeit we've seen paces like this as recently as 2025 in September last year. A question here about whether you can write this all off as simply the inputs from energy. Well, core CPI suggesting maybe that's not the case, and it's the pace of increase that's moving in the wrong direction. Again, PPI tomorrow will be very interesting, and then retail sales will give you a sense of how much consumers are willing to absorb some of these price increases.
It's getting harder and harder to be a dove on the FOMC with numbers like that. You'd expect them to build in the next month or so, depending on the duration of this war and the energy shock. But inflation is much, much higher than it should have been without this war.
It's moving in the wrong direction. You cannot point to inflation expectations as remaining where they were. They're not necessarily flying away, but they're definitely increasing. And why shouldn't they? Because right now we're talking about the strongest earnings growth at companies that are able to pass along any kind of hit to their growth based on higher prices to their consumers. We'll see that again with PPI about what those increases in prices for the producers really are. And frankly, we're seeing it move in the wrong direction at an accelerating pace.
Notable that the positive surprise, not so positive, the wrong kind of upside surprise was actually on core today, and we'll get you a breakdown of that in just a moment. Off the back of this, yields are higher by 2 basis points on 10s, 443.47 as things stand. For those of you interested, the intraday high of the year was back in late March. That was 448, so we're just short of that right now on 10s. On 30s at 5%, on 2s approaching 4. Mike McKee, are you still with us? Because you promised us a second look at this. Where's that upside surprise come from on core?
Well, right now, it looks like it's coming from a couple of different things. Apparel prices up 0.6%, and the owner's equivalent rent up 0.5%. Now, Michael Gapin could explain more of this to you, but basically that's a statistical quirk because we didn't get an October read on inflation because of the government shutdown. So we've got basically a catch-up right now. Motor vehicle insurance contained, that's been one that's been rising a lot, 0.1% this time. But airline fares up 2.8%, a little more than anticipated. So we've got a little broader inflation than was thought in terms of the headline rate that includes food and gasoline. Food prices up 0.5%. Food at home up 0.7%, and gasoline prices up 5.4%. Nobody's going to be surprised at that number.
Michael McKee, thank you, sir. If you're just joining us, welcome to the program. I'll give you the breakdown month over month and then year over year. CPI coming in month over month at 0.6, the estimate 0.6. For core, on a month-over-month reading, that comes in at 0.4. The median estimate in our survey was 0.3. That takes the year-over-year, headline and core, headline year-over-year to 3.8%. That's above the 3.7 expected. Core CPI year-over-year coming in at 2.8%, above the 2.7 expected. Those numbers are hard reading for an incoming Fed chair who might otherwise have been looking for cut interest rates.
You could make an argument that 3% is okay, but not 4%. That is a problem child when it comes to inflation. When you look at the pace of increase in year-over-year core CPI, we're looking at the biggest increase since August of 2022. Again, we have to talk about not only the fact that inflation is increasing, but the pace of the increase and where it's coming from. It is not necessarily those gasoline prices.
That was not a good time. Michael Gapin of Morgan Stanley joins us around the table for more. Michael, good morning.
Good morning.
What catches your eye looking at this report?
Well, there's some hints of second-round effects of higher energy prices on core. So those airline numbers, the food at home numbers, there's also kind of spillage into headline through food because a lot of food prices are related to transportation costs. Right, so the concern here, the assumption here, I think from the Fed's point of view and ours, is that oil prices tend to give you headline effects but not core effects. And there's at least at the moment, given the magnitude of the rise in energy prices, some hints of those second round effects in core. We need to see if those persist. So to me, that's what catches my eyes. The 4/10 on core was not a surprise to us. That's where we were. And as Michael mentioned, there is some catch-up effect here on rents and owner's equivalent rent from the government shutdown last fall. So this number is artificially higher because of that. But you still have kind of what I'll call a trifecta here. You have energy prices pushing the headline. We think we have the last vestiges of tariff pass-through on core inflation, core goods. You saw the apparel number today. And then we had that catch-up effect on shelter inside of services. So three forces pushing inflation in this particular CPI reading higher this month.
If you were looking at the calendar right now, and I say to you the following, can you just circle where you see the peak for inflation this year? Where in the calendar would that fall?
On a year-on-year rate, May or June.
May or June.
We think we're at peak pressures now.
If that's the case, then do you think that the Fed should look through this?
With time, yes, but there are a number of forces here. This is our fourth major supply shock in recent years, and we've got evidence here of what I'll call a mix. How do you decide if tariff price pass-through is ending when you have some of these other second-round effects from energy prices? So we think ultimately, yes, they will be able to look through it, but I'll say look through it with a long lag. Like we think the Fed's on the sideline for the rest of this year.
What does it say that companies are pretty easily able to pass along the price increases that they're experiencing to consumers? We've seen that in profit margins, we've seen that in earnings, and frankly, we're seeing that in how quickly some of these price increases are transmitted through things like airline tickets.
Yes, it's not a surprise that energy prices get passed through quickly. That has been the historical record in the U.S. So seeing airline fares up as much as they were, we actually thought they'd be higher this month. I'd say that is pretty standard from a historical perspective. The tariff pass-through has taken longer. It's taken almost a year. That said, when we look at some of the granular data, non-labor costs reflect those higher tariffs, but firms were able to pass along a greater increase in prices and build in more margin. I think that speaks to pricing power, still strong underlying demand, but kind of an oligopolistic corporate framework, right? We've got some very large kind of quasi-monopoly type firms and industries typically they have better pricing power.
If you are just joining us, welcome to the program. Slight upside surprise on inflation data that dropped about 8 minutes ago. Equity futures recovering just a touch. We're off the lows. We're still down by 1/3 of 1%. Bond yields off the highs. Mike McKee standing by with a little bit more detail. Mike, when you have a second and third look at the details, does it bring just a little bit more comfort or not?
It doesn't really bring a lot of comfort. We do see some decline in things that had been tariffed, some of the things that had gone up in price because of tariffs, and we don't know whether it's because the tariffs were thrown out or whether we've just been past the peak here. But appliances are down by 0.4%. Household furnishings down by 0.5%. However, tomatoes, which is one of the things that was tariffed by the president coming from Mexico for the winter, up 15%. Coffee prices were up 2%. So we are seeing some impact still from tariffs in the overall numbers. But right now, the important thing probably, and I'll throw this over to Michael as well, is we had a 0.5% rise in services. And that's the area where people have been looking for a little bit of a break, given all the pressure on goods prices. And so services coming in a little stronger than anticipated.
Michael Gapin of Morgan Stanley still with us. Mike, is there some stickiness to all of this?
There is, but I take some positive sign from what Mike just said. I think in order of operations here, the tariff pass-through to goods prices should come first. So having some hints of that, I think, is positive. So if you want to look forward with some, like a positive checklist, you need to see that happen. Core goods prices need to settle down in the next couple of months. Then the headline pass-through from gasoline prices and energy should start to fade after that. The longer story here will be, as Mike noted, what happens with services. That's where the stickiness has been. Maybe that starts behaving, and then 2027 looks better. There's a lot of ifs, mights, or buts in that statement, but they all have to hold up in order to get a more favorable inflation outlook.
Given that we're seeing these kinds of numbers, is there any universe where it makes sense for the Federal Reserve to still have an easing bias?
Probably not. I think they told you in April they very easily could have changed that language. It wasn't discrepancy about doing it, it was more about timing. So I do think all of the inflation data and the solid activity data point to an adjustment in the language in June.
I got some pushback to that a little bit earlier. I'm sure Drew Mattis won't mind me sharing that he was the one who was pushing back against that. There's just one line, in fact, just a couple of words doing a lot of heavy lifting in that statement.
There is,
right?
But that's...
Do we move beyond that world with Kevin Walsh?
Ultimately, I think he would like to, yes. I mean, he's obviously said the Fed's footprint is too large, and that footprint includes communication and a Fed that he thinks is hyper-talkative. So yes, if you're thinking, oh, there's interest rate policy and there's balance sheet policy, but then there's also the forward guidance, that's a tool. So yes, this is a tool that you can use. So there's only a couple of words in the statement, but it has large implications.
Some serious power.
Well, does it though? And this is actually my pushback to that. The market's right now pricing in a rate hike. So it might be doing some heavy lifting, but not really, because the market's saying, we don't believe you. We don't think that you'll be able to hold on based on inflation numbers like this. So at what point does the Fed have to confirm what the market is saying in order to keep prices actually somewhat subdued versus whether they otherwise would be?
I'd suggest the dissent to the language in the statement was such widespread, and it was following the meeting as well, that it did a lot of the work for Chairman Powell without him even really needed to change a word in that statement.
It opened the door to the potential for a change in the bias. I mean, we're talking around the margins here, not necessarily the actual rate hike, but this market's actually putting in, pricing in some chance of a rate hike. And does it have to in order to keep inflation at least not flying away at 2022 levels?
Mike, you talked about all the ifs and buts that need to take place over the next 12 months to get your cut in 27. I find it so hard to talk about 2027.
I know, it's way out there.
It's crazy, but let's just play that game just for a couple of minutes. What would it take to get a hike from this Fed?
So you need this number here on core. As you were mentioning, headline is approaching 4, but there's an energy story there. Core is at least a more reasonably acceptable 2.8. That needs to firm. The expectation would be that that is moving above 3 and maybe even towards 3.5 on a spot and forecast basis. If you get that, for whatever reason, a long, persistent oil price premium, inflation expectations moving higher, animal spirits on the demand side, then the narrative changes. If there's this wide gap between headline and core is kind of hanging around 3 or less and maybe nudging lower, it's a totally different story.
Mike, good to see you. Michael Capon there of Morgan Stanley. Small upside surprise on CPI. Initially, yields spiked high. They've come back. Initially, equities held onto those lows. Equities have bounced back, down just 1/3 of 1% on the S&P. With an update on stories worldwide with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. Recapping the data we brought you just moments ago. April CPI data coming in slightly higher than expectations. Headline prices jumping 3.8% year over year. Core also higher. Prices continue to rise as the war in Iran weighs on fuel and food costs. Speaking of, President Trump saying he wants to suspend the federal gas tax of 18 cents per gallon until prices start to fall. According to independent budget analysts, that would cost the federal government about $3.5 billion a month in lost tax revenue. And speaking of, U.S. Defense Secretary Pete Hegseth and Joint Chiefs of Staff Dan Kane are testifying before the House spending panel. They are looking to justify the Pentagon's record $1.5 trillion budget request while facing questions from lawmakers. Hegseth and Kane will also speak to a Senate panel later this morning. That's your Bloomberg Brief. John.
Yahara, thank you for the update. Up next on the program, we'll catch up with the Flexport CEO, Ryan Pedersen, with shippers facing the biggest disruption in years. Plus, Danny has your morning movers. Activist investor Nelson Powers reportedly exploring a bid to take Wendy's private. That stock is up at a pre-market by close to 16%. From New York City, this is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
assumption here, I think, from the Fed's point of view and ours, is that oil prices tend to give you headline effects, but not core effects. And there's, at least at the moment, given the magnitude of the rise in energy prices, some hints of those second round effects in core. We need to see if those persist.
We'll see, and we'll see when inflation peaks. Michael Gapin there of Morgan Stanley looking for that peak in May to June, the next couple of months. The next part of this conversation with this man right here, the JP Morgan boss, the Chase chairman and CEO, Jamie Dimon, taking place at 9:45 Eastern time, so about an hour from now. His response to what we're seeing in this economy, some of the issues, beyond just that, the opportunities in AI and this massive build-out and the rally we've seen on Wall Street, all-time highs. Coming into Tuesday, once again, we've set a series of records this morning. Futures pulling back just a little bit as we get these numbers on the inflation front. CPI coming in just a bit hotter than expected this morning on core, of all places.
Yeah, this is the reason why people are concerned. You're seeing an acceleration in inflation, core CPI year over year increasing at the fastest pace going back some 4 years. That's giving pause to people who are looking at potentially some sort of response from a Federal Reserve that might have to shift away from an easing bias. I mean, try to figure that one out.
There are some statistical quirks. We can focus on the details throughout this morning on Bloomberg TV, but those headline numbers are not good reading for an incoming Fed Chair, Kevin Walsh, who might otherwise have been looking to reduce interest rates. Equity futures looking to bounce off the lows. We're down by close to 1/3 of 1% on the S&P. We're down by 3/4 on the NASDAQ. With an update on the single names this morning, 41 minutes away from the cash open. Danny Berger has more for you. Hey, Danny.
Hey, John, a big surge coming from Wendy's this morning, up nearly 16%, up 15.5. The FT reporting that Nelson Peltz is trying, looking at a potential takeover, looking for outside investors. Those include Middle Eastern investors, apparently. They already own about 16%. The fund already has someone on the board of Wendy's, so an acceleration of that. Elsewhere this morning, in terms of the movers on reporting earnings, a huge volatile pre-market session for them. At one point, they were up something like 8%. That's because they had a clean beat. They also forecast expanding margins to come. But investors and analysts, as they're picking through the earnings, noted that specifically North America was weak for them, and that's concerning. Shares falling about 4 1/3%. Finally ending things with another earnings, Hims and Hers, a big restructuring cost coming from them, shifting from generic GLP-1s into branded name ones. It's been a big deal for them, but there are a lot of costs that come with that, so shares down nearly 15%, John.
Hey, Danny, thank you. Looking forward to the program. Danny Berger alongside Matt Miller in about 10 minutes' time. Global supply chains facing prolonged disruption following President Trump rejecting Iran's latest offer. The Flexport CEO, Ryan Peterson, writing, the Strait of Hormuz remains at a critical risk level. The industry is still largely in wait-and-see mode. Ryan joins us now for more. Ryan, welcome to the program. Out of 10, and 10 would be globalization nirvana, and 1 would be pandemic mess. Just how bad are things right now?
Yeah, hey, great to see you guys. Well, it depends what industry you're talking about. I mean, for the oil industry, this is about as worse than it's gotten ever, I think. I mean, we're talking about 20% of the world's oil has been cut off since March 1st. So I think on that scale, you're closer to 10, 8, maybe it's a 9 or an 8. For container shipping and air freight, pretty big price increases. And you see price increases even on the Trans-Pacific, which, you know, ostensibly is not impacted, but it's a global market, global capacity, et cetera. So prices are up there as well.
And there are questions around who wants to insure this industry going forward if there are these potential hotspots around the world. Do you see a time when prices will go back to where they were before some of the hotspots really emerged?
I mean, it all depends on what happens on the battlefield here. What happens is anybody's guess. And right now we're in a ceasefire, but it is, I think, by no means over. You saw Trump reject Iran's demands yesterday. Netanyahu said this is not over. So I would expect until it's resolved, then no, I don't think you're going to see normalcy. I mean, taking 20% of the world's oil supply off the market is just a much bigger deal than I feel. You know, seeing an all-time high in the equities markets is, for me, this is why I don't invest in equities. It's like hard for me to understand.
So, Brian, some people have come on and said it's not that it doesn't matter, it just doesn't matter yet because we had this massive cushion and we're drawing down inventories so much. When do you think it might start to bite?
Yeah, I mean, again, like it just really depends on how this plays out in the military landscape, which is way outside, you know, way over my pay grade to comment on. But as long as the strait's closed, I just don't see how you can, you know, price normalcy. And I was driving by, I live in California, I saw $9 gasoline.
Crazy.
the gas station yesterday. So
that is bonkers. Ryan, thank you, sir. Ryan Peterson there, the Flexport CEO. I should have flipped the scale, shouldn't I?
Yeah.
But I think we got the picture.
Like 10 is bad.
Things are bad.
Yeah, 10 usually is good, right? But in this case, anyway, we're not really.
It's not globalization nirvana.
Yeah, all I can say is $9 a barrel. But just think if there was 18 cents less, that would make all the difference.
That is not going to move the dial in California.
What are you talking about, $9 gas?
Although California arguably might have bigger problems when it comes to things like energy.
Well, potentially, yes. And given how exposed also they are to the Asian markets and then some of the extra taxes that are placed on a local level. What he was saying, though, is really important, which is costs are going significantly higher, not just in transit through the Gulf, but just globally because of higher energy costs. You have to wonder also why a ship operator wouldn't kick up the cost. Who wants to be someone operating the ship right now, given some of the stories that you're hearing from the stranded Marines over in the
Those guys are pretty brave, but no, don't count me in. And I'm not brave, so I'm not sure if that helps you.
I was counting on you to go, move our, fertilizer through the Strait of Hormuz.
Could you do one of those shipping trips?
No, absolutely not. Through the Strait of Hormuz?
Multiple weeks? No, never mind the Strait of Hormuz.
Just in general?
I just mean, around the Cape of Good Hope. And
I get seasick. It would be really bad.
That would be your excuse? No special program. And you know who would? Anne-Marie, without a doubt.
You think so?
Oh, yeah.
She'd
Offer AMH the trip of getting... Honestly, Anne-Marie would be on that ship through the Strait of Hormuz.
I would have
questions asked.
I would have been on the cruise going to explore different areas in Patagonia. I totally would have been on that. And then getting hantavirus, I'd be that person.
I just wouldn't go on a cruise.
Yeah, well, I understand that, but you'd go certain places. Anyway,
my position on that is well known. Okay? Tomorrow, Anne-Marie's going to be on the program, back with us. She'll be in Asia, in China specifically, to bring you the details of that meeting between President Trump and President Xi. Equity Futures looking to recover this morning. We'll get you the breakdown of everything taking place today in chips and inflation, and a preview of tomorrow when we catch up with Seema Shah, Principal Asset Management, Eric Johnson of Cantor Fitzgerald, Edward Fishman of the Council on Foreign Relations, and Victoria Fernandez of Crossmark. Live from New York City this morning. Good morning. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Inflation coming in hot and futures lower. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Inflation continued to accelerate in April with gas, rent, and food prices all climbing.
The tech rally loses steam. South Korea stocks swing on a proposal to distribute AI profits to citizens.
Plus, JP Morgan's markets business is booming. No surprise, the CEO, Jamie Dimon, joins us for a Bloomberg exclusive.
Booming. They're all getting paid big bonuses. Private credit's not a problem. Pretty sweet over there at JP Morgan.
Yeah, it'll be interesting to hear his take on private credit.
Yes. He's backed off on the most bearish of assumptions about it. I wonder if he sticks with that tune. This morning, though, I am watching some of the AI stocks. We mentioned what happened in South Korea. It's pretty incredible to watch a post by one advisor that they basically walked it back, and they said that doesn't represent our views. Bring down the entire Kospi. You can see that filtering through to Intel, Micron, AMD, all the chip stocks that have had a hot run. Intel, for example, down 4%. It just maybe shows how frothy this trade and how fragile it is that you can just, again, have this one post that they walked back, continuing to force stocks.
But I mean, the Kospi has tripled in 12 months, right? It's grown larger than the UK stock market.
But by the way, there's so many retail traders that hold that. Like, isn't that kind of an AI dividend? Do you really need something separate? Retail traders are getting wealthy off of AI.
For people who own stocks.
Yes.
eBay has rejected GameStop's $56 billion takeover offer, calling it neither credible nor attractive. eBay's board turned down the offer due to uncertainty around the financing plan, operational risks, and GameStop's governance. Plus, they watched that CNBC interview with Ryan Cohen and were like, not gonna do it. No way.
So good. So good.
Did you see that?
Yes, of course. I don't think there's anyone who is a viewer of Financial TV that didn't see it. Read the website, Matt.
Yeah, I'll go to the website.
Go to the website. Let's start with the economic story. Inflation accelerating in April. Let's break down the data with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, what were the details?
Well, I think Matt put it well. Inflation coming in hot as expected, with the headline CPI month over month coming in up 0.6 as economists predicted. That pushed the headline year over year to 3.8%, which is the most since 2023. The core rate up 0.4 during the month, which pushes the core year over year to 2.8%. That is only the highest since last September, but definitely going up. If you want to look at what actually pushed it higher, I bet you won't be surprised to know that gasoline prices were up 5.4%. Electricity, though, also up 2.1%, a big rise there, so it may not help you to buy that electronic vehicle. Owner's equivalent rent was up 0.5%. That's a bit of a statistical quirk because of the government shutdown last October. There were no data, so it takes 6 months to turn the housing market data around, and that is what resulted. Goods and services, goods prices were flat. Services prices were up 0.5%. That's kind of the opposite of what the government economists want to see, because they're expecting, because of tariffs and the overall war, to see goods prices go up, but services prices aren't as affected by those. And so the fact that they're up that much matters. Airfares up 2.8% on the month, and hotel charges up 2.8%. So travel more expensive because of the war. And then I wanted to put this last one on there. Tomatoes were up 15.1%. That was one of the things that was tariffed, one of the biggest food price increases we have seen. So those of you who are looking for your salads today, you're going to be paying more. And I should mention that it is not good news for consumers, because not only are prices up, but with the CPI out, they have now recalculated what your average hourly earnings are, absent inflation. Negative on the month, down by 0.3%. So you lost money at both ends this month.
By the way,
April.
You're so European, Mike. You're doing month-over-month moves, right? And I'm used to the old school year over year. Airfares are up 21% over the last year. So the moves are even bigger than just the piddly month-over-month moves would suggest.
Well, I don't think the airfares up 2.8% was piddly, but that tells you the impact of the war because it's the 1 month move over the last half of the war so far.
All right, Mike McKee, our economics and policy editor, breaking down the inflation picture. The AI trade, though, taking a breather this morning, and some stocks are moving with extreme sensitivity. A Facebook post by a South Korean policymaker sent stocks diving after saying the nation should pay citizens a dividend using taxes on AI profits. The Korean government later said that this position was the advisor's personal opinion. Bloomberg macro strategist Cameron Kreis joins us now. And Cameron, the interesting thing, not only the suggestion that we should sort of take windfall taxes and hand them back to citizens, but also the fact that this market has flown so high so fast, right? It's tripled in the last 12 months. It's bigger than the UK market. It lost $300 billion in the time it would take to watch a soccer game. It's incredible.
Yeah, well, I mean, the moves in the stocks have been incredible, but then again, the moves in corporate earnings have also been astonishing. So I would say it's not quite like the dot-com bubble where prices moved, I mean, obviously sort of at light speed ahead of realistic earnings expectations. The fact is that these chip companies in Korea and obviously in the United States are incredibly profitable, and even sort of the lower value add memory space is vitally important to AI. It's not just the brain, it's also the memory. And all of these companies have seen their expected earnings moving forward. I mean, I've never seen anything like it. Sort of go up by sort of an order of magnitude. So, so from that perspective, price has been chasing fundamental expectation, and it's a really interesting public policy question as to how or if that should, be. How the benefits of that should accrue to society at large, rather than the relatively narrow cohort of people who happen to be in a position to own stock in these companies.
It's true, and Cameron, there's been more political pushback just beyond that. I mean, we've seen data center projects in Northern Virginia, for example, get brakes put on them because of citizens there basically saying, don't build these things here. I mean, presumably that's not anywhere priced in policy risk, but should it be?
Well, and whether it should be or not is perhaps a philosophical question. I think more generally, I mean, NIMBYism is hardly new, and there have been some local ordinances or laws passed in certain jurisdictions mandating that data centers don't get sort of advantageous pricing on utilities, on things like water or things like electricity, because obviously if you artificially depress the price of those, then the consumption is going to go up, and that will be felt, the price that will radiate across the entirety of society. It's a really tough question. I mean, what I will say in terms of specifics of this South Korean thing is that it was only last year we were hearing things like Doge dividends, tariff dividends, and those kind of went nowhere. And at the end of the day, kind of money talks. And right now, it's the AI industry that has the money. And whether it should work this way is a different question, but those with money have the ability to buy influence and have economic policy tailored to what they like.
Yeah.
And I suspect this will work out quite similarly.
It's a good point, Cameron. Thank you so much for joining us, Bloomberg macro strategist Cameron Kreis. Now, elsewhere in the world of tech, eBay has rejected GameStop's $56 billion offer, calling the bid, quote, neither credible nor attractive. Bloomberg Tech co-host Caroline Hyde joins us now. This probably can't be the most surprising thing that they've rejected this bid, Caroline.
Oh, this is hostile. Whether they're selling things on eBay to raise funds for it and then getting banned off eBay, that's what's been happening to Mr. Ryan Cohen of late as he tries to sell bits of carpet from eBay or his own socks to raise funds. It's all a joke in that side. What's very serious as to why it's lacking credibility right now. That they're pushing back on mainly the source of funding. Remember, TD had said, look, we've got $20 billion in a letter. Were you going to write a little letter saying that we could offer you $20 billion? But apparently, according to people familiar within that letter, you have to maintain investment grade. Now, that is highly unlikely, according to Bloomberg reporting and analysis, that you would ever be able to do such a buyout of a company that is a quarter of the value of eBay, brings in a quarter of the revenues than eBay, to afford that amount of $56 billion offer. No wonder they're worried about the leverage, about the governance of this company. That's really what's being articulated in this letter. So they're pushing back. And we know this has already gone hostile in many ways.
Well, and I mean, let's not forget Ryan Cohen talking to Andrew Ross Sorkin saying, like, we'll just pay $26 billion using our shares. But the company's only worth $10 billion. How does that actually work?
And many sort of out there, there's much being made of course, the people behind the Big Short fame. So whether it's Steve Eisman or whether it's, of course, Mr. Berry himself, talking that they've been offloading their GameStop shares and saying, look, don't get mixed up between creativity and debt. And at the end of the day, this is an awful lot of debt that's going to be taken on. It's a good news story for us all to get our teeth into, but how realistic is this? And thus far, the market hasn't been taking it seriously. As you say, market capitalization now down to 10 billion. We've seen eBay not near the 56 billion, so clearly the market doesn't think that it's going to be bought for that sort of amount. And meanwhile, it's a distraction for the executives who've been trying to turn this company around, trying to show that they've got strategy, they've got to refocus, particularly on the collectibles. They've actually been building the market cap and the revenues of this company, and now this just means that they have to sit and go to board meetings to try and fight off Ryan Cohen.
It made for some exciting social media.
I don't think it's over yet.
I imagine you'll be focused more on chip makers and the AI trade when you host Bloomberg Tech. Caroline Hyde hosts that show starting at 11 a.m. weekdays. Don't miss it. Check on what's going on in markets right now. We're looking at some red arrows, but this after all-time record highs again yesterday at the close. You can see the S&P futures down about 0.25%. NASDAQ futures off 0.7% with the retreat in tech stocks. The 10-year yield at 4.43. So yields around the world higher, especially in the UK. But we do see yields here higher after that hot inflation number. And Brent crude higher again at 107.59, Danny.
Some of the individual stories that we're looking at this morning. Under Armour forecast for sales and profit this year trailed Wall Street projections. They also cited a financial hit from the conflict in the Middle East, about $35 million.
Sneaker maker On is raising its profit outlook for the year as it sees higher demand for its new designs targeting younger customers.
And then there's Wendy's that's surging this morning. A report from the FT says that Nelson Peltz's Trian is looking into a bid for the fast food chain to take it private. They're reportedly looking at investors that include those in the Middle East. Shares up 15%.
It's delicious. I actually tried to go to Wendy's yesterday. I went to the drive-thru and it was so packed.
Yeah.
That I had to bail and go to a Five Guys.
Can I just think of something that's kind of a segue here?
Yeah.
The reason that chicken nuggets exist is because Ray Dalio in the 1980s helped create them a synthetic chicken future that they could hedge on.
What?
Yeah, and
is that true?
It is true. And we just got news that the CME is going to launch futures for some of these AI data compute. So it's like with every new industry, you have to create some sort of future so these companies can hedge it. And I don't know, that's how chicken McNuggets were born.
Thank you to Ray Dalio. But of course, that's not a Wendy's.
No, but like
food,
I don't.
Right?
But no,
it's
but
the Baconator.
No, but I'm saying
yes,
they all do this now.
Yeah.
You know, and it was pioneered with Ray Dalio and McDonald's.
All right, interesting tidbit there. Coming up, Hims pivots to branded weight loss drugs, and that has weighed heavily on the company's profit outlook. We'll talk about Hims and Hers next. This is Bloomberg Open Interest.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Getting out of high interest, look what's making headlines around the world. Shipping traffic in the Strait of Hormuz remains at a standstill, with oil rising after President Trump rejected Iran's latest offer. Trump called Iran's response to his peace proposal a piece of garbage and said the ceasefire is on massive life support. The comments come as Trump prepares to meet Chinese President Xi Jinping in Beijing on Thursday their time, Wednesday our time. UK Prime Minister Keir Starmer told his cabinet he won't resign despite calls to do so from within his own Labour Party. He appeared to buy himself a reprieve from efforts to oust him following a high-stakes cabinet meeting this morning that resulted in a public show of support from a handful of key allies. Still, more than 70 members of parliament from his own party called for him to step down. Hims & Hers reported a first quarter loss due to higher costs from its pivot to branded obesity drugs, and that loss was twice as big as the loss it reported in the same quarter last year. The company is moving away from the copycat versions of weight loss medications that helped fuel its growth and instead prioritizing partnerships with brand name products, including those from Novo Nordisk and Eli Lilly.
Let's get more on Hims with Bloomberg's Jerry Smith. Jerry, it seemed like initially a coup for Hims & Hers when all this happened. I mean, first they were selling, non-branded ones, and then they get sued by Novo. Novo drops the lawsuit because it turns out they need the Hims & Hers. It seemed like a big win for them, but is it bad for business that they're selling the branded products?
Yeah, I mean, what we're seeing right now with Hims is sort of the first results since it, as part of this strategic pivot. And, this was a company that really, a lot of its growth was fueled on selling these copycat versions of weight loss drugs. And, now they had to take a write down this quarter because they had a lot of excess inventory from these copycat drugs that they're no longer selling. And they're trying to make this pivot now where they're going to sell the branded versions of the weight loss drugs that are sold by Novo and Lilly. And, there is a scenario where this is, short-term pain for Hims for a longer-term gain. We've seen recently the approval of weight loss pills, which a lot of analysts think is the next frontier for weight loss drugs and is going to be a huge market. So Hims being a part of that as a telehealth company selling these, they could be a large area of growth going forward for them. But in the short term, we saw this quarter that, they have a lot of excess inventory from these copycat versions of the drugs that they can no longer sell. And that showed up in their results.
Yeah, 40-cent per share loss. That compares to 20 cents a share in the same quarter a year ago, Jerry. But revenue was also weaker than estimated. I mean, 608 million, I believe, was the number, and we were looking for closer to 618. Why are they missing? Are analysts just too optimistic about this sector?
Yeah, it was a slight miss. I mean, I think that it's a little bit, we're going through a transition period right now with these weight loss drugs where we're going from people who just had the option of an injectable version of it to now we're, both Novo and Lilly have a pill version that it's still very early days on the market for both those companies. Novo got off to a really fast start, but Lilly is, close behind with its pill. So I think it maybe is a challenging area to forecast for Wall Street just because we're seeing this transition from, one form of, weight loss drug to another.
But by the way, in terms of Hims & Hers' other business, I feel like there's all this excitement and also genuine fear around peptides and selling of them. What's going on there with Hims & Hers? Was it them or someone else that bought a factory or something like that, basically getting ready for all of it to get deregulated?
Yeah, that's right. Yeah, Hims actually bought a peptide manufacturing facility in California. And this is an area that you see a lot of wellness enthusiasts who are very excited about peptides. They're basically these short amino acid, strings of amino acids that you're seeing even RFK Jr. promoting peptides for various benefits. Wellness people think that it's can help with reducing aging and healing wounds and various other things. So it's right now, it's not approved. The FDA is looking into potentially regulating this space, which, if it becomes an FDA-approved treatment, that could be a benefit to Hims. And so they're placing bets that this could be another market for them going forward.
All right, Jerry, thank you very much for joining us. That is Bloomberg's Jerry Smith on the latest earnings from Hims & Hers. Coming up on the show, Citi Wealth's Kristen Bitterly discusses the consumer as inflation climbs faster than expected for core. This is Bloomberg Open Interest.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
I don't really buy the idea that this economy is just being propped up by the capital spending on technology by a few companies. I think the consumers are definitely there. And the weakness of the consumer in the fourth quarter and the first quarter was weather related. So we're about to test that. We'll see what retail sales looks like up ahead here and put it all together. And I think the economy remains resilient as it has been since the beginning of the, well, I call it the roaring 2020s, and so far so good.
Ed Yardeni on surveillance. Let's bring in Citi Wealth Head of Global Wealth at Work, Kristen Bitterly, joins us now. Kristen, great to see you.
Good to see you too.
So it is a resilient economy, and we're going to get more evidence, perhaps, of that this week, as Yardeni mentioned, with retail sales. But first, we have the CPI, 2.8% the year-over-year rise, the biggest in September. Energy up 3.8%, which was 40% of all monthly increases. You had weird things like airlines were up a lot, apparel was up a lot. Are we still resilient even in the face of stickier inflation?
So great question. I think that a lot of this was anticipated. So airline, of course, like plane tickets are going to be up significantly. You're going to see the increase in energy. I think what you have to look through is to core. And obviously everyone was looking at shelter prices, which year over year, there was a little bit of a base case kind of scenario where we expected that rise. So I don't think it's too far outside of expectations, but I think what it does raise is that, is this stickier and is inflation going to be around longer than we anticipated, which is one of the reasons why within our portfolios we've been cautious in terms of duration and going out too far in the curve, just kind of balancing for inflation.
All right, we're going to continue to talk about that because I have questions about tax refunds. They were stronger, right? That's got to help the consumer. And also the AI spend does seem to be particularly supportive of this economy. Kristen Bitterly is sticking around. We have to take a break to pay our own bills, but when we come back, we'll bring you the market open on the New York Stock Exchange and the NASDAQ market site. You can see futures down, but after another all-time high on stocks yesterday at the close, this is open interest.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
All right, we are moments away from the start of trading on this Tuesday. This is Bloomberg Open Interest. I'm Matt Miller, looking at stocks that are down, with tech stocks leading the way. So S&P futures down about 0.3%. Tech stocks off 0.7% after we saw the Kospi evaporate $300 billion in value in the span of 90 minutes yesterday on concern about an AI windfall tax. Down at the New York Stock Exchange, wait, that's not the New York Stock Exchange. Somewhere else, ringing the NYSE bell is Josh D'Amaro, the new CEO of the Walt Disney Company. I think it's upfronts right now, so he's got Minnie and Mickey, obviously, with him there, as well as all of their products, which are almost all sequels, of course. And then you've got the first responders' children ringing, well, and their parents, the opening bell down at the NASDAQ market site. But really, I think the focus today is going to be on the inflation numbers that we got, higher than expected, and that's come through, obviously, from the war, from oil, from jet fuel, from beef. Beef, did you see beef was 3.4% higher?
Yeah, but Trump is paring back, reportedly, some of the tariffs on beef, so maybe that will get better.
Right, but it's always a good idea to subsidize demand when there's a supply shock.
Yes, I know where you're going with this gas holiday, tax holiday, blah, blah, blah.
Smart economists
but I
agree.
counter you with that being the most important thing. Do these markets care?
No.
At all. It's AI. AI continues to be the most important thing, and today, it's not even anything fundamental that we're moving on. It was something that happened in Korea. So stocks are selling off. There was a post from a South Korean policymaker suggesting paying citizens a dividend uses taxes on AI profits. A bunch of value is wiped out from the Kospi. And then he's like, ooh, my bad, made a bunch of qualifications. People said he doesn't speak for the government. Even so, the damage was done. I mean, it's just a fragile trade. All these stocks, Intel, Micron, AMD, all down in this morning's trade, Matt.
All right, eBay rejected GameStop's $56 billion takeover offer. They called the offer neither credible nor attractive, turning down the offer due to uncertainty around the financing plan. Still incredibly difficult to understand how Ryan Cohen would have come up with the money. But I haven't looked at the website, so I will do that. GameStop right now down 2.5%, eBay down just about 0.8%.
Even after he told you so many times, he told the American public to look at the website.
Look at the website.
Just look at the website.
I will go and check it out. I honestly will.
Yeah.
But it's like, if you're a $10 billion company, it's hard to issue shares that cover a $26 billion bill.
And it would be just like incredibly dilutive, even if you could do it. So in what world would your shareholders
It's like
be
negatively
okay with
dilutive.
that?
Yeah, it doesn't make any sense at all. But let's get off that topic and get back to, eBay was a good seg, right? Because consumers obviously spending a ton of money on places like that. Let's bring in Citi Wealth, head of Global Wealth at Work, Kristen Bitterly. And, I got a better tax refund, like many people did this year, and I may spend it on eBay, more likely on gas. But at some point, that money is going to run out, right? So how does the consumer look after the next couple of months?
Well, I think it goes back to this whole concept of a K-shaped economy, that when you look at who's actually driving, it's the top 20% are driving 40% of consumption. And then if you think through, okay, are they exposed to inflation in the same way? Many of them are homeowners. Many of them have very cheap mortgages that they locked in years ago. So the actual math around that wealth effect that you've seen in that top 20% is significant, and you don't see volatility in that spending. That combined with what we have to say is just a spectacular Q1 earnings. The growth that we saw, and not just the growth in Q1, but now the outlook for the rest of the year, you have estimates, they started the year at around 15% year over year earnings growth, and now they're close to anywhere from like 22 to 26%. So continuing to see that investment at this pace is going to drive fundamentals higher.
Even so, the bulk of where that came from in the earnings upgrade has been semis. It was something like 2/3. Yep. And then the index itself It's hit a new high, and this was from Bespoke that was able to hit a new high. It's over its 50-day moving average. But this is only the fourth time that the S&P has hit a record high, while 5% of its members fall to 52-week lows. Basically, it's not
There's
really...
dispersion under the surface.
So does that make you nervous that so much of this is pinned on semis, AI trade, et cetera?
I think the concentration, you always have to do that basic calculus around, okay, we look at representation in the index, and then we look at contribution to earnings. So if we look at, you know, the top 8 companies, they're right now representing anywhere from like 35 to 38% and probably contributing around a third of earnings. So it's a little bit imbalanced, but not that much. I think the other thing, though, is when we look at, now you're starting to see the productivity gains from AI. You're starting to see, yes, semis were a big beneficiary in terms of where this CapEx is going, but now you're seeing in terms of grid, electricity, utilities, and both the upstream and downstream as we get into more themes around what it means for physical AI, which is like the next generation as well. So this is really like a multi-decade build out if you're thinking through like what is required. And you heard in certain earnings calls as well, the demand is so robust. It was, do we have enough compute to be able to meet it? Yeah. So compute is the new oil.
I mean, we're also adding jobs. I was out on Friday, but I still saw the numbers, and they're impressive, right? Even if you look at a 3-month moving average, this economy is starting to add jobs rather than going the other direction, which was the fear, and maybe still could happen. But you need, obviously, more than just chips. You need real estate. You need people laying cement. You need
electricians.
You need HVAC, everything.
Yep.
And
it's a whole ecosystem.
And I just wonder, does this sort of move the needle in terms of the long-run growth estimate? You know, could we be moving to a higher plane in that sense, or is this a demand shock that's just going to continue driving inflation?
All of those jobs are temporary, though. Like in the long term, they employ like 50 people, those data centers.
Yeah, but I mean, we're a lot of years of build-out. Like, in the long run, we're all dead, right?
Yeah, no, it's a fair point. And at one moment, are you going to say that the pace of this spending and the continued increase, is it going to be at that rate? Probably not, but it's not a bubble, it's an arms race in terms of like who is truly going to, so will there be winners and losers? Absolutely. Do we need to see an ROI on it? Absolutely. But we're still in the early innings, and we're still in the early innings in terms of like how are the beneficiaries, both short, medium, and long term?
Can I do a hard pivot? And I'm just thinking about this because we're going to hear from Jamie Dimon in just moments with our Francine Lockwood. He's been very outspoken about private credit. I was having a conversation with someone at Milken who basically said there was a smaller family office, and they were sold by one of their wealth advisors. To be very clear, it was not Citi Wealth. It was one of your competitors. But it basically said, add on private credit, this BDC, as a cash management tool, which obviously these things are not because they're illiquid. What have been the conversations with clients at Citi Wealth around BDCs, around private credit? Are they noticing the headlines? Are they getting more nervous about it? Do they still want to buy it? What does the appetite look like?
So I think it's so interesting because private credit was obviously one of the top topics in Q1, and then obviously with the rise in oil prices, it was something that went on the back burner. But I think when you look at, you have to almost take a look at the total size of that market. You're talking about a market that's around like $2 trillion in size compared to, if we're talking about the equities market, you're talking about like $70 trillion. So the quantum, even like the global fixed income market, you're talking about the same type of magnitude. So it is a relatively small part of the overall investing market. And I would say from a retail investor or an individual investor standpoint, it has tended to be a tax inefficient investment. And so when you still look at the exposure, it's largely institutional. There has been more retail participation recently. I think you hit the nail on the head in terms of understanding liquidity. So are there good investments? Are there good underwritings within that portfolio? Absolutely. Are there some where probably there's some poorly underwritten credits within the broader portfolio? Absolutely. But it is an illiquid investment. And I think that's the thing that in some of the branding that came out about semi-liquids, evergreen funds, making sure that people truly understood that this isn't a liquid asset.
But there's a place for that, right?
Of course.
I think it was Yardeni this morning. Farrow was asking one of his guests, you know, how much more can I get over something like a CD, which is also an illiquid investment, right? If you remember CDs.
Of course I do. My bat mitzvah money went into a CD.
There you go. So, I mean, I think of it the same way. And if you can get, I think Yarden said 50 basis points, 100 basis points more, that's
But when
better
you're
than
looking at
sticking the
cash, right? So if you're looking at cash, many investors right now have what we would call like outsized cash holdings. What do we include in that? We include bank deposits, we include T-bills, we include a variety. That's a very different investment than private credit. And so within our own portfolios, we have a preference for equity over credit risk for this exact reason. Are you getting compensated for that risk? Whether that's in more kind of traditional fixed income or whether it's in more illiquid parts of the market, when you look at that full spectrum of yield, if you can get an attractive yield, stay relatively light in duration and very high in quality, on a relative basis, you're going to stay in that part of the market as opposed to an area where spreads are really tight and you're sacrificing liquidity.
So who is it for beyond the institutions? Like where does a BDC, for example, make sense in a portfolio, or does it not?
Well, there's great examples like broadening out. Like the big question was when software took a hit, right? So when software took a hit and then all of a sudden people are like, wait, software seems to be about 20% of the overall credit market. And then the argument there is like, well, these companies would have to go to zero before there would be a default event within the credit market. So are there wonderful opportunities to get above market yields where you're compensated for that risk? Yes, but you have to be very selective in terms of the sectors that you're exposed to and also just making sure you're getting paid for illiquidity and the risk premium.
All right, smart conversation. Really appreciate you coming in. Kristen Bitterly there from Citi Wealth. Let's get a check on what's going on in the stock market right now. We are just about 10 minutes into the session, and we do see the S&P 500 off about 0.4% right now. 73.84 is your level. So coming off the all-time high that we closed at yesterday, tech stocks taking an even bigger hit. Who are the winners and losers here today, Dan?
NVIDIA is actually having a pretty good day, but that's not enough to lift us higher. Healthcare doing well. To the downside, though, it's some of the big tech names and a lot of chip makers, and that's why this market is off. So if you look on the other column, it's Amazon, Micron is down, Broadcom, Alphabet, Qualcomm. Again, nothing in particular moving that. It's just what happened in South Korea. And I should note, JP Morgan is down, despite them having very good numbers and very good projections coming ahead.
And despite our exclusive interview.
Yes.
With JP Morgan CEO Jamie Dimon coming up. Take a look at the sectors here that are moving today. Healthcare, consumer staples, and energy. So pretty defensive look there. Industrials and consumer discretionary on the downside. Let's go to Paris, though, now, where Bloomberg's Francine Lacroix is standing by with JP Morgan CEO Jamie Dimon. Francine?
Yeah, I could not be more happy to be here in Paris with Jamie Dimon, of course, at JP Morgan Global Markets Conference. Mr. Dimon, thank you for having us. Thank you for being our host here in Paris. I mean, there's a lot riding. Look, the markets are optimistic. They're optimistic that there's some kind of resolution in the Middle East. Are they overlooking the worries about inflation?
Yeah. So first of all, welcome. Happy to be here. Like, I think there's a little bit too much exuberance out there. It's not just the Middle East. It's, it's Ukraine, Russia still there, America, China. There are a lot of these complex issues which may or may not affect the market, but then there are issues like inflation, today's print wasn't so good. So yeah, I think the market's kind of exuberant and it may not be completely justified.
So why are they so exuberant? If they're exuberant, are you expecting a correction? And is it because they're looking at AI?
No, I don't think it's AI. I think corporate profit is doing very well. AI will be a plus, so this year it's just a lot more spending, which may be a little inflationary too. But it's more corporate profits. We're doing a little bit more QE. Government's still spending a lot of money. The one big beautiful bill is kicking in. Stimulus offsetting a lot of the gas. I think the gas increase, $1 of gas is $100 million. The one big beautiful bill is $100 billion that consumers pay. The one big beautiful bill is $300 billion. Deregulation is real. There are these things which are causing a pretty good market right now.
But when you talk about exuberance, it means that there's a market dislocation. Where do you see that?
The stock market's in the top 10-15%. Credit spreads are very low. The general assumption that these things are all going to resolve. And I'm kind of a skeptic. I don't know. I hope they do, but I don't know that they will.
Okay, what do chief executives worry about in private that they tell you that they won't tell us?
Not much. Trade, America, NATO, the wars, oil prices. I mean, the same stuff you hear about all the time.
But CapEx, I know, we had a great earnings season.
Yeah.
Is the next one going to be less good?
I don't know yet. It's very hard to tell. I think the deficit spending drives a lot of corporate earnings too. Yeah. So and drives a lot of capex. And will capex create productivity before it creates inflation? I don't know that. I think one of the risks is inflation. I've always thought that. And so.
But also, how do you think of oil, and how do you think about what's happening in the Middle East? If this lasts 3 weeks, 4 weeks, even like 2 months, are we going to be in trouble?
It's a big deal, and every day it gets a little bit worse. I don't know how it's going to be resolved. I hope it gets resolved in the interest of the United States and against the Iranian regime, not the Iranian people. But I don't know. But I read something today that was very interesting, that China reduced their demand by 5 million barrels a day. America increases exports by 3 million barrels a day. That 8 million is made up for a lot of what was lost, and which is maybe why it hasn't been as severe as people think. On the other hand, inventories are coming down. Gas wells may have to be closed and stuff like that. So it gets a little more serious every day. That day that it becomes a disaster has been pushed out quite further than we thought at the beginning.
Do you worry about the U.S. consumer? Are you seeing signs of stress anywhere?
I think the upper end, the top 50%, lots of money, jobs, wages going up, home prices going up, stock prices going up. They're spending like they should, like they're buying, they're traveling. The bottom 30% is, I'm going to say, it's struggling a little bit. It's not a massive downturn, and of course, we'd like to help them, but their wages have not gone up. But more important than that, they still have jobs, and they don't have too much debt. They still have jobs, and that, at the end of the day, what's going to drive consumer spending, consumer sentiment, that part of corporate profits will be jobs.
What do you worry about? I know there's also the president is meeting with President Xi tomorrow in Beijing. I mean, does that have implications for the trajectory of America?
Look, I don't know, but I would suspect they'll come up with that'll be a friendly meeting with some positives from both sides. I don't think China's going to give in to any major demands. I don't think we're going to make major demands. We both have a lot of common interests. Anti-terrorism, anti-nuclear proliferation. China is feeling its oats. They have to deal with President Trump, so we'll see how it turns out.
Okay, you had an amazing trading, results. Trading was amazing in the last quarter. How's it going now?
Well, I can't comment on that. But, from the last time Troy spoke publicly, it was fine so far, but I can't give you other information than that. So,
give me a sense.
But when you guys can see every day, volumes
are high.
Yeah, and when volumes are high, all things being equal, it will be good for trading.
But you're part of it. I mean, you think it's going okay because it depends on the kind of trading that you put, right? You benefit.
Trading is going to be very good.
Talk to me about AI.
Yeah.
So I don't know whether you've also played around with Mythos. What did you see?
So AI, big picture, AI is going to cure cancers and reduce work weeks, and kids will live longer, and planes will be safer, and cars will be safer, and less people die, and you'll have new drugs. It's going to be good. We've been using it now for 13 years. It does an amazing job in various different things. So we're going to deploy it to help our customers. There are two attributes that people worry about. One is Mythos. It's legitimate that this is so powerful and covers a lot of vulnerabilities, and we're all trying to figure out how to deal with it, not just for ourselves, but with all of our friends, big banks, small banks, telecom. The government's on top of it. But a lot of the work's got to be done by enterprise. They don't have the ability to do a lot of that. So I think, Scott Bessett's running it for banks, and I assume they've done it for other people elsewhere. So we're all getting our hands around it. It is risky. Everyone, and we actually publish, and people should look at this, like a list of what you can do now. Don't wait to get Mythos, because everyone's going to get it at one point, but you can't give it to everyone. If they can't handle it, or if it gets leaked out, it can be used by bad guys before we protected open source code and all our code. And so we need a little work to do to get it done right. And the other one is this job disruption, where that may be true. We should get prepared for it. We shouldn't be breathless. And that to me is, how do you create skills and reskilling? There will be a lot of jobs, and AI, cyber, advanced manufacturing, the trades, and then we should make sure locally, and this is like between government and business kind of collaboration, that we are prepared if it happens too much. Stop talking about it. Have a plan.
But thoughts? What does it change the way that banks have to defend themselves? Are you thinking about cybersecurity differently?
No, banks have always been top of the heat in terms of cybersecurity. I wrote about in my chairman's letter, cyber is our biggest risk, made worse by AI, and that was before Mythos. So this does make it more dangerous. That's why banks are really working this thing right now. And all of us, and together. We're collaborating. We're not like arguing with each other.
What does that mean? What does that actually look like concretely in 5-6 months?
Yeah. We're all going through all our own applications with Mythos, patching them up. We're all going through open source code. A lot of flaws in open source code. We don't need to all fix the same open source code. If you fix one, I can fix the other. Collaboration. Trying to figure out how to form utilities to help third parties. Going to our critical vendors, including we're hooked into exchanges around the world, making sure they're doing it properly. And there are other things like how do a patch used to be posted publicly, and you go patch. Fix that patch. Now you have to be able to fix the patch in hours. And some you can't make public. When you make it public, the bad guys will get it, reverse engineer it, and get through. So we're doing all that stuff. It's serious work. I think hundreds of people doing it full time now.
Look, hyperscalers and also funding of hyperscalers is really propping up the economy. Do you have any worries about getting that money back, or some of the funding of what's being constructed?
Well, the way I look at it is that AI is real. A lot of money is going to go into it. That doesn't mean everyone who does it is going to be a winner. Like, go back to the internet. A lot of people lost, a lot of people won. And so, and the hyperscalers, with those data centers not find use, they probably will. But is it possible that some do it badly, design it badly, didn't get the right? Yeah, of course it's possible. Yeah.
Does AI change the way you recruit, the way you hire, and the way you work?
I think it's going to change almost everything. And I've done my own stuff in getting reports in the morning. I have a Jamie strategic intelligence report. It's getting better. So I could say, what did Francine say yesterday? And every morning at 5 a.m. it'll tell me what you had on your people that might be significant to me. And then you can keep on educating it. That's not important. This is important. What's significant? So yeah, we're all going to use it in different ways, but we will use it. It won't change my day-to-day. It will inside the company because we're deploying it, in 1,000 different use cases today.
You're much better off just watching Bloomberg. Talk to me about the UK. So there's a lot of, the markets are on tenterhooks to know whether the Prime Minister survives. We don't exactly know what comes next. The markets are nervous. What does it mean for JP Morgan in London?
Well, look, we've had ups and downs in markets and ups and down politicians, so it's not going to change our fundamental strategy. I would say that Europe, including the UK, know what to do, and it's the Draghi report. There are 300 items in there about common capital markets, common regulations, allowing cross-border in the EU competition. There's huge regulatory, not tariff, but regulatory burdens. They need to do the same thing in the UK. I think Keir Starmer is a very smart guy. Politics is really tough. They're in a bind because of debts and deficits, and they inherited a lot of that. I think the world of Rachel Reeves, and they got to be tough. They got to say, we're going to do these things. In the short term, may not be great, but governments have to get the stuff done right that grows the economy and militarily. And I think they need to work close with Europe. And if you remember, Keir Starmer and President Macron, they were going to work closer, not reversing Brexit, but military alliances, intelligence alliances, making sure the economies have economic relations which are good for both the continent and good for Europe, good for the UK.
You're building a big mega project in Canary Wharf that everyone is quite excited about. Does this potential politically instability actually change your view on everything, or do you see costs going up? Are you worried about taxation?
Not political instability, but if they become hostile to banks again, yes. I mean, I've always objected to the fact, we didn't damage the UK in any way. We paid probably $10 billion of extra taxes by now. I don't think that's right or fair. If that happens too much, we will reconsider. Yeah.
Look, I know you've also looked a lot at Europe and funding, and especially when it comes to security. I mean, how much time are you spending making sure that defense companies, that companies in Europe have enough funding from JP Morgan to make sure that they can, I guess, defend the continent?
So we have this huge effort. We deploy over the years $1.5 trillion to help. And it's not just it's resiliency. So it's even medicines and rare earths, which would be defense, semiconductors, defense, but it's anything that you need. So Europe needs LNG. So we look at that as resiliency for Europe, not LNG in America, but shipping it here is resiliency. So we have professionals doing it. We got an unbelievable advisory group. We've dedicated 30, 40 people. We're doing research now, which you might be interested in, across the shipbuilding ecosystem, across the active pharmaceutical system, the rare earth system, and then having public policy, which puts us in a better position. We, the democratic world, should never have gotten here where we're so reliant on other people, potential adversaries for rare earths. And we did. So don't cry over spilled milk, but let's fix it. And we got to fix it right away.
And this is good for the U.S. Does the U.S. need stronger allies?
This is good for the U.S., and I think having strong allies is good for the U.S. So my view is we need a stronger NATO. They're doing that, by the way. So, our president pushed them a lot. Well, they're all doing it, which is a good thing. But we want to keep it together. The goal of it should be to have a stronger NATO, not a weaker NATO. The goal, in my view, if you ask me what the goal should be of our economic relations with Europe, should be having a stronger Europe to get you to help you do the Draghi report. And I wrote my chair's letter, maybe a pipe dream, that if you did the Draghi report, I would give you one big, beautiful free trade bill. That's what I would do. And, and then fix them. There are some stupid trade issues, and fix them. But both the economies would go better. If they grew better, it'd be good for all the citizens, not just good for the big companies. And I think those two things are pillars of keeping the world safe and free for democracy. So they're not a minor thing. They're a major thing if you look at over 20 or 30 years.
So, Jimmy, today, how would you fix the Middle East?
I do not know. When I hear a lot of politicians say there was no imminent threat from Iran, I'm like, that immediately gets my back up, because a threat is when I'm threatening to do something to you. They've been raping, killing, and murdering for 47 years. Why the Western world allowed proxy wars? I mean, we've learned a lesson that we should have gone years ago at the head of the snake. We should have killed the head of the snake, and so now you have more risk, but maybe more opportunity, because people want peace in the Middle East. We have this, it's a terrible situation. I don't know the outcome. I hope there's a plan C or a plan B. I want us to prevail in the way that makes sense. I don't know what the right thing to do was, but I'm not going to sit here and say they weren't a threat and we should have done nothing.
But today, does the Strait of Hormuz need to reopen almost at any cost?
It will eventually be reopened. I don't know. I don't know. You're talking about the military's been planning for things like this for 40 years. They have plans. I don't know what those plans are. And I hope it works. I just don't know.
I mean, what is the one thing you wish you knew now? There's a lot of uncertainty in the world, right? Geopolitics, markets. If you could know one thing for certain from the president, what would it be?
Well, I don't know about that. I just want to. I just roll up my sleeves and try to make it better than it was. So I don't guess for about one good thing or something like that.
It's a complex. This is so noisy. It's like speaking to you at a Mets game, or it's like it's quite fun.
You're doing a good job, though. Yeah.
You too, Jamie Dimon. Thank you so much for joining us today. That was, of course, the Chief Executive Officer of JP Morgan. I'm going to send it back to you in New York with that, Matt, and we'll have plenty more throughout the day here in Paris.
All right, Francine, excellent interview, really fantastic. Francine Lacroix there with JP Morgan CEO Jamie Dimon at the JP Morgan Global Markets Conference in Paris. Let's discuss with Bloomberg's Chief Wall Street correspondent Sridhar Natarajan. He joins us here on set, and I thought it was interesting the way he kicked off straight out of the gates. He said this market is too exuberant. I guess we have come pretty far pretty fast.
Yeah, he did talk about irrationally exuberant markets, but more interesting is when you listen to the entirety of Dimon's comments, there is this constant push and pull where he's bullish on a lot of things. He's still confident that the underlying consumer economy is good, that the banking business is kicking on all gears and is doing great. At the same time, the Middle East situation is worrying. You have to worry about some of the other geopolitical threats that are hanging out there. So that was traditional, typical Dimon, but it seems with a more heightened note on all of these concerns and promises ahead. He still continues to be extremely bullish on AI as well. And so it will be interesting to see which way the market turns.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Consumer prices were 3.8% higher in April compared to a year ago, and ABC's Elizabeth Schulte says that is a fast pace reflected in the Consumer Price Index.
This inflation report shows that prices are going up overall at the fastest pace now in 3 years, that 3.8% inflation rate, a lot of that driven by the spike in gas and energy that we've seen since the start of the Iran war. So that rate, that 3.8% rate, we have not seen inflation been going up at this pace since May of 2023.
And President Trump has discussed temporarily lifting the gas tax to give consumers relief, but that would require approval from Congress. And Democratic Senator Elizabeth Warren says
Republicans could help a lot on the cost of gas if they would just vote to use the War Powers Act to rein Donald Trump in.
Cost of the war has increased, according to the acting Pentagon Comptroller Jules Hurst III, who says it's now $29 billion.
That's because of updated repair and replacement of equipment costs, and also just general operational costs to keep people in theater.
And that figure does not include rebuilding bases that were damaged by Iranian attacks. The war in Iran will be a key topic for President Trump when he meets in Beijing with China's Xi Jinping. He departs later today. The World Health Organization's Director General says all 11 confirmed hantavirus cases were from passengers and crew who were on board the Dutch cruise ship. As the Americans who left that ship in the Canary Islands were flown to Nebraska, 15 are now in quarantine, including Jake Rosemarin, who tells ABC he's going to stay for over a month.
My plan right now is to stay for the full 42 days. I think that is the best decision that's for me and for my family, and I know that here I'm in the best care possible.
One person with a positive case in Nebraska is in a biocontainment unit, so is another at a hospital in Georgia. You're listening to ABC News. President Trump appears to have spent the night posting online about his perceived enemies, says ABC's Rachel Scott at the White House.
The president posting or reposting on social media more than 50 times by our count, and nearly all of these posts focused on false claims or conspiracy theories. The president at one point responding to someone calling on the DOJ to make more arrests, just as he reshared a post with an unfounded conspiracy theory calling on former President Barack Obama to be arrested. Other posts attacked his perceived political enemies, including Hillary Clinton and James Comey.
The Webb County, Texas medical examiner says it's identified 5 of the 6 people who were found dead inside of a rail car, and ABC's Jim Ryan says that investigation has expanded after a 7th body was discovered.
6 people thought to be undocumented immigrants were found dead Sunday in a rail car in Laredo. 150 miles away, the body of a man was discovered alongside a railroad track in San Antonio Monday. Head Sheriff Javier Salazar says there's a connection.
Our belief at this point is that it was most likely smugglers, coyotes that opened it from the outside, discovered this body, and dumped it out.
They then closed the rail car again, leaving the 6 other migrants to die inside. Jim Ryan, ABC News, Dallas.
Prosecutors in Florida want all of Tiger Woods' prescription medication records from the beginning of the year through March, when he was arrested on suspicion of DUI. His lawyer says he has a right to privacy. That is being discussed in a hearing today in South Florida. I'm Brian Clark, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. We're also streaming live on Bloomberg.com. Check us out there. Coming up, this is the Bloomberg Intelligence Program with Scarlett Fu and Paul Sweeney. Wendy Benjaminson, Bloomberg Senior News Editor. We'll get the latest reporting coming out of the Mideast. Shomi McFadden, Portfolio Manager at Motley Fool Asset Management, to get her thoughts on the markets. Woo Jin Ho, Bloomberg Intelligence Senior Hardware and Networking Analyst, talks about AI's data center economy is crowding out software and IT services, so maybe some potential losers in an otherwise winning AI trade. Ken Weinstein, Japan Chair at the Hudson Institute, on Secretary Besant's unprecedented grasp on Japan top policy, tests Premier Takahashi in Japan. So we'll see how that goes over there in Japan as the president leaves today for his trip in China with a meeting for Xi Jinping. So we'll have reporting on that as well. Right now, let's kick this whole thing off with Alexis Christopherson of Bloomberg Business Flash.
All right, thanks, Paul. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. A hot inflation report for the month of April is helping to hold stocks back this morning. Inflation at the consumer level rose 3.8% compared to a year ago. That's the fastest pace in 3 years. We've got the S&P 500 down about 38 points right now, led lower by industrials and financials. The Dow Jones Industrial Average down 252 points, being led lower by shares of Caterpillar, Boeing, and Goldman Sachs. And those red-hot tech stocks taking a bit of a breather today, and that's pushing the NASDAQ down 212 points. We've got Brent crude up 3.5% at 107.83 a barrel. West Texas Intermediate up more than 3.5% at 101.59 the barrel. And the Bloomberg Dollar Spot Index up nearly 0.4% at 1193.74. In stock news, shares of Under Armour sinking nearly 18% after its guidance for this year missed Wall Street projections. It's also being weighed down by that partnership with NBA star Steph Curry coming to an end. It's also taking a financial hit, it says, from the war with Iran. But shares of Aramark are up more than 8% after the food services provider gave a rosy outlook after signing a multi-year agreement with a top global hyperscaler. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney here with you this morning in the Bloomberg Interactive Broker Studio in New York, streaming live on YouTube as well. Market Drivers today is brought to you by Eisner Amper. Most advisors tell you what happened. Eisner Amper tells you what to do about it. assurance, tax outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com, as Alexis was just reporting. We've got some selling across the board here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today?
We have to talk about GameStop. There has been a lot going on. Latest we see is eBay is actually rejecting this $56 billion offer that has gotten so much attention. They're describing the bid as neither credible nor attractive, which is a pretty harsh. GameStop fell a lot in earlier trading. Now we see they're erasing a lot of the losses. eBay was also down significantly. Now they're down a little bit less than 1%. So some of the initial reaction are fading. Perhaps investors are figuring out what exactly is happening. eBay's board turned down the offer, and they're citing uncertainty around the financial plan. We've been talking a lot about the math behind this offer. It's been very confusing. It's raised a lot of questions. But eBay said it plans to borrow $20 billion to help finance the acquisition. It's interesting because GameStop's market value is about $10 billion, so it's a bit confusing. Nevertheless, maybe this will set a potential proxy fight. So it's an interesting thing to watch, but investors are a little bit confused about what's going on.
There were some reports that Ryan Cohen just wants to get the share price up, so this is a way of doing that, right?
Yes, yeah, because I think it has to hit 100 billion and then he gets a
payout of some sort.
So perhaps there is something there.
All right, let's talk about your second stock.
Under Armour, pretty rough day today. The company fell as much as 20% in early trading. The ticker is UAA. It's all about forecasts and guidance. Their forecast for sales and profit for the fiscal year trailed to what analysts were expecting. Nevertheless, we're seeing a really, really harsh reaction. The company was headed for a somewhat good year. It was up double digits. Now it's actually down on the year. They cited a financial hit from the conflict in the Middle East. They actually put a price tag of $35 million, so perhaps that's weighing. The guidance shows that Under Armour turnaround is a work in progress. We saw that partnership with Stephen Curry ending, so that's another hit on the company. But nevertheless, investors are not forgiving to this report, and we're seeing a really, really harsh reaction.
I guess the last one is the Baconator, Wendy's.
Wendy's, they're having a really good day. They jumped as much as 15%. We're seeing some of those gains faint a little bit, but now they're up double digits. The ticker, of course, is WEN. We've been talking about the Nelson Peltz takeover. We're getting some reporting by the Financial Times that he's seeking investor backing. It seems like some of that financing will come from Middle East investors. That has been going for some time. His company already has a pretty big stake in Wendy's, but Wendy's has been struggling. They have obviously a massive network, 7,000 stores globally, but their reports have been lackluster. We've heard about issues with high beef costs, weak traffic. So interesting thing to watch, but we're seeing a very positive reaction from investors on the takeover bit.
You say Wendy's, I think Frosties.
Yep, absolutely.
All right, Denitsa, thank you so much. Denitsa Sakova is our cross-asset reporter here at Bloomberg News. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock markets. It's available on Apple Podcasts, Spotify, or anywhere you listen. The ceasefire is still in place, but it's pretty fragile, Paul. I don't know if it's going to last, but it's going to last through the end of this week because the president has his mind on other things right now.
Yeah, as he's about to get on a plane for China.
All right, before he left, he did say that the ceasefire with Iran is on massive life support. Let's bring in Wendy Benjaminson. She's our senior news editor joining us from D.C. Wendy, what has changed between yesterday and today when President Trump called the ceasefire something that's on massive life support?
Not too much has changed, except that he's getting on a plane this afternoon, as you said, to head to Beijing for those very, very important talks with Xi, where Iran will clearly be the elephant in the room throughout their meetings. We're just in this sort of, barely budging each side. So now Trump has said the ceasefire is on life support. The Iranians are sort of responded by saying, yeah, okay, we're here. We're ready for whatever you've got to dole out. And they're just sort of at a standoff right now. There's just, Trump will have to decide if it's politically worth it to him to start bombing Iran again, because we just got this inflation report this morning that domestic inflation is up 3.8%, which is a huge number. And we've got primaries going on for the congressional elections later this year. And, you know, him starting the war up again just may not be something he wants to do. On the other hand, if he doesn't get the Strait of Hormuz opened or some win on Iran's nuclear program, then, you know, it's not going to be good for him either.
So is there a sense that the domestic political cost to President Trump and the Republican Party are starting to weigh? Because, you know, there was no scenario where this would be, or there are very few scenarios where a war with Iran would be good politics here. But I guess, as you mentioned, with inflation, is pressure starting to mount, do you think, from his political party?
Yes, I think it is. Whether it's enough for the Democrats to win is something, you know, it's hard to tell, because what's complicating all of what would be a very easy win for the Democrats right now is the redistricting fights that are going on. So as southern states, what's the word I'm looking for? Utilize the Supreme Court decision that weakens the Voting Rights Act and gets rid of majority-minority districts, that will hurt the Democrats in terms of just the map. But what Democrats have to be hopeful for is that what you said, Paul, the inflation and the war and other problems and things like that will make people vote not Republican. But in terms of Republicans on the Hill, for example, a lot of them are getting a little itchy about the $100 million request for the ballroom. They just think that combined with a 3.8% inflation report, combined with beef prices being high and gas being $4.50 a gallon as we're heading to Memorial Day and the summer travel season, some of them are thinking $100 million for a ballroom just doesn't look good.
Yeah, the optics are questionable for sure. So, Wendy, as the president and his team get on the plane to go to China to hold this long-awaited summit with Xi Jinping, what is the U.S. likely to press China on when it comes to Iran specifically?
Well, I think they're going to want China to stop helping Iran in the small ways it has been helping them. Because remember, China is Iran's biggest customer for their oil. They want China to put some pressure on Iran to give in to their demands. And I think he wants, some diplomatic effort on their side. China, for their part, might say, okay, what's in it for me, and look toward Taiwan, which would be a very difficult thing. It's not something most American voters are really going to vote on. However, it's been long-standing policy that the U.S. will defend Taiwan if China ever decides to try to take it back. And the Chinese might try to strike a deal with Trump over that as leverage for getting them to help him end the Iran war. We don't know that that's going to happen, but it seems like it kind of makes some sense. He's also dragging a slew of CEOs with him from tech companies and other and Boeing. They're hoping to make their first deal with China. So he may come out with a lot of investment deals, or at least the beginnings of talks of investment deals that would, let him come away with a win.
Wendy, thanks so much for joining us. Always appreciate your reporting. Wendy Benjaminson, senior editor, Bloomberg News down there in Washington, D.C. So again, it just feels like the what's happening with Iran might get a little bit of the back burner treatment from this administration right now, as the president, is set to embark on a very important trip over to Germany.
Yeah, although the U.S. has lost some leverage here in dealing with China when it comes to what's been going on in Iran. And the president has certainly put the ball in China's court when it comes to, playing a bigger role in opening up the Strait of Hormuz. For the U.S., the Strait of Hormuz feels less dire and existential than it does for the rest of the world.
Absolutely. Red headline crossing the Bloomberg terminal, particularly relevant for our New York residents. Mamdani scraps planned New York City property tax hike in revised budget.
Which New York City property tax hike? This is not the second
I don't know if it's
house.
That's what I thought it was. That's what I think.
Okay, because that was a New York budget issue, right?
Yeah, this is a New York City property tax hike. So we'll get some more reporting on that coming up. In the moment, you got the S&P 500 down 33 points, the Dow minus 275, and the NASDAQ down 180 points. Coming up, Shelby McFadden, portfolio manager, Motley Fool Asset Management, coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:21 on Wall Street. I'm Alexis Christophorus from the Bloomberg Interactive Brokers Studio. Inflation soared to 3.8% in April, driven by gas prices due to the war with Iran. The increase in the consumer price index was the highest in 3 years. Here's how that's playing out on Wall Street. The S&P 500 down about 34 points, coming off its record high close from yesterday. Dow Jones Industrial Average tumbling more than 300 points, or 0.6%, led lower by shares of Caterpillar and Boeing. NASDAQ Composite also coming down from its record high, off now about 167 points. We do have Brent crude, though, up about 3.5% at around $108 a barrel. West Texas Intermediate up 3.5% at 101.60 the barrel. The Bloomberg Dollar Spot Index up 0.3% at 1193.54. And spot gold down 1% at 46.88 the ounce. eBay is saying no way to GameStop's $56 billion unsolicited takeover offer, calling it neither credible nor attractive. The rejection potentially sets up a proxy fight to replace eBay's board. There's been speculation about the seriousness of GameStop's offer since its market value is less than a fourth the value of eBay. And shares of Hims and Hers down 11% after the telehealth company reported a first quarter loss and sales that missed Wall Street estimates. That's due to higher costs tied to the company moving away from making those copycat versions of weight loss medications. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio and streaming live on YouTube as well. What we're seeing, is a re-techification, if you will, of the market here. We had that rotation late last year into some non-tech areas and some lower multiple stocks, some small and mid-cap sectors. That's kind of getting reversed back, it seems like, into big tech. Shelby McFadden, she's a portfolio manager, Motley Fool Asset Management down here in Alexandria, Virginia. Shelby, it seems like, the market's going back to the tried and true. Let's just buy these big tech names, and maybe that's because that's where the earnings growth is. How do you think about that?
I would absolutely agree with that. I looked at something recently that said that I think it's about 34% of much of the earnings growth for the S&P 500 is concentrated in about 10 names. So when you think of that being the reality, it's extremely attractive for people to want to gravitate towards that. And not just that, it's not only a sort of momentum play here that's grounded in nothingness. There seems to be this tangible secular tailwind for things like AI and everything that's sort of AI powered. And so the attractiveness after investors have tried to play with more breadth. When you're searching for these high single digit returns, they really are concentrated in one place right now.
They're concentrated in one place, and it's certainly the tech stocks. If you look at the S&P 500 on an 11-sector basis, energy outpaces tech 27% to 16%. But you break down tech into its constituents, and among 24 industry groups, chip makers up 39% this year, energy stocks up 27%, tech hardware up 20%. It feels like the equity market has just basically stopped caring about Iran. What does that mean, that willingness to overlook what's happening in the Middle East, mean for those energy companies?
It is really interesting. It's a phenomenon that I'm so glad you've pointed out, because a lot of us on our team have just said, I guess this just doesn't matter. And we all know that it does, right? The fact that energy is pacing so well reminds us how much it really does matter. So to me, it seems as though they're looking at tech and saying, well, this has to go on no matter what. This is part of the supply and demand problem. People want to be involved in the equity markets. They want to be risk on because other assets aren't necessarily providing the risk return profile that they're interested in. So cash is sort of long gone out of that fight. And then you have the other side for energy, which is more of a sort of trading opportunity. So if you're looking for a medium to long-term investing, tech seems to be the play. Energy, on the other hand, quite a bit more volatile, even though we know tech has shown us some volatility. So it seems to be that people are saying, we have no other option. We're going to just lock in, we're going to be on board, and we're going to wait for something, frankly, that we can't predict. We don't know what the catastrophe would look like for this to blow up, but that seems to be what the market is saying. Until you show me complete destruction, I'm going to assume that tech can survive this. That's my take on it.
Shelby, we just finished up really with the meat and potatoes of the earnings season here. What's your takeaway, and our earnings that we are seeing, are they enough to support this market at this level?
I would say probably at the aggregate level, sure, right? Like for the short term, maybe 6 to 12 months. But the other issue is going to be, when does the sort of bifurcation of the macroeconomy, that sort of K-shaped recovery that we've seen at different income levels, start to impact the rest of the broad market? So how long can basically fabrication sites and data centers continue to carry the economy? Well, part of that also depends on these projects getting finished. These projects getting finished, unfortunately, tends to also depend on things like funds being released from the administration to complete these projects and energy prices. It's hard to get a lookout on that, so that's why I say probably maybe 6 to 12 months. Could be wrong, but when I think of the sort of first and second derivatives that are related to this continuing to go, construction construction and infrastructure are really big parts of that. So wanting to watch that and knowing that things are a little bit dicey in the macro right now says short to medium term, we could continue to hold these levels.
Nevertheless, investors continue to look ahead to things that they think will continue to get support regardless of the macro and geopolitical conditions. And that includes new listings. Cerebras, of course, the latest company that is getting ready to go public. And that's kind of just the precursor to the big ones later on this year, SpaceX, OpenAI, and Anthropic. How are you thinking about investors making room in their portfolios for some of these companies?
Yeah, I think the general thought right now is that there'll probably be some reallocation sort of on the margins. I don't expect there to be these massive swings like away from the hyperscalers and directly into the generative AI companies. But I do think that we have to leave room for the fact that these IPOs are anticipated. In many ways, investors feel as though they know a lot more about these companies than some of the other recent IPOs that we've seen. So we have to leave space for the fact that these aren't sort of your typical, roadshow gathering capital. These are highly anticipated. And so that could change the sort of behavior that we see on prices in the first sort of 60 to 90 days. Nonetheless, they are still new listings, so we will have to sort of wait and see how they shake out. But I do think it has the potential to sort of change the way that the market reacts. And I also think it's just a demonstration, again, supply and demand. These companies want to grow. They need to grow. They need extra financing, and they've realized there's another place to get it. You don't just go public for fun. It's a massive burden. So you have to believe that the burden of having shareholders can be sufficiently overcome by the growth that their equity can provide. So I think the market is more than happy to see these come online, but performance over the long term, TBD.
Yeah, makes a lot of sense. I like the way you put that. Shelby, always a pleasure speaking with you. Shelby McFadden is portfolio manager over at Motley Fool Asset Management. And we talked about tech and how investors are content to let tech continue to ride as long as there's no evidence of complete destruction when it comes to geopolitical matters. Let's talk about tech a little bit more with Woo Jin Ho. He's our senior tech analyst joining us from Princeton right now. And Woo Jin, you and your colleagues have written a report about how the data center economy that rush to build out the infrastructure is crowding out spending on things like software and IT services. So that just creates, a list of winners, maybe a small list of winners and a long list of losers, potentially.
Well, I wouldn't think it's a long list of losers or a small list of winners. I think it's a broad list of winners. If you think about the whole data center ecosystems, we think about the mega cap names like Meta, Google, Microsoft, and Amazon. But then there's this whole ecosystem of smaller companies like an Arista and a Ciena and optical names and the energy names that's been lifted up by all of the spend.
So is there a crowding out aspect here? And if so, who's being crowded out?
Yeah, and that's a good point, Paul. It is going to be the companies with the next generation technologies that are going to capture the bulk of that spend. I would say that some of the companies that have not caught up with the next generation technologies, or the legacy companies, for example, HPE, they really haven't captured the tailwind of that type of spend. Even Cisco, for that matter, they're slowly getting involved, but the bulk of their revenue is still part of the enterprise spending landscape.
Is that something that they can make up for in due time, or the longer they wait, the longer they're kind of left behind, the harder it is to make up that lost ground?
And I'll tell you, Scarlett, for instance, Cisco, they've actually pivoted pretty well a couple of years back in the optical space, and optics have been one of the big winners in the AI spending boom. But however, given the size of Cisco, AI is only going to account for roughly about 5% of total revenues, all right? And it's really not going to be that big momentum boost as one may think. HPE, however, I do think that they are trying to balance profitability and growth, and given the low profitability of AI servers, they seem to feel content to be left out for this round.
We saw a sell-off in some selected software sectors earlier, particularly the software as a service sectors. How's, as you talk to your tech clients out there, how is that thinking evolving? Was that overdone? Are we trying to be a little bit smarter about picking winners and losers there?
Well, the joke running around the investment community is terminal value zero.
Okay.
As software, yeah, that's problematic. Well, there's a couple of things. AI is disrupting traditional software models, right? If we're thinking about subscription models, it's user-based. As we go into agentic AI, now we're talking about the AI displacing or replacing the human user subscription. And these models have to be rebuilt. Now, Paul, if we recall back in the early 2000s, when we went from perpetual to subscriptions, there were winners and losers there. Those who were not able to make that transition from perpetual to subscription revenues, they lost out. But in making that transition, it took about 3 to 4 years before things started to pan out. And we may see something similar as some of these traditional companies like Salesforce.com try to migrate over to these agentic models and their licensing scheme to help to these AI platforms.
All right, Wooj, thanks so much. Appreciate it. As always, Woo Jin Ho, Senior Technology Analyst for Bloomberg Intelligence, located down there in our beautiful Princeton, New Jersey campus, which is a very cool solar panel farm.
I just wanted to give an update on what we were discussing earlier. Zohran Mamdani scrapping that plan, New York City property tax hike in the budget plan. This was a overall plan to raise New Yorkers' property taxes, and it was more of a threat to raise property taxes by almost 10% as a way to lobby Governor Hochul of New York to give more funding to the city. So he's backtracked on that. It doesn't appear to have anything to do with the expensive second home pied-à-terre tax that is now being considered in the New York State budget negotiations.
Okay.
So for those who are affected, that's the latest here. Yeah, there's a lot going on.
Yeah, a lot of taxes, but that's New York City, and I guess
you nailed it.
We're kind of used to that around here. So S&P down 55 points, that's 0.75%. The NASDAQ down 310 points, that's 1.2%. Oil higher, WTI crude oil up $3.90, just under $102 per barrel. Ouch.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Brokers studio. A hot inflation report for the month of April is pulling the S&P 500 and NASDAQ down from their recent record highs. Inflation at the consumer level rose 3.8% compared to a year ago, the fastest pace in 3 years. And that has Wall Street betting on rate hikes from the Fed in the not-too-distant future. The S&P 500 down 47 points, now at 73.65. Dow Jones Industrial Average at its lows of the morning, down about 290 points, and the NASDAQ Composite is slipping 256 points. We've got the Russell 2000 down by 49. Brent crude up 3.5% at 107.78 a barrel. West Texas Intermediate up nearly 4% at 101.85 the barrel, and the Bloomberg Dollar Spot Index is up 0.3% at 1193.57. We've got shares of Wendy's racing ahead this morning, sizzling up 15% on a report that Tryon Fund Management is seeking investor backing for a bid to take Wendy's private. Amazon has kicked off the sale of its first Swiss franc bonds across a record 6 tranches to raise money to help fund its $200 billion spend this year on data centers. And we've got Waymo recalling thousands of robo-taxis to fix a software issue that could cause the autonomous vehicles to drive on flooded roadways. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Paul and Scarlett.
Thank you so much, Alexis. We are looking at a dollar that is stronger versus the yen right now. You have dollar yen at about 157.61. And if you look at the yen over the last couple of years, it's been a story of weakness where Japan is under considerable pressure, at least from the U.S., to do something about its currency. I want to bring in now Ken Weinstein. He is Japan chair over at the Hudson Institute. And Ken, we asked you to come in today because Scott Bessent, the Treasury Secretary, stopped in Japan on his way to China. And he spoke with the finance minister there about exchange rates, the U.S. dollar, Japanese yen exchange rate, and basically confirmed that they're on the same page in viewing excessive moves as undesirable. There's been a lot of talk about Japanese intervention in the currency markets. What do investors need to understand about Bessent's take on Japan's economy and on Japan's exchange rate?
Yeah, I'm delighted to be here. Look, Scott Bessent is one of the most astute observers of Japan, certainly the most astute observer of Japan we've ever had as Secretary of Treasury. This was his 54th visit to Japan. This is a man who has lived in Japan for months at a time. This is a man who understands Japan, understands how its economy operates, how its central bank operates. He goes back a long ways with a lot of Japanese officials, but also knows the governor of the central bank, Governor Ueda, from when Ueda was a professor in the United States. There is a long history. He has a very subtle understanding of both the political, financial pressures involved. And Japan is in a difficult situation. I think that the weakness of the yen is creating great pressure domestically, particularly on the energy side, with the massive rise in oil prices because of the Iran war. It is massive pressure on Japan. It's a pressure on consumers. It's a pressure on industry, and he certainly wants to avoid excessive volatility, as he mentioned yesterday, in where the yen is. Mm-hmm. But he also, I think, he understands that at some point the Bank of Japan is going to need to raise interest rates in order to battle inflation in Japan. So Japan is in a difficult situation. Yeah. And Bessent is trying to do what he can to signal understanding to Japan, certainly to help avoid excessive volatility. But it's a challenging position for the Japanese as well.
Do we know what influence the Japanese have over this administration? Because as you mentioned, they are facing a lot of pressure from a lot of areas, particularly from the war and the energy prices. Do we know what kind of influence they have?
Look, I'd say this. I think of all of our allies, Japan is arguably among the Western allies the most important economically to the United States. Japan has pledged to invest $550 billion in this investment fund. The relationship between the president and Prime Minister Takaichi is extraordinarily strong. It is warm. And so I think there's deep mutual understanding. Certainly, but, you know, with the Japanese, like the rest of our allies, were not tipped off in advance of the attacks on Iran. And so, you know, so the question, you know, and I think the Japanese they have also had historically strong ties to Iran. There's some speculation the Iranians, the Japanese might be able to play some role as a kind of mediator in the war. I haven't seen steps on that. There also is deep concern in Japan and China that the U.S. may somehow make concessions against Japanese national interests. I think that is extraordinarily unlikely. The president understands the importance of the U.S.-Japan alliance. It was the major priority for his foreign policy in the first term. It's a significant priority now.
You were nominated by President Trump in March 2020 to be ambassador to Japan. What is the state of the relationship between the U.S. and Japan now in 2026, especially as the president looks for allies in the region, not to team up against China, but to certainly as an offset to China's rising power in the region?
Look, Japan has taken some extraordinary steps since 2020, since I was nominated to be ambassador. They've reached their goal of 2% of GDP spending on defense. They are now becoming a global defense exporter. They're going to, later this year, they're going to come out with their 3 major strategic doctrines, and Japan, and in which Japan will will present its positive contribution to security, proactive contribution to security, which is how Prime Minister Takaichi likes to talk about it, that security is critical, and that Japan is moving from being dependent on the United States to becoming a security provider in the region. Japan has become a defense exporter. They've just signed a big deal with Australia to sell frigates. They're sending defense equipment to the Philippines and elsewhere. So Japan is now acting very much like a much more normal nation. They're looking also at constitutional reform to change the famous Article 9 of the Japanese Constitution, which the United States imposed on Japan after the war, which essentially the language it was not well phrased. It prevents Japan from having standing armies, which it obviously needs, and instead Japan talks about its self-defense forces. But that language, the Prime Minister has said she really wants to focus on constitutional reform in the next couple of years. It's a big priority for her. It would be a major step for Japan. And Japan is also deepening its ties to our allies. Japan is working with the Brits and the Italians on a 6th-generation global combat aircraft program, and has been deepening ties with nations in Europe, both on the defense side, but also on the trade side. The Trans-Pacific Partnership, which Shinzo Abe kept in place after the United States stepped out, now includes Great Britain. There's increasing talk about the European Union and Japan cooperating more deeply on trade measures, and perhaps the EU, though it's unlikely the EU would join the Trans-Pacific Partnership, it could adopt many of the standards that in the CPTPP is global standards. So Japan is starting really to become a nation that thinks of itself as a major diplomatic player. It sees itself as a bridge to Europe, as a bridge to the developing world for the United States, but understands that the U.S.-Japan alliance is the sine qua non of anything that Japan does.
30 seconds left. What's the relationship between Japan and China?
It is complex.
I gave you 30 seconds.
Yeah, I know. Look, it's complex. My own sense is this, that the Chinese government sees what Japan is doing. Takaichi was not the person they wanted as prime minister. She is a defense hawk. She is close to Taiwan. She has reshaped the Japanese government. She removed Komeito, which was the 26-year partner of the Liberal Democratic Party. Komeito is a pacifist party with strong ties to China. She replaced them with the conservative populist Ishin Japan Restoration Party. That party shares Takaichi's view on defense. They're trying to put economic pressure on her. They criticized the statement she made in the Diet about Taiwan contingency effectively being a national emergency for Japan. And they really went after her. They cut off seafood imports. They cut off tourism.
Right.
Okay. And she has been tough as nails, and it's only boosted her popularity.
Okay. All right, very good. We'll follow up on that. Ken Weinstein, Japan chair at the Hudson Institute, giving us an update on U.S.-Japanese relations as Secretary Bessent is in Japan as he makes his way to China. The president leaves for China today. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. President Trump leaving today for China, and I think the expectations are pretty low. I think trying to keep the expectations low, but hopefully he's got a plane full of CEOs with him too, so maybe they'll get some business deals done if nothing else. Henry,
I'm sure most of that was negotiated way in advance.
Yes, exactly. But I noticed that Jamie Dimon is not on the plane because he's in Paris now.
Nor is Jensen Huang of NVIDIA.
I saw that. That one got my attention. Henrietta Trez joins us here, Managing Partner and Director of Economic Policy at Veda Partners. She's down there in New Orleans, as they say. Henrietta, what are your expectations and the expectations of the people you talk to about this coming up summit with President Xi in China?
Hey guys, my expectations are much like yours, pretty low. I think Secretary Bessent and Ambassador Greer have been planting that perception for not just weeks, but months now, even before the Iran war started. I would call attention, like your previous guest, to Secretary Bessent, who is the first time a Treasury Secretary is going to be leading a delegation like this since Hank Paulson during the Great Recession. For all of us who remember what that was like and the coordination that was needed around the globe. So I'm really expecting, if any gains are going to be made, and it's not just a maintenance of the status quo, I suspect it'll be on the soybean deal that he reached in 2025. I think that's going to be where the bulk of the focus is. And what I think is also important to note and dovetailing here is the election. And the fact that the president really needs to bolster farmers going into the midterm election cycle. There's been some back and forth on the beef tariffs just in the last 48 hours. You can see it. And the Senate Agriculture Committee is having a hearing on the price hikes to fertilizer, which are huge for farmers at 3 o'clock today. So that's an indication to me that we're really going to be concentrated on the soybean component here.
That's so interesting, linking what we're going to see in the next 2 days with the upcoming midterm elections and, of course, the politics of it at home. Paul and I were talking about how Jensen Huang will not be part of the U.S. delegation to China. Clearly, he is still on very good terms with the White House because he attended the state dinner for King George earlier this month. And we know that there's been a lot of back and forth about the U.S. agreeing to allow shipments of NVIDIA's AI chips to China. That has been allowed, the H200 chips, but I don't know if China will allow its companies to buy those chips. What signal does Huang's absence on this visit send to Beijing?
I think it's really bolsters my argument that this is going to be more on agriculture, if there's going to be any gains. I'll layer on to focus on chips and also critical minerals and rare earths. We've reached an agreement on those components, and I expect that the goal here is really to reaffirm our commitment to honoring those prior commitments. And one of the things I'd also stress, just not to pivot away too much, but to stress how urgent the agriculture piece is. The farmers in the United States had a 46% increase in bankruptcies in 25. That's a direct result of the trade war launched with China in the president's first term. If you remember the phase 1 trade deal that USTR Lighthizer reached with Vice Mayor Liu He in the White House in February, I want to say, before the 2020 election, their focus was on soy. And it makes a lot of sense to keep the focus there because during the phase 1 deal, Lighthizer negotiated a deal that would get China to buy, per my calculations, about 142 million tons of soybeans over 2 years in that phase 1 deal. And to put it into perspective, the deal that Bessent reached last year was for 87 million over 4 years. So the farmers really are the story. The chips are what I think the coterie of CEOs and lead like Dina Powell for, focus on AI and focus on the arms race between the U.S. and China in terms of maintaining AI superiority. They're definitely there for that. But the core underpinning for the United States has got to be on the ag sector. And I think it is for Secretary Bessent specifically.
Henrietta, we got another inflation print today. CPI came in at 3.8%, up from 3.3% last month. If I'm at the Republican National Committee, I got to be getting really, really nervous as I think about midterms. What are you hearing from your contacts?
Yeah, so nervous that you're considering putting a gas tax holiday on the floor of the Senate, which is pretty something. If you went through the 2022 and post-pandemic era when gas prices were at relatively high rates up in the $4 range, there were proposals from a host of Democrats who have proposed them again to have a gas tax holiday, and Republicans to a man rejected the idea. Leader Thune, Josh Hawley, and a whole host of others. And you can see it in the lobbying community, in the tax community, people talking about how subsidizing when we really need to be dealing with demand destruction, given the structural problem of the Strait of Hormuz being closed, is not going to resolve this. An 18.4-cent holiday is not going to fix this problem. So I think that the shift you're seeing from President Trump saying, hey, I support this idea, suggests that Republicans are extraordinarily anxious, and they should be. Price of gas is exorbitant. Airline prices are up 20% year over year, and it's moving faster than wages. So they can't afford that narrative going into the election.
Do you expect any kind of fireworks from the ascension of Kevin Warsh to Fed chair by the end of this week? Any last-minute curveballs?
I don't. Fingers crossed. I think we've had enough curveballs where the Federal Reserve is concerned, and I don't think they're used to curveballs in general. So I'm hopeful that everything is copacetic and fine and we move forward here. I think the obvious problem for Warsh is that you're not going to be in a position to cut interest rates with inflation spiking like this, the highest in 3 years, I think, right?
Yep. All right, we'll keep an eye on that. Henrietta, thanks so much for joining us. Henrietta Triz, Managing Partner and Director of Economic Policy at Veda Partners. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business App.
Good morning. This is Bloomberg Intelligence on Bloomberg Radio with Paul Sweeney, Scarlett Fu, and Amy Morris in Washington, D.C. A lot happening on this Tuesday morning, including the president getting ready to leave for China for his long-awaited summit with Xi Jinping. All of that to come later on. So we're going to give you a lot of things to think about as we get ready for that big summit. Sid Phillip, he is our Bloomberg chief correspondent for global aviation, will be joining us because Boeing is betting on a comeback with China. Boeing will be part of the delegation that goes to China as well. We're going to check in with James Abate. He's managing director and head of fundamental strategies at Horizon Investments on this market. Today it's down, but so far this month, and you could say since March 30th, it has really looked past the Iran war to continue to bet on AI. Cecilia D'Anastasio is our video game reporter. Did you know we had a video game reporter?
I did not. That's cool.
That's a new one. Well, eBay has rejected GameStop's bid to take over the company as neither credible nor attractive. She will join us to talk through some of that. And Gautam Mukunda, he's a lecturer at Yale School of Management. He's also a contributor to Bloomberg Opinion. Will talk to us about how AI models are not built for the Black Swan era, especially when you're talking about weather forecasting. And you could kind of extrapolate that to all kinds of other forecasts as well. So a lot to get over here to discuss in the second hour of Bloomberg Intelligence. Let's go now to Washington for a brief on where things stand in the markets. Amy.
All right, thank you, Scarlett. Inflation continued to accelerate in April, up 3.8%. Bloomberg's Michael McKee.
If you want to look at what actually pushed it higher, I bet you won't be surprised to know that gasoline prices were up 5.4%. Electricity, though, also up 2.1%, a big rise there, so it may not help you to buy that electronic vehicle.
Bloomberg's Mike McKee. The core CPI, which excludes food and energy, increased 2.8% from a year ago, boosted in part by a statistical quirk in the report's measure of rents resulting from the 2025 government shutdown. The economy added more jobs than projected in April, with total non-farm payrolls rising by 115,000, well more than the 65,000 increase expected in a Bloomberg survey. The unemployment rate was unchanged at 4.3% in April, in line with Wall Street's estimates, making the case for a near-term rate cut more remote. We check the markets for you all day long here at Bloomberg. The S&P 500 is down 0.8%, NASDAQ down 1.3%, and the Dow down about 0.5%. The 10-year Treasury yield at 4.45%, the 2-year yield at 3.99%, and of course, oil WTI is up more than 4%, now at $102 a barrel, and Brent crude is up just about 4%, about 3.75%, now topping $108 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We got to sell off on the marketplace here. Let's take a look at where some of the stocks on the move today are. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at today?
All right, Paul, we got to take a look at some of the biggest laggards in the market today, talking about Intel, ticker INTC. Those shares are extending their declines now, down more than 8% here. And that is because there's a lot of questions about this chip stock rally that seemed very unstoppable at one point, but then overnight, we lost a lot of value in those companies. Intel, of course, has added $440 billion to its market cap since the end of March. But as a result, it has a lot of short seller interest. So apparently, short interest as a percentage of the company's float is near a 52-week high. That's according to data from some analysts. And, you know, that makes sense because Intel is currently the most expensive chip stock. And so on a day like today, you know, you got to be watching out for some of those short sellers circling the market because they're also appear to be circling around Micron and AMD as well as the chip stock sell-off continues.
All right, so we will be watching Intel, but we've been watching Intel for a while now. What's second on your list?
All right, let's take a look at Qualcomm as well, Scarlett. Ticker QCOM. Those shares also really getting battered here, down more than 10% at the moment. You know, trading in a stock yesterday apparently rose to $10.8 billion. That is 267% of the 20-day average. So a lot of interest in the stock as well. Of course, we know that executives from Qualcomm are going to be part of that U.S. delegation to China as President Trump heads over to meet his counterpart Xi Jinping. And so we'll see, you know, if there are any kind of deals to be made there that Qualcomm will benefit from. But as of today, it just looks like it's getting ensnared again in this tech sell, particularly when it comes to semiconductors.
Okay, one more.
Let's take a look at Lowe's again today. So ticker LOW, that's down just slightly, 0.3%. We did get an upgrade for the stock. It was upgraded to buy from neutral at Citigroup. And analyst Steven Zacconi saying that Lowe's should at least beat first quarter street estimates for its earnings. Those are due on the 21st of May. And they're seeing the company continuing to outperform the industry. Lowe's is also apparently, quote, attractive to own in the current home improvement landscape because it's more exposed to DIY or smaller projects, and we know that consumers are kind of postponing their bigger renovation projects at the moment, but you know that's benefiting Lowe's as a company that caters more to some of those smaller projects that people are taking on.
I tell you, not down the short, every block in my town has either a major reno or tear down rebuild. Every block.
They're all going to be McMansions soon.
Exactly right. Exactly right. All the charm getting just ripped out of it. But they're putting out some nice homes, but it's just wowzer. Okay, Christina Aquino, thank you so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You know, we did get the eco data this morning, inflation data at the consumer level. Just the highlights, you know, CPI top line 0.6% month-to-month, right in line. Actually, a little bit less than last period. But core came in at 0.4, higher than expected, and twice what it was last month. So there's definitely some angst out there. And just the other headline number, on an annualized basis, CPI up 3.8%.
That's the one I can't stop looking at, right? Because that's a pickup from 3.3% in the prior period.
Yeah, that's no bueno, as they say in the trades here. Michael McKee, he's an expert on this stuff, international economics and policy correspondent. Mike, should we be concerned about this? This is, if I'm the Fed, I'm not liking the direction here.
No, you're not liking the direction. We had Austin Goolsbee, the Chicago Fed president, spoke on NPR today after the report came out, and the quote from him was, "We have an inflation problem." And it's sort of like, yeah. And what's worse, and this is more of a political problem than an economic problem, although it's bad economic news, is when they put out CPI, they deflate the average hourly earnings numbers to take out inflation. And in the month of April, people's average hourly earnings went down 0.2%. So you're losing on both ends. And that's a political problem for them.
I was just saying that to Henrietta Trez. If I'm at the RNC, I'm nervous, I would think. This isn't.
Oh, I'm sure they're very nervous. This is one reason they're trying to, gerrymander all the districts, because right now, if James Carville is right, which he always seems to be,
at some point, yeah,
it's the economy, stupid, and the economy is not looking good. We're not seeing the bad news of at the moment any kind of imminent downturn. We may see growth slow some, but it just depends on how long the war goes on and how long that means that energy prices keep going up. Not only did gasoline go up 5.4% today, but electricity went up 2.1%. So if you have an electric car, you're not all that happy either. But the thing is, the Fed can't do anything about it, really. So at this point, they can just watch. But that also means Kevin Warsh can't do a whole lot either.
But he also has a cover. I mean, he's got a reason why he can't do that much. So that was CPI, and that was today. Tomorrow we get PPI, which is wholesale inflation, which oftentimes is a leading indicator for CPI. What are we expecting to hear when it comes to wholesale inflation and what it might mean for consumer prices?
Well, probably worse news in the sense that they're capturing upstream prices. The difference between the two is CPI is what you pay. PPI is what the people who sell things to you and others charge. And PPI is obviously going up because at this point, they're paying tariffs and they're paying the higher prices for supplies that they can't get because of the war. So PPI is expected to hit 4.8% tomorrow, which is a wow kind
Even
of
more no bueno.
More no bueno. Now, it doesn't directly translate because there are a lot of middlemen between the sellers and you, but it does mean that there will be inflation in the pipeline. And the real question is, now we're 2 months into this, and even if the war ended tomorrow, which nobody thinks it will, the analysts for all these industries are saying, well, it's going to take 2, 3, 4, 6 months to normalize supply chains.
And we'll see a collision with the election by
and to
then,
bring prices back down. So at this point, it doesn't look good for anybody.
All right, so there you go. So we're also going to get, I guess the question is the consumer. I don't know. Consumer seems pretty good. I mean, I'm not seeing any terrible numbers out of
Fifth Avenue is crowded, right?
Yeah,
I mean, restaurants are hard to get into.
Yeah, but most people don't shop on Fifth Avenue. I mean, this is New York. It's a very different economic area. But if you go over to, say, the Bronx or Queens, you're not going to see the same economy. And what we're seeing is this K-shaped economy is definitely happening. And we saw, there was a Bloomberg story about it, CEOs saying that the retail customers are starting to fall off, starting to have trouble spending as much. And we see people shifting their spending patterns at the lower levels. The upper levels, they're fine. They'll always be fine because they're making money on interest and dividends.
And the stock market
going up. The stock market keeps going up, although Jamie Dimon said all those people are nuts today. But retail sales are expected to rise a healthy 0.5%, down from 1.7%, but 0.5 is still pretty good. Yeah. So, I mean, a lot of that is gasoline because it's denominated in dollars.
Gasoline, but at the pump this weekend, woman next to me in a big pickup truck filling up like 10 big gas containers for her
to take home.
No, for her landscaping business. She runs a landscaping business. I said, "Wow, this must be really hurting you." And she says, "What you're seeing right here was my profit for the week. Gone."
Wow.
Yeah, it's totally understandable. There's a stock, I don't know if Christine mentioned it, but stock I noticed this morning that it's down significantly is JB Hunt. the big trucking company.
Yep, JBHT.
And apparently their management is giving bad news on their earnings call. But the truckers and all the other transportation people are really, really suffering because diesel fuel is up even more. Yep. And we've talked about airlines and jet fuel, and we've talked about gasoline, but diesel fuel is extraordinarily expensive now, and that is hurting all of the people who deliver stuff, the big trucking companies down to the little guy.
I never understood the diesel thing. It's loud, it's smelly, and then it's more expensive.
But it's more fuel efficient.
I don't know. I was never a diesel guy. Now I'm definitely not a diesel guy. All right, Mike McKee, thanks so much. Appreciate that. International economics and policy correspondent for Bloomberg News. All right, so President Trump leaving today for China. He's got a plane full of executives, including executive for Boeing.
Yep.
And boy, when you think about a company that's leveraged to China, I always think of Apple, but Boeing's right there. And we want to talk to Sid Phillip about that, Bloomberg chief correspondent for global aviation, because this could be one of those trips where somebody, China announces a gajillion plane deal and, it's boom.
And actually it's something that the CEO has kind of hinted at already, saying that, Trump's visit would be, quote, a meaningful opportunity for us.
Yeah. All right. Sid Phillip, he does all this stuff for Bloomberg News. What are you expecting here on this trip for Boeing? What do you think Boeing wants to get out of this?
So Boeing's looking to secure its first big order from China in almost a decade. Wow. And so we understand it's going to be 500 737 MAXs and a large number of wide-body planes, and that would be significant because the Chinese airlines haven't really ordered any Boeing planes in a while. And
is that just because they're mad at us?
They were mad at, and there was COVID in the middle of it, and so the Chinese airlines actually need those planes because they don't really have a supply of Boeing. I mean, they operate both Airbus and Boeing planes, and they don't really have a supply of planes beyond the 2030s. And so if they want to keep expanding, if they want to keep adding more service, they need those planes. And this order is a way to get that.
Okay, so this order is a way to get that. I guess if you're an airliner, you're thinking, what's the next thing Boeing is selling that I want to get my hands on? I mean, not tomorrow, not next month, but down the road as I plan my fleet. Does Boeing have an answer to that? Because it feels like the company has spent so much time writing itself that it hasn't really put as much, at least outward energy into innovating the next jet.
So that's the really big question that the CEO, Kelly Ortberg, is really looking at. So while obviously you have the short term and the immediate issues that they have to ramp up production, they have to ramp up cash generation, reduce that debt pile. The bigger question for Boeing is where do they go from here? And the 737 is basically a long derivative of a 1960s jet. And so for Boeing, they need to decide what they do next, and that will be crucial in the sort of duopoly that they have with Airbus. And Airbus has been talking about how they are working on their next generation of product that they're aiming to get out in the middle of next decade. And that would basically allow airlines to get something that's more fuel efficient and allows them to fly greater distances with more passengers on them. And so what we understand is that Boeing is working on something that's more evolutionary rather than revolutionary, because the last thing airlines need is uncertainty. And when you have a product that's revolutionary, it always comes with teething issues. It comes with all sorts of complications with new technology and how that whole meshes together with existing infrastructure.
Yeah, we've seen that play out before.
Exactly. And so for the airlines, they want something that's stable, allows them to sort of keep going as usual and not sort of rocking the boat too much. And that's really key for Boeing. So how do you derive more fuel efficiency using evolutionary technology? And that's where we see Boeing sort of going in terms of their next products.
10 seconds. If I get a big order today from China, they can't even make the planes, Boeing. I mean, they have to build another factory or two.
So Boeing is in the process of opening a new factory for the 737. And they are looking at ramping up production. And they've been talking about how they've got these short-term goals. So they're currently looking at 42 a month. They're going to ramp up to 47 a month, then 52 a month, then 60. So essentially, for Boeing, they have a sort of stepped-up plan to ramp up production, depending on how the FAA sort of signs off on it.
The production will be in the U.S.?
It will be in the U.S. So Boeing produces all its planes in the U.S.
And I'm sure you're dying to know, but I am flying a Boeing 777 today.
Are you?
Yeah, the big dog. So on how that thing gets off the ground,
You
I have
probably
no idea.
know the seat map and everything, don't you?
Oh, yeah.
Yeah,
I know.
I figured
have
that.
I told you I'm a million-mile traveler on United Airlines?
He carries his card around all
I
day
have my
long.
little medallion. So
See?
All right, Sid Phillip, thanks so much. Appreciate it. Deputy Team Leader for Global Aviation. If you've got a problem with your flight, get in touch with Sid. He'll fix it for you. S&P down 64 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty-free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 0.9%. NASDAQ down 1.5%, the Dow down about 0.5%, the Russell 2000 index down 2.25%. The 10-year Treasury yield at 4.45% and the 2-year yield at 3.99%. WTI now up more than 4%, closing in on $102 a barrel, and Brent crude up 3.75%, topping $108 a barrel. Inflation continued to accelerate in April amid an ongoing climb in gasoline prices driven by the Iran war and a jump in the cost of groceries. Consumer prices climbed a sharp 3.8% last month. The figures show how the impact of the war is hitting the U.S. economy as energy costs surge. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney were live here in our Bloomberg Interactive studios. We're streaming live on YouTube, streaming live on Bloomberg.com as well. Sell-off in the marketplace today, but we've been just ripping it here. Market's been looking past the uncertainties of the Iran war, uncertainties of tariffs, uncertainties of rising inflation. But we got definitely a little punch in the nose here today on the inflation front with that CPI print. James Abate joins us here, Managing Director and Head of Fundamental Strategies at Horizon Investments. He's zooming in from New York. James, thanks so much for joining us here today. What'd you make of that inflation print today? And does that present maybe another little brick in the wall of worry here?
Sure it does. I mean, clearly, you know, the issue that's impacting the consumer today is that hourly wages have not kept up with consumer inflation. And this is resulting in real wages declining. It's being exacerbated by the impact on fuel prices and supply disruptions from the continuing conflict in Iran. I mean, today's CPI report reinforces these dynamics, as well as the continuation of the low-fire labor market, which is putting a ceiling on wage growth. You know, even last week, I don't typically put a lot of weight on the Michigan Consumer Sentiment Index because it's a coincident indicator and not really efficacious to other economic indicators. But that being said, it's hard to ignore the fact that the reading from last week was at a level lower than that during COVID, the collapse of Lehman Brothers, and even the harsh recessions of 1981 and 1974.
Yeah, no, that's a really good point. I mean, the soft data is usually poo-pooed, but at some point you do need to pay attention to it. And the anecdotal from company CEOs is that some of their customers are really having difficulty paying up and will continue to do so as long as oil prices stay elevated. So how much longer can we see this divide between the U.S. stock market just powering higher, and I know today being kind of an exception, and the data, at least when it comes to sentiment and soft data points, indicating that people are really not feeling good?
Yeah, there's definitely a stark difference between consumer spending expectations while corporate S&P earnings are moving higher, with even profit margins exploding to ever higher peak levels. I mean, just anecdotal news from Costco, Wendy's, Planet Fitness, etc. It's telling you that this year is we have two divergent economies. Investment is rising robustly while consumer consumption is slowing. You know, but you know, that being said, on the corporate side, growth and economic profits continue to improve. You know, after a 4-year manufacturing and non-tech investment malaise, we've got expanding sales growth, margins powering higher, alongside an increase in investment. So we've got operating leverage kicking in after a long period of restructuring and capacity utilizations as well. So, you know, clearly a big part of this investment boom is from AI. The big hyperscalers are set to spend over $700 billion this year and maybe $1 trillion in a couple of years. You know, this is another important point. You know, countries are starting to recognize the importance of AI within the context of national security. And the U.S. is home to almost half of the approximately 9,500 data centers in the world. So we'll see the rate of growth outside the U.S. pick up substantially over the next few years. And it's not just semiconductors. I mean, IT equipment is 80% of the $40 billion of a traditional data center. I mean, the rest is equipment. That's electrical, thermal, as well as engineering and what have you. So, you know, from our perspective, this doesn't include the power generation as well. So right now, stay with the picks and shovels, the companies that will profit, even if AI technology itself doesn't result in the productivity boom. But you're right. I think this can, put strain on the consumer part of the economy, which is almost 70%. But given the fact that we have a high degree of visibility on both AI spending from the hyperscalers, as well as the fiscal stimulus coming about because of a huge increase in defense spending, there's a continuation that those downstream type of beneficiaries, makes it worthwhile to we continue to see as ride the lightning by remaining concentrated in tech, industrials, and materials and infrastructure related companies.
Hey, James, that concentration risk is coming back into the marketplace. We'd kind of had some rotation out of the techs late last year, but boy, the big tech names are roaring back. I'm concerned about it. People are telling me, don't worry about it, because that's where the earnings are. How do you think about that concentration risk?
Well, the thing is, I've been around a long time. I've been managing money for over 30 years, and speculative manias have been up and down, and clearly today's level of speculation is very high. But the notable difference between now and maybe the dot-com era is that, it was PE expansion, not earnings growth, that was the principal driver of S&P 500 returns back in 99 and 2000, while profits and economic growth were stagnating. And even in the non-tech sectors, they were stuck in a recession that began with the Asian currency crisis back in 97. And, lastly, forget the Federal Reserve was tightening aggressively back then, amplifying the pressure on the industrial economy. And the 10-year note was almost 200 basis points higher than it is today. So, we don't have the speculative excess, I think, in the sense that, remember the number of technology-related IPOs that we had, which were breathtaking back then. I think there was almost 400 IPOs between mid-1999 and early 2000, most of which were just mundane consumer businesses that were lipsticked up as technology concerns. So, from our perspective, again, the thing is, continue to ride the lightning here with, the companies that are the downstream beneficiaries of this industrial CapEx boom that we're in, mainly technology, defense-related companies, infrastructure. But at the same time, don't be naive. And what we do is we maintain a protective put overlay to act as insurance against any significant drawdown coming about in the market if we see disruption to that very strong profit growth story that we see underpinning most of the market at this point in time.
All right, good stuff. James, thank you so much for joining us today. James Abate is Managing Director and Head of Fundamental Strategies at Horizon Investments. One of the stories, Paul, that's got you and me scratching our heads is eBay. GameStop's bid for eBay, a company that is 4 times its size. Ryan Cohen, of course, making this very dramatic takeover offer for the company. eBay has now rejected that $56 billion takeover offer, calling it neither credible nor attractive. I think that pretty much tells you what it thinks.
I did investment banking for a long time, and I can get very creative with capital structures, but I have a hard time seeing how they would finance this thing.
All right, let's bring in Cecilia D'Anastasio. She is our video game reporter here at Bloomberg.
Nice.
Great to see you, Cecilia.
Thank you for having me.
What was the thinking behind GameStop in making a bid for eBay?
We actually didn't get a lot of insight into what CEO Ryan Cohen thought that the proposed synergies could look like. He never really went out and said, hey, we run a video game, retail company, but also we're doing really well in collectibles. We're doing really well selling Pokemon cards. eBay also doing really well selling Pokemon cards and baseball cards. We could have heard that in any of the interviews that Ryan Cohen gave, but he didn't actually really go out and say that. In fact, when he was given questions about what the combined company could look like, he often sort of dodged.
So, what's the story with GameStop these days? I'm not a gamer, thank goodness. Most of my kids are not gamers. But it's almost a meme stock. But what's the real call on this company these days?
It's interesting because GameStop could be doing a lot worse than it is doing. They shuttered, thousands of stores over the last couple of years. It used to be a big ubiquitous presence at your neighborhood strip mall. And, gamers are increasingly purchasing their wares in online marketplaces and not at these physical storefronts. But GameStop is still hanging on. CEO Ryan Cohen said, we could be doing worse. It's not a great business, but it's hanging in there.
We could be doing worse is not a great line that you want to hear from the CEO of a company stock that you happen to own. So Having said all of this, there's been some reporting that perhaps Ryan Cohen just wanted to boost the stock price of GameStop because there's some clause, I guess, in one of his compensation packages that if the share price reaches a certain level, he gets another big payout. Can you talk us through what's going on there?
It's really hard to say. If the companies did end up combining, then it's possible that he would have been able to receive that payout and he would have been very happy. But also at the same time, a lot of analysts pointed out that the way that Ryan Cohen approached eBay wasn't exactly so friendly. You know, it was an unsolicited bid. He didn't publicly state what he thought the synergies could look like. When eBay came back saying that the deal felt neither credible nor attractive, I think that kind of speaks to this idea that, you know, maybe this wasn't so thoroughly thought out. I think a lot of analysts are very, very confused about the tenor of this.
CNBC interview did a lot to improve that outlook there. Yeah. I mean, what a disaster that was. So do you think GameStop would pursue a proxy fight and take it to that next step?
It's possible. You know, Ryan is a very unpredictable executive, which is part of what makes him really fun to cover. Yes. He posted a manifesto on X, formerly known as Twitter, describing how he thinks American business people are often taking a really risk-averse approach to running their companies, and he's really trying to carve out a model for something really different. So it's possible he would pursue the proxy fight. Wow. It's possible also that this was a publicity stunt.
Do we know who his advisors are, his investment banking or legal advisors? The only thing I saw was he's got a financing letter from TD Securities, which again tells you that.
Highly confident,
Highly confident for $20 billion.
I haven't seen that in 30 years. But we don't really know who his other advisors are.
He's a highly autonomous individual.
I like the way you put that. That was a great answer. It might even be a dodge in the same way that Ryan Cohen may not have answered some questions head on.
All right, so
okay. Telling.
Yeah, so we'll see. But that was certainly, I don't think anybody had that on their bingo card.
No. When that headline crossed, and I believe it was over a weekend, I remember looking at it thinking, what? How is this going to work?
Yeah, I don't know. We'll see. But you're right. He's a fun guy to cover. Cecilia, thanks so much for joining us. Really appreciate it. Cecilia D'Anastasio, a video game reporter, Bloomberg News, proud graduate of Reed College. I heard awesome things about Reed College out in Portland, Oregon.
Yeah, you learn how to think.
Yeah, and my son, who graduated high school from out in California, it was definitely a school they were pushing.
Oh, interesting.
Yeah, so I was like, Reed College. So I had to do all my Googling, and I was like, oh, wow, this is really good. So anyway, thanks for making it to New York. Looking at the markets here, S&P. Sell-off continues, down 63 points, kind of down towards the low of the day. The NASDAQ down over 400 points. That's 1.5%. So that's a pretty big move here. And oil higher, $3.50 on WTI crude oil, $101.50. Tom, Upper East Side, looking for his daily Bitcoin quote. Down about 1.7% today, but still sitting right at $80,000 per token. Not too bad. This is Bloomberg Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Chapter. The average couple spends more than $300,000 on health care in retirement. Want to know how much of that you could keep? Find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started. Inflation continued to accelerate in April, up 3.8% amid an ongoing climb in gasoline prices driven by the war in Iran and a jump in the cost of groceries. Bloomberg's Michael McKee.
I should mention that it is not good news for consumers because not only are prices up, but with the CPI out, they have now recalculated what your average hourly earnings are, absent inflation. Negative on the month, down by 0.3%. So you lost money at both ends.
Bloomberg's Mike McKee. That's got stocks and bonds moving lower. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.8%. NASDAQ down 1.5%. The Dow down 0.4%. Russell 2000 index down 2.1%. The 10-year Treasury yield at 4.44%. The 2-year yield at 3.98%. WTI up more than 3%, now near $102 a barrel, and Brent crude closing in on $108 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, very good. Amy Morris, thank you so much. We appreciate that. It is Scarlett Fu. It's Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube as well. AI, it's impacting seemingly all parts of our life, all parts of business and the economy. And that includes weather forecasting, but maybe some shortcomings there. Our next guest has some thoughts there. Gautam Mukunda, he's a lecturer at the Yale School of Management, and he is a Bloomberg opinion contributor. You say AI isn't built for bad weather's black swan era. What do you mean by that, Gautam?
Hey, Paul, good to be back. So it's about weather forecasting, but it's not just about weather forecasting. It's about the fact that we're using AI all over the place as a tool to use the past to predict the future, which is maybe the most fundamental of all human activities. And it's incredibly important. And it turns out that as long as you have enough and rich enough data about the past, AI can be incredibly good at it, even better than the tools we've used in the past, which in the case of weather forecasting involve, airplanes and physics models and supercomputers and weather satellites. So all of that is great. The problem is that the weather is changing. So the weather of the past may not be a good guide to the weather of the future. And AI is incredibly good at understanding stuff that happened within its training data set and incredibly bad about understanding stuff that's happening outside its training data set. And as I said, that is about weather forecasting, but it's not just about weather forecasting. It's about anywhere where we're facing this problem of using the past to predict the future, but the past is not like the future.
And in your column, you write, it will work right up until it doesn't. AI models have a tendency to fail in the biggest moments. And one example you give that I think anyone who's over the age of 18 can relate to is the value at risk models that banks used during the great financial crisis, where they relied on past data to predict how much risk they can each take on.
That's right. And that's another case of a tool that works really, really well under normal circumstances, so well that it gives you confidence, right? It makes you start to rely on the tool. You might even enshrine it in regulations so that when it fails, it's not just a normal failure, it's a catastrophic failure. So that's one layer of problem. The second layer is that often these tools can start to get used by people who aren't the people who built them and so who don't necessarily understand them very well. I was at MIT during the financial crisis, and I remember a very senior risk management person at one of the banks at MIT saying to a group of us, I saw 6 sigma events on 3 consecutive days, so the markets are weird. And I just stared at him and I said, that doesn't mean that the markets are weird. It means that your tool has failed because 6 sigma events 3 days in a row will not happen in the entire lifespan of the universe, right? That's how rare we're talking about is. And this was a person who, they were very smart, but they didn't understand what this meant.
So, I think one of the AI question marks, Gautam, right now is AI going to create jobs in this economy or destroy jobs in this economy? I'm not sure we know that. Do you have any thoughts on that?
Well, I think we know that the answer is both. It's going to destroy some jobs. It's going to create others. The data on AI job destruction, the actual empirical data, is pretty weak. It looks more like companies that overhired or that are looking to cut costs and are kind of blaming AI for what they did. But at the same time, there are going to be some big transitions, and all of the standard models that we have, they're all about bank tellers or things like that tell us new technologies don't create don't destroy jobs. They don't destroy jobs in aggregate, but they destroy some jobs, and the transition can be really hard for the people who are going through it.
So you are a lecturer at the Yale School of Management. How does higher education prepare young people, graduates, those who have some working experience are going back to school and want to come out, with a better skill set to prepare for this world?
So I think there are two things we need to think about really hard here. One is that one of the really interesting things about AI, at least as it's currently structured, is it seems to be a magnifier, not a compressor, right? So if you think about power tools and construction equipment made brute physical strength less important if you were working in manual labor. So they compressed the differential in productivity between people who were physically very strong and people who were less strong. But there are other sorts of technologies that they increase the differences in capability. So someone who normally would be twice as capable becomes 10 times as capable. AI looks more like something in the second pool, right? It looks like it takes people who are good and it makes them great, but it's not that useful if you're not already an expert in the field. And so someone has to create those experts. That's the one thing that schools can do. The second thing is that schools are, at their best, and not all schools do this all the time. I'm not defending that, saying that at all. But at their best, schools can teach people to think independently of these skill sets. And you're even seeing AI companies coming out and saying that humanities skills are really, really important.
Yep, that's what I'm hearing.
Yeah, so something I've been quoting at all my programmer friends with great joy is when there was all this turmoil before, people were saying they would the responsibility would be you guys need to learn to code, right? And so now the AI is doing the coding, and I said you guys need to learn to ode.
So, that kind of goes to one of the things I'm learning from the young folks is it's the ability to ask AI the right question.
The prompts.
Yes, the prompts. And in your world, in your day-to-day at a university environment, Gautam, how's AI impacting your world?
So a lot in multiple different ways. So it's not just learn the prompts. It's you have to know enough to know when the AI is wrong. Mm-hmm. That is actually, I found, the single most important skill. So I used AI to help me create the syllabus for a course. It was amazing. It took what would have been a week of work and let me do it in a day. I was blown away. But several of the things that it gave me were wrong in ways that you had to be an expert to understand were wrong. But another expert would have seen this and thought I was an idiot. Right. So that was a really important distinction. And what you're seeing first is look, cheating is a huge problem. We've had to crack down on that. Written exams, take-home exams. I think I'm really sorry to hear that. See that happening, but it's really happening. And I tell my students on the first day, I'm like, you probably can cheat. And, look, honestly, I can't tell you if I'm going to catch you or not. Right. The tools to catch you are not that great. But you're going to cheat yourself. What you want here isn't the grade. Nobody cares about your grades. What you want is the learning. Right. And you get the learning from doing the work, not by asking ChatGPT to do it for you.
Yeah, and you're cheating your parents because they're paying the tuition bill.
I thought I was a little guilty about using Cliff Notes, and
that's child's play in comparison.
I know. Yeah. Taking it to a whole new level. Gautam, thanks so much for joining us. Gautam Mukunda, lecturer at the Yale School of Management. He's also a Bloomberg Opinion contributor. I was speaking at an event a while ago, and a bunch of college students were there. Mm-hmm. And they weren't like, oh, yeah, we used AI today. No, AI is their life. It's everything they do. Whereas I'll say, hey, I used AI to solve this problem. And they're just like, no, it's everything. It's like me, how I think about just using search or social. That's how ingrained it's getting in for these kids.
But the risk there, as Gautam was saying, is that they don't develop any domain expertise. So if you don't have that expertise, then what do you offer in the world? What's your distinction?
I can't even imagine how educators from kindergarten to higher learning are even thinking about
Ignore
this.
That powerful machine next to you.
Oh, boy. We'll see more. More coming up. This is Bloomberg.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Earnings season, we're still in it, particularly for the retailers. So we'll get to that in just a moment. Scarlett Fu and Paul Sweeney live with you here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Under Armour reported some numbers today. I didn't see them, but they can't be good. The stock's down 16% here. But I know somebody who does know what's going on here. Lily Myers, she's a retail reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. What did Under Armour have to say that maybe the market didn't go for?
Yeah, so I think Under Armour disappointed investors. I think that their revenue for next year, or this current year, is not as high as they expected, and their earnings per share was also lower. They also mentioned the Middle East conflict as impacting their sales and the split from the Steph Curry brand hitting their bottom line.
My question with Under Armour, I'm a Nike person, by the way, full disclosure. Always have been, and I'm not switching. But it's competitive. I mean, there's Nike out there, Adidas, for those of us in the know, we pronounce it that way. And I'm just not sure. And there's so many niche players. I mean, the kids here at Bloomberg, they were in all different kinds of sneakers that I've never seen before. How does Under Armour fit in there, do you think?
Yeah, I mean, I think it's a really competitive space, like you described, both on the footwear side and the apparel side. I know Under Armour, as part of this restructuring plan that they've been going through recently, has been trying to really slim down the number of SKUs that they sell, you know, kind of streamline the products and also cut back on their discounts.
So is this, you know, I understand that it's really a product-driven business. You can't just crank out the same sneaker year after year after year. I mean, every year, it's like fashion. It is fashion.
Mm-hmm.
Do they have the resources? Do they have the capabilities to really compete against the bigger players?
Yeah, I mean, it'll be interesting to see. The hard thing with some of the retail innovation cycle is that it takes like 18 months, you know, to start seeing some of that new product actually hit the shelves. So I'll be interested to see what they come out with.
You mentioned they lost Steph Curry. That's a big name.
Mm-hmm.
How do they think about using athletes as part of their marketing promotion strategy? Is it core to them? And how big of a loss was like Steph Curry?
Yeah, so for Steph Curry, I mean, that was a big deal. They had worked with the Curry brand for a long time. That was a really essential part of their basketball business. So this quarter, they said that for this coming year, the Curry brand separation made it so that their revenue was down slightly. If they had stayed with Curry, it would have been flat for the year. So it'll be interesting to see, you know, if they try and sign more big names or what comes next.
I mean, there's kids coming out of college every year. Are they going to be aggressive? What did they say their strategy is there? Because it's a tried and true strategy, particularly for athletic wear. Nike's seen it. I mean, Michael Jordan, you know, that's the great example. But are they committed to that strategy, do you think?
Yeah, that's a good question. I mean, they definitely work with athletes. I'm curious to see how that will evolve moving forward, especially without Curry.
What's the tariff situation with some of these shoe companies these days? I mean, do they even talk about it anymore? Because I know a lot of the retail companies, and others as well, used to just give you a number. It cost us $500 million this quarter, or $40 million this quarter. Is it still an issue for these apparel companies?
Yeah, it's interesting. So it's switched a little. Now they're talking about what their expected tariff refund will be. So they're baking that in more on the positive side. I think, you know, there's a lot we still don't know about what companies will get out of tariff refunds, if they'll get the full amount, what that process will actually look like, how long it will take. But that's the discussion now, is, you know, the upside from that refund.
Now, companies have actually, you have to go like file and say, I want a refund, right?
Mm-hmm.
Now, has the Nike done it? Like, I'm thinking of the big name in your retail store. Has Nike actually done that, for example?
Yeah, so a lot of major retailers have sued for tariff refunds, and I think it'll be interesting to see as they become more of a reality how companies will go about it.
There still really isn't there isn't, I guess, a policy framework to get the money, right? They're still working on that?
From my understanding, I think it's still in process.
Now, the question is, if Nike gets money, what do they do with it? Do they give it back to me, who paid a tariff on my kicks here, or what? We don't know that.
Yeah, I mean, I think that will be really an interesting thing to watch. I think consumer reaction will be interesting. You know, consumers who have had to face those higher prices, but also the company that's had to shoulder a lot of it.
Yeah, it seems like most of the companies have taken it in their margin as opposed to passing along to consumers. Lily, thanks so much for joining us. Appreciate it. Lily Meyer, retail reporter, Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. Under Armour out with some numbers. Stock trading down about 15-16% here today. Just looking at the markets here, sell-off continues. S&P off 65 points, the Dow off 160 points, but the Nasdaq's really where the pain is. The Nasdaq's off 445 points. That's 1.7%. A lot of contributors out there. That inflation print coming in higher than expected this morning calls into question the Fed and what they will do. Will they cut rates? It doesn't seem like it. Also, there's some concern out there about the oil market, which has been a big driver over the last 10 weeks of equity prices. We've got oil up about 3.5% here today. WTI crude oil, $101 per barrel. You don't like to see that. Brent, remember, WTI crude oil was below $60 a barrel before the war started, so a big, almost a doubling there. Brent, 107 per barrel, just under $108 per barrel, $3.40 higher here, so not what you want to see. In the bond market, we have yields higher. We got the 10-year Treasury yield up almost 4 basis points, 4.45%, so we'll keep an eye on that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121. It's presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. The sell-off continues. The dollar showing a little bit of strength here today, so we'll see how that plays out. DXY 98.37. More coming up. This is Bloomberg. Good morning.
From ABC News, I'm Michelle Franzen. Top Pentagon officials back on Capitol Hill briefing lawmakers about the growing costs of the war with Iran.
At a House hearing, the Pentagon's chief financial officer provided an update to lawmakers on the growing cost of the war. Jules Hurst previously said it was running upwards of $25 billion.
Now we think it's closer to 29. That's because of updated repair and replacement of equipment costs.
Importantly, Hurst says that estimate does not include the cost of rebuilding bases damaged by Iranian missiles and attack drones. That cost will depend on what the Pentagon determines should be rebuilt. Stephen Portnoy, ABC News, Washington.
President Trump departs later today for Beijing for his meetings with China's leader. Secretary Pete Hegseth says he'll also travel to China. Economic pressures, meantime, due to tariffs and the war, showing up in the latest inflation data. Here's ABC's Elizabeth Schulze.
This inflation report shows that prices are going up overall at the fastest pace now in 3 years, that 3.8% inflation rate. A lot of that driven by the spike in gas and energy that we've seen since the start of the Iran war. So that rate, that 3.8% rate, we have not seen inflation been going up at this pace since May of 2023.
The Federal Reserve Bank of New York, meantime, releasing data showing household debt for Americans reached an all-time high of $18.8 trillion in the first 3 months of this year, driven by higher balances on mortgages and auto loans. 18 passengers from the Dutch cruise ship hit with the hantavirus outbreak remain in quarantine at facilities in Nebraska and Georgia. One person tested positive, another developed symptoms. Officials say the majority are asymptomatic. Passenger Jake Rosemarin says he'll stay in Omaha for the full incubation period.
My plan right now is to stay for the full 42 days. I think that is the best decision that's for me and for my family, and I know that here I'm in the best care possible.
You're listening to ABC News. British Prime Minister Keir Starmer fighting for his political life, with dozens of members of his Labour Party calling on him to resign. Those calls for Starmer to step down have ramped up after recent elections. ABC News chief foreign correspondent Ian Pannell is in London, outside 10 Downing Street.
The Labour Party was trounced in the polls and in the vote last week in local elections across the country, losing its share of the vote and losing a key number of council seats in areas that have traditionally been strongholds for the Labour Party.
Britain has had 6 prime ministers in the last 10 years. In Texas, an investigation into a possible human smuggling case growing wider.
6 people thought to be undocumented immigrants were found dead Sunday in a rail car in Laredo. 150 miles away, the body of a man was discovered alongside a railroad track in San Antonio Monday. And Sheriff Javier Salazar says there's a connection.
Our belief at this point is that it was most likely smugglers, coyotes that opened it from the outside, discovered this body, and dumped it out.
They then closed the rail car again, leaving the 6 other migrants to die inside. Jim Ryan, ABC News, Dallas.
Millions of residents in western states facing another day of record-breaking heat. An extreme heat warning in place for the 3rd day in a row for Phoenix. Temperatures there could climb to 108 degrees. And a heat advisory in Central California with temperatures also in the triple digits. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's China or bust. Welcome to the Tuesday edition, with President Trump set to fly to Beijing today for his summit with Xi Jinping at the end of the week, even as the Strait of Hormuz remains closed and a peace deal with Iran elusive. We're going to talk about the expert in the room here, Jennifer Welch at Bloomberg Economics, with her view on what's happening. And the impact of the war with Iran is now showing up in consumer inflation data. We'll get to that with Bloomberg's Michael McKee, with analysis this hour from our political panel, Geopolitics, with Jeannie Shanzano, our Bloomberg Politics contributor, and Lester Munson from BGR Group. And we start, as always, with a look at Wall Street. Let's get to the markets today. A little sloppy trade with Amy Morris. She's got it covered here in Washington. Amy, how's it going?
It's going into the red, Joe. Thanks so much. Yeah, that sell-off continues. We do check markets for you all day long here at Bloomberg. S&P 500 down 0.8%. NASDAQ down 1.5%. The Dow down 0.3%. The Russell 2000 Index down 2.25%. 10-year Treasury yield at 4.45%, and the 2-year yield at 3.99%. Let's check the oil now. WTI crude oil is at $101 a barrel. Brent crude is closing in on $108 a barrel. The consumer prices jumped in April. That was led by higher energy prices. Consumer price index rising 3.8%, up from 3.3% in March, and the highest since 2023. That's one of the things the market's reacting to. The Fed also watching as inflation has run above its 2% target now for 5 years, while a stable labor market is removing any urgency to cut rates. eBay rejected a $56 billion takeover offer from GameStop, describing the bid as neither credible nor attractive. eBay's board turned down the offer because of uncertainty around the financing plan, operational risks, and GameStop's governance. eBay shares little changed. GameStop shares now down about 2%. CME Group, the largest U.S. derivatives exchange in Silicon Data, are teaming up to create a futures market for computing power. And BlackRock's Larry Fink suggested the demand for computing power is so large, it will create a new asset class.
The United States is short power, we're short compute, we're short chips, and there are going to be shortages in all three. I actually believe a new asset class will be buying futures of compute. We just don't have enough compute power right now.
BlackRock's Larry Fink spoke at last week's Milken Institute annual conference. CME shares more than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Great to have you along for the ride today. Amy Morris will be back with more on the markets in about 15 minutes. It's worth keeping tabs today with the way this is shaping up here. And we're just getting some breakers that I should mention on the terminal. This just went red, and it's important when we consider the idea of a SpaceX IPO taking place in the weeks or months ahead. SpaceX and Google entering talks now to explore data centers in orbit. Data centers in space. The Wall Street Journal has the headline here. Google shares, which have been on a tear lately, are actually a little bit lower right now. We shouldn't read into it probably too far, but down less than 1%, $3 to $384 roughly. Sam Altman, by the way, taking the stand in the big Elon Musk suit over OpenAI. We've been deeply curious to have an ear on this testimony, and we'll let you know what we learn as we get ever closer to it. Thanks for being with us on the Tuesday edition of Balance of Power. This is an important day. The president's going to be wheels up in a little while as we cover the trip to Beijing here on Bloomberg Radio, on satellite radio channel 121, and of course streaming live on YouTube. Get in there at some point during the show. There's a lot we're going to want you to hear and see. Search Bloomberg Business News Live to catch our video stream. And of course, we'll welcome our global television audience to the program in hour 2. Executive time for the president, a print interview, as they call it, on the guidance, and then the departure en route to Beijing without an actual time on the schedule here, although in the next couple of hours, he is expected to walk out of the South Portico. We'll see if he takes some questions. Unless he's coming out of the Oval, they'll have the motorcade lined up ready for him. Unless he's taking the chopper, we'll see. It's actually pretty nice out. I suspect he'll be flying to Andrews. And then it's a long ride. He's going to have a lot of people along with him on this trip. We talked about this yesterday, thanks to the great reporting of Jeff Mason at the White House. Just about every high-tech CEO in America, with the exception of Jensen Huang, going on this trip, beginning with Tim Cook, Elon Musk, and right on down the line. Even Micron and Qualcomm got the invite. There's going to be some heavy-duty meetings going on outside of the president's summit with President Xi. And, you know, he's been laying down the rhetoric in front of this visit for some time, talking about the strength of their relationship, the respect that he has for the leader of the second-largest economy in the world as we remember the ways. Listen.
We're leading China in AI. And I'm going to go see President Xi in 2 weeks. I look forward to that, but I'll say I'm leading. We have very friendly competition, but it'll be a very important trip. We're doing a lot of business with China and making a lot of money. We're making a lot of money. It's different than it used to be. But I'll be talking about that'll be one subject. But he's been very nice about this. You know, in all fairness, he gets like 60% of his oil from Hormuz, and I think he's been very respectful. We haven't been challenged by China. They don't challenge us. We're going to have a meeting with President Xi. It's going to be, I think, quite amazing. He's been a friend of mine. I've gotten along with him very well over the years.
Sounds like we're going to have a slumber party at some point here. But as I read on the terminal, Trump faces emboldened Xi in China as Iran war clips U.S. leverage. Indeed, this now 2-month-long war with Iran has changed the game here. And they'll have a lot more to talk about. Trade, tariffs, Taiwan, and maybe they'll intersect. And as the president gets ready to close the bags here, you know, you got to zip up the suitcases pretty soon to make this flight. We spent some time with a real expert who's had her eyes on this region and this administration for some time. That, of course, would be Jennifer Welch, who is our chief geoeconomics analyst at Bloomberg Economics and with us live in studio here in Washington. Jenny, it's great to see you. A lot goes into a trip like this, and you've been part of making plans in a prior administration for similar trips. Usually there is a playbook. There's a very clear set of expectations on what's already been agreed on, and in this case, we have neither. What is the president flying into?
So I think what he's flying into is 2 days of meetings, really more like 1.5 days with Xi Jinping, including sessions where it's just going to be the two of them, sessions where it's going to be expanded with senior members of their cabinets, and the Chinese equivalent to it. And I think what's going to be on the agenda is what I would frame as relatively low ambition deals. In the sense of maybe they'll make some deals on soybeans, maybe they'll come up with this new mechanism, a board of trade to manage trade ties between them, but we're not talking about strategic changes in their relationship. We're not even talking about hammering out some of the major points of friction, like Iran, like the tech competition. They will touch on those issues, but I'm not envisioning them coming up with a strategy or a mechanism for really changing fundamentally those frictions.
Well, that's fascinating. Let's tick through these a little bit here, because that sounds like a letdown, potentially a letdown Donald Trump, if he cannot leverage President Xi, for instance, to help reach an end to the war in Iran. You don't see that conversation happening.
Look, I think President Trump will raise Iran with President Xi, but I also think he doesn't necessarily want to put China in the position of being a decision maker there, right? And I think President Trump is going into this with the idea that if he can walk out with some deals, Boeing jets, more soybeans, for example, maybe even more U.S. energy purchases, that's a win. And he's also, I think, very much looking forward to the pageantry of this visit, right? That he will be hosted for a major dinner. I think he said it's going to be wild, and he's asked Xi to make it even bigger than his last visit in 2017. We'll see, you know, what Beijing actually delivers on that front. But I think for him, the opportunity to travel abroad, to have the headlines be about something other than Iran, that in itself is a win. So I think he's actually probably pretty comfortable with where things are likely to net
Does
out.
she have an ask for Trump? You just closed the strait where I get more than half of my oil. What do we do about this,
I'm sure
Mr. President?
President Xi will definitely be raising the blockade and China's deep concerns about reopening the Strait of Hormuz, ideally free and unconditional. They also are concerned about the idea of tolls or other sort of regulated passage through by Iran. And that's the message I'm sure that they have been sending to Tehran, including when the foreign minister was in Beijing recently. I think the second major issue that China is really likely to harp on is Taiwan, and in particular, U.S. arms sales to the island.
Okay, let's get into this. The president acknowledged it yesterday that it's going to come up. What does he mean when we're going to talk about weapons sales to Taiwan?
So I think what he means, but he left a lot of ambiguity there that's gotten people uncomfortable. He said something similar back in February that also had us all spun up about, is he talking about negotiating U.S. arms sales to Taiwan with Beijing, which is explicitly against U.S. policy. I think what he meant, giving him a little bit of the benefit of the doubt, is more, she doesn't like the fact that the U.S. sells arms to Taiwan. We're going to talk about Taiwan. I don't think he meant we're going to, in policy, start to negotiate this issue with Beijing.
It's just two guys talking.
Yes. Now, to be clear, though, there are plenty of risks still there. Taiwan, as someone who wrote the talking points for President Trump and President Biden on this issue, it requires a real delicacy and, frankly, pretty esoteric language that the average person would not necessarily come naturally to. And the risk that you have, especially with someone like President Trump, who likes to talk his own way about things and not necessarily rely on formal talking points, is if you deviate even slightly from that, it can send inadvertently a signal to both Beijing and Taiwan.
Somehow no longer the ambiguity that we're seeking. Will President Xi ask for a change in language from the president on this?
There's been reports dating back to last fall that he was going to pose this to President Trump when they met in Busan. I'm personally a little skeptical. I think that it would be a little bit below President Xi's level. It would also be sort of implying to President Trump that she is okay with the United States having a position on these issues, when China's policy for decades has been, this is an internal affair, stay out of it. And so to ask the United States to rephrase their language on it, that definitely comes up in lower level dialogues. But I think for Xi in a leader level meeting, he's probably more likely to focus on more material things like the arms sales. Now, I'm sure he'll raise it. And the risk, again, is that the difference between the United States not supporting Taiwan independence and the United States opposing Taiwan independence, those seem like synonyms to the average person. In the context of Taiwan, they're actually pretty significant.
This is what I mean by expert view. Now, Jenny, you mentioned jets. It did jump off the page for some people when you see the CEO of Boeing and GE Aerospace, I believe, are both on this trip. You go all the way back to COVID and the reopening, and there was a hope in the first administration and then later in the Biden administration that this massive Boeing deal would somehow cross the finish line, and it's really never happened. Is this the time?
I think this might be the best opportunity.
China needs jets.
China needs jets. They've been trying to make this sale for a long time. This is the first presidential visit to China since 2017. As you mentioned, there have been a lot of senior level delegations. I recall when Gina Raimondo went out under the Biden administration, there was a lot of hope that she would get it over the finish line. I do think that there's more optimism this time around, including from Boeing, that they think that something might happen. And the administration, too, has talked about the likelihood of deals happening, although they couched it a bit and said, maybe we won't announce them until after the trip. But I do think that there's the likelihood of something happening on that front. It's also somewhat easier for China to promise to make this big purchase when in reality it's going to take time for that delivery to happen, and it kind of like launches a process. That's often something we've seen in the past.
So let's keep watching the fine print. Jenny, thank you so much. She makes us smarter every day around here, including her whole team, the geoeconomics team at Bloomberg Economics. They're the best we have. Jennifer Welch, look for her on the terminal and online. Michael McKee comes in next as we turn to CPI. It's starting to warm up thanks to Iran. This is Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Inflation continued to accelerate in April amid an ongoing climb in gasoline prices driven by the war in Iran and a jump in the cost of groceries. Consumer prices climbed a sharp 3.8% last month. The figures show how the impact of the war is hitting the U.S. economy as energy costs surge. Checking those crude oil prices now, WTI topping $101 a barrel, Brent crude nearing $108 a barrel, both WTI and Brent more than 3% higher. A chip maker sell-off driving stocks lower. We do check those markets for you all day long here at Bloomberg. The S&P 500 down 0.9%, NASDAQ down 1.6%, the Dow down about 0.4%, Russell 2000 index down 2.2%, the 10-year Treasury yield at 4.45%, and the 2-year yield at 3.99%. Let's check Bitcoin really quickly. It's down 1.8%, hovering around $80,000. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that's a Bloomberg Business Flash. Let's get back to Balance of Power with Joe Matthew.
All right, Amy, thanks very much. Spending the day with us here on the fastest show in politics as we connect the dots between Washington and Wall Street. Amy will have more on the markets in just about 20 minutes' time. Of course, connecting the dots between conversations on this program as well. You just heard from Jenny Welch talking about, of course, the closure of the Strait of Hormuz, how that plays into the president's meeting with Xi Jinping. And now we turn to the impact that the war is having on our economy here. You know, James didn't become America's producer just because he throws this whole thing together in the morning. There's thought that goes into this program. With some help from Francine Lacroix and, in a moment, Michael McKee. Francine sat down with none other than Jamie Dimon today, of course, the J.P. Morgan CEO, and they're out there at the big J.P. Morgan Global Financial Conference in Paris to talk about the fallout here, which no one can really quantify because we don't know how this is going to end. Here's what Jamie Dimon said.
It's a big deal, and every day it gets a little bit worse. I don't know how it's going to be resolved. I hope it gets resolved in the interest of the United States and against the Iranian regime, not the Iranian people. But I don't know. But I read something that was very interesting, that China reduced their demand by 5 million barrels a day. America increases exports by 3 million barrels a day. That 8 million is made up for a lot of what was lost, and which is maybe why it hasn't been as severe as people think. On the other hand, inventories are coming down. You know, gas wells may have to be closed and stuff like that. So it gets a little more serious every day. That day that it becomes a disaster has been pushed out quite further than we thought at the beginning.
Do you worry about the U.S. consumer? Are you seeing signs of stress anywhere?
I think the upper end, the top 50%, lots of money, jobs, wages going up, home prices going up, stock prices going up. They're spending like they should, you know, like they're buying, they're traveling. The bottom 30% is, I'm going to say, it's struggling a little bit. It's not a massive downturn, and of course, we'd like to help them, but their wages have not gone up. But more important than that, they still have jobs, and they don't have too much debt. They still have jobs, and that, you know, at the end of the day, what's going to drive consumer spending, consumer sentiment, that part of corporate profits will be jobs.
What do you worry about? I know there's also the president is meeting with President Xi tomorrow in Beijing. I mean, does that have implications for the trajectory of America?
Look, I don't know, but I would suspect they'll come up with that'll be a friendly meeting with some positives from both sides. I don't think China's going to give in to any major demands. I don't think we're going to make major demands. You know, we both have a lot of common interests. You know, anti-terrorism, anti-nuclear proliferation. You know, China is feeling its oats. You know, they have to deal with President Trump, so we'll see how it turns out.
Okay, you had an amazing trading, actually, results. Trading was amazing in the last quarter. Yeah. How's it going now?
Well, I can't comment on that. But, I mean, from the last time Troy spoke publicly, it was fine so far, but I can't give you other information than that. So.
Give me a sense.
But when you guys can see every day, volumes
are high.
Yeah, and when volumes are high, all things being equal, it will be good for trading.
But you're part of it. I mean, it's you think it's going okay because it depends on the kind of trading that you put, right? You benefit.
Trading is going to be very good.
Talk to me about AI.
Yeah.
So I don't know whether you've also played around with Mythos. What did you see?
Yeah. So AI, big picture, AI is going to cure cancers and reduce work weeks, and kids will live longer, and planes will be safer, and cars will be safer, and less people die, and you'll have new drugs. It's going to be good. And, you know, but we've been using it now for 13 years. It does an amazing job in various different things. So we're going to deploy it to help our customers. There are two attributes that people worry about. One is Mythos. It's legitimate that this is so powerful and covers a lot of vulnerabilities. And we're all trying to figure out how to deal with it, not just for ourselves, but with all of our friends. Yeah. Big banks, small banks, you know, telecom. The government's on top of it. A lot of the work will be done by enterprise. They don't have the ability to do a lot of that. So I think, you know, Scott Bessett's running it for banks, and I assume they've done it for other people elsewhere. So we're all getting our hands around it. It is risky. Everyone, and we actually publish, and people should look at this, like a list of what you can do now. Don't wait to get Mythos, because everyone's going to get it at one point, but you can't give it to everyone. If they can't handle it, or if it gets leaked out, it can be used by bad guys before we protected open source code and all our code. And so we need a little work to do to get it done right. And the other one is this job disruption where, you know, That may be true. We should get prepared for it. We shouldn't be breathless. And that to me is how do you create skills and reskilling. There will be a lot of jobs. And AI, cyber, advanced manufacturing, the trades, and then we should make sure locally, and this is between government and business kind of collaboration, that we are prepared if it happens too much. Stop talking about it. Have a plan.
Stop talking about it. Have a plan. Jamie Dimon, fascinating conversation coming from Paris, the JPM Global Markets Conference. If you were listening on the radio, you might be wondering, why are we yelling? They were set up in the lobby there. Maybe we get a conference room for these two poor guys to have a conversation. Made some news there, though. Everything from Iran to AI. And this hits on the same day we get a CPI report that Wall Street's actually worried about now. This is the stuff that some economists have been predicting. The strait stays closed long enough, forget tariffs for a minute, and it's going to start bleeding into even, yes, the core. U.S. inflation accelerating in April, as I read on the terminal, due to rising gasoline and grocery costs, exceeding wage growth, which I believe had its first negative read in years. Michael will let us know about that. CPI up 3.8% year over year, 3.8%. Gas prices, talk about it every day here. We're at $4.50 nationally, up almost 28% over the past 2 months. That hits everything. That goes into your groceries. You know how that goes. Rents and airfares, yup, big increases. So if you're Kevin Warsh, what the heck do you want to do? By the way, how about this for timing? He's confirmed. Senate got it done. Not a shocker. The first of a couple of votes that will resolve with Kevin Warsh being the Federal Reserve Chair, confirming him to the Board of Governors. The next step is the big one, then the swearing in and the internal vote, if I have all that correct. The stages of the Fed Chair. A live view of the Senate as they get this done. That's why I told you, get on YouTube, search Bloomberg Business News Live. It's happening as we speak with Kevin Warsh, now confirmed to join the Federal Reserve Board of Governors. What a great time to have Michael McKee standing by. He's at World Headquarters in New York on this CPI day and, I guess this confirmation day. Michael, it's great to see you. How concerned do we need to be about these numbers? The strait, even if it reopened today, we're closed, wouldn't be flowing normally for months. How bad can this get?
It can get a lot worse. I mean, Jamie Dimon reminded me of two quotes about having a plan. Tim Geithner always used to say, plan is better than no plan. And Mike Tyson said everybody has a plan until somebody smacks him in the face. And I think the president and the administration just got smacked in the face by economic reality as you shut off the Gulf of Hormuz, the Strait of Hormuz. And oil prices are going to go up, which means gasoline prices are going to go up 5.4% last month alone. And then other things are going to start going up in price as well. And we saw that slightly with food, but some other products. So this is only going to get worse.
So does Kevin Warsh, newly confirmed, have a brand new pair of handcuffs on here?
Well, he's newly confirmed as a governor. He'll be confirmed probably tomorrow as the chair, although, as I understand it, they're moving into the cloture vote to set up that vote now. So,
but once he's got the job, I mean, this is these are the handcuffs that will keep him from cutting rates.
Exactly. He's not going to be able to come in and cut rates, even if he could convince the other 18 members of the Open Market Committee, which I'm fairly certain he can't. The markets wouldn't let him, not with inflation like this continuing to rise. So he's got to sit back and wait until there is some end to the war and some visibility into when prices might start coming down. Because the thing that's going to really make it worse is, oil prices go up, they're immediate. But the second round effects, the things that you use petroleum for, are starting to seep into all of this. I noticed today J.B. Hunt, the big trucking company, stock's down tremendously. They use a lot of diesel, and diesel's up even more than gasoline. And that goes into these transportation costs, and the transportation costs are then get passed on to the consumer. So this is going to be a problem for a while.
The transports are all having trouble here for good reason. And even if you start talking about eliminating the federal gas tax, and diesel is a larger tax, it's a drop in the bucket here. Fetterman, not a shocker, the only Democrat to vote with GOP. James got the vote here, 51-45. I'm guessing that's basically what you expected here, Michael, to kick off a 14-year term for Kevin Warsh. No other Democrats like this idea?
No other Democrats, and the idea that Fetterman would vote for him is not a surprise. He voted last night for cloture. What was a little bit of a surprise is Chris Coons, the Delaware senator, voted last night for cloture, but then today voted against Kevin Warsh. I'm not sure what you accomplish, except maybe moving it to the floor to get it over with. But right now,
for it before I voted against it.
Yeah, right now I suspect that we'll get a very similar vote tomorrow. But they haven't scheduled it for tomorrow, but the expectation is it will be tomorrow for chair.
Average hourly earnings, I mentioned at the top of the conversation, Michael, in our remaining moment here, down 0.3 from the year before. That might not seem like a lot, but it's the first drop in 3 years. What do you do with that number?
You cry to your boss, I need more money. I mean, this was a report that showed the consumers were losing on both ends. Their incomes aren't going up now, and their outgo is continuing to rise. So it just makes it a worse political problem for the president. I'm not sure how much people pay attention to real earnings, inflation-adjusted earnings, but they know in their paycheck when it comes in, and they know when they have to spend the money at the grocery store or the gasoline station that things are not good.
This is Trump data, right?
This is all Trump data. Yeah, this is all Trump data, and all of the turnaround has been since the war started. CPI was moving lower. The Fed looks at PCE, which is runs a little bit lower than CPI, but is still going to be a big number for the month. And that's bad news for the Fed, bad news for consumers, bad news for the president.
I had to ask because we were arguing about that for like a year. This is Biden data, so this is Trump data.
This is Trump.
And we've got something to worry about here. Michael, great to see you. The great Michael McKee with us live from New York with $4.50 on average for a gallon of gas today, according to AAA. We'll have more on the markets with Amy coming up, and we'll assemble our political panel next. Only on Blue.
It's 12:40 on Wall Street. I'm Amy Morris. The Senate has confirmed Kevin Warsh's nomination to the Federal Reserve Board of Governors in a 51-45 vote, granting him a 14-year term. The Senate plans to confirm Warsh as chair of the board later, with the chair's term running for 4 years. Inflation continues to accelerate. It happened in April amid an ongoing climb in gas prices, driven by the war in Iran and a jump in the cost of groceries. Consumer prices climbed a sharp 3.8% last month. The figures show how the impact of the war is hitting the U.S. economy as energy costs surge. The economy added more jobs than expected in April, with total non-farm payrolls rising by 115,000, well more than the 65,000 increase expected in a Bloomberg survey. The unemployment rate was unchanged at 4.3% in April. That's in line with Wall Street's estimates, but it does make the case for a rate cut more remote. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 0.8%. NASDAQ down 1.75%. The Dow down about 0.25%. The 10-year Treasury yield at 4.45% and the 2-year yield at 3.99%. WTI crude now at $101 a barrel. Brent crude closing in on $108 a barrel. J.P. Morgan CEO Jamie Dimon says there is too much exuberance in the markets.
I think there's a little bit too much exuberance out there. It's not just the Middle East. It's, Ukraine, Russia still there, America, China. There are a lot of these complex issues which may or may not affect the market, but then there are issues like inflation. Today's print wasn't so good. So, yeah, I think the market's kind of exuberant, and it may not be completely justified.
Hear more of our interview with J.P. Morgan CEO Jamie Dimon on the Bloomberg Talks podcast. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much for spending the day with us here on Balance of Power. She'll be back at the top of the hour, 1 p.m. Eastern Time, with another look at the markets here on this Tuesday edition of Balance of Power. Thanks for being with us as Kevin Warsh, if you're just joining us, is confirmed to join the Federal Reserve Board of Governors. The nomination becomes a confirmation, and we're moving on to the next leg now in which he would be voted in as chair of the Federal Reserve. Confirmed on that first leg, 51-45, John Fetterman, the only Democrat to get on board with Republicans, now voting on the motion to invoke cloture, which is the procedural vote that would come before the big one that will leave him at the front of the Fed. Big news on the reflecting pool. You saw the president went down there with the motorcade in front of the Lincoln Memorial. They're doing a big job redoing the floor, I guess, of the reflecting pool so it's blue. It's a big job, and it's going to cost a lot more than, I guess, what was originally thought. The Interior Department has added more than $6 million to this no-bid contract to repair the reflecting pool. President had said, by the way, that, and he picked the contractor for this no-bid job. He said it would cost $1.8 million to paint it blue. Remember, he wanted it to be aqua at first, then he went with American flag blue. This was the company from Virginia, Atlantic Industrial Coatings. Interior adding $6.2 million to the contract's previous cost, saying it now plans to pay $13 million to the Virginia firm. And look at that. Where'd you guys get the pictures? If you're get on YouTube right now, you'll see what I'm talking about. I can imagine people suntanning on the side of the reflecting pool when this thing is done. Sam, thank you for showing us what I'm referring to here. And I'll tell you what, Lester and Jeannie will know what I'm talking about. Fannie Fox was ahead of her time. Do you know that story, the great Washington scandal involving Fannie Fox, who was quite famous for all the wrong reasons? Fannie was, we'll say for the purposes of this conversation, an exotic dancer in Washington, and caught the eye of a congressman, not just any, Congressman Wilbur Mills of Arkansas. He was chair of the House Ways and Means Committee, all right? Just think of this in modern terms. It's quite a story, too. It was on the front page shortly thereafter. It was the night of October 6, 1974. The Arkansas congressman and Fox were at the Silver Slipper that night, and they got in the car. A friend was driving them home, and they got into a big fight. Headlights were off. They're speeding, swerving around. I don't know what the friend was doing, but I guess they'd all had a little bit too much fun. Park police pulled them over right in front of the Jefferson Memorial. And Fannie Fox fearing for her own recently acquired citizenship and the political future of the House Ways and Means chair, jumped out of the car and jumped into the tidal basin, which, by the way, if you're wondering, is about 10 feet deep. She's swimming in there, splashing around. Park police had to pull her out. They handcuffed her, arrested her, and the whole thing went public. In what Bloomberg News referred to, I had to get a kick out of this, as the number three in the top 10 U.S. sex scandals back in 2009. I guess Al Hunt was working on it. Fox was listed third on a list of Time Magazine's top 10 mistresses while she was at it. If only they had repaired the tidal basin for swimming, as they are now the reflecting pool. That true? Matt says Teddy Roosevelt used to swim in the tidal basin. We've got breaking news here. Didn't see this coming this hour, but you might have heard about it a couple of days ago. The head of the FDA on thin ice, Mr. McCary, is leaving the building. His time atop the FDA is over, according to Politico. The embattled FDA administration commissioner, I should say, resigning after 13 months on the job. You've heard Marty McCary right here on this program, Balance of Power, and we'll have much more to talk about today as this all moves forward. The president, of course, well, I guess dispatching the FDA commissioner before heading for China, with Iran, of course, on his mind. It's on President Xi's mind as well, with this elusive peace deal nowhere closer to fruition and a Strait of Hormuz that remains closed. Of course, Iran responded to our latest peace proposal. The president pretty much threw it in the garbage. Here's what he said.
It's unbelievably weak, I would say. I would call it the weakest right now. After reading that piece of garbage they sent us, I didn't even finish reading it. They said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support.
A piece of garbage on life support.
He
went from that session with reporters, by the way. He went from that session with reporters into a room full of generals, as he put it. Generals waiting on me. And they provided him with military options, should there be no diplomatic ones. That's where he begins the trip to China and where we start with our great political panel. Bloomberg Politics contributor Jeannie Shanzano is with us, Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. And Lester's back, Republican strategist Lester Munson, principal of the international practice at BGR Group. It's great to see both of you. Jeannie, the president's got some work ahead of him here, although it seems like we're playing a game of lowering expectations. Jamie Dimon said the same thing Jenny Welch did. Don't expect any big deals and don't expect any big asks from either side. Is that your view?
It is. And Joe, can I just say that I love that you come on to Balance of Power and you remind us of Fannie Fa. Where else could we get that kind of info?
Nowhere,
so thank you very
I'll tell you. Absolutely.
That's right. And I'm still wondering what are the top 2 sex scandals. I have my guesses, but I'll have to check that out.
I'll look around. It's okay.
Thank you. I do think Jenny and Jamie, Jeannie agrees with them. I don't think we're going to be expecting anything too momentous. And I just go back to wondering, you know, what might have been if Donald Trump hadn't decided in late February to enter this quagmire now in the Middle East. I think he could have had a lot more power, because certainly it looks like the balance of power is shifting a bit in China's direction at this point. He could have gone into this meeting, and we heard even from Lindsey Graham today when he was questioning Pete Hegseth, you heard him talking to Donald Trump saying, listen, when you go over there, don't forget that China is buying about 90% of the oil from Iran, or their oil from Iran. And it's something we even heard a reporter asking Donald Trump about this morning. You know, how can you say you have such a fantastic relationship when they're buying this oil? And of course, they're aiding Iran, at least behind the scenes in several ways, as is Russia. And so these are the kinds of things that I think are going to outshine any sort of focus on big trade deals and big tariff deals, which is what the president went into the administration this time promising to deliver.
Should we know more about the agenda here, Lester, or is this just the style of Trump. There's really nothing predetermined. I know there was an advance crew that was over there, but there's been reporting that the Chinese have been somewhat on their heels with the hasty nature in which this meeting was put together, remembering it was postponed from about a month ago. Should there not be a menu for these two leaders to sit down and codify what's already been agreed on?
I guess my guess, Joe, is they've actually agreed to the menu for whatever meals they're going to have together. But they some other things might still be in motion. What kind of business deals are we going to have? What are we both going to say about Iran and the future of the Strait of Hormuz and all of these fun topics? Maybe Xi Jinping has something to say about the reflecting pool. I don't know. But I do think this is a feature, not a bug, of the Trump administration. He wants to be in the moment, wants to be the latest thing. He's got a little ADHD approach, which is not always a bad thing. And so I think we see there's a bunch of CEOs going over there with him. Boeing, GE Aerospace, some other big companies. I expect there's going to be maybe a little bit more news than they're letting us believe right now.
What about those executives, Jeannie? We talked about this last evening when the names emerged. Jeff Mason did some amazing reporting there. Tim Cook added to that list that Lester just mentioned. You've got Micron, Qualcomm. Indeed, there could be a massive deal for airliners that's been years in waiting involving Boeing and GE Aerospace. Is that enough reason to go on its own?
It is. And I think we know China needs those. I think there is a deal in the offing. And boy, you can just imagine the side deals happening as they all jet over there. I was kind of hoping maybe Sam Altman would be on the trip too, given the lawsuit, but that's not happening. But yeah, I mean, they're going over there. But again, all of this overshadowed by what is going on in Iran. I mean, this is why when we hear reports that Donald Trump is bored of the war, he wants to put it behind him, and I'm certain he does. But when you get into a quagmire like this, there is no way to push this aside. So we may very well see a deal on jets. We may see some of these deals on beef and soybeans and other things. I think we will. I think we're going to see a lot of theatrics and pomp and circumstance. But beyond that, what is overshadowing all of this is that the United States, the superpower of the world, still is going to meet its, major opponent in a far weaker position than we otherwise would have been, with a lot of nervous allies from Asia and NATO and other places sort of holding their breath, waiting to see, does Donald Trump offer something, say, on Taiwan that nobody wants him to offer? And so I think that's just overshadowing everything, that concern about what comes out of this.
Can you address that, Lester? We've heard that a lot of times, that these concerns exist. The president could be scatting in their jazz improv with President Xi, cuts a deal to end the war in Iran at the detriment of Taiwan. Is that the kind of meeting we're talking about?
I really don't think so, Joe. I don't think the president's going to make a mistake on Taiwan. That would be kind of an obvious error. I think his position on the Iran war is actually much stronger than we've been indicating here. The U.S. can wait it out on the Strait of Hormuz much longer than China and Iran can. Yes, there's some political pressure on President Trump. The inflation issue is real. The price of gas is real. That is political pressure on him with an eye to the election in November. I think he's in a position to resist that for several more months before that becomes an acute issue. I think he knows that. I think he's happy to sit back, let things play out a little bit, let the Iranians and the Chinese worry about the future of energy exports through the Strait of Hormuz. At the end of the day, China is reliant on the Strait of Hormuz. The United States is not. The superpower that has the upper hand here is actually the United States.
Okay. We've got about a minute left here, Jeannie. What's your final thought as the president prepares to get on that jet, knowing that he's got a bunch of corporate executives with him and a massive red carpet and amount of pageantry waiting for him?
He's going to love that. But of course, Lester just gets me into this. Read Robert Kagan's piece in The Atlantic, Checkmate in Iran. It's like the old Kenny Rogers song. You've got to know when to fold them. And that's what Robert Kagan, remember that show? That's what Robert Kagan, sometimes described as a neocon, is saying. The president is, there's no good options here. We're gonna face devastating losses. The only thing to do is to get out. So
Jeannie?
if I could debate, I would say hold the cards.
Oh, man, I wish we had more time for the two of you. I know Lester has another thought, but they'll be back in our second hour. Jeannie Shanzano, Lester Munson, Bloomberg Politics contributor, BGR Group. We'll welcome our global television audience to the conversation coming up in just 5 minutes. So stay here. Kaylee is also on her way in. We'll get an update from Michelle Jamrisco on the latest involving the trip to China. And Greg Stanton, the congressman from Arizona, Democrat, former mayor of Phoenix, joins too.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
It's on to China. Welcome to the Tuesday edition with President Trump set to fly to Beijing later today for a summit with Xi Jinping. even as a peace deal with Iran remains out of reach. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, President should be wheels up within the next couple of hours. The summit set for later this week and the war in Iran making this awfully more complicated.
Yeah, and potentially giving more leverage to China as they get ready to sit around the table with President Trump. Now, we do expect that he could, the President Trump, that is, speak to press on his way out of the White House to Joint Base Andrews. He tends to do so when leaving for trips like this, and he's likely to field some questions as to what exactly he's thinking in regard to not only what he would like to discuss with China, but how Iran factors into all of it, and whether or not he's actively thinking about returning to a military option, as he says the ceasefire's on life support.
Yeah, massive life support was the line from the president. He called the counteroffer garbage, and there are questions about whether this will even be a major item of conversation between these two, or whether President Xi wants to give this a little bit of time, whether President Trump wants this to enter the conversation as they address everything from tariffs, trade, to Taiwan. We're going to talk with our in-house expert on all things Global South and China when Michelle Jamrisco joins us in just a moment. We'll have a voice from Congress as well.
Yeah, Congressman Greg Stanton of Arizona will be joining us. He is a Democrat. He used to be the mayor of Phoenix. I would imagine he has a thought or two on this conflict from his seat on the Foreign Affairs Committee and the China Select Committee as well. So it'll be interesting to get his insight. We also have to consider that all of these conversations are happening against the backdrop of a hot CPI print this morning, in large part, of course, due to higher energy costs because of the war in Iran. And certainly you're seeing markets reacting to that data. So let's get a check on those markets now as we kick things off with Amy Morris here in Washington. Hey, Amy.
Hi, Kaylee. You're absolutely right. A chipmaker sell-off, that inflation data sending stocks in the red. We do check those markets for you all day long here at Bloomberg. The S&P 500 is down just about 1%. NASDAQ down just about 2%, and the Dow down about 0.1%. Russell 2000 index down about 2.3%. The 10-year Treasury yield at 4.45%. The 2-year yield at 3.99%. Crude oil also higher now. WTI crude topping $101 a barrel. Brent crude more than $107 a barrel. The Consumer Price Index jumped in April, led by higher energy prices. The CPI rose 3.8%, up from 3.3% in March, the highest since 2023. The Fed is also watching this as inflation has run above its 2% target for the past 5 years, but a stable labor market is removing any urgency to cut rates. And the economy added more jobs than expected in April, with total non-farm payrolls rising by 115,000, well more than the 65,000 increase expected in a Bloomberg survey. The unemployment rate was unchanged at 4.3% in April. That's in line with Wall Street's estimates, making the case for a near-term rate cut more remote. Google reportedly in talks now with SpaceX for a rocket launch deal. SpaceX would provide launch services for Google. The Wall Street Journal reports Google is looking at ways to put orbital data centers in space. A launch deal would put the two companies in partnership as they gear up to compete on orbital data centers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's get back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris tracking the markets for us. Thank you so much. Clearly a lot for the markets to track today from the economic data. And of course, the driver of some of the higher inflationary pressures we're seeing in the economic data, which is geopolitics in the Middle East specifically, with the ongoing closure of the Strait of Hormuz and no clear sign yet as to how exactly that particular issue is going to be resolved. Of course, there's other players in that game. It's not just about the U.S. and Iran, but other countries, and President Trump has said this repeatedly, who need the energy that flows through that strait, like China, for example, the biggest buyer of Iranian oil. But it's unclear, and Joe mentioned this a moment ago, to what extent the Strait of Hormuz or the conflict with Iran is going to be the dominant topic of conversation when China's Xi Jinping sits down with President Trump in Beijing later this week. It's a trip he's set to depart on within the next hour or so after previewing it for weeks, remembering, of course, that this is a reschedule of a meeting that was supposed to take place much earlier this year.
We're leading China in AI, and I'm going to go see President Xi in 2 weeks. I look forward to that, but I'll say I'm leading. We have very friendly competition, but it'll be a very important trip. We're doing a lot of business with China and making a lot of money. We're making a lot of money. It's different than it used to be. But I'll be talking about that'll be one subject. But he's been very nice about this. You know, in all fairness, he gets like 60% of his oil from Hormuz, and I think he's been very respectful. We haven't been challenged by China. They don't challenge us.
We're going to have a meeting with President Xi. It's going to be, I think, quite amazing. He's been a friend of mine. I've gotten along with him very well over the years.
We'll see if they continue to get along well when the president arrives this week. It's where we start our conversation with Michelle Giamrisco, who covers the White House national security for us, and an editor here in Washington with the headline, Trump faces emboldened Xi in China as Iran war clips U.S. leverage. Is that how you're seeing it, this conventional wisdom that the president is carrying more baggage with him now? And I'm curious what President Xi makes of Donald Trump.
Right.
Whether he sees him as an equal.
I think the White House would certainly take issue with
course.
the idea that Xi Jinping is emboldened in any way or has more leverage than they do. I think both sides have reason to believe that they have the leverage, and certainly around, something like Iran, but also trade issues and other issues that will come up. But, I think what you saw with that montage there was, President Trump, as usual, being at pains to underscore the great relationship that he has with the world's second largest economy, trying to promote some sort of stability, and also, seemingly, insistent upon the fact that the U.S. is coming in with a stronger footing. He, in fact, yesterday, if you remember, he kind of tried to put China on the back foot in these issues and really, mentioned that he was going to pressure them on Iran. Why haven't they done more? They have the leverage with Iran that other countries do not. In fact, that the U.S. perhaps does not. So he's really kind of pushed on these issues harder than I think, some headlines would suggest around what Xi thinks he's coming into this summit with.
Well, and on the subject of Xi, does he need as much from Donald Trump at this summit as Trump seems to need or want from China?
Well, that's a complicated question. It's a great question, but there are so many issues at hand that I think both have a bottom line interest in creating this message of stability. And also, of course, there's this always an interest that Trump has in kind of promoting the pomp and circumstance of the occasion, showing that he's the big VIP coming in and being hosted and feted by the world's second largest economy leader. So I think both have an interest in this going off without a hitch and kind of downplaying the concerns while also clearly having those conversations behind the scenes around tech, around Iran, around Taiwan, which is one that you've brought up before, and the other geopolitical conflicts that only the two world's most powerful leaders can kind of come together on.
Got you. Does President Xi view President Trump as an equal? I know he plays very close to the vest. You can't get inside his head, but the bombast, the mixed messaging, some of the concerns that he sees domestically here inform this meeting in what way?
Yeah, it's a very dangerous question.
Yeah, I'm sure.
I think one thing, you mentioned like the bombast and the rhetoric coming from both sides, and that's something, of course, that we've had to explore throughout this relationship is what is actually going on behind the scenes, and also in the lead up to this summit, what are Chinese officials saying versus what is actually going to be communicated between the two leaders themselves, which isn't always the same thing. It's something that we ran into, of course, on the prospects for the summit actually going forward when that was a question as well. So, it'll be interesting to see how the two leaders come out of it. But again, we should remember, out of any of these U.S.-China summits over the past many, many years, the U.S. and China will have divergent messages. There's unlikely to be any broad communique that they agree on. So they will have different messages to their own domestic audiences.
Well, and maybe there won't be a communique, but will there be tangible outcomes from this, Michelle? You talk about how the end goal here might just be a projection of stability. Does that mean no new, real agreements on anything?
Well, the U.S. would love to come out of this with a basket of new deals, and I think they've signaled as much of, traction on different investments and agreements. We know, with any certainty, we just know the Boeing deal is obviously going to be a historic.
And the Boeing CEO will be along for the ride.
Exactly, and some other CEOs along for the ride as well. But, I think both sides have kind of been at pains also to set low expectations for the so-called deliverables. So this really is more fascination around the conversation on the big geopolitical topics of the day, I think.
All right, Bloomberg's Michelle Jamrisko, looking forward to you and the team's coverage of this summit over the next several days. Again, President Trump is expected to depart the White House and begin his journey to Beijing later on this hour. If he makes any remarks, we will bring them to you as we consider not just, of course, what he is aiming to achieve in China, but what China may be aiming to achieve by extension, and to what extent China is willing to get involved in the Middle East conflict in a more material way. This is something we got into with Heather Conley of the American Enterprise Institute on this show yesterday. This is what she told us.
China's stayed sort of on the sidelines here. Yeah. They're waiting to see. They want the United States in a weakened position. Again, China believes its rise is unstoppable and America's decline is unstoppable. Wow. And they believe this is just another data point that supports their theory. And unfortunately, because the conflict is not resolved in any meaningful way, it really, in some ways, strengthens the Beijing's point of view here.
And to continue this conversation with the perspective from Capitol Hill, I'm pleased to say joining us here in our Washington, D.C. studio is Democratic Congressman Greg Stanton of Arizona. He represents the 4th District and also used to be the mayor of Phoenix. Welcome back to Bloomberg TV and Radio.
Thank you so much.
Appreciate it. As we think about the intersection of the president's trip to China this week and the ongoing war and or ceasefire, whatever you want to call it, with Iran right now, from your purview on the China Select Committee and on the Foreign Affairs Committee, is China potentially a lever that could unlock the Strait of Hormuz? Is it going to take another external party getting involved if it's clear at this point that the U.S. is unable to make this happen in the near term?
It would be very helpful if China got involved, just like it'd be very helpful if other countries around the world got involved. The challenge is, of course, and I'm a critic of the president, but of course the challenge is that this president has stuck proverbially the finger in the eye of so many of our traditional allies with these tariff regimes that he's put into place. So we're in a very weakened position to ask for assistance from China. I think China views itself as watching the United States decrease in esteem around the world, in popularity around the world as a trusted partner, and they feel that they are elevating. So I would be surprised if Xi agreed to roll up his sleeves and get more involved in a solution to the Iranian war.
What's the conversation that you're having with your fellow members on the Foreign Affairs Committee, I'm assuming Democrats in this case, about the idea of President Trump making deals that might not actually favor the United States or maybe might not favor Taiwan to get some sort of leverage, to get some action on Iran? Do you actually believe the president would do something like that, or is this a false narrative as this trip begins?
I don't think it's a false narrative at all. Look, the president has brought many top CEOs are looking to do deals.
That's for sure.
He wants investment from China into the United States. As long as it passes a security background check, which any China investment has to do, we certainly support that. But what would he do in exchange? What is he willing to do? And obviously concern about the security of Taiwan
he said he's willing
is
to
at the
discuss
top of the list.
Too. What does he mean by that?
Well, that's a real huge problem. As you know, the United States Congress wants to do a $14 billion sale of arms to Taiwan so they can better defend themselves in case of any kind of incursion or attack by Beijing or mainland China. Mm-hmm. The president in the past indicated he supports that. The Taiwanese legislature has voted for $25 billion to buy U.S. weapons to defend themselves. And now, as we're approaching this meeting between Xi and Trump, it appears that that weapon sale is by the wayside. Mm-hmm. That sends the exact wrong message. We need to make it clear that we are going to help Taiwan in their own self-defense.
Well, and on the subject of weapons sales, there's obviously a massive question about the own munitions of ours that we have expended in the Middle East, to how quickly those can be replenished and what it means for other theaters like the Pacific. Does the United States even have the ability to assist Taiwan at the same level we otherwise would have before the Middle East conflict began if something were to happen in the near term?
Yes, and I would argue we have to do so. Mm-hmm. The point you're making is a good one. With our support of the Ukraine in the Russia war against Ukraine, we got to continue to support Ukraine. Now the president has made what I believe is the wrong decision to engage in this war of choice against Iran. We would have been much better off dealing with this at a diplomatic level, particularly if our goal was to stop a nuclear armament of Iran. The only way to do that is to get at that enriched uranium, and we can't do that without putting boots on the ground. The American people are not going to support any boots on the ground in Iran. So the only way to do that realistically was through a negotiated settlement. And so if someone were to think about doing harm to the United States, with our attention diverted, this unfortunately would be a good time. That's why we have to help Taiwan in their own self-defense at this critical moment.
Looking at gas prices in Arizona, averaging $4.80. My gosh, Californians must be driving across the border to tank up in your state. I'm just curious your thoughts on this idea of suspending the gas tax on a federal level. President says he wants to do it. Sounds like D's and R's are lining up, although John Thune poured some cold water on this last night. There's a question of whether there'll be a legislative answer.
Well, look, we want to provide some relief to the American people who are suffering. The cost of gas is out of hand, and so we want to do that. Obviously, that gas tax normally goes for important infrastructure projects in the United States. So suspending that should be a last choice, but it is an option. And if it came before the United States Congress, my guess is that it would be successful. But it begs the question, how do we even get into this mess? This is a war of choice, and the vast increase in gas prices was an inevitable result of the poor decision-making by this president. Look, it's very frustrating for the American people to see Iran has done exactly what the intelligence community said they were going to do in light of an attack from the United States. Yet the president acts like this is a big surprise to all of them. It wasn't a surprise. It was inevitable. So for increasing gas prices, the American people know exactly who to blame for it, and that's Donald Trump.
Well, when we consider this notion of a federal gas tax holiday, there's a question of how long it would last, at what point, if ever, it was to be put back on. And this fund's essentially the fund that maintains our highway systems. You sit on the Transportation Committee. Do you have concern about that and what it would mean for the solvency of the fund?
Heck yeah. I mean, it's a real issue.
How
and so
long
we're
could a
balancing out the interests of, these ungodly high gas prices that the American people are dealing with. Suspending the gas tax, even for a temporary period, would only bring the price down a fraction of what the increase has been just over the last few weeks as a result of this war of choice. At the same time, we are negotiating with the Republicans right now a 5-year extension of the bipartisan infrastructure law, one of the most successful bipartisan piece of legislation that has improved transportation around the United States of America. We've got to keep that momentum going. Nothing is better for our economy than investing in the infrastructure of the United States of America. So this is a great balancing of interest. The sooner we can resolve this Iranian conflict, reach an agreement with them, which means the President of the United States has to understand that in order to reach an agreement, you're going to have to win on some things and you're going to have to give on something. That's what a compromise is. And it needs to reach a compromise in Iran so we can get the gas prices down to a regular level and continue to invest in America's infrastructure.
I just want to mention quickly, we've got some breaking news on what is the second round of voting now. The procedural vote to bring Kevin Warsh's nomination to be Fed chair has passed. He has been confirmed as a member of the Fed Board of Governors. This would be the vote that brings him to chair. We haven't gotten to that floor vote yet, Kaylee, but this is an important one. Just 30 seconds, Congressman. Do you worry Kevin Warsh cuts interest rates in the face of these high energy prices?
Well, look, this is a difficult question. Here's why. It's so important that the Fed be independent. And it has been horrific for United States reputation around the globe. We're the leading economy. The world relies on us, and they rely on us because of, in part, the independence of the Fed. When they make decisions about the interest rates, it's done without political interference. Donald Trump has tragically broken through that wall. Kevin Warsh, when in this position, needs to be as independent as possible and not make decisions based on politics, but what's in the best economic interest of our country.
Congressman Greg Stanton, the Democrat from Arizona, thank you for the insights. It's great to have you with us. FDA Commissioner McCary expected to resign now, according to Bloomberg.
1:21 on Wall Street. I'm Amy Morris. Inflation continued to accelerate in April amid an ongoing climb in gas prices driven by the war in Iran and a jump in the cost of groceries. Consumer prices climbed a sharp 3.8% last month. The figures show how the impact of the war is hitting the U.S. economy as energy costs surge. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.6%, NASDAQ down 1.5%. Dow is little changed on the downside. 10-year Treasury yield at 4.45% and the 2-year yield at 3.99%. WTI topping $101 a barrel. Brent crude more than $107 a barrel. Under Armour shares sank after its guidance for this year missed Wall Street projections, weighed down by exiting a partnership with NBA star Stephen Curry and a financial hit from the conflict in the Middle East. Shares of Under Armour now 19% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. Here on Balance of Power, we're trying to keep on top of the headlines for you. And as Joe mentioned right before we went to break, we did get some news. Bloomberg now reporting that the FDA Commissioner, Marty Makary, is expected to resign. And Kyle Diamantis, a lawyer who previously served as the top food official at the FDA, is expected to take over the commissioner role in an acting capacity. Of course, it was the end of last week when reports first started surfacing that President Trump had approved of the firing of Makary, Joe, but apparently Makary's going to say, you can't fire me, I quit, with a resignation before that.
Something like that, yes. The administration official talking with Bloomberg said while the White House had to sign off on the decision, it was in fact, Secretary Robert F. Kennedy Jr. who made the call. Interesting moment. There's been a lot of ink spilled on this the last, 4 days or so since this really entered the news cycle. So everyone saw this coming, and it's something we'd like to hear from our political panel about before we get on to other matters. Bloomberg Politics contributor Jeannie Shanzano is with us, a Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Republican strategist Lester Munson is here as well, principal of the international practice at BGR Group. Lester, once the door starts swinging, it keeps turning, and I guess that remains the case here. Is this a condemnation of the Maha movement or just questionable management by Mr. Makary?
Well, I'm not sure on the management question, Joe. I do think there's a lot of political cross currents here on drug approvals. There's some abortion issues. There's some other aspects of health policy that kind of didn't necessarily all fit together, and so Dr. Makary here seems to have suffered from maybe a overall policy approach that didn't quite fit into what the administration wanted to see. I think it's interesting that his boss, the head of HHS, RFK Jr., who arguably may be more controversial, appears to be in pretty good shape with the administration right now.
Well, so weigh in on that, Jeannie, because this is not the first time we've seen turnover within the wider Health and Human Services Department. You could point to the CDC and other places as well. So what does this say about Bobby's stewardship, as the president always calls him?
I like that, Bobby. I think he is still on solid footing with the president, with the White House. He still has a lot of support. But to your point, his management may come up for question as they've been apparently unable to keep good people in these positions. But I think more than that, this really reflects concern about what's going to happen in November. I was struck by hearing the head of the Susan B. Anthony pro-life group talk about the fact that Makary should be fired immediately. And, I think as Donald Trump's numbers and Republican numbers overall are going down, approval numbers are going down, it creates more of an environment where somebody like Makary, who has some detractors both in and out of the base, becomes a sort of key point that we should really have to remove him. He's too much of a distraction to allow this to keep going.
I just want to mention that when President Trump leaves the White House, he's going to be on his way to China, what could be momentarily. We will bring you to the driveway if he's taking questions at the South Portico. We know that they're gathering reporters right now. Lester, Jeannie mentions November, and we've got a lot of noise around these midterms right now. Look no further than South Carolina. where we've got a couple of bills now to redraw the congressional map after the SCOTUS ruling. President Trump on Truth Social last evening saying that he's watching closely, urging Republicans in the state to get it done in all caps. Alabama, of course, officials moving forward now with their redrawn map after the Supreme Court lifted an injunction blocking that on racial grounds. I could tell you about Virginia. You remember that. I know there's a last-minute effort to try to overturn the state Supreme Court ruling that ditched the Democratic map. But I'm just wondering, Lester, what the score is in the redistricting battle right now, because it's getting pretty hard to tell by how much Republicans are winning.
Well, I mean, that Virginia decision, if it holds, is a big deal. That's probably 4 seats that have swung to the Democrats and now have gone back to the Republican side. I think I'd give the Republicans a slight edge here on, Machiavellian manipulation of redistricting. If that's a new Olympic sport that's coming down the pike. Democrats have put up a pretty good fight. They're talking about some extreme measures in Virginia to swing that back the other way again, perhaps firing or laying off the entire Supreme Court and replacing it with a new one. That would be quite something if they were to attempt to do that. And there may be some pressure on the governor, Abigail Spanberger, to do exactly that. That'll be fun to watch. But I would say at the end of the day, we're looking at a House race in November that is going to be very close either way. It's going to come down to just a handful of seats, maybe a dozen that are worth watching and that are going to determine the future of half of one branch of our government. And I think right now I'd give it a coin flip as to who's going to be in the majority next year, Republicans or Democrats.
Well, it's incredible to consider that it even could be a coin flip in a year that so many had been up until even just a week ago, Jeannie, describing as what could have the makings of a blue wave midterm year, that it was more likely than not, well more likely than not, that Democrats were going to take the House. And it does seem that it is a bit of a different tune that everyone is singing now. How much of this do you think ultimately is also going to hinge on whether these newly redrawn Republican districts, Jeannie, are actually as red as hoped, if we're seeing a watering down of some of them so that they aren't quite so in favor of Republicans, even if it eliminates one safely Democrat seat? We have this question about South Carolina, for example, as they consider their own potential redistricting that would write out Jim Clyburn's seat in theory, though Clyburn suggests he could still hold a seat in Congress even with a new map.
Yeah, and Kaylee, I'm so glad you mentioned that, because Jim Clyburn has been very clear. And I think this is the danger of these redistricting wars, is that you can try to draw maps to choose your voters, but in fact, we go to the polls in November and we do get a choice. And that's what you're hearing people like Jim Clyburn say, that we are going to the polls, and in an environment in which the president's approval rating is in the low 30s, gas is nearing in on $5 per gallon. We're in a quagmire in the Middle East and an endless war. The president is underwater, even on border, an issue that arguably he's done well on. If Democrats cannot still pull this out in November with that environment, if it goes unchanged, then that is probably on the Democrats. So all of this redistricting has moved in the advantage of Republicans, try as they might to sort of rescale things. But I'm of the opinion you cannot gerrymander your way out of reality. And the reality is people are unhappy and facing high prices. So I still think Democrats get about 4% of the national vote, which will translate into about 5 votes. They may even get as much as 11 or 12 in the end.
Huh. I don't know if we're talking blue wave in that world, Jeannie, if you want to go there, but there is some logic to this, Lester, that history and the issues here could be more powerful than any map that one could redraw. What do you think?
Yeah, Joe, I think it's to be determined. We're still a long ways off. It's months away. We haven't even really gotten into the summer yet. Iran may be a distant memory by the time folks are going to the ballot box or doing their early voting. I think there's plenty of drama to come, plenty of subplots to resolve, personality disputes, other fun topics. The reflecting pool today, who knows what it could be tomorrow?
Your guess as good as mine, Lester. It'll be also be interesting come tomorrow to see what the results look like in one state in particular that's holding a primary today. Just bear with me, everyone, because this one is confusing. Nebraska.
All right.
Already a weird state electorally in terms of the presidential vote, the so-called blue dot, because of the way Nebraska's system works. Now we have a Senate race where you have an incumbent Republican, Pete Ricketts, who is running against, we don't really know at this point, potentially an independent in Dan Osborne, or potentially there could be a Democrat in the race also, although the front-runner Democrat says she's only in the race to drop out so that you just have an Osborne-Ricketts matchup. But there's also a conservative anti-abortion pastor who is running as a Democrat, even though he voted for Trump 3 times. Joe, do I have that summarized?
Yeah, this is great.
Correctly. Jeannie, what is going on in Nebraska? What does this tell us about the current state of American politics that we're playing these games?
Yeah, Kaylee, you deserve an A+ for that. That was very well done in a very brief period of time. It's hard to do. It's sort of, again, an example of the gamesmanship we see in American politics, particularly electoral politics. And it's what frustrates so many Americans. You know, Democrats know, as you just went through, they can't win in Nebraska. So they don't want somebody on that Democratic ticket. They want to clear the path for Osborne to move right through. And of course, you've got Cindy Burbank. She's saying, I win, I'm stepping down and handing this thing over to Osborne so he can take it. But then you've got this pastor, and the Democrats are claiming he's a plant by the Republicans. And so between that and the blue dot race that's going on to fill Don Bacon's seat, Nebraska gets the weirdest, oddest, strangest elections of the 2026 cycle.
From the blue wave to the blue dot. Lester, I don't know. So you got planted candidates on both sides here. I think Politico reached for the term gamesmanship. Lester, is this just how you win the game?
Listen, it rewards, the system rewards entrepreneurship and creativity and brazenness. Lean in, go for the brass ring here. Don't let anyone slow you down. I find it to be very inspiring, Joe.
But just in our last minute here, Jeannie, even if this works out the way the plants want it to, if we're calling them that, and it is an Osborne-Ricketts mashup, Osborne tried this in 2024. He lost to Deb Fischer then by 7 points. What would be different this time around?
Well, we don't know. I think what we're going to see, Kaylee, is a lot of money flow into that race. And that's one of the lessons of these primaries. The amount of money flowing into these primaries is just another reminder as to how close all of this is going to be, to Lester's point, because control of the House now rests in like 18 seats across the country. And of course, the Senate, you add to that, and the money is going to be flowing to try to see if Democrats can help this independent and sort of make him a Bernie Sanders, I guess, an independent that caucuses with them.
Well, if it is all a game, certainly you have to pay to play. Jeannie Shanzano and Lester Munson, our political panel today.
I told producer James I was afraid to do this story because I'd confuse everyone, but you did it. You're amazing.
Everyone still probably is confused. I'm still a little bit confused. It's a lot to keep track of. We have more to keep track of as we turn back to the president's trip to China. That'll be ahead here on Balance of Power.
It's 1:40 on Wall Street. I'm Amy Morris. Consumer prices jumped in April, led by higher energy prices. The consumer price index rose 3.8%. That's up from 3.3% in March and the highest since 2023. The Fed watching as inflation has run above its 2% target for 5 years, while a stable labor market removes any urgency to cut rates. The economy added more jobs than projected in April, with total non-farm payrolls rising by 115,000, well more than the 65,000 increase expected in a Bloomberg survey. The unemployment rate was unchanged at 4.3% in April, in line with Wall Street's estimates, making the case for a near-term rate cut more remote. We check the markets for you all day long here at Bloomberg. The S&P 500 down 0.6%, NASDAQ down about 1.5%. The Dow little changed on the downside. The 10-year Treasury yield at 4.45%, the 2-year yield at 3.99%. WTI is right around $101 a barrel. Brent crude just over $107 a barrel. JP Morgan CEO Jamie Dimon says fixing stupid trade issues between the U.S. and Europe, his words, would pave the way for better growth. Dimon warned that investors are over-exuberant, which may not be justified given all the risks that have popped up in recent months. The Senate has confirmed Kevin Warsh's nomination to the Federal Reserve Board of Governors with a 51-45 vote, granting him a 14-year term. The Senate plans to confirm Warsh as chair of the Federal Reserve Board later, with the chair's term running for 4 years. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy, thank you so much. Amy Morris will have more on the markets coming up at the top of the hour, 2 p.m. Eastern, as Bloomberg Business Week Daily gets underway. Standing by to hear from President Trump. At least we're going to see him. It appears he's in the Oval Office right now and is about to make his way out onto the South Lawn to get on Marine One and make his way to Andrews, where, of course, Air Force One is waiting for him. This is the big trip to China. The president will be taking off shortly. If he does take some questions from reporters, we've got our eyes on the colonnade right now. We'll, of course, bring it to you. Kaylee, we've got some information on not only the corporate executives who are going to be traveling with the president, but members of the administration. This is coming from the pool, and we're just getting a sense of who's going to be on Air Force One. A couple of Trumps. Eric Trump, yes. Lara Trump, yes. The First Lady, on the other hand, will not be on board. Secretaries of State and Defense, Rubio and Hegseth, and the USTR, Jamieson Greer, among those who are going to be attending these meetings. So we're not hiding from any stories, and the Defense Secretary and the head of trade is in the room.
No, certainly not. And of course, the Treasury Secretary, I think, is going to reconvene with the team in China, having traveled to Japan first on a more extended trip to Asia. But yes, the presence of the Secretary of State and the USTR specifically underscores how this is in part a diplomatic conversation. Perhaps you will have some geopolitics on the agenda, including the Middle East and the Strait of Hormuz with the ongoing conflict with Iran, but also what this summit may have been about prior to a hot war starting in the Middle East, which is predominantly issues around trade and things like critical minerals, for example. So that's what we wanted to get into now. As we turn to someone who used to be inside the USTR, she served as senior trade representative for China at the Office of the United States Trade Representative and now is managing director at Beacon Global Strategies, Sarah Schumann, who is here with us in our Washington, D.C. studio. Sarah, great to have you here on Bloomberg TV and radio. Can you just set a baseline expectation as to what we can reasonably assume is going to come out tangible from this summit between Trump and Xi?
Thanks. Yeah, it's great to be here. And I'll say, I think the symbolism of this trip is really important. Remember, the last time that President Trump went to China, it was 2017. A lot has happened in the relationship since then, whether it's trade and technology confrontation, COVID, right, the war in Ukraine, and now in the Strait of Hormuz. So much has happened in the relationship, and the relationship is now really framed around a strategic competition, whereas before, the relationship was thought of much more in the sense of, you know, mutual benefit and win-win. So I think the symbolism of him going right now is itself a major signal that despite tension in the relationship, the open lines of communication remain between the leaders. On the substance, the White House has been managing expectations quite a bit. Everything out of the White House signals that they want to keep expectations rather low for any particular deliverables. They are talking about deliverables around agriculture, aircraft, maybe in some other discrete sectors, but they really want to focus the attention on the more symbolic deliverable around a potential board of trade that might be announced.
Speaking of symbolism, it was noteworthy to see this list of corporate executives joining the president on a trip to China, not including Jensen Huang. You mentioned some of the water under the bridge since this last visit. There's been an enormous debate about export controls when it comes to high-end chips, those that are made by NVIDIA. And we've heard a lot of on-again, off-again talks about what China should and should not be allowed to buy. Is the idea that we're saving the best for last, or we have to have one meeting before we get to the real issue at hand? Why wouldn't Wang be in this massive group of executives?
Yeah, it's a really good question. I mean, I think the administration has signaled that with this concept of a board of trade, they really want to be able to discuss non-strategic sectors, areas where their national securities are not front and center, but where the two countries can continue to trade and even expand trade. And they're looking at things like pharmaceuticals, but also aircraft, agriculture. And in those areas, I think they're also looking at chips, but not in the advanced space, right? So you're seeing other CEOs go from other chip companies, but that are not at that sort of in that particular area. And I think that's an intentional signal that those issues are not on the table for this discussion.
I'd like to quickly bring our audience's attention to some headlines that just crossed the terminal. An appeals court has halted the order from last week that came from the Court of International Trade, declaring the president's new Section 122 tariffs unlawful. Of course, this was the 10% balance of payments tariffs he implemented after the Supreme Court struck down his IEEPA tariffs. The Court of International Trade last week has said those were unlawful, but an appeals court again has halted that order for now. They're weighing a bid for a longer pause on that. But what position does this put President Trump in going to talks with China that are going to be at least in some part about trade? Why would China credibly believe that this is a lever that the president can still pull without massive legal challenges?
Yeah, no, it's a great question. I think a lot of people are pointing to this as showing that the president is going in with a weakened hand. But I would say actually quite the opposite. Section 301 is actually the main tool that has been used to impose tariffs on China in the past. In fact, during the president's first term, there were several rounds of tariffs imposed on China using Section 301. I lived through that when I was, a representative to China. I had many sleepless nights waking up to, another announcement of tariffs on China, which the president was able to accomplish through Section 301. And so I mention this because whatever happens on Section 122, it's basically irrelevant because the president can still use Section 301 to impose tariffs. And they have shown that there are a number of different investigations in place that they can use Section 301 to accomplish that in pretty short order.
So give our audience a sense of how to judge the success of this trip and what you're going to be looking for, particularly when it comes to dealing with China. There's this battle of the communiques. Who can get to the reporters first? Is there going to be a readout? We haven't seen an official White House readout that was not a Truth Social post, I think maybe in this entire second term, Kaylee. A lot of traditions like that kind of go out the window, but this is sometimes, the battle of the PR machines at work here. What should the White House be prepared for?
Yeah, no, I think that for the president, going in and just having this meeting itself and showing that there are some benefits that come from the stability that has been reached is the goal. Whether or not there are big numbers to be announced, I think he would like to see some major deliverables with big numbers attached. But I think that we all need to manage our expectations. And I think we also need to realize that in the past, including when he went in 2017, the United States was really pushing China to make fundamental changes to its economy, really take on a more market-based approach and address longstanding trade concerns. We're not trying to do that anymore. Basically, the United States, through successive administrations, including the last one, has realized we're not going to be able to push China to take on those sort of bigger structural issues. And so instead, what we're really looking to do is just manage those disruptions. We can't fix it, but we're going to manage it. And so that's why I think a successful trip looks like frankly, that they're just managing this relationship well without the United States really giving over too much under Chinese pressure.
Well, and it's one thing for the U.S. To manage its own relationship with China, but how much is that complicated by the relationships China has with other countries who maybe push even more toward China due to some U.S. policies under this administration?
Yeah, I think that the administration and the way that it's approached tariffs and other issues has in many ways alienated a lot of the allies that really the United States needs on board to pressure China, because the U.S. can't do it alone, right? It's going to require the help of partners and allies. I thought it was very important symbolically that Secretary Besson is going to Japan before he arrives in Beijing. I don't think that's an accident. I think it's a very strong signal that our allies in Asia are very key to our relationship with China.
We've got a live view for those of you on Bloomberg TV and watching us on YouTube of President Trump making his way from the Oval Office. And it appears he's going to be coming over here to talk to reporters who have been lined up just on the south side of the White House before he gets to Marine One, of course, then on his way to Andrews and to Air Force One, which will carry him to China. President's got a dark suit, yellow tie today. It looks like he's in the mood to talk. Let's watch and listen. Sarah, thank you for your insights as the president speaks live now on Bloomberg.
We're only making a good deal. We have their military's gone, it's wiped out, and we're only going to make a good deal, and we'll see what happens. But I believe that one way or the other, it's going to be very good for the American people, and I think actually very good for the Iranian people.
Are you reconsidering the Pakistanis as mediators?
No, they're great. What? I think they're great. I think the Pakistanis have been great. The Field Marshal and the Prime Minister of Pakistan have been absolutely great.
Mr. President, what is your message to President Xi as it relates to the Iran war?
Well, I think number one, we're going to have a long talk about it. I think he's been relatively good, to be honest with you. You look at the blockade, no problems. They get a lot of their oil from that area. We've had no problem, and he's been a friend of mine. He's been somebody that we get along with, and I think you're going to see that good things are going to happen. This is going to be a very exciting trip. A lot of good things are going to happen.
Mr. President, do you think he needs to intervene at all with the Iranians?
I don't
do you think he
does,
can help in any way?
No, I don't think we need any help with Iran. We'll win it one way or the other. We'll win it peacefully or otherwise. Their Navy's gone. Their Air Force is gone. Every single element of their war machine is gone. They've killed a lot of people. They've killed 42,000 people at least over the last month and a half. We win.
Mr. President,
no matter how you cut it.
Mr. President, what do you believe, Mr. Curtis, sir? Mr. President, do you believe your visit to China will impact of international economy and price of oil?
It's going to be a positive. We're going to have a very good meeting. I spoke with President Xi. We both look forward to the meeting. It's going to be great.
Mr. President.
Mark, Mr. President, what is going to be your red line to end the ceasefire for you? What will it take to pull the plug?
Well, we're going to see, and we'll be thinking about it on the flight, and we'll be thinking about it for the next little while. But we've beaten their military very soundly. That's over with. The blockade is very effective. It's been 100% effective. And one way or the other, it's going to work out very well. It's going to work out very well. I think you're going to have so much oil, you're going to have a gusher of oil like you've never had before. So when oil goes up a little bit, I thought it would go up much more. If you go back 3-4 months ago, when we were contemplating, we assumed oil would go much higher. Yesterday it was at $99. And if you think about it, I would have taken that all day long because it's very simple. Iran cannot have a nuclear weapon. They will not have a nuclear weapon. They know that. They've agreed to that. And then that's not what they said to me when it came to pay. We don't play games. They're not going to have a nuclear weapon.
Mr. President, you promised to bring inflation down. It's now at its highest level in 3 years. Are your policies not working? What's happening?
Policies are working incredibly. If you go back to just before the war, for the last 3 months, inflation was at 1.7%. Now, we had a choice. Let these lunatics have a nuclear weapon. If you want to do that, then you're a stupid person, and you happen to be. I mean, I know you very well. Anybody that wants them to have a nuclear weapon is a stupid person. So we said we're going to take the greatest stock market in history, and we're going to go down a little bit, and actually that turned out to be incorrect because our stock market is now at the highest point in history, which frankly surprised a lot of people. It's a very simple message. Iran cannot have a nuclear weapon, and they won't have a nuclear weapon, and that's 100%. Their Navy is gone, their Air Force is gone, their anti-aircraft is gone, their radar is gone, their leaders are gone. They're all gone. Iran will not have a nuclear weapon. Be long, you're going to see oil prices drop, and you're going to see a stock market, which is already at the highest point in history, go through the roof. You're going to see the golden age of America, frankly, and you're seeing it now. So as soon as this is, don't forget, you have hundreds of ships that are loaded up with oil that want to come out. As soon as they come out, we're going to have a gusher of oil, and you're going to have inflation that goes way down. Now, with all of this, inflation is much lower than it was under Biden. Biden had the highest inflation in the history of our country. Inflation is nothing by comparison, but our inflation is just short term. Because if you go from before, just before the war, we were for the last 3 months 1.7%. And now what you have is as soon as this war is over, you're going to see inflation go down to probably 1.5%.
Will you extend the waiver? Will you extend the waiver, sir? Will you extend the waiver on Russian crude?
Go ahead, please.
Thank you so much, Mr. President. Mr. President, yesterday you said you gave the Kurds arms, but they took it for themselves. A U.S. military official says that the Kurds have not received any arms, and the Kurdish political parties are denying receiving any arms.
The officials are wrong.
The resident Chinese people, sir.
So what happened is we have a ballroom that's under budget. It's going up right here. I've doubled the size of it because we obviously need that. And we're right now on budget, under budget, and ahead of schedule. I doubled the size of it, you dumb person. Double the size. You are not a smart person. Right over here. Wait a minute. Right over here. And based on a lot of things that have happened over the last year, we doubled the size of the ballroom. So we're going to have a ballroom that's appropriate for the White House. We doubled the size. The ballroom now is ahead of schedule, and it's a little bit under budget, depending on the finishes that we use.
Does the president of Cuba have his days numbered? Does the president of Cuba have his days numbered?
Well, they're not doing well. Cuba is not doing well. It's a failed nation, and we'll be talking about Cuba at the right time.
Mr. President,
Let me ask you about Venezuela. Some Venezuelans are concerned that there are some political prisoners still in their prisons. Would you do something about that?
Yeah, we'll do it. We're going to get them all out. And I'll tell you what, Delcy's doing a great job. The people of Venezuela are thrilled with what's happening. They can't even believe it. They're dancing in the streets. And as you know, we have Exxon, we have Chevron, we have all of the big companies going in. And Venezuela now is making more money than they've made in the last 25 years.
And the political prisoners will come out.
As you know, they let a lot of the political prisoners out, and the rest will be coming.
Did you ask Marty Harry to resign, sir? Or did you fire your FBI
Well, I don't want to say,
commissioner?
but Marty's a great guy. He's a friend of mine. He's a wonderful man, and he's going to be off. And the assistant, the deputy, is taking over temporarily until we find. Everybody wants that job. It's a very important job. Marty's a terrific guy, but he's going to go on and he's going to lead a good life. He was having some difficulty. You know, he's a great doctor, and he was having some difficulty, but he's going to go on and he's going to do well. Everybody wants that job.
So the midterm elections, would you send the National Guard or ICE to voting locations in November? Would you do that?
Well, you know what? I'd do anything necessary to make sure we have honest elections. We have to have honest elections.
So you're not ruling that out?
A quick question, Mr. President. This month is considered to be the month of Africa. On the May 25th, we'll be celebrating Africa Day. Would you mind doing something special, like 10-minute interview to speak about your views on the Africa?
We would do that.
Ceasefire is on life support. Is President Xi the person to bring it back to life?
Well, we'll see what happens. We're going to have a great meeting in China. He's a wonderful guy. He's a friend of mine, and we're going to have a great meeting. We do a lot of business with China. We do very well with China, and they do well with us. And the relationship is very good. We're going to have we are going to have a great meeting.
But do you think he's got what it takes to convince the Iranians?
Whatever he can do to help, we like.
Mr. President, will you be able to talk about the end of the war in Ukraine with the president?
I think it's getting very close. The end of the war in Ukraine, I really think it's getting very close.
Will China invest $1 trillion in the U.S.? Will China invest $1 trillion in the U.S.?
When you're negotiating with Iran, Mr. President, to what extent are Americans' financial situations motivating you to make a deal?
Not even a little bit. The only thing that matters when I'm talking about Iran, they can't have a nuclear weapon. I don't think about Americans' financial situation. I don't think about anybody. I think about one thing. We cannot let Iran have a nuclear weapon. That's all. That's the only thing that motivates.
What is more broken, or NATO?
Say it.
What is more broken, NATO or OPEC?
Well, OPEC is having some difficulty right now because one of those things, but that has nothing to do with me. NATO was very disappointing to me. NATO was not there when we wanted them. We don't need NATO. We don't need NATO. But if we did need them, they just weren't there.
He can help and contribute to a deal with Iran?
He could. I mean, it might be. I don't think we need any help with Iran, to be honest with you. They're defeated militarily, and they'll either do the right thing or we'll finish the job. They're either going to do the right thing or we're just going to finish the job.
The message, sir, to the Chinese people as you embark on this summit.
That we're going to have a great relationship for many, many decades to come. My relationship with President Xi is a fantastic one. We've always gotten along, and we're doing very well with China. And working with China has been very good, so we look forward to it. As you know, President Xi will be coming here toward the end of the year, so that'll be exciting too. I only wish we had the ballroom finished. The ballroom is right on budget and ahead of schedule, but I wish we had it finished now. You also may want to do one other thing. You may want to go see the reflecting pool, because that's under construction, and for the first time since 1922, it's going to work properly.
Sir, and the gas Mark Stone from Sky News. What's your advice to Keir Starmer, sir? He seems to be on the brink.
Well, my advice to him has always been, open up your oil in the North Sea. You got one of the great oil finds anywhere in the world, and you're not using it. They're not allowed to use it. And it's one of the best in the world, among the best oils in the world. Open up your oil in the North Sea and get tough on immigration.
Should he stay or go?
Europe is being very, very hurt by immigration all over Europe.
Should he stay or go?
That's up to him. But I've told him from day one, you're getting killed on energy. You're windmilling your country to death. Open up the North Sea. You have one of the greatest sources of energy in the world. Open up the North Sea.
The pressure is from Nigel Farage.
Drop taxes on oil. Would you ask them to do that?
I think it's a great idea.
I have two questions. Has there been any understanding between you and Putin that Russia should get entire Donbass?
No.
You have an invitation to travel to Russia.
Do you think it might happen this year?
It could. I mean, I will do whatever is necessary. That war, I've settled 8 wars. That war is getting closer. Believe it or not, it's getting closer. And we think we're going to end up getting a settlement between Russia and Ukraine.
President, what is the ultimate goal of your trip to China?
I think more than anything else, is we have massive relationships with China. We're the 2 superpowers. We're the strongest nation on earth in terms of military. China's considered second. Who knows? I mean, who knows? But we are. There's nobody even to come close. And you see that whether it's Venezuela or whether it's Iran. Iran's military is decimated. I have a great relationship with President Xi, and I think it's going to remain that way. We have a lot of things to discuss. I wouldn't say Iran is one of them, to be honest with you, because we have Iran very much under control. We're either going to make a deal or they're going to be decimated. So one way or the other, we win. But we're going to be talking with President Xi about a lot of different things. I would say more than anything else will be trade.
Just to clarify, did you say earlier that the only thing that matters to you when it comes to Iran is a nuclear weapon? You're not considering the financial impact of this war on Americans?
The most important thing by far, including whether our stock market, which by the way is at an all-time high, but including whether or not our stock market goes up or down a little bit, the most important thing by far is Iran cannot have a nuclear weapon.
What about the pressure on Americans and prices right now?
Every American understands.
Americans, how they're feeling about
every American. Are you listening to me? Every American understands, and they just had a poll, like 85%, which is surprising. It's only that they understand that Iran cannot have a nuclear weapon. If Iran has a nuclear weapon, the whole world would be in trouble because they happen to be crazy. They're not going to have a nuclear weapon. Now, if the stock market goes up or down a little bit, the American people understand it. When it's over, you're going to have a massive drop in the price of oil, which a lot of people thought would be higher. And I mean, it was $100. It was $99 yesterday, which is low, which is relatively low. When this war is over, oil is going to drop. The stock market's going to go through the roof. And truly, I think we're in the golden age right now. You're going to see a golden age like we've never seen before. The minute it's announced, and I'll be the one to announce it because I'm the one that makes that decision, I could leave right now, and it would take them 25 years to rebuild their country. But so, ready? As soon as this war is over, you're going to see numbers like you've never seen.
I know how much you value loyalty. I know how much you value loyalty. Are you comfortable with people serving in the military if they personally oppose the Iran war or you?
It doesn't mean I'm happy about it, but I live with a lot of different.
Question on redistricting. So voters who are confused about the changing maps, the changing dates, and the African Americans concerned that this is going to draw black members of Congress off the map, what do you say?
Well, I think it's been a wonderful process. They've been the Democrats, or as I call the Democrats, because they are dumb in so many ways. They've redistricted for years, and now we took our shot, and it looks like we're going to pick up a lot of seats. And that's a good thing. That's a good thing. We want voters to have their choice. We want fair voting. We want fair elections. The Democrats have been cheating on elections for many years, and all we're doing is winning. Thank you.
Excuse me, sir.
All right, everyone. You are listening and watching, of course, President Trump there live on the White House lawn. He is, of course, making his way to Marine Force One. He is en route to Joint Base Andrews and then en route to China with a meeting with President Xi. Carol Master, Tim Stanovic, live here at Bloomberg headquarters on this Tuesday, May 12th. It's a pretty busy Tuesday. I got to say, Tim, President covering everything from the FDA chief to Cuba, to China, to two big wars, talking a little bit about Russia, Ukraine, that the end of that war is close, a lot coming out. He talked to reporters for a while.
Yeah, like you said, the end of the war in Ukraine is close. He said Iran will make a deal or get decimated. He said there is lots to talk about with President Xi, mainly when it comes to trade. The president, you mentioned, Carol, also confirming earlier reports from the New York Times and reports last week that the FDA chief, Marty Makary, is moving on. The president said he was having some difficulty. He said he's departing the FDA, and he said that he likes him. He's a friend of his.
Right.
But he's moving on.
All right. Also talking about inflation, my policies are working. We did get a key inflation print this morning. It was a little hot, so we're going to talk to our Stuart Paul about that. Good afternoon, everyone. Welcome, welcome. We do see stocks down, bouncing a little bit, but they're off their lows of the session. We've seen a sell-off in semiconductors. You pointed that out because that space, Tim, has been on a run.
Yeah, we're going to dive into that a little bit, too. Also, you mentioned that hot inflation print. Stuart Paul is standing by. Another person we listen to in addition to Stuart is Jamie Dimon. We're going to hear from him a little bit later on market exuberance and a little bit more.
Yeah, he talked about a lot of stuff. Also, eToro's CEO is going to join us, talk about the retail investor trends they are seeing on the platform, talk a little bit about crypto, also competition. There's a lot of choices investors can make.
And Boeing is betting on a comeback on President Trump, China, and an elusive new plane.
All right, let's get you going, folks. A lot going on in the next 60 minutes. Let's get on over to Amy Morris. She's in for Charlie Pellet.
A chip maker sell-off, inflation data, just as you described, it halted the rally in equities. They are off their session lows now. We do bring you the markets all day long here at Bloomberg. The S&P 500 is down a little more than 0.5%. NASDAQ down 1.4%. The Dow little changed on the upside now. The 10-year Treasury yield at 4.45% and the 2-year yield at 3.99%. WTI crude oil right at $102 a barrel, and Brent crude is closing in on $108 a barrel. Consumer prices jumped in April, led by those higher energy prices. The CPI rose 3.8%. That's up from 3.3% in March and the highest since 2023. The Fed watching as inflation has run above its 2% target for 5 years, while a stable labor market removes any urgency to cut rates. Google reportedly in talks with SpaceX for a rocket launch deal. Now, SpaceX would provide the launch services for Google. The Wall Street Journal reports Google is looking at ways to put orbital data centers in space. A launch deal would put the two companies in partnership as they gear up to compete on orbital data centers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
We will take it. Amy Morris, thank you so much. Well, the Senate confirmed Kevin Warsh's nomination to the Fed Board of Governors. That was about 90 or so minutes ago, with the chamber expected to confirm him separately as chair later on this week. If so, he, as the expected next Fed chair, would have to deal with an accelerating inflation environment following this morning's print that showed U.S. inflation accelerated in April on rising gasoline and grocery costs exceeding wage growth, Tim, in a double whammy for already strained consumers. Higher prices and wages not keeping up. Not a good mix.
No, it's not a good mix. Economists actually anticipate higher costs are likely to persist even in the months ahead. Rising prices for fertilizer, higher grocery bills, elevated oil prices, other goods and services could become more expensive.
All right, so it's going to be tricky. Let's get into how tricky it will be for the next Fed chair and the FOMC overall when it comes to rate policy. With us is Stuart Paul, Bloomberg Economics U.S. and Canada economist right here on set. Good to have you here. Before we get into the data, based on the data that we are getting, and we know it's not the Fed's preferred inflation measure, President Trump touting that his inflation policies, they are working. Are they working?
Well, this is a particularly difficult print to pull apart. But all things considered, just inflation is running hot. Tariffs unambiguously push up prices, and supply-side shocks that are downstream of the conflict in Iran are also pushing up prices, particularly headline inflation. Tim, as you mentioned, it'll end up rippling through things like airfares, things like fertilizer costs, and then food costs. So it's very difficult to say that President Trump's policies have been disinflationary, but all things considered, today I am taking the inflation reading with a grain of salt.
Why?
Well, so there are a few peculiar mechanical items in today's inflation report, particularly within shelter. Now, you'll remember that during the government shutdown, data were not collected for rents and owners' equivalents of rents. And the thing to keep in mind is that housing is sampled every 6 months. The sample rotates on a monthly basis, so you only have points of comparison every 6 months. So the reading today is measuring against a base of basically zero inflation last October, and that's why we got this pop in shelter inflation. We know that folks on the Fed board, previously it was Stephen Myron, we expect that Kevin Warsh will pick up the same mantle of this argument, have been focusing on the lagged effects of shelter inflation. Actual market rents are far lower than what we're seeing in the reported inflation numbers, and today's data mechanically overstate shelter inflation anyway. So if we're looking at what's really going on in the underlying core and really services within the core, it's quite a bit lower than the 0.4% month-on-month core reading that we basically got. So again, a reason to take today's data with a grain of
So
salt.
shame on we. Don't call it hot. Me.
Look,
No, I'm asking. Like,
when headline inflation is running about 3.8%,
It's
when
not
core
2%.
inflation is running 2.8%, and you know that the Fed's target is 2.0 within core PCE, sure, but when you know that those are the year-on-year numbers, it is hot.
Okay.
But again, today's data point should not be the largest reason of concern. Instead, take today's data with a little bit of grain of salt and just focus on the trend, which is just hot inflation and policies that push prices up.
Should we talk about the other mandate of the dual mandate? The labor market?
Yeah.
Because,
Yes,
and then we'll talk a little
please.
about Kevin Warsh. The labor market's holding up. And I think that's an important thing for us to keep in mind because that's the Fed's job.
Yep.
That's the dual mandate.
Yep.
Stable prices, maximum employment. What would it have to take in order for the Fed to actually do a cut this year? What would have to happen to the labor market?
Look, I think that it would probably take an unemployment rate above 5% for the Fed to deliver a cut this year. The coalition on the Fed is so much more focused on guarding against unanchoring inflation expectations and an acceleration in prices. I think that right now, even though the unemployment rate did sort of, I don't want to say inch up, but it's really just a matter of rounding that the unemployment rate didn't rise. It rose. Unemployment did rise in the month of April, but with the Fed firmly focused on the inflation and the price stability side of its mandate, I think that you would need to see basically 5% unemployment for the Fed to deliver a cut. We know that there are 3 members of the FOMC that are voters this year who don't even want to maintain a dovish bias in their language, let alone undertake more accommodative monetary policy stance. So I think that it would take a pretty significant deterioration in the labor market. We need to see an increase in layoffs, not the decrease in layoffs that we've been seeing. And I think that we'd probably need to even see some broadening of layoffs, not just layoffs concentrated, say, in high-tech services.
So Bloomberg's Michael McKenzie writing today, not long ago, the Treasury market thought it had the Kevin Warsh trade figured out. Simply bet on multiple interest rate cuts that the nominee had been expected to deliver if he got the job to lead the Fed. Now with days left before Warsh steps into the central bank's top role, a different view is emerging. So we are looking at wagers in the $31 trillion bond market leaning toward tighter monetary policy, the upshot of robust U.S. growth and war-driven inflation worries. I mean, so might inflation pressures, might all of it ultimately mean, Stuart, that we get a rate hike?
Look, I think that it's really difficult to say that the next move will be a hike. I think that it's easier to say that there will not be a cut this year. So I think that when we start thinking about, let's say, the switching of the Fed's direction, it's a trickier conversation. So, for example, for the members of the FOMC to say that policy is currently too loose is one thing. For them to then advise that a hike would be appropriate is a far different thing. And when you're in the middle of a war in the Middle East, when you're in an evolving trade war, and when you have midterm elections that are coming up, it's really difficult to switch your footing from saying a hold is appropriate even though the policy is inappropriately accommodative. It's very difficult to then switch your footing to say that a hike is appropriate. So I'm not yet to the point of saying that the next move will be a hike. I still think that there is a cutting bias. I think that a cutting bias is probably appropriate. I think that risk is skewed to inflation ultimately falling through time and the labor market loosening. But I don't think that we're going to hit that 5% unemployment that would require the Fed or that would encourage the Fed to deliver that cut this year.
Gosh, it's interesting, huh?
That's why we get Stuart to follow it all for us.
We do.
Also a big day tomorrow, too.
Yeah, exactly. Kevin Warsh, right? We'll see what happens there. We think he's going to get
Well, we think we know what's going to happen.
We think we know.
Yeah.
All right, Stuart Paul, Bloomberg Economics, U.S. and Canada economist. All right, we're going to get to one of our most trusted voices here on the Bloomberg about the economy. We're going to get to one of the most listened to and followed voice on Wall Street. Having said that, in the meantime, just a quick reminder of where we are in terms of the trade.
Yeah, just taking a look at the NASDAQ 100, that's where we're seeing some of the damage today. Off its worst levels, but still down 1.6%. The S&P 500 down 0.5 percentage point, again, off worst levels of the day. The Dow is in the green ever so slightly. Seeing chip stocks really take a hit. Sell-off in the high-flying chip makers driving stocks lower. This after that inflation data showed the impact of energy disruption stemming from the war.
Yeah, stocks down 4.6%.
It was down
said
more than 6% earlier.
Earlier, okay,
Yeah.
but still down almost 5%. You've got all 30 names in the stocks lower. That index, though, still up 62% year to date. So, yeah, give it back
a little bit of a give back, right?
Yeah, exactly. Hey, one stock on our radar is JP Morgan Chase, really the company and really the leader. JP Morgan Chase CEO Jamie Dimon, who said fixing stupid trade issues between the U.S. and Europe would pave the way for better growth. He talked about this in a Bloomberg TV interview earlier today from the bank's annual Global Markets Conference. It was held in Paris. Jamie Dimon said, if you ask me what the goals should be for our economic relationship with Europe, it should be, Tim, having a stronger Europe. Both the economies would grow better.
And Diamond said a lot more to Bloomberg's Francine Lacroix, including the run-up in the U.S. financial market. Check it out.
I think there's a little bit too much exuberance out there. It's not just the Middle East. It's, Ukraine, Russia still there, America, China. There are a lot of these complex issues which may or may not affect the market, but then there are issues like inflation, today's print wasn't so good. So yeah, I think the market's kind of exuberant and it may not be completely justified.
So why are they so exuberant? If they're exuberant, are you expecting a correction? And is it because they're looking at AI?
No, I don't think it's AI. I think corporate profits are doing very well. AI will be a plus, so this year it's just a lot more spending, which may be a little inflationary too. But it's more corporate profits. We're doing a little bit more QE. Government's still spending a lot of money. The one big beautiful bill is kicking in. Stimulus offsetting a lot of the gas. I think the gas increase, the dollar of gas is $100 million. The one big beautiful bill is $100 billion that consumers pay. The one big beautiful bill is $300 billion. Deregulation is real. There are these things which are causing a pretty good market right now.
All right, that, of course, I know it was noisy, folks, so sorry about that. Those conferences usually are. That was, of course, JP Morgan Chase CEO Jamie Dimon with Bloomberg's Francine Lacroix at the bank's annual Global Markets Conference in Paris. Sri Natarajan has spent time with it in, an earbud, maybe in his ear, listening to all of it. He joins us. Sri, of course, is Bloomberg News Wall Street correspondent, chief Wall Street correspondent, joining us here in studio. They talked about a lot of stuff, Sri. I mean, we always point out how important it is what Jamie has to say. What stood out for you?
Yeah, I was interested when you said the one name and one stock on our radar today is Jamie Dimon. It just feels like he's always on our radar. Anytime he's speaking, people are paying attention. And it was interesting that right off the bat, he talked about this idea that there is a little too much exuberance in markets, especially considering everything that they're dealing with. He said the Middle East problems, the war in the Middle East right now is a big problem and it's a big deal, and it continues to get worse with each passing day. And you can't underplay that point. To some extent, yes, we're feeling the impact of that here in the US when you look at the inflation print today with gas, rent, food prices all going up. But in places like China where they've reduced demand, in places like India where they're forcing austerity on their citizens, it is already a very big deal in the rest of the world. And the question is, how long can the US remain insulated from that? So what are some of the ways that you can solve for the existing problems in the world right now? Dimon talked about this idea that we need to fix our trade issues with Europe. That's a great point to make, but has he spoken to the president? Because the President Donald Trump, has been very angry with his European allies that they've not been helping him out in his war on Iran. And he has built up this angry posture towards the continent and its leaders. So it's not quite clear that even though Jamie Dimon says that we need to fix some of these stupid trade issues, that there is an easy pathway to that.
Yeah, it's interesting that you say that. The president's actually landing on Marine One right now. He's about to make his way to Air Force One to head to China. And he said that a big part of the trip has to do with trade, and all these executives from U.S. companies are joining him. It wasn't just that Jamie Dimon said the U.S. has to solve the issues on trade with Europe. He said that stupid trade issues between the U.S. and Europe would pave the way for better growth. Does it seem like the White House is getting that message?
I think the point he was making was solving for the stupid trade issues would pay for the better future rather than the stupid trade issues themselves.
Fixing them,
but that's a good point. Is the White House getting the message? We don't know. And in fact, that might be the audience that Dimon needs. That's the audience that Dimon needs to address. That's the audience perhaps that the business leaders need to address. Because I don't think anyone in continental Europe is sitting there and thinking we need to have hostile relationships with the US. But it's also clear that it's been very hard for many of the European leaders to get on board with the plans and the ways and the methods of the Trump administration. And frankly, it is very clear, and Donald Trump has made it very clear, that he is unhappy with Europe. He wants them to get on board with his plan, or they will continue to face problems, and that does mean the continuation of the trade differences.
Yeah, it's kind of interesting, though, and in terms of the war, we did have the President Trump, before he got on Marine Force One, talking about the war in Russia and Ukraine, saying that end looks like it's very close, an end to that war, and then talked a little bit about Iran. But you do wonder, I always think about how much President Trump is listening to him. Let's not also forget President Trump's going to have a bunch of CEOs, financial community, and others that will be on that trip with him. So they certainly have maybe a few conversations, perhaps, over peanuts on the plane. I don't know. Do they fly with him? No, I guess they fly separately. Do they fly separately?
Sometimes they fly. There is, the press is on the plane with the president.
The press, but I mean the executives.
Yeah. Oh, I have no idea.
Yeah.
I don't know.
I don't know.
I don't know.
Sorry, I'm just wondering.
I don't know the answer to that. Hopefully, we get more conversations with Sri Natarajan, too, because we love Sri.
We do love Sri.
And I'm happy to share peanuts with the president on Air Force One.
Sri Natarajan, Bloomberg News Chief Wall Street Correspondent, joining us right here in studio. Sri, thanks.
Amy Morris is standing by. She's in the Bloomberg Business Week studio with a check on the day's trade and top business stories. Hey, Amy.
Hey, Tim. Inflation continued to accelerate in April amid an ongoing climb in gas prices driven by the war and a jump in the cost of groceries. Consumer prices climbing a sharp 3.8% last month. Figures show the impact of the war is hitting the U.S. economy as those energy costs surge. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.4%. NASDAQ down 1.2%. The Dow now up 0.1%. The 10-year Treasury yield at 4.45%. And the 2-year yield at 3.99%. WTI now topping $102 a barrel. Brent crude closing in on $108 a barrel. Under Armour sank after its guidance for this year missed Wall Street projections, weighed down by exiting a partnership with NBA star Stephen Curry and a financial hit from the conflict in the Middle East. Shares of Under Armour now down 19%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
All right, Amy, thank you so much. Amy Morris, of course, in there for Charlie Pellet. Just pulling up on my Bloomberg.
Down about 5%.
And we're talking about shares of eToro. They are definitely trading down in today's session. That's following earnings that we got earlier. And despite first quarter adjusted EPS beating estimates and funded accounts coming in above estimates, what's interesting, pre-market, the stock was rallying. Stock, by the way, up about 5% so far here in 2026. The company did highlight in its release how it introduced 24/7 trading for commodities, equities, and indices, added Japanese equities, and launched crypto trading in New York during the first quarter. So we're going to talk to the company's CEO.
We got Yoni Asia with CEO and co-founder of eToro. He joins us here in the Bloomberg Business Week studio. Good to have you on the program. Trading activity on the platform. You have a real-time view on this. There are some echoes right now of 2021 meme stocks. What are you seeing?
So what we're seeing actually is people that switched from crypto into commodities. So switched from sort of low vol, declining Q4 into Q1, crypto into very exciting opportunities in metals and in oil and natural gas. So that's something that we've definitely seen a surge in commodities activity happening in eToro.
Super aggressive, like the move? Like, was it very clear the amount?
We were surprised how many people who originally joined eToro into crypto and to equities shifted to where the interest is, right? To where the volatility is. Days like today, right, where CPI is suddenly surprising people and stocks go down. It's like retail are consistently, by the way, for the past 4 or 5 years, are actually grabbing, in my view, a lot of the beta from institutions, because institutions are immediately going risk off, let's figure out what's happening here, and retail are like, hey, stocks are down 10%, let's buy some of these stocks in better prices than yesterday.
So, Yanni, on a day like today, I don't know if in real time how much you can share. Like, are you...
I know today is going to be elevated trading engagement on eToro, on stocks. There's no question about it. That's what volatility does. It increases the interest of retail investors. They log in, they look at what's happening, they start analyzing. I think the next stage, both of growth for eToro, but generally in the entire retail investment industry, is where we have AI agents that are 24/7 looking at the markets, which are transitioning to 24/7, and actually looking at the markets and trading in users' accounts. So that's one of the recent launches we did. It's an agent portfolio. So you can take a part of your portfolio and say, take $5,000 out of my 50,000 portfolio, and now create an agent portfolio that tracks the movements in the markets, in the tech stocks, look at what's rising and falling, their EBITDA multiple, and trade based on that strategy.
So essentially, you have a tool where you can use natural language to tell
By the way,
agent.
natural language, either with eToro's agent, which is Tori agent based on Grok 4.2. We talked about models before that. Or you go into Cursor and we're connected there as an app, or you go into Claude Code or your OpenClaw and do it there. So it's either bring your own agent.
Are people using this?
eToro's. It's early days. We just launched it 2 or 3 weeks ago. We're seeing 50% week over week growth and already more than 500,000 trades done in agent portfolios.
Why are you using so many different LLMs or different AI providers?
So we've seen, I would say, November last year with an inflection point with Opus 4.5. Now we're at Opus 4.7. But what we've seen is
this
actually...
is from Claude.
This is from Claude. But when we, for example, Evald, which is checking how good the model is, it's looking at what's happening in the markets right now. Actually, Grok was the best because it has all the real-time information. When we're looking at developer tools, Cursor is great. When we're looking at enterprise-level knowledge, OpenAI is great. So we've decided to enable eTorians to use all of the tools because what I'm seeing is people suddenly delivering at 10x or 20x or even 50x at what they were able to deliver pre-AI.
How many people on the platform are using AI tools or agentic AI?
It's not something that we've yet to announce, but we have seen a tenfold increase in the usage of AI, both
from
by the
zero,
way of
basically?
Employees. No, not from zero.
Okay.
We launched originally Tori, I think about 18 months ago.
Okay.
But since we moved it to a frontier model to Grok, we've seen roughly 10x growth.
Talk to us about accounts. And obviously there's accounts that grow because the market goes up or their investments go up. But talk to us about acquiring new people onto the platform. What kind of growth have you seen?
So we've seen 12% year-over-year growth in funded accounts. And again, every time something happening that's interesting in the markets, we see elevated accounts growth as well as eToro. So part of our marketing strategy, which is now being powered by AI, is finding those opportunities in the markets, then finding the right segments of customers that might be interested in what's happening in the markets and get that message to them, not only in eToro, but on Google or on X or on Tabula or on Meta.
What about prediction markets?
We've just recently announced the acquisition of Zengo, which is a new non-custodial wallet for eToro, which supports now thousands of new crypto assets for eTorians. It enables also DeFi solutions, and prediction markets will be part of the DeFi solutions offered on Zengo.
When will you offer prediction markets on the platform?
So we're now setting up the timelines. It's an acquisition that was announced and closed 2 weeks ago or last week.
Yeah, we spoke about it on Bloomberg Crypto last week.
So we're very excited about that opportunity, and we are also in the process of registering our TradFi business as futures trading, which allows prediction markets as well.
Will you offer sports predictions on the platform?
On the TradFi part, probably we'll wait with sports and focus more on financials. So we do believe that there's a lot of value of price formation, hedging opportunities in anything related to finance. I haven't checked the recent Poly market on whether we beat earnings, for example, today. I'll check it out after the show. So I do think there's...
So you do look at it?
I do look at it. We have like our own interface even now. An app on our app store enables you to actually look at the prediction markets.
Crypto market just got about 25 seconds. How has that business changed? I mean, Bitcoin's down 36% from a high back in early October. Exuberance?
No, I think what we're seeing, first of all, 4-year cycles in Bitcoin. We've seen that before. We topped in October. Now we're going down a bit. I think eventually it recovers, reaches all-time high again. But I think a lot of the dialogue has shifted to capital markets moving on chain. 24/7 is a great example of that. But you have all of the regulators in the U.S. also talking about capital markets moving on chain.
They are indeed. Yoni Assia, he is the CEO and co-founder of eToro, joining us right here.
2:40 on Wall Street. I'm Amy Morris. Consumer prices jumped in April, all led by higher energy prices. The CPI rose 3.8%, up from 3.3% in March, and the highest since 2023. And the Fed is watching as inflation has run above its 2% target for 5 years, and a stable labor market removes any urgency to cut rates. The economy adding more jobs than projected in April. Total non-farm payrolls rising by 115,000, well more than the 65,000 increase expected in a Bloomberg survey. The unemployment rate was unchanged at 4.3% in April. That's in line with Wall Street's estimates, making the case for a near-term rate cut more remote. We check those markets for you all day long here at Bloomberg. The S&P 500 down 0.4%. NASDAQ down 1.2%. The Dow gaining now 0.1%. The 10-year Treasury yield at 4.46%. The 2-year yield at 3.99%. WTI crude just topping $102 a barrel, and Brent crude is just topping $108 a barrel. JP Morgan CEO Jamie Dimon says fixing, quote, stupid trade issues between the U.S. and Europe would pave the way for better growth. Dimon warning that investors are over-exuberant, which may not be justified given all the risks that have popped up in recent months. And the Senate confirmed Kevin Warsh's nomination to the Federal Reserve Board of Governors with a 51-45 vote. That grants him a 14-year term. The Senate plans to confirm Warsh as chair of the Fed, with the chair's term running for 4 years. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
All right, Amy Morris, thank you so much. So when Richard Nixon landed in Beijing back in 1972 to end a quarter century of Chinese diplomatic and economic isolation, this was a really big moment. You probably know that. His hosts were so enthralled with the U.S. president's airliner that within months, they ordered 10 Boeing 707 jets.
Yeah, the purchase kicked off one of the most consequential commercial relationships in Boeing's 110-year history. It helped turn China into the world's second largest aviation market after the U.S. So writes the Bloomberg News team, which includes Sid Phillip. He's Bloomberg News chief correspondent for global aviation. He joins us here in the studio. Boeing and China, just before we get to today, just give us some background going back to the 1970s, Richard Nixon's visit, and how then Boeing was kind of seen as this diplomatic tool.
So then, as is now, Boeing has been a diplomatic tool for the U.S., and Boeing has been crucial in kickstarting aviation across the world, including in China, where the aviation sort of boom started with the Boeing 707. Before that, we had a lot of Russian planes in China. And so getting the 707, and then airlines in China have subsequently ordered the 777, the 747, the 737NG, and the MAX. And so Chinese airlines currently operate thousands of Boeing aircraft, and they haven't placed a new order in about almost a decade. So the last time they placed an order was when Trump visited back in 2017. And so the next phase of aviation in China is really dependent on whether or not the Boeing gets a brand new deal from the Chinese airlines.
Why in 10 years? Was it all the problems at Boeing, Sid, that China backed off? Was it the relationship between the U.S. and China? What was it? Or
it was a combination of multiple things. So China, remember, was one of the first countries to ground the 737 MAX after those two fatal crashes. And then the rest of the world followed, and the 737 MAX was grounded from 2019 to 2020. And thereafter, we went into the pandemic when airlines stopped purchasing and sort of hunkered down to preserve cash. And since then, the diplomatic relationship hasn't been the greatest. And so we haven't really seen the orders that Boeing's been hoping would materialize actually materialize.
One thing that's different this time around, though, versus the 1970s is that there's a homegrown, I'm not going to call it a competitor yet, but Comac, the Chinese state plane maker, sort of their version of Boeing, but with more state support. They have their version of the 737 that is actually flying in China now.
Absolutely. So the Comac C919 is basically C929 is basically a competitor to the 737 and the A320 that Airbus makes. The problem with that plane, though, is that the volumes that they're producing in are not really sufficient for China to sort of depend on those planes. So they're still sort of growing production. I mean, it takes years to ramp up production to the levels that Airbus and Boeing seem to do every month. So Boeing is currently aiming to make 42 737s a month. That's That's much more.
Wow.
That's more than like Comac can make in 2 years.
So wait, help me understand this, because we talk about Chinese manufacturing and say it's the envy of the world, right? Robotic, automatic, manufacturing. Why is it that they haven't kind of conquered this? They are very good at studying what other folks are doing and figuring it out. So why haven't they succeeded to that extent here?
It takes a couple of things. I mean, one, the Comac plane depends a lot on Western avionics. The engines are made by CFM, which is a joint venture between Safran and GE. The avionics and other things are also made in the West. And so they're still ramping up production, basically building a plane which takes years to ramp up production because it's just so complex in terms of getting certification, making sure the plane's safe, making sure it sort of performs to the expectations. So that takes a while.
With those planes, I mean, I know I'm sort of going off topic here a little bit.
I know where you're going to go.
Yeah, with those,
this is what I'm thinking.
The regulatory environment with European regulators and the FAA, would they ever approve a Chinese-made plane to fly in the U.S. or in Europe?
So China is actively trying to get the Comac plane certified in Europe at the moment, but regulators still haven't cleared it. And remember, even getting the 737 MAX 7 and 10, which is a variant of an existing product has taken years for Boeing, and they're still not at the finish line for that model. So getting a brand new jet in China certified will take a while.
All right, so let's get to the fate of Boeing, right? I thought it was fascinating that the plane that has been so popular was in development back when Nixon was in China. So talk to us about the future, like what comes next, right? Because they've got to be thinking about where do they go next.
Absolutely, and so for Boeing, the biggest challenge is trying to get to the next generation of aircraft. And a lot of aircraft manufacturers look at revolutionary ideas. I mean, Boeing famously toyed with truss-braced wings, where you had trusses supporting these really long, thin wings. And there was GE and CFM is talking about their RISE program, which is open rotors, and those are sort of rotors so they perform like a jet engine, but they obviously are sort of more fuel efficient. But they have those big rotors that are outside. So Boeing, we understand, is going for something that's more evolutionary than revolutionary, where they aren't sort of eschewing all those sort of big ideas and saying, let's get something that looks more or less similar to what we have today, but with more fuel-efficient engines, longer wings, and that would be able to use the existing infrastructure, but without having to sort of, I mean, airlines have dealt with revolutionary change with even just the engines on the A321, which the new GTF engines, which have been significant sort of problems for a lot of airlines.
And fair to say that Boeing learned with the debacle around the 737 MAX and essentially retrofitting an old airframe?
I mean, Boeing has sort of learned with the 737 MAX that the 737 family is probably at the end of its sort of, like, you can sort of stretch it out and sort of take it further into service. I mean, they have to sort of start with a brand new design, but they will try to keep it within sort of the evolutionary range rather than sort of go for something completely radical, because airlines don't really want to experiment. They want something that's reliable, that gets their customers from A to B more efficiently.
So still human beings as pilots, not autonomously flown.
I mean,
no Waymos in the air?
We don't know, really.
But we could do that. I mean, look at what the military does.
Planes really fly themselves, right? If you think about the systems that are on those big jets.
There are systems today that can land a plane safely and all of that, but at the same time, in tricky situations, pilots do step in.
Right.
And
shout out to the pilots. I'm just going to throw that out there.
Listen, do I think automation's great, but do I want somebody as a human as a backup just in case something goes wrong?
I mean, it's difficult. I mean, you've seen those videos on Instagram with the Waymo driving off with someone's bags in the boot. I mean, imagine planes flying there.
No, thanks.
I don't want to even think about that. Sid, thank you so much. Sid Phillip, he is Bloomberg News Chief Correspondent for Bloomberg Aviation. This is the Bloomberg Big Take today. You can read the story and more from the Big Take on the Bloomberg and at Bloomberg.com/Big Take. Be sure to check it out. Stocks on the move when we come back.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready to kick off the last hour of trading on this Tuesday, May 12th. Carol Masser, Tim Stenovec live here at Bloomberg headquarters in New York City. Bouncing around on the equity trade, we are definitely off our worst levels of the session. We're off our best levels of the session as well. Still down about 29 points, 0.4% lower on the S&P 500. NASDAQ 100, ouch, down about 436 points, down 1.5%, nearly 1.5% on the day. But again, off its worst levels of the session. I'm Carol Masser, along with Tim Stenovec. Let's get to some stocks on the move. You're watching Intel. The stock's quite a reversal in today's session from what we've seen as of late.
Yeah, that's right. Shares of Intel right now down by about 9%. It's not just